But already the company reporting profits surging because of the oil trading and refining boom, of course, because of the Middle East war. HSBC, meanwhile, we spoke to George Eldhary, a conversation with Francine. They've resumed their buyback up to $1 billion in stock. They've increased their cost-cutting target, and this is all after their second quarter pre-tax profit topped estimates. Just finally, let me add on, out of Germany, Lufthansa, they've actually warned of a profit risk because of the jet fuel surge that's really roiled the whole industry of airline. So 3 stocks to watch there as we get towards the open, Anna.
Yeah, and we'll add in Zalando as well, because that did seem to be an area where they've refined their guidance, they said, but the market taking that quite negatively. Watch that one as well at the start of trade. So a few companies in Germany then, where we're going to be focused on how they perform on the back of their numbers. Continental is one of those as well. We'll be speaking to the management team over at that business a little bit later on in the programme. But in the meantime, how do these European equity markets more broadly open up? Well, the FTSE 100 out of the gates and to the upside, up by 0.2%. No, perhaps not. Finding its feet a little bit this morning. But we had some heavyweights in London reporting, with HSBC, the largest listed company on the FTSE 100, of course, and we've got BP numbers out as well. So all of that being digested by these markets, and we do see the FTSE then bouncing a little bit down, bouncing by around 0.3% this morning. The IBEX is just slightly positive. The CAC 40 up by 0.3%. The divergence we're seeing in the tech narrative, interesting to see if any of that plays out in European stocks. Yesterday in the US, we saw hyperscalers doing okay. We also saw software doing okay, and certainly after hours with those Palantir numbers, Lizzie, that was part of the story as well. In the Asia session, things looking a little more lackluster, so we'll see which of those stories sticks to the European trading day. What are you seeing in the sectors?
Well, if we break it down, the best performer is basic resources at 1.8%. Industrial goods and services not far behind, but you flagged tech if we were going to see a read across from the US session. Indeed, tech coming in at third place, up 0.8%. But it's an even split pretty much between winners and losers this morning sectorally. Bottom of the basket, food, beverages and tobacco. But if we turn to some of those individual earnings stories that we were flagging, HSBC, despite all of that positivity out of the interview we had with the CEO, despite all of the positive news on the buybacks and increasing the cost-cutting target, the pre-tax profit beat, in fact, the shares in London are down 1.3% at the moment. So following the losses that we'd seen in the Hong Kong session, BP shares also a touch lower, only down 0.1%. But, you know, we'd seen a profit surge from BP. So disappointing result initially, perhaps, just the market reaction to those numbers. We're waiting for Zalando, we're waiting for Lufthansa. Bayer shares up more than 3% after their earnings beat. And just the other couple that I was flagging, Conti up 0.7%, their margin rising, and Hugo Boss shares up 0.2%, their EBIT beating estimates for the second quarter.
And yeah, basic resources, maybe you mentioned this one then, Lizzie, best performing sector, and that seems to be across the board, things like Antofagasta, Anglo American going higher. I mean, not bad performance by the FTSE to be able to be up by 0.4% when your heaviest weighted, or your largest cap stock, HSBC, is down by 1.2%. But I do note we are seeing a bit of a bounce in AstraZeneca this morning, up by 2.3%. And of course, that was an area of weakness yesterday. So perhaps that is something to keep in mind. Let us broaden our focus and think about where we head. What have we learned through the earnings season, and where do we head next? Let's speak to Louise Dudley, Global Equities Portfolio Manager at Federated Hermes, on set with us this Tuesday morning. Louise, good morning.
Good morning.
So the earnings season then, we went in, it seems, with quite high expectations for European earnings, and perhaps they've been met or even exceeded. What have you taken away so far from the earnings story?
Yeah, I think with Europe, we came in with lower expectations compared to the US. So I think it's been an easier beating environment. They haven't beat at the levels that we've seen in the US. That has been exceptional. But yeah, there's certainly been some good surprises out there. As we've seen today with HSBC, people are still kind of penalising, if everything's not perfect. And so to a certain extent, there's a little bit of scrutiny. We knew kind of coming into it as well, there was going to be a lot more focus on the outlook than what they were delivering, because obviously we've got a lot more information than what we had a quarter ago in terms of the war, how companies are faring. And so I think that outlook, and obviously starting to look into next year as well.
And technology is still your biggest overweight, including everything that's related to AI. And so when it comes to that AI trade, are you short-term picking between some of the areas of tech that are going to benefit from AI, or are you just saying, look, this whole theme is so strong, we're just going to lean into the whole thing and ride the waves?
I think at the moment, the areas obviously that are seeing kind of the strongest return, strongest earnings are those that have constrained supply, and so therefore have that pricing power. So more on the hardware memory side, and certainly kind of avoiding most of software other than the cyber type names. But I think for those names, we're continuing to see CapEx being increased. So at the moment, we're still, I think, away from what people are worried about, which is obviously when it starts to tip. So we're very kind of focused on, if we start to see that happen, very focused on historical bubbles and what that means and things like that. But actually, for now, I think everything's keep going in the right direction. And actually, we are starting to see some kind of green shoots in terms of the actual kind of build out and the usage case, which is maybe stronger than people were worried about maybe a couple of months ago.
Well, yeah, how do you play the tech story geographically? Because, of course, there's been such a spotlight on the Kospi and the Korean tech story. Loads of retail investors, frankly, traumatised by their experiences on the Kospi. Is that volatility a signal of something bigger to you?
So I think a lot of that was driven by retail investors, and I think those recent flows, again, that kind of sell-off was actually those retail investors as well. We know that they were obviously highly levered, and so we expected maybe some of that volatility. We do have exposure within the region, but to a certain extent, we're also diversified within that as well. But we have seen, we continue to see those Korean companies as being huge beneficiaries, and I think that will kind of have benefits through the Korean economy as well.
So do you buy dips on the Kospi then?
So we haven't been buying dips, but I'd say we have a substantial position.
Okay.
So that's the AI focus. I mean, how are you playing Europe when it comes to AI? Are you thinking of some of the capital goods companies that supply the AI story? Are you thinking of chip makers? What's the European trade?
Yeah, both of those. So I think some of the largest names actually are the ones that continue to do well. Obviously, those that have good relationships across the US and also with Asia as well. We know that kind of China for ASML was weak. But to a certain extent, they are still very well positioned within, what they do. I'd say the other area of strength that we're seeing that, we like within Europe is the financials. And obviously that's, been very strong, but actually we continue to see that as being a strong area.
And is that a rates trade?
It's a little bit of rates trade, but it's also just, maybe where do we see value within Europe, and those are the areas, rather than some of the other kind of very out of favour chemicals companies, for instance.
How are you thinking about the geopolitical risk? I'm looking at the Lufthansa share price this morning, down 7%. I think it was down about 9% earlier on at the start of the session, off the back of its results, which, of course, come back to the jet fuel component here. More broadly, do you just try to fade out the geopolitical risk at this point, with all the headlines that go back and forth and don't seem to add up from both sides?
Yeah, it does seem like, what is the longer term trajectory, and I think we can benefit from being those longer term holders and taking advantage of some of those kind of moves. I think on energy, we are broadly neutral, because we know that the underlying earnings of those companies are going to continue to do well. Because the energy price, the oil price, will be sustained at a higher rate, through this year.
So does that mean on the flip side that you continue to be negative on airlines?
Yes.
Right.
Yes.
And what about pricing power, Louise? How important is that this earnings season? Has that been something of a theme? I was drawn to the number. We're talking to Continental a little bit later on, and they're reporting better margins, and partly that's because they're selling some of their higher end products, if that's the right phrase. I mean, is pricing power something that's setting companies apart from each other in this earnings season for Europe?
I think it is, but it's also what we've seen within companies is that, you know, their product mix and where they're focusing is also making a big difference. And certainly, you know, the amount of companies that have a diversified business and then suddenly there's this AI part of their business that's suddenly doing very well. And so I think that's a little bit of the story that's holding up some of the weaker areas for some of those more diversified companies.
Just looking at the FTSE today, so we're up, I suppose partly it's that Astra boost that you mentioned, Anna. It's also oil higher, $84 a barrel on Brent this morning, up 0.9%. Does this FTSE rally have further to run, do you think?
So I'd say we do have exposure, we're overweight within the UK, and I think, you know, it is some of those larger names, and we do have more of an underweight to some of the energy names. But yeah, I think, you know, relative to Europe, things are looking reasonable. I think the latest kind of data out of the UK from a kind of macro perspective was stronger than people expected, and inflation seems to be okay. So I think that's the thing that everybody is very worried about. Obviously, we have a lot of uncertainty in terms of Burnham and that outlook and where that comes from, and obviously we don't want any big jolts or anything, but hopefully maybe with the recent lessons, maybe we won't get that. So hopefully it will be kind of a steady ship through this year.
And Louise, how do you think about momentum and those momentum trades? Because they've done the chip stock momentum was extraordinary until it wasn't anymore, and then it was very much out of favour. Do you lean into that kind of momentum, or are you not chasing that?
So we do certainly have a momentum tilt within the portfolio, but at the same time we're always looking to kind of diversify that and kind of hedge that to a certain extent. Healthcare is one sector that we're kind of looking at, particularly because it has those more kind of defensive type characteristics. It's obviously been kind of underweight this year, so that's an area, for instance, that we're looking at, as well as that kind of real estate continues to do okay. You know, we know it's interest rate sensitive, so you know there are opportunities on the days when people are feeling better about inflation, and so those are the kind of opportunistic trades which are kind of balancing the portfolio in terms of some of that kind of more concentrated momentum together with those underlying more quality, profitable kind of companies.
Okay, Louise, great to have you with us. Louise Dudley there, Global Equities Portfolio Manager at Federated Hermes. Thank you very much. Well, let's check in on the Core 6, shall we? This morning we have a few names actually up more than 2%. So Novo, Rheinmetall, ASML, Schneider. But the ones that are in the red this morning are LVMH and Nestle. So let's get more of a view on some of the individual stocks that are moving this morning with Chloe Melly. Chloe, Zalando was expected to be down in double digits. It seems that's playing out for you.
Yes, absolutely. Good morning, Lizzie. We are seeing Zalando down almost 15% this morning after those disappointing second quarter numbers and the expectation of revenue coming in at the lower end of this guidance range. And analysts have noted that this was driven by particular weakness in sneaker sales. So that seems to be the thing that has really weighed down the performance for Zalando. And we are seeing a huge hit this morning for that company. We are also in the red for the airline Lufthansa after it warned of a growing uncertainty and profit risk because of course, those higher fuel costs. And it's also been dealing with those strike-related costs after the walkouts from pilots earlier this year. And we're down quite significantly as well this morning, about 8% this morning. Moving on to HSBC, which is also seeing some weakness. It resumed its buyback. It had a profit that was, it's actually back in the green now. It was in the red originally, and but it has resumed it buyback. It has profit that beat estimates. It also has improved its cost-cutting target. This was not enough to sustain this really impressive rally in Hong Kong trading, but it seems that now it is getting back in the green for HSBC. Moving on to Fresenius Medical Care, which is also, has seen a bit of weakness this morning. We're down about 5%. There's been persistent weakness in treatment growth, which is really at the core of this long-term strategy for Fresenius weakness, which explains some of that weakness then this morning. Moving on to BE Semi, which is up this morning after being upgraded by Berenberg, and the analysts saying that there was some weakness in the shares recently, a real pullback that now creates an opportunity to buy that stock. And so we're up about 4.5% on the back of that. And finally, let's end with another positive mover. We've got Bayer posting an unexpected increase in revenue, and that was driven in particular by the crop science business, and that is driving the shares this morning. We're up about 4% for Bayer.
Chloe, thank you, Chloe Melly, with those stocks. There's plenty on the move this morning. One of those then is BP. As BP posts its best quarterly profits in 4 years, we'll bring you some highlights from our interview with the CEO, Meg O'Neill. We'll get some analysis from the Bloomberg News team as well. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
There are significant areas for improvement. The balance sheet is first and foremost an area of challenge. You know, we're carrying financial liabilities when compared to the size of the corporation that are just too high. So we've got to strengthen the balance sheet. We've got work to do on the portfolio. We're in too many assets, many of which are not generating the sorts of cash flow or return that we need for them to be part of the long term of the group. So we've got work to do on the portfolio. We need to sharpen our capital discipline and make sure every dollar that we're spending is making an impact on the bottom line.
That was part of my conversation earlier with the BP CEO, Meg O'Neill. Let's have a look at how this is going down with investors then. The BP report out this morning, sending shares up by 0.8%, outperforming the wider FTSE by, well, not much, but sort of on par with the FTSE. This after BP posted its strongest quarterly profit in more than 4 years, as the oil major saw its refining and trading businesses boom amid rising energy prices. Let's bring in Bloomberg European oil reporter Mitchell Furman with us on set this morning. Mitch, very nice to speak to you. So what stood out to you from looking at the earnings report and all of the detail in there? Because from my conversation, we just heard that clip, she's still very much focused in the here and now on transition, which is about the balance sheet and the portfolio.
Yeah, it's about the turnaround story. BP put another key asset up for sale, their Archaea Energy biogas business, which BP purchased in 2022 for $4.1 billion. And BP said it will reach its net debt target range of $14 to $18 billion sooner than expected later this year, which is on the back of these financial tailwinds that you laid out from this quarter. So, you know, Meg O'Neill, the new CEO, she just took over in April. She's trying to kind of step up this turnaround story.
So she called that turnaround getting fit to grow. Part of that, she said, was sharpening capital discipline. And part of that, she says, includes the North Sea oil business sale. Anna pressed her on what this was to do with and, you know, the political implications and potential causes for it. She said government policy hasn't helped. Do you think that it's too little too late from Andy Burnham? She says she's actually talked to the Prime Minister about the sale of this business.
Yeah, I mean, BP is the last remaining big oil global supermajor with its own North Sea business. So clearly all of BP's rivals see the North Sea as uneconomic and not viable in their portfolios. So now with BP having a new CEO and taking a fresh look at the business, she may not have these sort of these long-term, you know, dated back commitments to the North Sea. And as she laid out earlier to us, and she's been saying this pretty consistently since taking over, that BP's projects need to compete within the context of its own portfolio, not necessarily geographically. And so it's about reaching a certain returns threshold.
And in terms of the things that have really been delivering for this business, the trading part of the business, that once again proving to be very useful. The refining part of the business, you know, refining margins have been surging. I suppose the concern, Mitch, is there amongst investors, is there a concern that maybe these things are just very attached to the higher oil price, to the volatility we've seen in oil prices as a result of developments in the Middle East, and that could go away?
And that's a challenge that Meg really hit on this morning in the earnings statement. She talked about how BP needs to kind of hardwire its accountability and cost base. They need to hold themselves accountable to a higher standard, and that essentially in recent years BP has failed to meet its potential, and now she's trying to kind of hold the whole breadth of the company accountable so they can make the kind of right decisions to achieve those targets.
Okay, great to get your analysis, Mitch. Thank you so much. That's been Mitchell Furman. Well, turning to some other earnings out of London this morning, HSBC announcing a fresh $1 billion stock buyback and raising its cost-cutting target as it reported second quarter earnings that beat estimates. The CEO, Georges Eldahéry, spoke to Francine Lacroix in an exclusive conversation earlier this morning.
What I'm really focused on is delivering for the business, focused on all the growth opportunities that we're driving for the business, delivering the strategy and the simplification at pace, and, you know, the upgrades we have shown in our capability to do so and the speed at which we are able to do it safely are a good testament of the capacity we're creating to invest even further in the business.
Do you think a possible UK tax on banks is a possibility?
Look, that's a matter for the government. What we're really focused on is supporting the government and the government's intention to support growth in the UK. Now, if you want to achieve growth in the UK, you need businesses that are investing. You need confidence. For businesses to invest, they need to be able to access financing. For them to be able to access financing, they need a strong, well-capitalized banking sector to support them. So our role, you know, UK is extremely important for HSBC, it's a home market. Our role is to support all businesses across the UK. We support around 700,000 SMEs in the UK, across the UK. and we've grown our lending to them 12%. We've grown our lending to all business in the UK about 10% or $10 billion US. We already pledged another £5 billion of investment to support SMEs in the UK. All of that is what is supporting, or hopefully supporting, that growth that we wish for the UK.
So another view there from a major UK CEO on the Burnham administration. Let's get more on the broader earnings there from HSBC with Bloomberg's Tom Metcalf, who leads our European banking coverage. Tom, the share price reaction was initially negative, then it went positive, and now it's back flat to the downside for HSBC. I did wonder if a little spike in it came from Elderi saying on the call with media that the bonus pool is going to be hiked if performance keeps up. What are the key lines for you from these earnings?
Yeah, I mean, I think that share price sort of move just shows that they're kind of mixed, right? They have beaten on quite a few of these estimates. But, you know, on the converse, you could say, it's not really kind of core earnings that have been boosting that. And, you know, there's a little bit of sort of cost guidance, you know, around the bonus point, basically, which might have sort of, spooked some investors. But broadly speaking, you know, they're executing on their strategy. As we just heard then, you know, they're kind of, you know, full steam ahead on that. There's no deviation. And it just sort of feels they're kind of, you know, rolling through quarter on quarter. They've now absorbed Hang Seng effectively. So, yeah, no sort of nasty surprises in this set of earnings, at least.
Yeah, I thought it was really interesting, what they said about AI, about how Elderi said he's personally looking at token costs, which I think is great. You know, maybe you've got CEOs all over the world sort of tracking what they're spending on tokens all the time. That area of cost concern layered on top of the bonus pool cost concern, then, you know, is that adding up to something a little worrying for investors?
Yeah, well, I think that's probably, if you're looking for something to take away, you know, on the downside, it would probably be that sense. And I agree, it's totally fascinating to hear a CEO say, hey, that's now a line item that I specifically, I think he said, sort of individually look at. And it's kind of a whole thing of all these banks, just how much are they having to spend and how well are they spending it, right? Because you can easily spend a bunch on AI, but it's just sort of how they're actually seeing any returns on that. So yeah, I wouldn't expect the shares to do too much more today. You know, they've been open in Hong Kong for a while, obviously just opened in London, and broadly speaking, it's probably, you know, everyone looking ahead now to the third quarter, fourth quarter, and no nasty surprises so far.
And you heard Elderi's take there on, you know, the possibility of a new UK bank tax under the Burnham government. What's the general feeling out there about whether banks are preparing for this in London?
Yeah, it was very considered words right there. He clearly wasn't looked to make enemies in number 10, you know, saying, look, that's a matter for the government, but certainly all bankers out there, they do not want any kind of extra bank tax. They feel they're very, you know, highly taxed at the moment, and as he was pointing out, and this was sort of echoes from the Rachel Reeves era, you know, how they've tried to manage that with the Labour government is by going, look, don't tax us more because it enables us to then, you know, invest more in the UK, support more SMEs, as Elderi was just saying. So it sounds like they're just going to continue that messaging. But of course, someone new in number 10, someone new in number 11, it's like, does that message land as well and clearly as it did with Rachel Reeves?
Yeah, we certainly asked NatWest and Lloyds about that last week, didn't we? And yeah, everyone getting their chance to get their views across. A bit of disappointment maybe on the buyback, may underwhelm, seems to be the view from some. I think there's a Jefferies analyst saying that the buyback may underwhelm. I mean, this is a business that's been in transition and restructuring, and part of that to deliver these buybacks.
No, exactly. You know, as I say, they bought Hang Seng, so they had said previously, look, we had to pause them for a while, so they're coming back. And it's always the way, right? Like, $1 billion sounds great, but, you know, it's kind of what are people expecting for a bank the size of HSBC? They're certainly, you know, known for being quite conservative on that front. And although the CFO was saying, look, buybacks are our favourite way of returning capital, you know, I think if you were sort of, you know, really bullish on HSBC, you kind of want to see a little bit more there. But, you know, certainly it was a buyback's a buyback, I suppose, as well.
Tom, thank you very much. Thanks for joining us. Bloomberg's Tom Metcalf with the latest on the HSBC earnings. 8:26 here in London. When we come back, we will check in on the outlook for bond markets. We'll talk to Miles Bradshaw from JP Morgan Asset Management. That's next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini.
We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
This is the opening trade, 30 minutes into Tuesday's session, and you join us on a day where we have positivity across these European equity markets, up by 0.7% on the euro, on the stocks 600 this morning. And actually, there's some complexity beneath the hood, which Lizzie, I know you'll get to in just a moment. On the Xetra DAX, technology perhaps to the fore. We've had a positive session in the US on the tech front. Those numbers from Palantir, ahead of those numbers from SpaceX, all of that adding up to something pretty positive after hours in the US. And so technology stocks on the DAX are positive, despite the fact that some of the retail names, Zalando in particular, is a weak spot over on the German market. The FTSE 100 also being dragged in a couple of different directions. Some of the mega caps that we've heard from in terms of earnings reports this morning not setting the pace, and actually basic resources, the best performing sector across European markets, and that plays well for the FTSE 100. So a kind of mixed picture under the hood, Lizzie, but overall making some substantial gains across European stocks.
Yeah, and there's breadth to it. If you look at the ratio of members higher and lower this morning, significantly more when it comes to the gainers on the Stock 600 this morning, but not so much volume. If we look at the leaders and laggards today, Bayer is one of them. We've had a raft of earnings already, but their earnings beating estimates. Crop science strength seems to be the reason for that. We're also seeing BE Semiconductor upgraded at Berenberg, so those shares up more than 4%. And Segro is up. We've seen Prologis agreeing to final terms for a £14 billion takeover of this business, so those shares up 1% nearly. Flipping over to the laggards though, and we've talked about Zalando several times. We saw it on TradeGate. It's played out in the actual session, down 17%. Sneaker sales missing there, so that affecting this European retailer. In Germany as well, Lufthansa shares down 8.8%. Jet fuel still a problem for the airline industry, and that hurting profits for that airline. And Fresenius Medical is the other one that we've got in focus after results. Those shares down 4.9%, Anna.
Lizzie, let's take a look at some of the other stories we're tracking this morning. SpaceX is set to report its first ever quarterly results after the close today, the first ever as a listed company, following the company's blockbuster IPO this summer that raised roughly $86 billion. The stock has underwhelmed since the powerful rally in its first few days of trade. Analysts are likely to press CEO Elon Musk on the company's progress of its high-spending AI and Starship rocket projects. The yen has posted its first drop in 5 days as the impact of the latest intervention by authorities starts to fade amid debate over its sustainability. Japan's historic joint intervention with the United States is shifting market focus to whether the yen can strengthen beyond 155 per dollar, a threshold strategist view as the key test for the rally's staying power. And President Donald Trump says his latest offer of talks is a last chance for Iran after he called off what he said was a major attack on the Islamic Republic that he had apparently planned for the weekend. Tehran has denied negotiations with Washington, but says talks with Oman to get more ships through the Strait of Hormuz are making progress. Let's get an update on developments in the Middle East then, and bring in Bloomberg's Abir Abu Omar, who's in Dubai. Abir, bring us up to date, because it seems, yes, we've had these comments from President Trump with a last chance for Iran, but aside from that, a lot of the narrative seems to be disagreement around whether talks are actually taking place, the same as we've been seeing in recent weeks.
Yeah, good morning, Anna. I mean, just like you were just talking about when it comes to oil and these wider negotiations, it depends really on who you talk about. When you talk to President Trump, he says that the talks are ongoing despite the denial from Iran. When you talk to the Iranians, they say that there is no active discussion happening with the United States. They've maintained the line, Anna, just to be sure, that talks can happen through mediators, through delegates, but no active discussions between Iranian mediators and U.S. officials are taking place. Now, other negotiations are taking place, and we've reported that last week and into the beginning of this week. And those are happening between Iran and Oman, mainly on securing a line or a pathway in the Strait of Hormuz to get a trickle or a bigger trickle of movement of ships and vessels through the Strait of Hormuz. And that is really about opening up a middle pathway, one that hasn't been used throughout the course of this war, to get more vessels to be able to make their movements through the waterway. Now, those talks, we understand, are still ongoing. There's no tangible progress so far. We understand that they are in final stages, Anna, but the exact intricacies of those negotiations, we're just not sure about what is exactly being discussed. And then when it comes to the wider negotiations, of course, a stark denial from Iran on whether they're happening. President Trump maintains that they are happening. So wait-and-see mode yet again here in the Middle East.
Okay, Abir, thanks for the update. That's Bloomberg's Abir Abu Omar as we look at Brent trading just shy of $85 a barrel. Well, let's bring in Miles Bradshaw for the bond market perspective here, head of global aggregate bonds at JP Morgan Asset Management. He joins us around the desk. Good to see you, Miles.
Morning.
So when it comes to positioning around the geopolitics, from a bond market perspective, is it simply best to assume that we're just going to have higher oil prices for a while here? How do you handle all these headlines and all the volatility?
I think a lot of it is you have to ask yourself what is priced into the market. We don't know how this conflict is going to resolve itself. It seems that it's not going to be escalating to the sort of the intensity of the conflict we saw in March. But how it resolves itself, how quickly, is unclear. Now, if you look at the market, if you look at what the market has done since June, yields are up about 20 basis points pretty much across the world. All of that has been in real yields. It's not inflation expectations. So while the oil price went up in July, it's not feeding through particularly into higher long-term inflation expectations. And I think broadly speaking, what the market is doing is giving you a risk premia for a lot of the uncertainties. The oil crisis is one, the inflation, the Fed's reaction function. There's a list of things we could talk about. And unless those risks materialize, then I think the market should stay in its trading range, which broadly speaking has been 3.75% to 4.75% over the last 3 years. And we're at the top of that range now.
You just wonder if that's too optimistic, because if you listen to the rhetoric from President Trump, he was threatening strikes, is still threatening strikes.
Yeah.
The worst since World War II. He's talking about decapitation, and yet there's, as you say, still this optimism that this war is going to end. It wasn't because of the geopolitics, notably, but we were talking to Chris Watling earlier. He was talking about the 10-year going to 6% in the US. Is that just a far out?
I don't think the conflict needs to end. That's the point. You know, you've got the same situation in the Ukraine. There's still a conflict going on. It's not having such an impact on the European gas market. I mean, it's a terrible situation we've got, but for the markets, what matters is the price of oil and the flow of oil. And it's noteworthy that we didn't hit the highs in oil prices that analysts forecast back in March. If you'd have thought this conflict was going on, you'd have forecast that oil would be at $100+. So oil is definitely getting out. Some of it is demand is lower. Some of it is because of the electrification you've seen in China. Some of it is the release of strategic reserves. So the economy is adjusting, and I think you can see that in the earnings reports in the state of the economy. So I think what you need in order to get central banks to be raising rates is the oil price pushing higher and the conflict becoming more intense. When I look at the market's pricing that. So there is positive skew for owning bonds in this market today.
Okay, and just to go back to where Lizzie started the conversation about where yields are heading and global bond markets, then, Miles, you talked about how, yes, we've priced in more risk premium, and some people said that was to do with the Fed's reaction function and maybe a lack of clarity about how that responds. But if that's what's driving things, then why aren't inflation expectations also rising? Because if we're not sure whether the Fed is going to hike rates and limit inflation, why don't long-term inflation expectations?
It's a really good question. I mean, when we look at the data, you've had a number of supply-side shocks. The Fed have gone through this. It's, just looking at core PCE, that's the outlier on inflation compared to a range of inflation measures such as core CPI, Dallas Trim Mean. It's the core PCE that has been accelerating. It's up about 70-odd basis points from April 25. 96-odd% of that move is down to 3% of the index. Portfolio management fees, airfares, and software. So that is an element of what I want to say supply-side shocks. The portfolio management fees are about the calculation methodology. It's really a function of the stock price, and the stocks have gone up. That's drifted those fees up. So I think, firstly, that is the analytical framework to suggest that you're not having an increase in underlying core inflation. You look at the labour market wage data, you look at the state of the labour market, vacancies, quit rates. So I think what you're having is concern and a risk premium related to the supply of bonds. And some of that is the fiscal deficits, some of that is the hyperscaler capex. I don't think it's so important, but you could argue the Bank of Japan fears that the intervention may require them to sell bonds. A lot of fear is being priced into this, the uncertainty element, rather than expectations that inflation is going to be a lot higher.
And I was going to ask you about that very thing then, about the Japanese, the read across from Japan and what they're doing there with the US Treasury now into Treasuries. Because, yes, Chris Watling, we talked to earlier on, was saying that he thinks the motivating factor here is he doesn't want the Japanese to just sell Treasuries. He wants there to be another way that they can manage what's going on with their FX. And some of the detail might suggest he's leaning into that, sort of flagging other facilities available at the Fed so they don't have to sell Treasuries. I mean, what are you thinking about that?
It's very difficult to have a clear idea what the US objective is, partly because the size of the intervention from the US side was relatively small. Selling euros to buy yen is a relatively unusual way to try and reduce the value of the dollar versus the yen. I look back at the US intervention in the Argentina peso, and that was a very political act. And my interpretation is here it's also a very political act. And it could be a lot to do with the negotiations about the FDI that Japan is going to do as part of the trade deal. And for that to work, you've got to have the yen a little bit lower. I think fundamentally, if I take a step back as an investor, this is really, to address this fundamentally, you need to address the fundamentals. And the market in Japan is clearly signaling the Bank of Japan is behind the curve in normalizing and raising interest rates. Without that, the intervention that you're going to make isn't going to fundamentally alter the value of the yen. It can slow the rate of depreciation of the yen.
And do you think the BOJ will step up the pace?
I think, well, for me, that's the clear opportunity as an investor. The market is pricing a hike every 6 months. That seems a low hurdle. The BOJ say that inflation is sustainably on target. So for me, avoiding and being underweight Japanese bonds is a good way to add alpha to a global bond benchmark.
I just want to come back to the hyperscalers because you mentioned them earlier, and in your notes you say you have a small but growing allocation to the hyperscaler debt complex. Why? When there's
supply, you're going to get lots of opportunities to nibble away at this. I mean, value is being created. These are fundamentally, if you look at, you have to adjust for the ratings, but you've got strong operating cash flow. So you've got a balance sheet that can delever very quickly over a couple of years. You've got forecast leverage that is about half that of the corporate bond index, about 1 times leverage. And you've got bonds that are trading at about 150 over in the 30-year sector, which is wide to some BBB names. So value is being created fundamentally. We know why value is being created, because there is a huge amount of supply coming. And I think, as with any investment strategy, you've got to manage risk. And the risk has to be, you want to slowly accrete these gains. You need to do your bottom-up research properly but we're still quite early in the hyperscaler supply story. There's still a lot to come.
Miles, thanks so much. Really good to speak to you this morning. Miles Bradshaw, Head of Global Aggregate Bonds at JP Morgan Asset Management. Coming up on the programme, the German auto parts maker, tyre maker, Continental, sees profitability rise for the second quarter. We will speak to the company's CFO to dive deeper into the results next. This is Bloomberg.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see, the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Earnings season is here.
There are earnings galore.
Some areas have done well. Equity trading has been an area of resilience.
Bloomberg is first to break the numbers.
Diving through the details of these earnings.
That is the weakest growth in more than 3 years.
With the smartest insights.
Are we seeing dislocations that point to something a little bit more severe?
If you look at where global growth expectations are, compare them to the start of the year, they're actually pretty similar.
But there is this uncertainty, and we haven't seen it in the results.
Continuing coverage on Bloomberg.
Welcome back to the opening trade. 46 minutes into today's session, and it's green across the screen for European stocks this morning. Up 0.5% on the stock 600. Lots of earnings strands to bring you this morning. Just two really standing out to me. Zalando shares down more than 16%, having narrowed their full-year adjusted EBIT forecast. Also keeping an eye on Lufthansa. Those shares down 9.7%. Anna, they've warned of a profit risk because of the jet fuel surge. So that really affecting the broader airline industry this morning. underlying, but sectorally, very split, really. Basic resources, top of the basket, retail at the bottom, and travel and leisure not far behind.
Yeah, the basic resources trade is an interesting one, isn't it? Because we don't see a huge amount of standout performance. I mean, I suppose we've got a slightly higher gold price this morning, so that, you know, maybe is part of it, but not a huge amount of movement on the underlying commodities, which is often the thing that sends basic resources to the top of the basket, but we're not seeing that today. So an interesting market. One of the companies that's reported today is Continental. The German manufacturer saw operating profitability improve for the second quarter as it sold more of its premium and expensive tyres. The company also highlighted that raw material costs are expected to increase substantially for the second half of the year. We're joined now by the Continental CFO, Roland Welzbacher, and really nice to have you with us, Roland. Thank you for joining us here on Bloomberg TV. Let me ask you about the overall performance of the business, because you seem to have done okay, and some analysts had gone into this earnings report wondering if we might get a profit upgrade and therefore describing your guidance as conservative. How do things look to you right now?
Good morning, Anna. I think it's a fair question given our good results in the second quarter. Adjusted EBIT came in at 570 million. That's a 35% increase year over year. Why did we not raise our guidance? Two reasons. First of all, the ongoing economic uncertainty is still weighing on the market. Tires volumes, actually. So we have seen tire markets being down versus prior year. We think this is going to continue in the second half. Light vehicle production was down globally in North America, in Europe, and also lately now in China. And this will not stop. Replacement markets are holding up better, but volumes are still below prior year, including also the truck business. So volumes are down, but the big game changer now from the first half into the second is the raw material cost. We have seen a lot of tailwind in the first half. In fact, that was a triple-digit euro million amount tailwind. This is not only going, it's going to reverse now in the second half, and it's going to be a headwind in front of us, and this is the game changer, and this is why we did not raise our guidance. In fact, we confirmed our guidance today. What we expect for the tire business, however, to come out at the upper half of our guided range, whereas in sales we expect to come out slightly lower to the midpoint.
Well, okay, and so Roland, tell me more about this raw material cost that you're flagging in the second half of the year. Is this connected to the Middle East? How much of that higher cost is connected to oil prices and developments in the Middle East?
Is basically all connected to the ongoing crisis in the Middle East. We said earlier it's going to be a low to mid triple-digit euro amount headwind for the full year. We have seen this coming in now at the end of Q2, but it's going to fully unfold in the second half. Our basic assumption is an average oil price of $85 per barrel. While we have seen a lot of volatility lately, while we still believe our basic assumption on the 85 average is correct. And of course, we designed mitigation plan in order to offset the majority of these costs. And most likely we will be successful, but the tailwind of the first half is then missing in the second half.
Okay, let's also just talk about M&A, because you've had the sale of ContiTech to Lone Star. That's been agreed. What are your future plans for M&A? Hold on.
Yeah, in general, we're open for potential acquisitions. We have a clear focus. We have a very strong market position in Europe, but we still have a lot of potential in the Americas and also in the APAC region. So if there is an interesting target, we would look very closely. We have a very good situation in the pass car business and in truck, but we have way to go in the specialty tires business. And if we see an interesting target, as I said, we will look very closely and analyze whether it could be value accretive. And if so, we will certainly also find the funding.
I wonder as well how the EU anti-dumping investigation on Chinese imports has been impacting your business. I wonder if it changes some of your pricing assumptions going forward.
So we have now seen at the beginning of July what the European Commission will put in place going forward. It has already led to a lot of disruption because in front of these measures, the dealers stocked up in these tires, and these were weighing also on what we call the sell-in, so what the tire industry is actually selling to the dealers. So whether this has a benefit in the second half remains to be seen. Not so much for us, probably because we are focusing on the premium portion of the market, whereas the anti-dumping measures are focusing on the lower tier pricing segments of the market.
Roland, let me ask you about pricing power, because you've mentioned that focus on the higher tier, and that does seem to be something that we can see in the numbers that has benefited your business, focusing on more luxury products, if that's the right word. What kind of pricing environment do you find yourselves in? How much pricing power do you have?
Well, in general, we try to find the right positioning, and we always balance the volume development with our price mix decision in order to find the sweet spot. In general, we're happy with where we are. We want to grow with the market. We don't want to make market share, so we want to profitably grow, and this is why it's important to find the right price position in general. We focus on the premium market, as we said before, but we also focus very much on the UHP portion of the market. That is the ultra high performance tires, the bigger tires, because they're over proportionally profitable.
Can I ask you about your vulnerability to higher energy prices, Roland? We've talked about how that's going to be a headwind in the second half with higher raw material costs. But how should we think? Now you are a simpler business, having sold off parts of what were previously, Omovio and other things being put up for sale. So does this mean that higher oil prices will drop more seamlessly, I suppose, into the numbers at Continental? How should we think about your vulnerability to higher energy prices?
Energy prices is an important input factor for tire production, there's no doubt, whereas the raw material prices play right now a much bigger role. In order to drive down energy prices, we also invest into sustainability measures. You may have read in our press release that we have now put some wind turbines in one of our German plants in order to drive down the energy cost and make us more independent from market fluctuations, and we will see more of that in the future.
Okay, Roland Welzbacher, really great to have you with us. That's the CFO of Continental off the back of their earnings. Really appreciate you making time for us today. Well, let's pivot back to the markets and bring in Bloomberg's Skylar Montgomery-Koenig. And Skylar, I do actually want to pick up on the earnings theme because we're still looking ahead to SpaceX numbers out later today. And I wonder, given that the IPO became a macro event, what you're looking for in these numbers that would be relevant to your perspective?
Yeah, I mean, it's really interesting because there's so much attention on it because we know we're getting this huge demand for capital this year, and Tesla, or rather SpaceX, was really at the forefront of that with the first major AI IPO that we know we're going to get a couple more later. Now, I will say the questions being asked of SpaceX are really important in that, how much CapEx is being spent, whether that spending you can actually see future earnings come from that. And, with the AI business in particular, when do you actually see profitability? I think where it's less relevant is you've seen more turbulence in the SpaceX price action than you might expect elsewhere. I don't think there's a huge feed through in terms of its very different business models. The market's actually looking between AI winners and losers now. So I'm thinking more what questions are being asked rather than how do those results feed into what I expect from other companies. I'll also say in that there's a major event later this week in that you get the first share unlock. And the question is really, who owns those shares? Will they sell them? Do they see optimism around the future profitability? Or is that another downside event for the stock later this week?
Yeah, and we talked about this as having portfolio effects when it IPO'd, didn't we? Maybe they last. Is this a business with an identity crisis? Seems to be part of the conversation in the Asia session as well. Briefly on the yen then, Skylar, you think that this is, it's a stretch to achieve the goals, whatever those are, for the Japanese and the Americans in strengthening the yen?
Yeah, I mean, with the yen, we're always told that when you have multilateral intervention, that's going to be this major event. And I think this intervention isn't quite convincing in that the way it was done, so the U.S. sold euros, it's been reported, to support the yen. So that tells you that they don't actually want to depreciate the dollar. And there's a scale issue there in terms of the U.S. doesn't have a huge amount of reserves. And then also if it's to support U.S. treasuries rather than to weigh on the dollar yen, then it's not that convincing.
Skylar, thank you very much. Skylar Montgomery-Koenig from the Markets Live team. And just on a programming note, I will be moderating a live Q&A on the Bloomberg website later today. It's all about markets, non-stop trading, 24/7 or something like it. Join us if you want to hear more. This is Bloomberg.
and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
HSBC announces a fresh stock buyback and raises its cost-cutting target as it reports an earnings beat. We'll bring you some of our exclusive interview with the chief executive. President Trump says his offer of talks is Iran's last chance as Tehran denies negotiations with the U.S. are taking place. Plus, SpaceX is set to report its first-ever quarterly results today after the company's blockbuster IPO. So there is a lot going on, of course, on the earnings front, not only AI, but also everything that's going on with oil and the Strait of Hormuz. So this is a picture across the board. We look at yen, we look at oil, and look at that. We look at treasuries as well. Stock extending gains, investors really turning their focus to corporate earnings after weeks of pretty choppy trading spurred by concerns over tech valuations and, of course, everything that we're seeing in the Middle East. Yen will have a deep dive into why the U.S. supported, of course, the Japanese currency, but also what it means for a BOJ policy going forward, or 157.80. And then the other thing I'd be looking out for is this rebound in U.S. technology shares, followed by a pretty volatile month. Let's also take a look at the European markets map. Now, we're kind of coming to the end of earnings season in Europe. They're definitely getting their cues from what's happening in the U.S. You can see we're seeing a little bit of green overall. The FTSE gaining 0.4%, similar gains for the DAX and the CAC 40, and that just in general, Treasury is pretty much steady. Again, oil rebounding from the previous session. So for the conversations that matter and the insights you need, let's get started. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, another big week for earnings after a period of market uncertainty driven by concerns over tech valuations and the conflict in the Middle East. Now, we'll discuss all of that and more in a moment with Wei Li, Global Chief Investment Strategist at BlackRock. But first, HSBC has announced a fresh stock buyback and raised its cost-cutting target as it reported second quarter earnings that actually beat estimates. Now, the strong results come despite the bank facing a crackdown by China on cross-border wealth flows.
We're growing across all our indicators, our revenue growing, our loans and deposits are growing, our fee income is growing. We generated returns of 19.5% on tangible equity. So this is a good demonstration of strong business momentum. We're also very pleased with the progress we're making on the strategy, which we're executing with precision, with discipline, and at pace.
Well, let's get more now with Tom Metcalf, Bloomberg's managing editor for finance in Europe, the Middle East, and Africa. Tom, good morning. So talk us through the earnings.
Yeah, I mean, look, pretty bullish tone struck by HSBC, as we just heard there from the CEO. And, across the board, largely beat estimates, relatively good news on the buyback. But, of course, this is all against the backdrop. Bank shares, broadly speaking, have risen quite substantially over the past period. And, effectively in HSBC, while there was no nasty surprises, there was probably no shock and awe. Wow, look, this is a really positive new development. So shares sort of muddling along, I'll describe it today. But, HSBC will probably be pretty happy how this quarter has gone.
Is this thanks to the chief executive and his restructuring efforts?
Well, certainly that was the big message is, hey, that strategy is starting to bear fruit. We're getting near the end of what we think are, kind of necessary divestments. So, he mentioned that basically in terms of our sort of footprint, he thinks HSBC is nearly where he views it as necessary to be. This comes off, they recently just sold the Egypt unit, for example, which sort of puts a cap on many of those divestors. So there's that. And then, broadly speaking, as you look across the bank, most business units were performing sort of in line with estimates as expected. So it does seem, El Hedry's, doing a pretty good job of kind of pushing this huge behemoth of a bank in the right direction.
Tom, as ever, thank you so much for joining us. Terrific briefing there from Tom Metcalf. Now, we're also joined by Wei Li, Global Chief Investment Strategist at BlackRock. Wei, when you look first, we've been really through a lot in terms of earnings season. Mm-hmm. Is there a common thread? It feels like actually companies in general are doing better than expected. Certainly the banks are.
Yeah, the banks are doing well, and I think this environment of higher rates and market volatility definitely help with their bottom line. And the bigger picture is that earnings are strong. Earnings are broadening out as well. And now we have had a period of kind of market positions being washed out a little bit and a bit of deleveraging. I think it is time to focus on fundamentals, and fundamentals are holding up.
And so in terms of fundamentals, what does it mean for the industries that you want to be invested in?
Well, right now we're still overweight the AI theme. When we look at AI fundamentals, you look at order book visibility that is extending into the next few years, and demand continues to be very strong. Adoption is accelerating. So certainly the fundamentals look good, supporting our overweight in the AI theme. Now, having said that, risks have risen as well the last few weeks. The first risk is the risk of commoditization. That applies to both the model layer, but also the chips layer, as it seems. And the Chinese equivalents do not need to match the frontier to be commercially relevant. We could see pricing power pressure for the leaders, as well as, this would have consequences on their kind of peak cycle profitability. But I would say that this risk is more around kind of how profits are being distributed and redistributed across the layers, rather than kind of impacting the broader AI conviction, because if anything, commoditization could accelerate AI adoption. The second risk that has risen is risk of capital capacity. If you look at greater sovereign financing needs together with accelerating AI investment, all of that happening against the backdrop of intensifying competition for physical resources, pushing up real rates, pushing up term premium. So that higher rate environment raises the bar for fundamentals to clear, and that's another risk that I think has intensified the last few weeks.
Wait, going back to AI, we've seen these bouts of volatility, or an earnings report that didn't really go to plan, too much capex. Is this an opportunity to buy some of the stocks, or do you just stand back and watch?
Well, we definitely continue to hold our overweight, so we have not changed our conviction in the overall AI thesis. If anything, market's becoming a bit cheaper because of recent correction, and also some of the leveraged positions being washed out is positive for kind of positioning in the near term. But as I said, the two risks that have increased the last few weeks means that we're not adding to our conviction, but we're staying overweight.
Wait, overall, the U.S. economy is pretty strong, is holding up, but a lot of it, again, has to do with this capex spending in AI. What does it mean for other industries that are very focused on the U.S.?
I would say that if you look at the CapEx trend, yes, AI-related names, you see CapEx increasing, being revised higher and higher. But CapEx trend for the broader economy and markets have actually been going sideways and even kind of going down in certain areas. So you really see this competition intensifying and AI CapEx coming at the expense of CapEx in other sectors, but also at the expense of buyback, for example, right? So we do see it's not a zero-sum game, but definitely the competition is intensifying, and that is really setting the backdrop for rates, which has catalyzed a lot of the kind of the announcements and developments the last few days.
What's your take on yen? I mean, this is the story that we've been following really closely. First of all, about U.S. intervention. I don't know whether that is a template of actually how we're expecting the Treasury Secretary to act in the future, and what do you think happens to yen from here?
The bigger context for the yen intervention is the rate backdrop. So if you look at U.S. long rates, 30-year hitting the highest since 2007 last week after FOMC, that actually is triggering the immutable law, which is funding cost for U.S. government, and that creates pressure, both political and economic. And since then, we have seen the yen intervention. We have also seen Middle East talks restarting, and on Friday we had this almost strange headline of kind of floating the idea of reducing the frequency of FOMC. So you do see lots of kind of evidence of immutable law, of the higher rate environment influencing and impacting policy steer. So that's the bigger backdrop, but the even bigger picture is that for years now we have been talking about this word shaped by supply and how accelerating AI spend into greater competition for physical resources, pushing up higher rates. So this year, some of these developments accelerated, but they are not new.
So when you look at treasuries and the move that we've seen actually for global bond markets, is that symptomatic of what you're saying?
100%, 100%. We have seen meaningful repricing in rates the last few years and accelerating this year, but it's just kind of prolonging, it's extending the trend that we have seen for a long time. And that means in terms of the role for treasuries in portfolio, it's less of a diversifier in this environment, but more of an income provider. And the higher rate environment also raises the bar for risk assets to clear.
Okay, wait, don't go anywhere. Wei Li from BlackRock stays with us because we'll talk about inflation and we'll talk a little bit more about the Fed next. But President Donald Trump has threatened consequences if his latest offer of talks with Iran don't result in a deal.
Well, you don't know. I don't know. I think we're going to maybe get something, but I want to give him every last chance before decapitation. It's very tough to do what we have planned, still planned. We'll see what happens. But it's a very, very tough thing to do. I think I'm very proud of the fact that I'll give people a chance. This is a big move. To do an attack that big on a country, I'd rather not do it.
Well, Tehran has denied negotiations with Washington. They're denying that these talks are taking place, but says that talks with Oman to get more ships moving through the Strait of Hormuz are making progress. Now, for more, let's bring in Paul Wallace, our managing editor for the Middle East and North Africa. Paul, good morning. So are there any signs that we could actually see a deal between the U.S. and Iran?
Hi, Francine. I think the first thing we have to see is actually a deal between Oman and Iran. That's what things hinge on at the moment. So Oman and Iran are talking to each other about some kind of deal that will essentially allow for more traffic to go through the Strait of Hormuz. It will likely be a short-term deal. If they can get that, then the attention turns to Trump and whether or not he's satisfied by whatever they come up with. He is asking for a total and immediate and full reopening of the Strait of Hormuz, and he's implying he wants that as soon as today. He's, signaling that today is pretty much the last day before he does launch those massive strikes that he held off on over the weekend. He's very unlikely to get a total reopening of the strait straight away. So I think if Oman, which is essentially trying to appease both Iran and the U.S., can get something that does allow for traffic to pick up, and that is good enough for the Americans, then yeah, we will have a deal of sorts, a deal that sort of takes us back to where we were in mid-June when the interim peace deal, now collapsed, was signed. So that's, I think, sort of the best we can hope for in the immediate term.
But Paul, what would that actually look like? Again, I mean, what does it mean for Hormuz? Do you have to, to pay the Iranian Revolutionary Guard if you go through Hormuz? It's unclear what a deal would look like that the U.S. would accept.
Exactly. It's very unclear, and this is another big question. What would it look like? Iran has been pretty consistent in saying that it must, or that it has the right to control traffic going through the strait, and that thus it can charge fees of some kind. So it's possible that any deal Oman gets through today or in the next few days does allow in some way for Iran to charge ships fees. That is, of course, what America does not want. America and most Gulf Arab states and European nations and Asian nations, effectively most of the world, are saying that can't happen, that you have to have free passage through this vital waterway. However, they may just, including the Americans, may just accept a short-term deal that gets traffic going again, even if not at the levels that we saw pre-war, and that keeps ships safe if it allows the US and Iran to go back to formal negotiations. So whatever Oman can come up with today will be messy, and it will leave a lot of questions unanswered, and it certainly won't be, a full reopening of the strait, but it may just be good enough to sort of tide things over for the next few weeks.
Paul, thank you so much. Paul Wallace there in Dubai. Now still with us, Wei Li, Global Chief Investment Strategist at BlackRock. Wei, sometimes the markets got ahead of themselves and they were expecting a deal when actually we felt, when you speak to the military folks or diplomatic folks, that it was very difficult. But what's your take on oil overall right now?
Well, so far, the Strait of Hormuz has been closed for quite a few months now, and macro damage is accruing. Our estimate of the impact for this year is global GDP taking a hit of close to 0.5%, and inflation being pushed higher by north of 1%. So that is actual macro damage that we should expect for this year. And the physical supply disruption pushing oil price higher over the longer term comes on the back of broader world shape by supply framing that we have been talking about for the last few years. So all of that is kind of accelerating the trend that we have seen for quite some time now. But I would say that, you talked about a deal being very, very difficult. I think really understanding kind of the immutable laws governing kind of rhetoric and policy steer is a good framework. So, we just talked about kind of the yen intervention, and the slightly more reconciliatory tone on the Middle East front should also be viewed in the context of higher rates, long rates pushing multi-decade high, and that actually is a tangible, immutable kind of governing force, the cost of funding the U.S. government, that could influence policy outcomes. So pay attention to long rates is how we kind of evaluate the bigger picture too.
What are you expecting in terms of non-farm payrolls?
Well, U.S. labor market has been somewhat resilient, really resilient. All this talks about AI displacing jobs is not really showing up in the number, and labor market remains to be really tight. You look at unemployment rate, so elevated wage pressure still points to inflation over the longer term, settling closer to 3 rather than 2, and that together with the ongoing physical disruption is why inflation is staying elevated in our new regime framing, and that is also why the job for central banker is so much harder.
Are you expecting the Fed to raise rates?
We are actually of the view that they could stay put. I know market has gone through a wild repricing supply disruption, leading to markets to reprice more hikes versus cuts at the beginning of the year. But there is a huge amount of uncertainty in terms of the reaction mechanism of the Fed under wash, and the reducing of the forward guidance does not help in that regard. So that together with greater inflationary risk, risk and uncertainty over reaction mechanism is why we think that even if policy rates does not go much higher, term premium needs to reprice higher, which we have already seen.
As always, thank you so much for joining us, Wei. We went around the world in 17 minutes, so we did quite a lot. Wei Li, Global Chief Investment Strategist at BlackRock. Coming up, Spain says nearly everyone who illegally crossed into the African enclave of Ceuta last week has left, as the EU leaders prepare to hold more talks on the incident. Details ahead, and this is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back, everyone. Well, U.S. and Japanese officials have warned investors that they're determined to keep defending the yen after jolting currency markets with their first joint intervention in 15 years. Japan's finance minister has sidestepped a question on whether the U.S. helped strengthen the yen out of concern over Tokyo's financial markets. Well, let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. So good to speak to you, Ven. So is there a chance that the yen could push higher in the coming days in response to the intervention?
Morning, Francine. So far, the evidence looks flimsy that it will go higher because, what ails Japan is not its currency being undervalued. Yes, it is a problem that the currency is undervalued, but it's not the fundamental. There are fundamental reasons for that. And one of the biggest reasons is the fact that the Bank of Japan is keeping rates artificially lower when it should be sending rates higher. And that is unless they cure that problem, I think that the yen is going to be flailing about. We've already seen it go below 157 per dollar after moving higher. So the markets are really saying, you know what, you can do all the intervention that you can mount, but it's not going to help the yen beyond the short term.
So we've also reported that the Treasury Secretary called for the Fed's help to defend the yen. This feels unusual, then.
Yeah, it does feel unusual, and it's not every day that the Treasury Secretary jawbones the Fed to be intervening in the markets or at least help another country intervene in their markets. But I think that, it shows what is really at work here, because the Treasury used the Exchange Rate Stabilization Fund to prop up the yen, but those funds are very limited in amount. The U.S. currency hoard is just about under $40 billion, so they don't really have too much to spend, so they need to rely on the Fed to supply those swap lines. And basically what the Fed is saying is, look, we can't afford the Japanese authorities to be selling treasuries, which they need to raise funds to rescue the yen. So basically, it is a very self-oriented defense, meaning they don't want Japan to be selling treasuries here.
Then it also seems that longer-dated bonds have been selling off everywhere, right? We've been reporting. Do you think there's any place to hide?
There are not too many places to hide, but Germany is one of them because, the ECB, unlike the other major central banks, has already raised rates in response to the second-round effects of inflation stemming from the Iran war. The Bank of Japan has also raised rates in Japan in June, but that is already, as we discussed just now, they're already behind the curve, whereas it's not the case with the ECB. If you look at the Fed, Francine, if you look at the Fed and the Bank of England, they're both trailing what market expectations are in terms of vis-a-vis the rates, and therefore their bonds are being punished as well. So if you look at the worst performing bond markets this year globally among the G4 economies, it's those of Japan and US, with gilts not faring far too behind. So the only place to really hide is Germany, and that's a relative play.
Ven, thank you so much. Ven Ramder, MLive cross-asset strategist. Now, Spain's foreign minister said nearly everyone who illegally crossed into the African enclave of Ceuta last week has left, pledging to return every last person to Morocco. Yesterday, EU ambassadors expressed solidarity with Spain, while the EU Commission President Ursula von der Leyen said the country managed the situation efficiently and effectively. Well, we're now joined by Susan Lynch, our Brussels bureau chief. Suzanne, good morning. So have we actually seen a shift in tone from the EU?
I think what we're seeing is the EU trying to effect a shift of tone. I think it's fair to say that Spain in particular and other observers were quite taken aback by the scale of the reaction to the events we saw late last week, where a number of European leaders kind of piled in, if you like, on Pedro Sanchez, the Spanish Prime Minister. They were very critical of what they were seeing happening, and they called for Spain to do more. Over the weekend, we saw a series of letters. 22 leaders signed one letter. Sanchez wrote his own letter, and they all wanted this meeting that's taking place today. Now, we know that EU ambassadors met yesterday, and they did thrash out some of these ideas, and there was expressions of solidarity with Spain. What happens today when the actual ministers, the interior ministers, get in that virtual room remains to be seen. But we do expect the Spanish minister to strongly make the case that they've done what they can do, that their border controls are working. There are also unanswered questions about how this happened. So significantly in that letter that you mentioned that Ursula von der Leyen sent yesterday, she did talk about the importance of early warning systems, for example. So that may be the kind of themes that we see the ministers discuss today when they meet.
And meanwhile, Suzanne, the EU is also facing another crisis, as of course extreme weather threatens to disrupt a crucial trade route. Like, what can you tell us about that?
Yes, obviously, elevated temperatures are having a massive impact in all kinds of ways across Europe. And now the focus is very much on these low, historically low water levels in some of the key waterways throughout Europe, particularly the Rhine River. That's around 1,300 kilometres stretching from the Swiss Alps right into the North Sea, a hugely important commercial thoroughfare there. And because of these low water levels, it's really put a squeeze on that transport link. And we have been tracking ourselves in Bloomberg that the cost of transporting diesel, for example, has really increased. So that's one part of the problem. Then further southeast in Europe, there's a huge impact now on energy. Hungary has been struggling with those low levels in the Danube that runs through around 10 countries, that now they're having problems cooling their own nuclear plants, and that is having an impact on energy supply. So we've been seeing a repression of energy coming from that plant, businesses, consumers cutting their consumption. So we expect further updates on that today.
Susan, thanks so much. Susan Lynch there, our Brussels bureau chief. Coming up, it's been a roller coaster year for oil, driven by conflict in the Middle East. Of course, we'll discuss all of this next. This is Bloomberg.
anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. HSBC announces a fresh stock buyback and raises its cost-cutting target as it reports on earnings beat. President Trump says his offer of talks is Iran's last chance as Tehran denies negotiations with the U.S. are actually taking place. Plus, SpaceX is set to report its first-ever quarterly results today after the company's blockbuster IPO. Now, more on that top story now, and HSBC has reported second quarter pre-tax profit that beat analyst estimates and announced fresh stock buyback. Now, the bank said it would purchase as much as $1 billion of shares as it reported a $10.1 billion pre-tax profit for the 3 months to June. Well, earlier, I sat down exclusively with the HSBC chief executive, Georges El-Hedry.
We're growing across all our indicators, our revenue growing, our loans and deposits are growing, our fee income is growing. We generated returns of 19.5% on tangible equity. So this is a good demonstration of strong business momentum. We're also very pleased with the progress we're making on the strategy, which we're executing with precision, with discipline, and at pace. And we've upgraded some of our strategic deliverables, including simplification-related saves, and just announced 3 more non-strategic exits over the last 10 days. That's 15 exits since 2025. And all of this is giving us capacity to invest, capacity to accelerate our investment. And finally, let me say we're very confident in the potential of this bank. We're very confident in our ability to unlock it. We are now a leader in a number of areas where we're operating. We're the Asian leader in wealth management, the world's trade bank, and we have structural growth opportunities along our footprint. I mean, Asian wealth, Asia buys Asia, the UK growth opportunities. So we're pleased to put more of our strength at the service of our clients.
Do you think a possible UK tax on banks is a possibility?
Look, that's a matter for the government. What we're really focused on is supporting the government and the governor's intention to support growth in the UK. Now, if you want to achieve growth in the UK, you need businesses that are investing. You need confidence. For businesses to invest, they need to be able to access financing. For them to be able to access financing, they need a strong, well-capitalized banking sector to support them. So our role, UK is extremely important for HSBC, it's a home market. Our role is to support all businesses across the UK. We support around 700,000 SMEs in the UK, across the UK. And we've grown our lending to them 12%. We've grown our lending to all business in the UK about 10% or $10 billion US. We already pledged another £5 billion of investment to support SMEs in the UK. All of that is what is supporting, or hopefully supporting, that growth that we wish for the UK.
Can you talk to me a little bit about AI? So Bill Winters of Standard Chartered last week said that they were using a combination of Chinese and US AI models. What are you using?
We're using a broad range of AI models. We're investing in a broad range. We're partnering with a broad range of AI partners, investing in a broad range of AI models, but we're doing so thoughtfully and strategically. We're deploying AI responsibly and safely. And we have now multiple hundred use cases, either in production or in pilot stage, and we're seeing real benefits. I mean, in coding, we're seeing in areas productivity up to 300 to 400% higher. In hyper-personalization of service to clients, we're achieving great benefits. Now, more than 2,000 of our wealth relationship managers have access to AI tools that help them hyper-personalize advice to clients. And we've rolled out productivity tools and productivity capabilities to more than 200,000 of our colleagues, helping them in their day-to-day needs.
Are staff worried actually about redundancies, about being able to apply these models, and how do you handle that?
And the important thing for us is make available to all our colleagues both productivity tools, but also training materials and knowledge management materials, so they all individually can become more productive and more impactful in the way they do business for our clients.
Well, that was the HSBC Chief Executive, George Al-Hedri, speaking to me a little bit earlier this morning. Now, oil rose after its biggest drop in a week as President Donald Trump said his latest offer of talks is Tehran's last chance and that he expects a full reopening of the Strait of Hormuz. It has been, understatement of the year, a volatile year for oil, and our next guest says energy markets have reached, quote, a precarious moment. We're now joined by Greg Chernow, Commodities Portfolio Manager at PIMCO. Greg, thank you so much for joining us. Now, first of all, how should investors position themselves, overall in commodities in such a volatile market environment?
Well, I think the easiest thing you can do from an investor standpoint is to look at portfolio diversification. And if you look at the last 7 years, we've had a series of rolling supply shocks. Yeah. Some of the greatest diversification you can have is actually in the commodities themselves. If you look at the correlation to nominal bonds, you look at the correlation to equities, no other asset class, particularly liquid asset classes, have provided that level of diversification with similar level of returns as the majority of the equity indices, and obviously outperformed nominal bonds in the last 6-7 years.
But what's the market been like to trade?
Exhausting. I mean, it's a 24 hours, 7 days a week. Bloomberg reporters are working the same hours as I'm working, to be honest. I see them posting at all hours of the day on different things in the markets. It's opportunities, though, in the volatility. We're seeing dislocations in physical markets that we had never really seen before. So there's pitfalls, obviously, in the sandboxes that turns into quicksand real quick. But there are challenges that investors face in their portfolios. There's challenges that traders face in moving physical oil. There's challenges in businesses in planning for an environment that this volatile. So it is an interesting period of time in my career, nearly 30 years of this.
Greg, are global oil markets still drawing down inventories because of what's going on?
Absolutely.
With the Iran war?
Yeah, absolutely. We are in a state of deficit. Now, the size of the deficit is moving in the order of a couple million barrels a day, depending on the flow of Hormuz, which, when I started my career, 200,000 barrels per day, we would debate forever because that was what the price determinant is. Now we have a couple million barrels a day differences between our view on what China is going to import in a month or what Hormuz is going to flow. This is unprecedented and uncharted times, but yes, we are absolutely in a state where the market remains in a deficit. You can see it in the positive carry in the market where people are paying physical premiums for immediate delivery. And that is a sign of a deficit market.
I mean, geopolitics is changing, not day by day. I feel like, we start the show saying one thing and we finish it saying something else. It's almost on an hourly basis. So how difficult is it to track that, actually, inventories?
Well, tracking inventories, you have a mixture of satellite data that you don't, you can get daily or multiple times a week updates on. Other than that, we are all tracking developments in the news flow, whether it be renewed attacks on ships while these negotiations are going. on one hand, you're excited and people are hopeful over the weekend that maybe there would be a positive event that gets you more flows out of the Strait of Hormuz, and then you have the realities on the ground. So we always have to mix and understand the sentiment changes versus what's actually physically changing. And that's where there's been oftentimes big differences and big opportunities.
How do you see global oil demand, and what do you think that tells us about the strength or weakness of the world economy?
Well, if anything, I feel like it's been remarkably resilient through this period of time. Like, yes, we know Southeast Asian demand pulled back initially, you know, when jet fuel was trading $260 a barrel. I mean, these are numbers I never imagined before. Like, you know, you were looking at discouraging demand, and frankly, the refined product markets are trading at record premiums. So jet, diesel, gasoline, the things we care about as consumers are trading at record premiums to crude oil because that is where the real physical constraints are. So the market is trying to slow demand, but the global economy itself has proved remarkably resilient throughout this problem, in part because we have some really, really big tailwinds on the CapEx cycle.
Greg, you know, why did so many people get that so wrong?
Well,
2 months ago.
Well, one, I think we underappreciated, and myself included, the anchoring effect of the fact that, like, if we had the Strait of Hormuz back open and flows would normalize, we'll be back in a surplus, which we were in the fourth quarter of last year and entering into this war. And the other part is whether or not the stomach for politicians to risk having prices go to levels that we hadn't seen before and strangling the economy. Like President Trump directly referenced past presidents who, you know, who've run into these sort of supply constraint issues and trying to avoid it. So I think that's the other reason why crude oil has managed to maintain a $90 price, $80 to $90 region for the most part. But refined products is where the rubber's really hitting the road, and that's where the stress is showing.
When you look at, you know, maybe the end of the war, and I don't know how far that is, what does it mean for OPEC Plus and actually some of the supply, you know, the supply coming on the market?
Well, it's critical to know at the end of the day what is the damage done to assets. Like we were talking at one point about flow, but when we were sitting there on Friday and reading the dispatches from embassies in the Middle East on Saturday, my first concern, besides humanity and really hoping that people don't, you know, the loss of life and the realities of that is avoided. But at the end of the day, my second question after that was, are assets being impacted? Are we getting like Ras Laffan in Qatar, for example? And the damage done there is a couple years of delay. We now know there's delays in the expansion of the products. Well, what happens if you have more attacks on actual energy assets? Because that could have a tail that is very long, and that would be the thing that unmoored oil prices. So those are the questions we're asking.
But you could also have a kind of, you know, supply glut in 2027. So I don't know whether you're looking at, you know, OPEC needing possibly to cut supply going into that.
I think we have a long way to go before we even start rebuilding the buffers in the system to worry about that. And I think that political dynamics in the Strait of Hormuz are likely to have a very long tail, particularly if Iran maintains its view that it's going to have ultimate control over the straits. Yep. I think we'll have episodes of potential calm, and then who knows what comes after that.
So how do you build a portfolio around this?
Well, in terms of trading commodities, like obviously it's a more dynamic environment than may have been in the past. Yeah. But in terms of creating strong and resilient portfolios, I think asset allocation is the primary, you know, crutch to lean on. And in that place, you say commodities are diversifying. They've been beneficial for portfolios. They have a positive carry in the market right now, which, you know, if you're thinking about a hedge or something that is diversifying portfolio, and you can have positive carry to the tune of about 1/3 of the vol of the asset, like that's a very good thing. So I think our investors, when I look globally, there's a much greater demand for real assets, particularly liquid real assets, because illiquid real assets traded with a massive duration, and the illiquidity was a big issue.
I mean, what happens to gas in all of this?
Are we talking about European gas? I think.
Well, European gas is through the roof.
Yes.
But also, you know, some of the LNG exports.
I mean, the big problem is for LNG in the long term is that we can build pipelines to move crude oil out of the other areas and potentially avoid some of the greater constraints of the Strait of Hormuz. We can't do the same with LNG. Maybe we can pipe the gas and build new LNG plants elsewhere. But I think the tail risk or the long problems with LNG that it faces is that if we don't normalize flows, and 2 Qatari tankers were potentially hit in the last week alone, if you don't normalize those flows, like the global LNG market will remain much tighter than it would have been before, given the expansions were expected from the region. It's tough to avoid. And when you're looking at Europe this summer, we're not rebuilding inventories. We're going to enter winter with the lowest inventory coverage in decades. Like, that is a very precarious situation. So this is a market that is, I think, probably almost at greater risk in the next 3 to 4 months than oil is in terms of having a real problem.
So interesting, Greg. Thank you so much for joining us. That
Thank
was
you.
Greg Cherno, Commodities Portfolio Manager at PIMCO. Now, BP has posted its strongest quarterly profit in more than 4 years. The oil major saw its refining and trading businesses drive growth as the Iran war pushed oil prices higher. Well, the chief executive, Meg O'Neill, told us she's positive about the outlook.
When we look across our upstream, we've got very high-quality assets in the U.S., both onshore and offshore. We've got 2 very significant capital projects underway in the Gulf of America as we speak. Production from those fields, those developments, will be online in 2029 and 2030. We've got additional developments in the gas business in places like Indonesia and Trinidad and Tobago. Again, those are starting to come to fruition. We've got an opportunity in Venezuela, and we're looking at additional opportunities in Venezuela. And then we've got a very significant discovery that we made in 2025 offshore Brazil. Now, we'll be appraising that opportunity or that discovery later this year, early next year, with the intention to be bringing that forward. So we've got this nice cadence of growth opportunities that will be bringing new production into the group, starting 2028 and stepping forward from there.
Okay, and Meg, thinking about the asset sales, you said just in the last few days that BP is going to be putting up its North Sea assets up for sale. What has motivated that decision, and is there anything that the current UK government can do to change your view?
Yeah, that's a decision that was not made lightly. The North Sea has been part of BP's history for more than 50 years. And the rock quality is still good. We still think there is untapped oil and gas potential in the basin. But when we are really rigorous and we look at the data and we ask ourselves about free cash flow generation, return on investment, resilience through a low price scenario, and we look at the UK North Sea, it just is not competitive within our portfolio. Now, that said, we've had plenty of companies come knocking at our door, expressing interest in buying the assets, so I am confident that the fields will continue to be well managed in other hands. But it's simply a question around capital discipline and capital allocation within BP.
Well, that was BP Chief Executive Meg O'Neill speaking to Bloomberg's Anna Edwards. Now let's bring in our energy reporter, Mitchell Furman. Mitchell, thank you for joining us. So what have we learned actually about BP and its longer-term strategy from these results?
Yeah, we learned that BP plans to bring down its net debt sooner than expected this year rather than next. And at that point, it should give BP some optionality about whether they want to resume their share buybacks, which they suspended earlier this year. They're the only big oil super major without a share buyback program. And so really that's the focus. This chief financial officer, I just got off a call with her and Meg O'Neill, and they declined to commit to restarting the share buybacks. Their focus is paying down debt and improving the balance sheet for now.
How does BP's decision to sell the biogas business fit into its strategy?
Yeah, BP is strictly focused on oil and gas now after years of low-carbon ventures. Archaea was squarely in that low-carbon venture period where they purchased it for $4.1 billion in 2022. I asked if they plan to receive anywhere near that, and they said it's too early to say. But ultimately, they're looking to shed their underperforming assets and strictly focus on kind of high-returning assets.
Mitchell, I mean, we also saw a surge in profits at Aramco in the second quarter. Did they give us any insight into the impact that the war in the Middle East is having?
I mean, Aramco talked about how they're moving along the East-West pipeline that they've now tapped, and a surge of exports to the Red Sea rather than the Strait of Hormuz. And so that's kind of the priority these days for them, is they're trying to maximize, output there. And there were some impacts in July, which, we may find out later, but Aramco said that the disruption or the attacks have had no impacts on these results so far.
Mitchell, thank you so much for joining us. That was our Bloomberg energy reporter, Mitchell Furman. And now President Trump has scolded Chevron and ExxonMobil for their soaring profits after oil prices surged amid the war in Iran. The companies made a combined $29 billion in the second quarter, equivalent to around $318 million a day.
They're making too much money, okay? Based on a shortage, they're making too much money. I don't like it. And I should be the last one to say, because I'm a big free enterprise guy. Chevron, too much money. ExxonMobil, Too much money. When you look at one company where they made 12 times what they made the year before, they're going to give some of that back to the public, and they better cut the retail price, the consumer price.
Coming up, after a rocky ride in the market, can SpaceX touch down? A reassuring first ever earnings report today. That story is next, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
A lot of this boils down to customers wanting choice. And the big frontier labs have awesome models today, whether it's OpenAI running on Bedrock, whether it's Anthropic running on Bedrock. Customers really love using those models, but they also like being able to customize models. And so having a broad ecosystem of open weights models, I think is incredibly important for innovation. It's important for our customers. And so you think about things like the Nematron models from NVIDIA, or you think about Kimi 3 or some of the Chinese open weights models. Those really help customers be able to customize to their own data and really be able to innovate. And so we think that it's important to not over-legislate there and give that flexibility for customers to use whichever models they find to be the best fit. And that's actually why we really focus on having all of those available inside of Bedrock so that customers can choose which ones they want to use.
Not to over-legislate. I mean, I had a conversation with Jensen Huang the day the letter was posted about why then, what was the rationale? It does seem like the concern is that the US government overly regulates open models. Was that a sort of a motivation for you?
Yeah, I think that's the concern, and I think you just want to make sure that we kind of have an even playing field, and it doesn't mean that there's none, by the way. I think there should probably be the same level of oversight of both frontier models as well as open weights models, and I think we should have a consistent framework, but kind of making sure that that folks realize how important that is to what customers and our industry is out there building on, and that those open weights are a key building block of that, and we want to make sure that however legislation lands, it lands evenly across all of those.
Matt, a question from our Bloomberg Tech audience for you is AWS's attitude towards Kimi K3. The open weight was released July 27th. You know, given the platforms AWS offers, what is the plan there?
Yeah, it's a great model. The team there has done a really nice job, and we see really great performance there. And we'll continue to support in Bedrock offering the Kimi models. I think the interesting thing is also, as you see many of these open weight companies, they're starting to think about how they make money in these models as well. And so they're starting to introduce licensing around some of these open weights models as when customers want to run them in a cloud environment. And so I anticipate that there's going to be a blending of some of these models too, where these companies won't continue to spend lots of money and then just offer their IP up to the world. They're going to be licensing models. They're going to have ways of making money on those as well. And you're starting to see that with some of the open weights models actually having some licensing around them. And so we'll keep supporting these in Bedrock and working with those companies in order to offer these in the best possible way.
Well, that was the chief executive of Amazon Web Services, Matt Garman. Now, another busy day, of course, of tech earnings. Later, we'll get the first ever quarterly results from SpaceX after the company's blockbuster IPO. After market, we also heard of Palantir, which has raised its full-year revenue and income forecast and reported second quarter sales ahead of Wall Street's estimates, while Bloomberg senior strategist Neil Campling is here. Neil, every day there's a lot to talk about in the tech world. So talk to me about Palantir. Yesterday coming out with some really good results. Why?
Yeah, I think we've had to put some context around it, but the stock had fallen 40% from its November highs into results. That's the key thing. But they came out with their 12th quarter in a row of accelerating year-on-year sales growth. And to deliver 93% top line growth, that's a pretty big number by any metric. So lower expectations, concerns about AI, concerns about software, being eaten by AI, and Palantir have delivered a great print, pure and simple.
I think the stock price is up some 15% pre-market. SpaceX today, the first time they're reporting since the IPO. What are you expecting?
I'm expecting to hear a lot from Elon's visions over the future. There'll be a lot of focus on the CapEx number. Street's probably around about 18 billion for this quarter, 45 billion for the year. They have great ambitions to get to 80% of revenues to be AI within 10 years. That's going to require a lot of CapEx. So there's a reset in terms of expectations because of the stock price. But I think it's more about the vision because the company's unprofitable and still on a high valuation. So let's see what they come out with tonight. But it's going to be about the statements around the conference call, and I think more so than the individual numbers themselves.
What about AMD?
At AMD, again, it's been seen as a second choice to the NVIDIA AI ecosystem. I think we'll hear tonight from them about their strong demand still in terms of their platform. But also, let's not forget that they have a core business in the computer processing units, CPUs. They've been a number two for years to Intel in that space, but they're up to 40% market share. I think they're going to 50%. So look for updates on that piece as well, I think.
Overall, what do you think investors are focused on? I mean, is it really now time to see, these models and these companies generate real revenue?
I totally agree. We've had these big CapEx numbers. We've had some reassurance from the likes of Microsoft and Amazon, but now we're getting these Chinese frontier models that are catching up really quickly. So they need to sort of show some returns on those investments. So they need they've got the revenue growth coming through, but to see the returns. That's what investors focus on now.
Neil, thank you so much, as ever, for joining us. That was Neil Campling with the very latest, of course, on AI. Now, this is the picture across the board. We do have quite a lot of earnings. We had BP, we had HSBC, and others. Stocks seem to be extending gains for the moment. Investors really turning their focus to corporate earnings after pretty, I'd say 3 weeks or 2 weeks maybe of choppy trading, spurred by concerns over tech valuations, but also the conflict in the Middle East. Again, potential challenge, maybe SpaceX, but we're also seeing some, it's going to be a big week when it comes to U.S. data. So watch out for any move in U.S. Treasury. And then, of course, we follow yen with 157.8 in terms of that dollar-yen handle. Up next, a Bloomberg Brief, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said,
Succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A tech-led rally as global stocks in the green today as Palantir boosts its guidance after what it's calling otherworldly demand. President Trump warns Iran it's its last chance to make a deal. Tehran denies any talks with Washington. And earnings continue to roll in with SpaceX's first quarterly results, plus AMD on deck. Relative stability across Asia today. Let's get to Winnie Su for details from Hong Kong. Winnie.
Yeah, good morning, Bonnie. Well, we are seeing the Japanese yen continue to lose steam after those sharp gains that were driven by the U.S.-Japan joint intervention. Now, investors are still quite skeptical in terms of the sustainability of the rally given the rate differentials, and they want to see right now further reassurance from the Bank of Japan to turn more hawkish or even an earlier than expected rate hike. That's why you are seeing Japanese yen here weakening by about 0.4%, inching closer to that 158 level against the dollar. Now, before we take a look at how that expectation is also being reflected in the bond space, we did see Japan's 10-year bond auction seeing its weakest demand since May last year, given that investors now expect the Bank of Japan to move even earlier. Now, when it comes to the equity space, the interesting part we saw today is, in fact, in South Korea's Kospi index, which was fluctuating throughout the day, but ended the day higher by 1.6%, driven by a report later in the day showing that expectations for DRAM pricing still being expected to rise further.
All right, Winnie, thank you so much for that roundup. Now we're in prime earnings season in Europe. Let's head to London for a look at markets there with Justina Lee.
Good morning, Vonnie. Now, it's a quiet but positive day here in Europe with the Stocks Europe 600 up 0.4% to another record high. And now when it comes to U.S.-Iran talks, we're in that phase of that cycle where hopes are giving way to anxiety. And that's kind of being reflected in the bond market right now, with the 2-year UK yield up 4 basis points. Now, it's interesting because recently UK bonds have been a lot more sensitive to oil, because actually Europe bonds are not reacting as much today. And also reflecting that kind of renewed tension is also European gas futures up nearly 5%. Another worrying headline I saw the other day is that European gas inventories are very low, kind of ahead of the winter, and of course with these heat waves still going on. Now, if we flip the board here, we can see some, like the backdrop for this record high in the Stocks Europe 600, which is that, you know, a lot of analysts have been upgrading earnings revisions. This is the chart for the Citigroup Europe ex-UK earnings revision, and you can see it's been on the rise lately as we've had a pretty positive earnings season so far.
All right, Justina, thank you so much. Justina Lee there in London. Here in the US, it looks like a modestly positive day, but that belies just how ebullient this market really is. It seems what's old is new again, so we actually had the Dow hit a record yesterday, and the Mag 7 were up 4.5%. Software also continuing to do well, along with the hyperscalers. So you're seeing NASDAQ 100 futures pop higher today. S&P futures actually hit a record in the session a little bit earlier on, so expect perhaps a green day if this all holds. Let's look at yields, because we did see them drop yesterday, up about a basis point or so, more now actually, 2 basis points across the curve. Yesterday, Scott Bessent, of course, calming the market a little bit, suggesting that it wasn't treasury sales that were helping to fund the yen intervention. But we are seeing oil rise just a little bit on President Trump's threat that this might be Iran's last chance, or as he says that it is Iran's last chance. And so that's also impacting yields today. So we have Brent crude back above 86, WTI back above 82, and as Justina pointed out, troublingly, European gas futures back above 60 euros per megawatt hour. VIX, though, is trading with a 15 handle. All right, let's get to some individual market movers now. For that, we'll go back over to London and Chloe Melly.
Good morning, Vonnie. Palantir is jumping this morning after boosting its revenue guidance. It described the demand for its data analytics tools as otherworldly, and it seems that investors are just as enthusiastic about the company's growth prospects, and we're up about 16% on the back of those earnings this morning. We are also in the green for Snap after the company reported better than expected revenue for the second quarter, and also is projecting a revenue to still grow in the current quarter. And we're up about 8% on the back of this. It's really benefited from strong advertising sales, and so that's really driving the stock this morning. And finally, the chip maker onsemi is also in the green this morning after beating revenue and earnings expectations. And as always with those chip makers, AI data center demand is the thing that has really driven performance there. And so we are seeing a rally in the shares as well for this company, up about 8% for onsemi.
Chloe, thank you so much. Chloe Melly will be back a little later on in the hour. Also coming up this hour, more on this earnings season with Kayla Sader of State Street. Well, let's start there with earnings. Palantir rising double digits in pre-market trading. Second quarter sales described as, quote, otherworldly, far exceeding Wall Street estimates, and leading Palantir to raise revenue and income forecasts for the year. Bloomberg's Neil Campling joins us now. Alex Carr, colourful as always, Neil, but where is this demand coming from? Certain countries are trying to get away from Palantir, it seems.
Yeah, it's true. I think the key reassurance is that Palantir was seen as a threat from the dual wave of AI frontier models, potentially displacing some of the software tool sets. But Palantir's tools clearly are in much demand. And so you can see that coming through in the fact that they managed to grow their revenue line for the 12th consecutive quarter of accelerating growth. 93% year on year is stunning by any metrics. So clearly, wherever they are being potentially displaced in some places, there is demand that's more than offsetting any kind of upset from that. But it's a simply stunning set of results.
And if we break out commercial versus sovereign and so on, Neil, what do we find?
Yeah, so we find that obviously, as he mentioned himself, otherworldly with the demand from commercial. And I think that's where really, if you look at in terms of the expectations going ahead, then as far as you're looking to understand how you can use these tool sets, it's really commercial that's going to drive the acceleration going forward, I think. So that's clearly being taken well this morning, as you mentioned, in the pre-market. Don't forget, the stock had declined by 40% from its highs seen in November into the print.
Yeah, absolutely. It had a big sell-off. Neil, we've more and more stories coming out of China. Another company looking to go public next year, AI Squared Robotics. Of course, Alibaba's biggest AI model, it says, is on par with Anthropic. That news yesterday. And now we have Huawei's top chip scientist warning that the likes of NVIDIA are facing physical limits for what they're trying to put on their transistors, and they'll soon face an avalanche. What does he mean, and how is China doing it differently?
Yeah, so every time we get a big tech transition on the chip side of things, we often reach sort of physical limits of what you can put on the compute onto the chip. However, what you've seen with the other AI models, and in fact with the NVIDIA ecosystem in the past, is you utilize software and other tool sets to enhance the improvements. We often get these physics limits, but we find ways around these over the course of time. Huawei and some of the Chinese players, what we don't really know is exactly how they're managing to offset some of those constraints when they haven't got access to the US IP. So in terms of the testing on the side of Alibaba and others, I think it still remains to be seen when we can test side by side these different models to see which really are leading the compute regimes right now.
And then, Neil, CXMT preparing to manufacture advanced low-power memory chips around the end of the year. What does that mean for the likes of SK Hynix and Samsung and the US memory chip makers, for that matter?
Yeah, so in traditional sort of the HBM, the high bandwidth memory types of memory, the Chinese are believed to be around 3 to 4 years behind. It would appear they're looking to sort of circumnavigate some of those challenges by offering a lower power alternative. Whether you can get these at scale remains to be seen. I suspect that most of the US models and international models will continue to use the high performance memory chips for higher compute. But this will be an area to watch out for, especially given what we've seen in terms of supply constraints on the memory chip side.
Absolutely. Neil, as always, across everything, that is Neil Camping for us in London. In Washington, President Trump says the latest offer of talks is Iran's last chance before, quote, decapitation. Tehran denies it's been negotiating with the US. Joining us now from Dubai is Bloomberg's Amir Abu Omar. The public rhetoric at least doesn't align, Abir. What do we know about what's actually happening behind the scenes?
Good morning, Vonnie. Well, conflicting statements yet again between Iran and the United States is what we know. You just mentioned what President Trump has said, told reporters in the White House yesterday, that decapitation line. He also said that the Iranian leadership is unbelievably duplicitous, along with many other things that he said about the state of the negotiations. He still maintains that negotiations between the U.S. and Iran are ongoing. Now, from the Iranian side, we heard from the foreign ministry, Vonnie, that active discussions between Iran and the U.S. are actually not happening. Iran has maintained the line again that it will send delegates, it will send mediators to send messages on its behalf, but its top negotiators are not having any discussions with the United States. Meanwhile, other negotiations are going on. We are aware of them. We reported them last week. They're happening into the beginning of this week, and those are between Iran and Oman. And that's really to open up a pathway, if you were, in the Strait of Hormuz, a middle passageway to help ships and vessels start to make their way through the Strait of Hormuz. Now, we don't know what exactly the talks entail or what exactly the mechanisms are to open up the Strait of Hormuz, but what we understand is that both are in discussions to either demine the Strait of Hormuz and help ships take this pathway that was not really open to ships throughout the course of this war. As you know, Iran has been asking ships and vessels to stick to a route that it had laid out, which is closest to its borders on the northern side of the Strait of Hormuz. Any other pathway leaves ships and vessels open to the risk of being attacked. And even into the early hours of this morning or overnight, Vonnie, ships were getting attacked in the Strait of Hormuz. Of course, this is all happening while the U.S. maintains its naval blockade on Iranian ports. And so we're watching the whole space. We're watching what negotiations is President Trump, in fact, referring to, and whether those are happening or about to happen. He maintains they did happen despite the Iranian denial. Iran says no chance those are happening, that the mediators will be involved. We haven't heard from either Pakistan or Qatar. We know that President Trump said that Saudi Arabia's Mohammed bin Salman had reached out to him and said and pleaded that a return to diplomacy was the choice here, the best choice here, and that attacks are not favorable to countries in the region, that is the GCC.
All right, Abir, thank you so much. Bloomberg's Abir Abu Omar in Dubai. Now, to all the top stories trending on the terminal this morning. US landlord Prologis has agreed to buy the UK's largest REIT, Segro. The deal is valued at $18.8 billion. Shareholders can elect to receive a recommended share offer or a partial cash alternative. Ukraine says battle robots are taking on a bigger role in the war with Russia. Kyiv aims to produce at least 50,000 unmanned ground vehicles this year to reinforce human troops confronting Russia's military. Shares of Lufthansa fell the most since March after a warning of increased uncertainty for its full-year outlook. The airline group cited volatility in jet fuel prices and shortened booking cycles. Lufthansa Group, whose airline brands include Swiss and Brussels Airlines, joined IAG in giving growth plans for the year a miss this time. Coming up, HSBC's ramping up cost savings after beating the street's profit estimates. More on that next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We're growing across all our indicators, our revenue growing, our loans and deposits are growing, our fee income is growing. We generated returns of 19.5% on tangible equity. So this is a good demonstration of strong business momentum. We're also very pleased with the progress we're making on the strategy, which we're executing with precision, with discipline, and at pace.
Shares of HSBC lower by about 1.5% this morning after the lender announced fresh stock buybacks and hiked its cost-cutting target. Bloomberg's Tom Metcalf joins us now for more. Tom, El Hedary is going apace at this cost-cutting. Can he keep it up at this speed? I mean, he's exited so many businesses, 3 sales just in the past few days.
Yeah, he's certainly leaving an impact, right? And, that was a very bullish sort of interview he gave us earlier. Obviously, stock market a little bit more sanguine about things. But, yeah, broadly speaking, he is going ahead in execution. So before these results, we saw HSBC leave the Egyptian market, on the retail side at least. And today, El Hedary is basically saying, look, I'm on schedule. I'm not expecting any kind of more drastic changes to the footprint of the bank as he sees it. But he's certainly one for taking sort of quick action, and that's probably why over the longer course of the shares, shareholders have really sort of embraced his strategy and overhaul.
What about the concern that wealth influxes might be just a little less forthcoming now that China is restricting capital outflows a little more? Is that still a concern for HSBC?
Yeah, the bank's saying today they haven't sort of seen too much of a sort of impact from that. But, China, wealth, huge market, huge opportunity as well. So I think there is, quite a lot of downside risk there. And obviously, if that situation clears up, that will be a big positive for HSBC. But right now, you're not really seeing it, like, at least dramatically in the numbers. It doesn't seem to be holding the bank back in, maybe its core markets of even Hong Kong.
Yeah, I mean, it pretty wraps up European earnings season for the most part. Were there any cracks in HSBC's earnings or indeed in any of the previous earnings that we've seen, Tom? It doesn't seem that it was that difficult a quarter for any of the banks.
Yeah, no, we're always looking out for those signs of distress, early warning signs, right? But no, pretty much across the board, when you dig into those line items, those, expected credit losses, those provisions, there was nothing that kind of really, startled the market or was above estimates, and in many cases came slightly below estimates. I think, broadly speaking, it was a fairly kind of steady period, and I think the problem for European banks is, across the Atlantic, you have the US banks, again, broadly speaking, having a really strong quarter. So anything, the European banks did sort of paled in comparison. So that's largely why you probably see quite a muted shareholder reaction to, as you say, what's been a pretty steady, if unspectacular, quarter.
Yes, HSBC, as I say, down today, but up 33% since the beginning of the year. Tom Metcalf, thank you so much. Turning to oil now, Saudi Aramco reporting a 33% increase in profit in the last quarter thanks to higher energy prices driven by the conflict in the Middle East. For more, let's bring in Bloomberg's Anthony De Paula. Anthony, that has to be a little bit of a consolation, at least to Saudi Aramco, even as I'm sure it's very concerned about infrastructure and the future trajectory of the war.
Yeah, good morning, Vani. Yeah, that's correct. I think it's more than a consolation for Aramco because these were pretty positive results, 33% up on the adjusted net income for the quarter versus last year. So that's a pretty hefty result. They reported more profit than ExxonMobil and Chevron combined. And we saw those companies last week reporting based on the higher oil prices. That goes for Saudi Aramco, the higher oil prices. Plus, they've been able to maintain a large portion of their exports by using that cross-country pipeline that allows them to export from the Red Sea as opposed to the Persian Gulf, where obviously the Strait of Hormuz remains blocked. Now, they do have some risks going forward around the Bab el-Mandeb, which is at the southern end of the Red Sea, some threats there from the Houthis in Yemen. So that's a risk, but Aramco CEO Amin Nasser was telling us on several calls today that so far there's been no impact on the exports. Aramco is still exporting around 5 million barrels a day as they maximize the shipments out of the Red Sea. They're able to go north through the Suez Canal that takes their oil into the Mediterranean Sea. If they have to go to Asia via that route, that adds about 20 to 25 days more sailing time. So that is going to be some delay and some impact in terms of getting barrels to market. But they're still going ahead, and they're still confident that they'll be able to continue those exports, as well as lots of exports of refined products as those refineries on the Red Sea continue to pump out diesel and jet fuel. And that's a big area of the market because those margins are really high, and that's been benefiting a lot of the integrated oil companies that we've seen as they reported earnings last week, this week, and going forward, Vani.
Let me ask you about BP, Anthony, because we also saw a very nice beat from BP, and in fact, they're actually within sight of meeting their debt target, right? Their repayments target. So what kind of shape is BP in now?
Yeah, also a good net income number from BP, one of the highest in years. Again, that's high oil prices that have benefited all the producers across the oil spectrum. Plus, again, those products, BP is also a big refiner, so those products that are giving good margins. And BP also has a huge trading arm. And so as those traders are able to buy and sell crude oil and products across the globe, as there's a lot of volatility, as there's a lot of shortage, that's exactly the kind of circumstances in which traders benefit and are able to bring up those profits. So BP has been really benefiting from those issues and, as you said, working towards paying down that debt, Vani.
All right, Anthony, thank you so much. That's Anthony De Paula there, all over the oil market in Dubai. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Page news. First up, the BBC reporting EU interior ministers will host emergency talks by video conference to discuss border security after the influx of migrants from Morocco into the Spanish exclave of Ceuta. Spain estimates now about 69,500 migrants have returned to Morocco, higher than the 50,000 initial estimate. Next up, the Financial Times reporting Russia has been quietly increasing its shadow fleet of gas-carrying ships ahead of an EU ban on its LNG cargoes coming into force next year. The now 25-strong fleet will allow Moscow keep shipping gas when restrictions tighten. And the Wall Street Journal reporting Taiwan is opening up about long-concealed U.S. military training in a move seen as an attempt to combat skepticism about the U.S. position towards Taiwan.
We actually just expanded the set of customers that have access to Mythos. I think it's about an additional 150 organizations around the world in 15 different countries. And really our approach to Mythos has always been, there's a time component to it. So we released it initially to cyber defenders. So some nonprofit groups, some governments, some organizations that are critical infrastructure for protecting against potential cyber attacks. And just like in any kind of security vulnerability situation, you have to give the defenders a head start. The technology, AI models are going to keep advancing. If it's not us, one day releasing a Mythos level model, another AI company will. But it actually matters who you give access to first and how long they have to patch some of the vulnerabilities that Mythos was capable of revealing. And so we're taking this very cautious, very tiered approach, which I know in some ways is frustrating because people really want access to the model. But I think, again, as a company that's founded on these principles of being ethical, being responsible, we felt it was important to give access to the organizations that were capable of really helping us defend against some of these risks, and then slowly widening that circle to more and more critical infrastructure until eventually we feel it's safe to release it more widely.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A tech-led rally as global stocks in the green as Palantir boosts its guidance after what it's calling otherworldly demand. President Trump warns Iran it's its last chance to make a deal. Tehran denies any talks with Washington. And earnings continue to roll in. SpaceX's first quarterly results plus AMD on deck. So let's take a look at those futures then. Well, Russell 2000 futures have just dipped into negative territory, but S&P futures actually hit a record earlier in the session, and NASDAQ 100 futures pointing to a healthy gain at the open. We had the Mag 7 index up 4.5% yesterday, would you believe? Hyperscalers outperforming chip stocks, software continuing to rally. And that's why you have the NASDAQ 100 higher, the VIX trading below 16. In the background, of course, markets waiting on Friday's jobs report, and there are many, many China AI stories percolating as well. Let's look at yields. They fell yesterday. They're back up about 2.5 basis points across the board. That 30-year yield still pretty elevated, and the 10-year yield firmly above 470 now. This even as Scott Bessent tried to calm the market somewhat by saying the yen intervention wasn't being funded by Treasury sales. We get the Treasury quarterly refunding statement, of course, tomorrow. And then let's look at oil, because this is probably what's impacting yields most just in the early going. Brent crude back up a couple of dollars to almost 86. WTI at 82 and change after the president warned Iran this is its last chance. European gas futures as well up 4.5%. Let's get to some individual movers now with Chloe Melee in London.
Good morning, Vonnie. Palantir shares are jumping this morning. We're up about 16% in pre-market trading after the company boosted its revenue guidance. It described demand for its tools as otherworldly, and analysts have also mentioned that the company really benefits from a competitive advantage and are very enthusiastic about its growth prospects. So a very, very positive move there. We are also in the green and quite high in the green for Snap after it reported better than expected revenue for the second quarter, and that was really driven by its advertising revenue. It sets up the company quite well ahead of the release of its augmented reality glasses due in September. We're up about 8%. And finally, Power Industries is slumping this morning in pre-market trading after its third quarter EPS fell short of analyst expectations. The momentum in orders was actually quite good, but it seems that the earnings miss really overshadowed that. And so we're down more than 14% on the back of this morning.
All right, Chloe, thank you so much for that roundup. That is Chloe Melee there in London. Joining us now is Kayla Sader, macro multi-asset strategist at State Street. Kayla, we haven't spoken to you since the last FOMC meeting, so I'm curious as to your thoughts. We're getting more and more warnings by the day now. Bank of America, Brandywine. We also had Wellington coming out and saying that the risk of a bond rout is very much present. Now that we don't have any sort of guidance for inflation fighting and the response mechanism from the Fed, how do you see it? Are you concerned that we might see particularly longer end yields just spiral?
Yeah, good morning, and thanks for having me, Vonnie. I think there's a lot to discuss and unwrap here in the Treasury market, especially at the long end. You know, I think what's really unique this time around versus other times when we've been concerned about the long end is that we see both rising break-evens and rising real rates. And I think for the market, when we look at both of those components, it's important to consider direction versus level. And when we look at real yields, I think the level really matters because historically, when we see real yields within the 10-year maturity get around 2.5%, that's when we start to see more equity volatility, equity sell-off. Now, when it comes to break-evens, which really reflect the market's perception of where inflation is going and is very important in terms of Fed credibility, I think the direction there really matters as opposed to the outright level. And that's one thing that was really unique over the past week versus Chairman Warsh's first meeting. At his first meeting, we saw break-evens very stable. Now we've started to see them rise. And that's a signal that investors are getting nervous that inflation is going to be elevated for even longer than they expected before.
Kayla, if we get fewer news conferences, maybe even fewer monetary policy setting meetings, and the market is flying just a little bit more blind, at least in terms of what FOMC members are thinking, how would you go about reading the macro environment? How would it change how you go about doing that?
That is tricky, and I think it gets a little more complicated here than it used to be. And that's why we've started to see more headlines around the likelihood of rising volatility under the Warsh Fed. I think ultimately, traditionally, as you see stronger employment data, as you see signs of persistent inflation, that should mean higher yields. One takeaway is that I would say this ultimately should lead to higher term premiums, which is why we still see room for the long end to continue to rise here and would be hesitant to fade some of the upside move in yields. The second component that is different today versus 2 weeks ago, 3 weeks ago, is the dollar. Because traditionally, again, stronger data should mean a stronger dollar. But if you have a bit more caution as to whether or not the Fed will ultimately, hike rates at the pace we thought they would in response to stronger data, you would have expected the dollar to be stronger. Now, I think it causes a little bit more uncertainty that actually puts pressure on the dollar and could cause the dollar to weaken even further here.
You mentioned that at some point it will impact equities. We're not quite seeing that yet. All the indices are very close to their highs, right? So at what level do yields impact equities?
Yeah, I think it's important to look at the real yield component. So right now, 10-year real yields are a little above 240, around that level. Historically, we've seen a pullback in equity positioning when real yields get above that 250 level. So that's an important place to watch. With that said, this time could be different. And this time could be different because of equity allocation right now. So in our data set that specifically looks more at longer term institutional real money investors, they are very concentrated in tech. And what that means is they're very concentrated in high quality, low interest rate risk parts of the market. And because of that high quality exposure, we could see a pullback, but it's really hard to not see reallocation back into the same part of the market. And so I think ultimately what this means is a lot more chop as opposed to a full out sell-off if yields continue to rise.
Yeah. Kayla, I'm just showing viewers a chart here. It appears, and this surprised me, that U.S. equities actually have had a valuation reset, and that if you look ex-U.S. at the MSCI World Index, the forward PE ratio of the U.S. is at its lowest in 6 years, which would argue for, potentially this bull market continuing, right? Do you see it that way?
I think this is reflecting that rise and fall, a little bit more chop. Part of what drove that earlier this year was starting to see selling of semis. And what we've recently seen is we've started to see more appetite for semis. Additionally, one thing that has shifted recently after the start of the third quarter is we also started to see more demand for software after not seeing a lot of demand for software before. And so I think what this means is that there's still room for increased allocation within parts of tech where we saw some pain at the beginning of this year, at the end of Q2, as we saw some rebalancing. And so ultimately, I think, we continue to see demand for tech. Another place where we have seen a little bit more demand is in financials, especially large cap financials. They've had a very strong earnings season. And then on the flip side of things, we've seen a little bit more rebalancing when it comes to healthcare. So it's not quite a positive story there, but we have seen a bit more demand, mostly just because positions are so underweight there. You do see a little bit of buying just to offset some of those underweight positions.
Kayla, are you seeing any kind of an increase in hedging, whether it be single stock hedging or, other types of hedges?
Yeah, so one thing we're able to do is look at FX hedging. And what we've seen this year that's very different than last year is when we look at hedging of currency exposure, and as we've seen more demand for U.S. equities globally from foreign investors, what we've seen is real money investors adjust their hedges a little bit. So on the domestic side of things, last year we saw U.S. investors really cut their FX hedging because they expected other currencies outside of the U.S. to appreciate. That has since switched. We see a bit more signs of stability. And so actually that would be dollar positive. With that said, that is one part of the equation. When we look at actual positioning right now, positions are very underweight, and they have been underweight since April 2025, around that Liberation Day. Also during a period where we started to see term premiums begin to rise. And so it looks like there is still somewhat of a structural challenge to dollar strength here.
All right, Kayla, thank you so much. Always a pleasure to speak with you, Kayla Sater of State Street. Now, to other top stories trending on the terminal this morning. HSBC is considering boosting its bonus pool if strong performance continues. The bank's second quarter earnings beat estimates, posting gains in banking and wealth revenue. It announced a fresh stock buyback and raised its cost-cutting target. A group of 25 U.S. states have filed a lawsuit challenging President Trump's new global tariffs that went into effect last month. The suits accuse President Trump and U.S. officials of unlawfully using Section 301 of the 1974 Trade Act. The states include New York, California, and Illinois. Disruptions on the River Rhine are poised to intensify after the river fell to its lowest level in nearly 150 years. Barge clearance for one of the choke points dropped to as low as 21 centimetres, or about 8 inches overnight. The waterway is a crucial route for transporting coal, fuel and industrial commodities across Europe. Coming up, President Trump says Iran is facing its last chance to make a deal. More in his warning next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication
and the collaboration.
I spent a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Going on right now. It's an amazing thing. We have a little problem with Iran because we have many talks and we're straight about it, but they deny. But they're not denying it now. I think we're going to maybe get something, but I want to give them every last chance before decapitation.
President Trump warning Iran to make a deal as Iran denies having any negotiations with the United States currently. Let's head over to Washington with Rachel Schilke of Bloomberg Government. So, the president saying this is Iran's last chance. What is the plan for quote-unquote decapitation, Rachel? Do we know?
I don't think that we really know. I think that what we're seeing is another example of President Trump trying to revert back into diplomatic negotiations. Obviously, we've seen this before. There's been conversations about certain talks. However, the U.S. destroyed a lot of Iran's leadership, so there's a lot of uncertainty as to whether who he is talking about, who these negotiations are occurring with. But right now, it's something that he wants to get away from. Obviously, it's a big issue for the midterms coming up this fall. Republicans are having a lot of questions that they are being asked about Iran and the way that this is going on. And I think that the president is noticing this, and he is trying to move away from the warfare, which has kind of torn up the country.
And speaking of the war, the president absolutely excoriated Exxon and Chevron and big oil, basically, for profits because of the war he launched. Explain to us how this happened.
Yeah, well, he said yesterday that he thinks that the companies are making too much money. They made about $29 billion combined in the second quarter, which is 3 times the same period a year ago. And a lot of these high oil prices come from the Strait of Hormuz crisis. That was kind of the main driver. And that's been one of the biggest conversations on Capitol Hill in the White House about this strait and how it can be used. And that has been the center of these negotiations. And so as President Trump is saying that he wants to avoid decapitation and he wants to make sure that the U.S. and Iran can come to some sort of agreement, this strait is going to play a major factor. And as a lot of people have discussed, that gas prices and just energy prices in general are going to be a huge factor in the upcoming midterms. Its affordability is a big issue, and we've seen Congress try to take some action in that regard. But with the war still going on, it's kind of defeating some of the purposes that Congress is trying to navigate before their elections.
And that's essentially sort of what caused these comments in the first place, right? The president wants some of these companies to give back somehow to the American public, cutting retail gasoline prices or what have you. It's an attempt to, I guess, appeal to voters before the midterms and also maybe get his approval rating up because it's not very high at the moment.
Yeah, absolutely. I think that that's something that Republicans are really going to struggle with in this midterm election. And just in general, affordability is among the top issues for voters. So that is something that the president is going to have to explain to voters. He's not on the ballot, obviously, but his word carries a lot of weight. We've seen that with primary elections. We've seen that just with these Oval Office talks about the things that he says and the things that he's able to convey just through short remarks to reporters about these negotiations. People are kind of confused about that. They don't know what these negotiations are, but a lot of people will be clinging to hope that diplomacy can take care of the situation and there won't be as much warfare anymore, because warfare is also not polling well with the public. And for Republicans who are running in these midterms, especially vulnerable ones, there needs to be some sort of answer soon, and there's not much that Congress can do except vote on war powers resolutions, but those are not as binding as I think that people are hoping. So it's kind of a waiting game right now.
Rachel, thank you so much for all the context. That is Rachel Schilke of Bloomberg Government. Staying in Washington, Bloomberg learning that leaders from AI developers, including OpenAI, Anthropic and Google, are headed to the White House today for a meeting with President Trump. Bloomberg's Neil Campling is back with us for more. Neil, what could they possibly have to speak about? What will the message from President Trump to these companies be in particular?
So we've had already some sort of voluntary guardrails around the security elements for the AI frontier models. So I think the discussions will be around what safeguards are in place, because we've had recent examples of where these models have escaped some of the existing controls. And it's really about balancing act between making sure the security protocols are in place, but they're not hampering the efforts for the US AI models to lead in terms of technology developments. You know, other questions around here come from outside of the US. You know, Anthropic have previously mentioned that the Alibaba models had hacked into the Anthropic model nearly 29 million times. So you need to effectively have the safeguards to prevent some of the bad actors wherever they may be based in the world, but then also having the right protocols in place. One thing that will be keenly watched is as to whether there will be strict protocols officially released, or whether there'll be new tool sets to enable the frontier models to work in the confines of regulation. Some suggesting that maybe we may be seeing a similar framework that exists in the financial services industry.
All right, Neil, we'll look forward to that meeting and what emanates. Thank you so much. That is Bloomberg's Neil Campling for us. One earnings report we're keeping an eye on. SpaceX, the company is set to report its first ever quarterly results after the market closed. Joining us now is Bloomberg's Danny Lee. What will investors and analysts be concentrating on today, Danny?
Yeah, Vonnie, good morning. So, you know, we are seeing this first earnings period, an exciting one perhaps, but all really overshadowed, first of all, by the share price of SpaceX, which right now is 15% underwater relative to its IPO price and about 50% down from its peak. So wiping out $1 trillion of valuation in the process. But when you look at the real focus of investors, you know, for example, Elon Musk, he will probably be asked questions about whether SpaceX is going to be looking to merge with Tesla, for example. Will he be drawn into questions around that? Now, there's been a subject of constant speculation, shall we say. And on top of that, the AI parts of SpaceX. We saw recently, soon after the IPO, the fact that SpaceX did a $60 billion all-share transaction to buy Cursor, an AI coding startup. Now that, once the transaction closes, will give it leverage to catch up to the likes of Anthropic and OpenAI. Investors will be trying to gauge how much more, what more can SpaceX do in this area of AI to kind of really accelerate its development. Ultimately, investors will want to hear how well these businesses are performing, such as Starlink, such as the rocket business, and of course, around AI. So yeah, there's a lot of questions. And of course, since the IPO, the fact that SpaceX has been a loss-making business and is not looking to be any fundamental changer, clearly investors will be looking at the CapEx spend for this year.
Exactly, and you have to imagine that lockups expiring are going to drive the narrative as well. When do they start, Danny?
Yeah, so there's going to be about over 1 billion shares that will be released over the next weeks, and so in terms of this lockup expiry, that could cause more volatility to the share price. We've already seen a lot of pressure put on the share price in recent times, so what effect that might have. Clearly, a lot of the comments coming out of what Elon Musk has to say will be closely watched in all of this. Ultimately, though, when you look at what could drive the share price, you know, we've already got analysts who still have targets they're sticking to of around $800 a share or more. But when you look at this idea of this SpaceX and Tesla merger idea, there was a report in the Journal last week suggesting that Tesla's China business could be separated or hived off, and that could open the door to a SpaceX and Tesla merger. Clearly, Elon Musk has responded to this saying it's absolutely false. But we've been here before where Elon Musk has denied things. Later on, it has turned out to be true. So there's going to be a lot to watch and wait for, not just in the next coming days, but also in the coming months.
Yeah, absolutely. And as you say, shares down about 15% from their IPO price. Bloomberg Asia Aviation and Transport reporter Danny Lee, thank you. Coming up, more earnings on deck in your day ahead. This is Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Now a look at what's ahead today. First up, we get JOLTS job data coming in at 10 a.m. Eastern and factory and durable goods orders coming out at that time as well. Earnings on deck with Pfizer, Caterpillar, Spotify, Kimberly-Clark. They're all just before the bell. And then after the bell, we have AMD and SpaceX. Let's take a look at some movers before the bell. Some strong earnings yesterday from Palantir, for example, up 17% in pre-market trading. Other worldly demand, according to Alex Karp. Snap also up more than 6%. It had a 19% increase in revenue in the quarter. Its augmented reality glasses, though, don't debut until next quarter, so we'll see how it performs. And On Semiconductor with a nice beat as well, up 7%. Let's take a look at your macro picture going into your Tuesday session. NASDAQ futures higher, the 10-year yield above 470, and oil just higher as well.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
You have to feel pretty good about what earnings season has done.
The equity trade continues to have momentum. You've got the AI theme that's just absorbing so much capital.
We see adoption, we see revenue accelerating.
I think that there is a lot more movement than the headline indices would suggest.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, closing in on another record. A tech-driven rally taking the S&P to within 1% of all-time highs as Palantir crushes estimates with a staggering surge in sales. Elon Musk and SpaceX up next, following a post-IPO hammering down 40% from the highs of June.
So they're down, everybody else is up, everyone else seems to be beating expectations. We were talking about this morning. What does it look like for them to blow expectations out of the water, right? I mean, like, what are these earnings going to mean? I think more interesting is going to be the reaction in markets, especially as some of their shares open for sale after the initial IPO.
Hopes, dreams, and when are you combining with Tesla? Isn't that the story later on this afternoon?
I think it's what are you combining with Tesla, and then what are your hopes and dreams? And oh, by the way, how quickly are you burning cash, and when are you getting to Mars?
Let's talk about the dreams of this market. A rally in almost everything across tech, the hyperscalers, the chips, and the software names as well. IGV, the very, very much followed software ETF, is up for 7 consecutive days. The likes of the hyperscalers are picked too. Microsoft, Amazon up 25% in just 3 sessions.
And this comes from what we saw from earnings, which is cloud adoption has just been through the moon. It seems like there is a resetting and understanding of the economics of the tech sector. On one sphere, you've got OpenAI and Anthropic. More questions about that as they head to Washington, D.C., about just how preeminent their models are going to be as open source starts to take hold in a more significant way. But it turns out we need people to actually track the changes, come up with software, and then implement it in different companies. And actually, if there's any kind of moat of data or anything else around a lot of these software companies, they actually are increasing revenues at a really rapid clip. Palantir really highlighting that because they're both in the software and the programming space with otherworldly results yesterday. They're also going to the moon in just other ways.
The stock is doing nicely, up in the pre-market so far this morning, this far away from all-time highs. The index level story has been a snooze since the start of June, a record at the very beginning of June and nothing since. Within about 0.2% of 1% from all-time highs.
You've had a freak-out meltdown in the tech sector. You've had a ball of cash shifting from tech to from hardware to hyperscalers and then back again, and then maybe to everything other than some of the frontier models. And then you have the actual earnings, which have been incredible. 86% of S&P 500 companies that have reported earnings so far in this quarter have beat expectations, which is the most going back 5 years. It gives you a sense of just what the pace of momentum is here.
Should we talk about crude as well? Check out oil, Brent and WTI. A bit of a bounce this morning. We're higher by close to 2%. Brent crude up to 85, WTI up to 81. It's your final warning. It's the ultimatum. It's the last chance for talks. Is it really the last chance for talks?
I mean, you were like, we have to talk about crude. Do we, though? I mean, yes, we do. And the truth is, we have to talk about it because this is the backdrop of inflation. This is the backdrop of potential worst-case scenarios, tail risks for the market. At the same time, nobody believes that this is the last chance because we've heard it's the last chance before. So people are kind of shrugging it off. If people really believed this was the last chance, oil prices would be up a significant amount, not 1 or 2%.
You can see the direction of travel, not for the talks. Who knows what's going to happen with the talks, but for the midterms. Just getting closer and closer. I don't particularly want to talk about them anytime soon, but you're going to see more and more pressure build on the energy firms to drop prices at the pumps. And you've seen that in the last 24 hours. You've seen fantastic earnings across the whole industry and the president coming out and essentially saying, you're making too much money.
Yeah, lower the price. You guys can cut your profits a bit and cause oil prices to go down, gas at the pump. That said, it felt a little desperate to me. Is this the last lever to pull at a time where stockpiles have been depleted to some degree, and it seems like diplomacy has reached a stalemate?
It felt desperate under the Biden administration at times as well, and it feels very similar going into November with this issue. Crude around the 80s. Equity futures this morning on the S&P 500 up 0.1%. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth as equities approach all-time highs. Rachel Ziemba of the Center for a New American Security as President Trump gives Iran one last chance. And Angelo Zeno of CFRA with AMD facing a lofty earnings bar. We begin this hour with stocks looking to extend a 3-day winning streak. Cam Dawson of New Edge Wealth writing, now we are seeing the biggest names turn around and rebound. Could this be the source of escape velocity for an index that has been flat for over 2 months? Cam joins us now for more. Cam, good morning.
Good morning.
Everything in tech starting to rally.
Yeah.
Hyperscalers, chips, software too. What's happening?
Well, when you have 33% of the index, meaning the Mag 7 up 8.5% in 3 days, that does a lot to boost the overall market, because what we were seeing over the course of the last couple of months is weakness within hyperscalers or weakness within semiconductors, certainly in July, was being offset by strength in other places. The fact that you were still seeing 70% of names in the S&P 500 trade above their 200-day moving average with a flat index was telling you that there was this breadth underneath the surface. And the good news is a day like yesterday didn't come at the expense of the equal weight index. We didn't see like big outflows coming out of equal weight into Mag 7 or software, for example. What we're seeing was everything was rallying. And I think part of the reason we're seeing this is we did reset valuations in a lot of these areas. You had Mag 7 go from 35 times back in October of last year to 22 times. Lowest valuation since last year with Liberation Day, lowest valuation since going back to 2022. So it just gives room for this lift. And it's important to remember the average valuation over the last 5 years for Mag 7 has been about 28 times. So there's still room for this valuation just to normalize.
Let's build on that. We'll set the stage for this. You've talked about a valuation reset for the Mag 7. Let's talk about Wednesday and Thursday. Situational awareness blowing up, Ken Griffin stepping in, people coming out and saying that's a convenient narrative just to get your hands around and say, okay, we've dealt with that, it's a clearing event, we can move on and buy everything again. Do you see it that way?
Yeah, well, I thought it was a bit ironic yesterday that Citadel came out and said that you've sort of shaken out some of the more aggressive positioning from earlier in the summer, and of course they were the ones that helped that shakeout. I think that we are seeing a big correction. You can look at overall momentum names that were in the 99th percentile by the time we got to June, a massive correction in that, where now we're in the first percentile of momentum. So it just helps to reset things. You can see a rally off of these, what were oversold levels in certain areas at support, and these still remain uptrends. So you typically want to buy things that are oversold at support in uptrends.
Yeah, Goldman Sachs actually pointed to momentum stocks falling 35% from their peak in June, just to give you a sense of how quickly this is unwound. I guess what John's getting at, and it is the question, how much more leverage is there to push out of the system? Was this just the tip of the iceberg? And frankly, will any kind of melt up only subject the stock market to another meltdown, freak out, volatility, situational awareness type of moment?
Well, I think Deutsche Bank's consolidated positioning report was really interesting over the last few days. Institutional investor positioning is in the 36th percentile. Discretionary investor positioning is in the 17th percentile. So the leverage is not in the institutional cohort necessarily. The leverage is within households. You can see households still have very aggressive allocations to equities, 71% in the AAII survey. And typically when you see allocations that high, it typically comes before more market weakness or some kind of market correction. But I think it's fascinating, this divergence where institutions have remained on the sidelines really since 2025 Liberation Day. They never got massively overweight, but households have been very much all in.
Where does the Fed come into all of this? Because we were talking last week about whether this is an inflation and credibility shock or whether this is the Fed weaning the market from having its hand held. Which do you sort of see this as we go forward?
I think the question is how much would a tighter Fed or higher rates across the curve weigh on growth? Because isn't it interesting that we're going through this year where we've certainly had geopolitical shocks. We don't want to talk about oil, but it's there. We've had a policy shock because we've had to price in going from a dovish Fed now to a hawkish Fed to now to an uncertain Fed that might be losing control of the long end of the yield curve. And yet we're still in an environment where you have earnings growth continuing to rise. You still are in an environment where overall GDP growth remains so resilient. We were at high single digits for GDP growth in the second quarter. Look at third quarter GDP now at over 6%. So I think the question with the Fed is whether or not this current policy mix that they have, switching to being potentially more hawkish, potentially allowing the long end of the yield curve go up, will that ever weigh on growth? And maybe that's not a question for 26, maybe it's a question for 2027.
Do you actually see a hawkish shift emerging at the top of the Federal Reserve? Difficult to call, right?
It is. You know, this whole idea that markets are whining about not getting information. I mean, we are clearly dancing in the dark now, but I think the takeaway from the last meeting is the question of whether or not the Fed is dancing in the dark as well. What is do they even know what their reaction function is? And I think that relying so much on the market to say the market knows best is very reminiscent of people saying you don't need a Fed funds rate, all you need is the 2-year yield. Well, the 2-year yield takes its cue from what it expects the Fed to do. So there's a reflexivity in all of this that the Fed can't just stay on the sidelines and say we wait for the market because they are a player in the market.
When do you think that 10-year and 30-year yields become damaging to the risk story?
I think that they already have in a way that's being offset by earnings. So the low in the 10-year yield coincided with the peak in valuations back in October of last year. So valuations peaked at 23 times. That was the low in the 10-year. Ever since then, we've seen valuations come in for the S&P 500. You haven't noticed it for risk assets because we've been in such a strong earnings growth environment. I think you can make the same story for credit. As long as corporate earnings remain resilient, you're in an environment where credit can remain very, very contained from a spread basis. I think the most interesting question in the back half of the year going into 27 is whether or not earnings revisions will keep going up to allow us to offset higher yields. Meaning you've had 26 and 27 earnings up 16% year to date. And that certainly has been the reason why we've been able to shake off all of these headwinds. If that starts to flatline, potentially because we've priced in all of the good news when it comes to things like semiconductors, or maybe people start to wake up there's a big amount of paper gains within the Google and Amazon earnings, maybe 27 earnings are at their peak, and that could be the cause or maybe usher in more volatility for risk assets.
Cam, it's always good to see you. Buy everything right now the last 24 hours, that's for sure, within tech. Cam Dawson of New Edge Wealth. Two interesting headlines just crossed in a Bloomberg terminal. One is on tech. The other is on the situation in the Middle East. We'll start with the headline on technology. That the US is drafting a ban on China data center components. That's according to Reuters, dropping, Lisa, just moments ago.
Yeah, and this comes as an ongoing dispute. It really emerges as to whether to open the doors or close them that much more between the US and China. This comes as there is a real question, and there is this meeting down in Washington, D.C. with OpenAI, Anthropic, Google bosses, potentially on how to fortify the US system while also remaining competitive internationally with the open source versus closed source.
There are some 85% margins somewhere, feeling pretty good about that headline, I imagine.
I would guess that They are very happy about the idea. And I'm thinking probably this helps SK Hynix and Samsung, potentially more than anybody else.
Not feeling too good about this headline that just also crossed from Reuters on the situation in the Middle East. The US Army has used virtually all long-range precision missiles in the war with Iran. Much has been written about this in the last few weeks across a range of publications. This is the latest from Reuters, that the US Army has used virtually all long-range precision missiles.
This has been one of the speculations as to what has been holding the U.S. back from actually coming through with some of the threats, which is a lack of stockpile of ammunition. Initially in the conflict, you think about how technology has enabled the U.S. Army to hit, say, 1,000 targets in one day rather than, say, just 8 targets in a day, as it did a decade ago before AI and some of that assisted technology. That means you use up your ammunition really quickly.
This will not help the US in negotiations. The fact that this conversation has spilled out so publicly in the American press to the extent that it has. It also suggests, to your point, why we keep toggling between strikes and talks without a clear breakthrough and a diplomatic course of action, because the Iranians see the same things that we do right now, which is why they've remained so antagonistic throughout the diplomatic process over the last few months.
It's a reason why you're seeing smaller fluctuations in a lot of these headlines, simply because people see this as the new normal and the stalemate to kind of be the way it is, with a couple of barrels of oil trickling through the strait, and otherwise it being in this sort of uncomfortable friction moment where there isn't free traverse of the strait.
The latest from Reuters this morning, the crude price Brent up by 2%, 85 on Brent, 81 on WTI. With an update on news worldwide this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. President Donald Trump also slamming Exxon and Chevron for their soaring profits as oil prices surged during the Iran war. Trump saying the biggest U.S. oil companies are, quote, making too much money, urging them to give some of that back to the public and cut retail gasoline prices. Palantir reporting second quarter sales that topped Wall Street estimates and raising its full-year revenue and income forecasts. The software developer and military contractor boosting its outlook after what the CEO called otherworldly commercial demand. Amazon surpassing $3 trillion in market cap for the first time. The company joining Nvidia, Alphabet, Microsoft and Apple in that exclusive club. Following the milestone, Chairman Jeff Bezos filing to sell more than $4 billion worth of stock, and that sent shares lower. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for the update. Imagine $4 billion just being a dip in the ocean for you. Just sell a little bit of stock, raise some pocket money for the summer.
I was looking at the $4 billion and I was like, that's it? Why not do a little bit more? I mean, like, ultimately, how much does he have to potentially, you know, just get some change?
Multiples of that. Multiples of that. Up next on the program, the latest on the situation in the Middle East, the last chance for Iran.
This is the last chance. I don't know. I think we're going to maybe get something, but I want to give them every last chance before decapitation.
Up next, we'll catch up with Rachel Ziemba of the Center for a New American Security, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action. bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Live from New York City, welcome to the program. Equity futures this morning on the S&P, building on a three-day winning run on the S&P 500, up a tenth. In the bond market, the situation as follows. Really strong manufacturing data stateside yesterday. Yield still in the 420s at the front end of the curve, 470 on 10s this morning. Yields higher by 3 basis points. Turn to crude. Let's talk about the latest from Reuters, dropping just moments ago. According to 3 people familiar with the data, the U.S. Army has used up much of its stockpile of highly accurate long-range missiles during its 5-month war with Iran.
This is what a lot of people have been speculating about, but not necessarily to this degree. And it raises a question of how vulnerable the United States is, not just in this conflict with Iran, but on a broader level. Say, should there be any additional conflicts or defending itself versus, say, God forbid, China? Should there be some other conflagration internationally? So you start to wonder how quickly you can restock and what the potential obstacles this presents in the Iranian conflict.
This is something we've explored repeatedly and extensively on this program. What's setting the tone for the president? Why one day talks and the next day strikes? 1 week talks, the next 2 weeks strikes? What dictates that? The price of oil, financial markets? There was a sense that maybe it was about ammunitions and a stockpile, and I imagine this story this morning will give some oxygen to that theory.
It's not just the offensive weapons, it's also the defensive weapons, and we've talked about that. Some of the airstrike preventative missile ammunition also running low. You start to wonder how big of a calculus this is and how difficult it is for the president to negotiate when stories like this come out.
The latest from Reuters this morning. Under surveillance this morning, it's the last chance for Iran.
This is the last chance. This is the last chance for them to sign a good document. I don't know. I think we're going to maybe get something, but I want to give them every last chance before decapitation. Very tough to do what we have planned, still planned. We'll see what happens.
So here's the latest this morning. The president giving Iran another ultimatum. Tehran denying it's engaging in negotiations with the US, saying it's in talks with Oman about reopening the Strait of Hormuz. Bloomberg's Abir Abu Amar joins us now for more. Abir, welcome to the program. What is the status of diplomacy? What is the status of talks? Are there any to even talk about?
Good morning, John. Well, that's exactly the question that is being asked all over today. And the answer to that is what talks exactly? The ones that President Trump has been referring to since yesterday, those ones Iran is saying are not happening. So immediately after President Trump said that the talks will commence on Monday, and then when he said that he will not retaliate against Iran by attacking them, remember threatening the biggest attack since World War II, and then saying actually the talks will happen again in Iran. Iranian Foreign Ministry saying not going to happen, that those discussions are not taking place, that Iran will continue to send delegates and mediators to be able to have those discussions through messaging to the United States, but that officials in Iran are not having active discussions. Meanwhile, as you have mentioned, the other discussions that we're aware of are ones that are taking place between Iran and Oman. And this is really key here because it addresses the Strait of Hormuz, the biggest priority for both sides of the table right now, John, and that is opening up the trickle of movement in the Strait of Hormuz that's been pretty much paralyzed over the past couple of weeks or so. A lot of the ships that are making their way through are prone to getting attacked or are going through with their lights switched off. A quite stark difference between what was happening after that MOU was signed in Switzerland, the promise of an open Strait of Hormuz. So those discussions between Iran and Oman are set to open up a middle passageway in the Strait of Hormuz to get a slight better movement of those ships and vessels that desperately need to get their movement across for the time being.
We are still struggling to make progress. Abir, it's good to see you. As always, Bloomberg's Abir Abu Amar with the latest down to the Middle East. Crude this morning, positive by 2%, 85 on Brent, 81 on WTI. Rachel Ziemba of the Center for a New American Security writing, overall a de-escalation is better than continued tit-for-tat escalation and a conflict spreading across borders, but it's far from clear that there will be a quick evolution towards a lasting deal. Rachel joins us now for more. Rachel, good morning. Good to see you.
Thanks for having me.
Let's get to the breaking news. How much will that news from Reuters this morning complicate potential negotiations?
So I think it will only, arguably, it will only play into the Iranian position that they can sort of play for time, right? The Iranians are already aware or making a case that higher oil prices make President Trump vulnerable. They are aware of the midterm election timeline. They're aware this war is not popular in the United States. If we also have military constraints and timelines, this also, I think, plays into what's going on, behind the scenes with Russia and with China. It's not lost on me that some of the redirection of some of these long-range missiles from U.S. partners in Asia and how that plays into security across the world.
Do we have constraints in the United States when it comes to the arsenal, or do you think that that's a plausible reality? Do you think that that's likely overstating it or understating it?
So I think it's a plausible reality. I mean, my expertise is particularly on the energy and resource side, so I would defer to military strategists, but we are blowing through resources. We're going through weapons at a very fast rate. We know that the U.S. Does not have, there are various areas where stockpiles are running low. Whether that... this may well be, I think the question is, does this really result in changes on the ground? I'm not sure. I do think it has meaningful impacts about future conflicts, other dynamics, and is just one of the many costs that we have of this conflict that continue to mount for the U.S. economy, even if we're not feeling it yet.
Well, there are conflicting reports about how much stockpiles have been drawn down, exactly what the capacity is for the United States to offset any deficit. What's your take on how well the U.S. has done in there and just how far down we've taken the stockpiles?
Yeah, so I think we are dealing with a variety of different weapons and different components. This is, in my mind, this only reinforces the whole question of scaling up both on the defense industrial base, but also critical minerals and all the components here. And I think we should be watching for both more reporting and more government thinking about that. But it definitely, in this context, we're also going to see costs go up through the supply chain for any of these components. And this is coming at a time where European allies are really trying to scale up what they can produce to support Ukraine in this theater, and where Asian partners are looking and saying, well, what do we need to do on our own? And this is really, and in the Gulf, I think you're seeing a patchwork also of different defensive technologies.
Rachel, we've got about 30 seconds left. I wanted to jump in. Just on the energy cushion specifically, how big is that? What's left of it?
So we still have supplies, strategic petroleum reserves, but we're drawing them down every day now. The very strength of U.S. exports of oil in the last quarter and even this quarter means that we can't continue to do that. Saudi Aramco's CEO was sort of talking today about their results, really highlighted that we're refinery capacity is running at full tilt. And that's not something that's sustainable.
They're all making a lot of money, and the president's not happy about it. Rachel, it's good to see you. Thanks for being here. Rachel Zember there at the Center for New American Security on the energy cushion in this country, which is getting smaller and smaller.
Yeah, we can't really calculate because of the way the salt wells that are like a bag of popcorn, but are actually just salt wells that potentially just prevent you from being able to see. We're going to do that again. I really enjoyed that, so we should have him back and do it again.
Up next on the program, Angelo Zeno of CFRA. AMD a little bit later facing sky-high earnings expectations, plus Yahara. As your morning movers, Palantir absolutely surging in the pre-market, 16% higher, following some staggering sales growth. That stock up next.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Three-day rally on the S&P, a three-day move of about 4%, almost 4% higher on the S&P, and around 0.1% away from all-time highs at the index level after doing nothing at the index level since the start of June. On the Nasdaq this morning, up by 0.7. The rally continues. We've had a bid go into the hyperscalers, big moves, Microsoft, Amazon. Big moves also elsewhere. Software up for 7 consecutive days, and the chip players doing okay as well over the last 3 to 4 sessions. In the bond market, 2s, 10s, and 30s. Let's just sit on 10s, holding on to around 470 this morning, up by 2 or 3 basis points. Manufacturing in America, the ISM, Bremo, that number better than good.
Yeah, it came in at the fastest pace, the biggest expansion going back to 2022, and it came on the heels of a broad-based expansion. Even the employment components, it started to expand for the first time in a number of years. You start looking at just the production aspect of the index, and it rose for the most of any July going back to 1951. Big question, how much of this is the data center build-out? How much is this broad-based? When you take a look under the hood, it does seem to be a little bit more broad-based than just data centers. So it does seem to be real, and all of the skeptics were coming out and saying, actually, it's hard to poke too many holes in this one.
Well, speaking of the build-out and the economic activity you're seeing both stateside and worldwide around that theme, look at Caterpillar this morning. Second quarter adjusted EPS comes in at $8.17. The estimate was $6.17. The stock is up in the pre-market. Lisa, the revenue number comes in at $20.5 billion for the second quarter, 20.54 to be precise. The estimate was just a little north of 19. That stock is up by 6%.
I'm looking at these earnings per share. You talked about the adjusted earnings per share, $8.17 to $6.17. You don't see beats like that. This is a massive kind of exceeding of expectations, and it goes back to what we've seen with a lot of the industrial names in particular that have continued to outperform. You think about what they are responsible for, and they're talking about building. Well, that's the data centers. That's with respect to a whole host of other sectors as well. You've actually seen construction work employment pick up for the first time in a long time, even with the housing sector flat on its back. So to me, I'm curious about Friday. What does this mean about the labor backdrop? Does this mean that it's actually accelerating, or are we seeing sort of peak growth and potentially is it not confirmed, but we would get in that non-farm payrolls?
Well, just to flip back to the ISM, it was nice to see the employment component pick up there too, so some better news on that side. Caterpillar year-to-date already up by 45% or so year-to-date, and up another 6 in the pre-market. That's the stock story. Let's just turn briefly to what's happening with oil and the price of crude this morning. WTI and Brent rising this morning by about 2% at $85.80. Lots of talk already in the last 15 minutes or so off the back of this story from Reuters. And if you're just tuning in, welcome. I'll share the lead paragraph with you. According to 3 people familiar with the data, the US Army has used up much of its stockpile of highly accurate long-range missiles during a 5-month war with Iran.
This has been the concern, this has been the speculation that the reason why President Trump hasn't been more aggressive and actually followed through with some of the threats threats with Iran has been because of concerns about dwindling ammunition stockpiles. Question here is how quickly can they rebuild, and how much does this potentially crimp the U.S.'s ability to defend or potentially engage in other conflicts around the world?
If you are within the administration right now, I imagine you're pretty angry that this story is playing out so publicly, and it's not just from Reuters, it's from others too. And also, I have to say, as a neutral observer looking at the situation right now and seeing 3 people familiar with the data willing to share it with the likes of a news organization, to have almost a live feed of what's happening with ammunition right now is, I think, of equal concern.
Especially because this is a White House that has tried to clamp down that much more on potential leaks, threatening reporters, a whole host of other things. I will say it does highlight a level of concern that exceeds that potential restraint, the idea that there are people in the administration who really want to see this addressed and understood.
That's the latest on the Middle East and the situation with Iran. 3 hours away from the opening bout. The cash open, not too far away. Let's get you some single names and morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with our big mover to the upside, and that is Palantir, up 16% in the pre-market after a blockbuster quarter that saw its U.S. commercial sales soar 149%, prompting the company to lift its full-year outlook again. But underneath the headline, there is an interesting geopolitical shift taking place. While U.S. companies are adopting its AI software at a fast clip, growth overseas is slowing, especially as European governments push to rely less on American technology. Meanwhile, in the latest sign of strong demand for chips due to AI, we are seeing onsemi rising 7% after the chip maker topped expectations and raised its outlook for AI data center revenue, now expecting that business to more than double this year. But analysts say that this demand is also broadening to other sectors like automotive and industrial, speaks to what you all were discussing with those ISM numbers. And we end on Amazon. Its rally may have been too good for Jeff Bezos to pass up. Shares are down 2% in the pre-market after the founder filed to sell about $4 billion worth of stock. It comes just days after a blockbuster earnings report that pushed the stock up more than 20% over 2 trading sessions and into the that exclusive $3 trillion valuation club. John?
Massive rally on that name in just 2 or 3 sessions. Yahara, thank you. They're not alone. Many others too. On our radar this morning, one of our top stories, the president issuing a final threat towards Iran.
This is the last chance. This is the last chance for them to sign a good document. I want to give them every last chance before decapitation.
The president maintaining the U.S. is in talks with Iran. Tehran continuing to deny the negotiations are happening. Elsewhere, the president taking game at big oil and higher prices.
They're making too much money, okay? Based on a shortage, they're making too much money. Chevron, too much money. ExxonMobil, too much money. They're going to give some of that back to the public, and they better cut the retail price.
The average national gasoline price sitting around $4 per gallon. Exxon, Chevron making a combined $29 billion in the second quarter, more than 3 times what they made a year ago. And finally, the White House expanding efforts to defend the Japanese yen. The Treasury Secretary Scott Bessent calling on the Fed to expand an emergency lending program. The move would have Japan defend the currency without disturbing the U.S. Treasury market.
Yeah, this is, some people will say, unusual for the Treasury Secretary to publicly call on the Federal Reserve to expand a facility that is in their purview. At the same time, it also highlights a kind of tension right now. On one hand, there is some speculation that the Federal Reserve wants to lean on the long end of the yield curve to do the work for them. On the other hand, maybe not so fast, because there is clearly an anxiety of potential fire sales should some of these countries actually have to sell their stockpiles of treasuries to support their currency, and that could disproportionately increase yields. So it's kind of, on one hand, we want yields to be able to be a free market instrument. On the other hand, maybe not in that way when you're selling $1.1 trillion.
Well, let's just finish on free market. How much intervention have we seen in the last week? Japan, situational awareness. Ken Griffin had to step in there over at Citadel. How many other situations? Energy, Exxon, Chevron making too much money, the president says. He's looking to verbally intervene there too. We've seen it on a range of examples. South Korea, too much volatility. The finance ministry has a meeting. They have to talk about curbing leverage. I see it here, there, and everywhere in the last week alone.
How about Javier Milei in Argentina earlier this year, or Venezuela and what we've seen over there? And then questions about what the U.S. regulatory backdrop is going to be for some of the big tech names as well, which also is coming into the fore. How much is regulation the ultimate moat for some of these frontier models at a time of concerns about national security? How do you trade with this? I guess that, how do you get true signal from a market when it is this convoluted with respect to intervention?
Begs the question also, and we talked about it yesterday with Gary Cohn, they want to go back to that old world. I understand the urge, the nostalgia of going back to the pre-GFC guidance or lack thereof from a central bank, but the amount of pain that you'd have to tolerate to get there, how much pain, and are officials willing to tolerate it in the meantime? Because whenever you get a little bit of pain, you see the intervention almost immediately, regardless of what the story is.
At the end of 2007, the U.S. total government debt outstanding was a little less than $10 trillion. Today, or at the end of 2025, it was nearly $40 trillion. This is a vastly different market that potentially responds very differently to some of the inputs that we're talking about.
Debt to GDP ratios have moved in the wrong direction, let's put it that way, over the last few decades. Let's talk about chips. A massive month behind us. They declined by more than 20%, a big afternoon coming up. AMD set to report earnings after the bell. The chip maker's lofty second quarter goals aiming to close the competitive gap with NVIDIA. Angela Zeno of CFRA maintaining a strong buy in the stock and a $600 price target, writing these ambitious targets reflect AMD's confidence in capturing a significant share of the expanding AI market. Execution will be critical. Angelo joins us now for more. Angelo, welcome to the program. Let's just start there, that story. How big is the gap between AMD and NVIDIA right now? Is it closing? And why does that gap even exist? What is one company doing better or have done better than the other?
Yeah, so John, thanks for having me. I'd say overall, listen, there's a huge gap here, and the biggest reason for the gap is you've got NVIDIA, which essentially has been doing their CUDA software for, let's call it 2 decades at this point in time. So they had a huge, massive lead in terms of the start of this AI revolution. They've essentially dominated the whole AI accelerator market over the last couple of years. And more importantly, with NVIDIA, they've kind of shifted to these large-scale rack solutions, which everyone has the whole industry has migrated to. When you kind of look at AMD here, they are now starting to kind of shift to large-scale rack-scale solutions. Actually, their Helios platform is ramping here, will ramp in Q3. More of the upside going to be in Q4 and into Q1 of next year. But also when you look at what they're doing on the software side of things, they're now really starting to make some good progress there, and you're going to see more developers on their platform, and that makes them a real kind of threat to NVIDIA, kind of looking here over the next couple of years, where they've got a very small share and actually negligible share when you start thinking about the actual large-scale rack solutions. So there's a lot of upside here for AMD, and it's why it's our top pick here over the next couple of years.
AMD has announced relationships with some of the frontier models of AI. We've heard just generally chip companies have gone after deals with the likes of OpenAI and Anthropic. To what degree is that a benefit and attribute, and to what degree is that potentially detrimental?
No, I mean, it's important. These partnerships are absolutely important for a company like AMD. They need to kind of prove their position in the market at this point in time, and the best way to do that is with these partnerships, whether it be Anthropic, OpenAI, which they now have good partnerships with, as well as recent announcements with the likes of Meta as well as Microsoft. So they're in a pretty good position here, and it's also kind of helps now build a very good pipeline for them over the next couple of years.
Are there margin levels that are too good from your vantage point that potentially are so high as to essentially ask for some competitive pressure?
If we're looking all across the the semi ecosystem, yeah, I mean, I think there are points there, where you get to points on the margin side of things where it gets a little bit too lofty, too good. But for a company like AMD, you're not there, nowhere near there at this point in time, especially relative to some of the other players across the semi ecosystem.
Angela, I know you're sort of bottom up and you're covering single names, but I want your reaction to what happened with situational awareness last week, because a lot of bulls willing to buy this sector now are pointing to that as a clearing event. Would you point to the same thing? How do you think about that kind of dynamic?
Yeah, no, I think that's a good question. When we think about that situation in itself, Yeah, I mean, I think there was a lot of momentum that's really kind of been built within the entire semi ecosystem, and to an extent, you needed to see some sort of kind of washout, which that probably attributed to here over the last couple of weeks. I think you're still in this kind of price discovery phase as far as the semi ecosystem is concerned. We've kind of essentially hit peak growth rates back in Q2. So you're going to see growth rates start to decelerate for the semi ecosystem over the next couple of quarters and years. The market needs to digest that and find kind of a proper multiple for the industry. I do think kind of some of the pullback you've seen over the last couple of weeks or months, whatever you want to attribute to, I think helps get us to that point, maybe a little bit faster than we would have hoped for. But yeah, I mean, I think there's to some extent a clearing event that took place over the last couple of days, weeks, call it. But at this point in time, it's hard to say whether or not we've found the absolute bottom within the space.
Angelo, good to see you. Thank you, buddy. Angelo Zena of CFRA. AMD earnings coming up a little bit later. Let's give an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Caterpillar shares jumping in the pre-market. The company reporting second quarter earnings that easily beat Wall Street estimates. Caterpillar's power generation equipment continuing to drive revenue growth. HSBC reporting second quarter earnings that beat estimates and announcing a new $1 billion share buyback. The bank also raising its cost-saving target to $2 billion by the end of this year. The company's CEO saying the lender will consider boosting its bonus pool for bankers if strong performance continues. The Rhine River's water levels dropping to the lowest in nearly 150 years. Hot, dry weather across Europe is threatening to disrupt a crucial route for transporting coal, fuel and industrial commodities across a large swath of the continent. And that is your Bloomberg brief. John.
Vonnie, thank you. Thanks for the update. More from Vonnie in about 30 minutes' time. Up next on the programme, committing to the intervention.
Our partnership has made both the United States and Japan stronger. We've had tremendous support and relationship with Japan on everything. They have a weakening yen, and they wanted a little bit of help, and we're always there for Japan.
They got a little bit of help. Why? Steve Englander of Standard Chartered joins us next, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Tech house shares of Caterpillar this morning, up in the pre-market, higher on the year by almost 45%, up another 7 this morning in pre-market trading, beating a raise. Second quarter adjusted EPS at 8.17, the estimate 6.17. The backlog, check out this backlog now, $72.1 billion. That order backlog increased almost $35 billion in the second quarter year over year, and up by more than $9 billion in the second quarter versus the first quarter. They now see mid to high teens growth for full year sales and revenue. They had seen the low double digits, so beating a race from that name, they just keep absolutely crushing it.
And if you can say, well, did we know this was coming? Well, yesterday we got the ISM manufacturing data that came in at the strongest level since 2022, with the employment component moving into expansion territory for the first time since September of 2023. So guess where all this equipment is going? And the interesting thing is it is not coming with some sort of boom in the residential housing market. This is industrial construction, industrial projects, and the industrial base has continued to do well.
The stock is up by 7% and change in the pre-market. Equity futures up nicely too, up a few tenths on the S&P 500, adding to a three-day rally, up by 0.8 on the Nasdaq. Let's talk about this FX market and the latest in Japan. Under surveillance this morning, committing to the intervention.
Our partnership has made both the United States and Japan stronger, freer, and more successful than virtually any other nation on the planet. We've had tremendous support and relationship with Japan on everything. They have a weakening yen, and they wanted a little bit of help, and we're always there for Japan.
So here's the latest this morning. The White House ramping up efforts to defend the Japanese yen in a rare move. The Treasury Secretary publicly demanding the Federal Reserve expand an emergency lending program in a bid to help Japan boost the currency without disturbing other markets. Steve Englander of Standard Chartered writing the U.S. Treasury's approach to yen intervention was well calibrated. However, if it becomes clear the Treasury is trying to limit its participation, the market may regain courage to short the yen. Steve joins us now for more. Steve, good morning.
Good morning.
Let's just start with your initial reaction to the coordinated effort we've seen materialize in the last week or so. Do you believe it's sufficient to put a lid on this currency pair?
If we stop now, absolutely not. I expect that they'll have to come in again to remind the market that there's dangers to, trying to short the yen when the officialdom is against you. Longer term, it's just not clear. I mean, the U.S. didn't put that much money into it. There are pockets in Japan that are very insensitive, like retail capital exports. They don't care if the U.S. intervened. We'll have to see what they do.
Is gravity against them? And how do you fight that without addressing the fundamentals?
Well, it sure would have helped if the BOJ had raised rates the other day. And I'm frankly puzzled that the U.S. chose to intervene, without the other, party to the dance showing up.
Is there something that spurred the U.S.'s intervention? Is there some catalyst? We were talking about this last week. Was it maybe the lack of guidance from the Federal Reserve that allowed the long end of the yield curve to maybe do a little bit more of the work? Is it the Treasury funding announcements that we're expecting to get this week?
Well, I think there are two factors. The approximate one, I suspect, is the refunding. That, we had the episode 3 years ago around the August refunding announcement, in which the yields went way up because the markets were kind of disappointed with the borrowing schedule. I think that they didn't want to go into this kind of refunding week worried that Japanese yields would be going up, and what we've seen is that episodes of acute yen weakness are associated with higher yields because of fiscal concerns in Japan. So they didn't want to risk that spillover. More broadly, I think, they'd like to see Asian currencies stronger. And it's if the yen is on its back, it's really hard to see, what's going to happen and, what's going to spur any kind of strength in the rest of Asia.
Do you expect this kind of level of intervention to become the norm, especially since this is a concern by the United States right now with the terms of trade shock, with a question about just the trade surplus, the trade deficits in different countries, as well as yields and the potential buyers of treasuries that could potentially be losing their reserves to buy?
I think that there would be a lot more talk of it and talk of willingness to do it. You know, it's not just the FEMA that would have to be increased. The U.S. the Treasury doesn't have that much ready cash with which to intervene in the ESF. So I think that they would have to make it easier to intervene if they wanted to. You know, frankly, the system has worked pretty well the last 20, 25 years, the G20 no intervention system. And opening that Pandora's box where you can say, yeah, we don't like the level, so we'll pop into the market with a couple of billion. You know, that carries a lot of risk as well.
Vienna isn't the problem alone. It's the symptom of the problem. You have to address the cause. The cause is a deficit that's too big. The fact that they're facing a terms of trade shock that they can do nothing about right now because of the price of energy and how dependent they are on importing that energy. And in addition to that, you see this in Japan all the time, and you mentioned it, rate differentials are too wide. And Japan and the BOJ needs to hike. When are they going to address the cause in Japan? Because to your point, you can play around the edges and flush out the shorts. You'll have to repeatedly do that again and again and again if you don't address the problem. When are they actually going to address the problem? And you, like me, I was also surprised. If you want America's help, you've got to help yourself simultaneously. Have you seen much of that from Japan in the past few weeks?
You know the answer, and we all know the answer, that they didn't do much, yeah.
And that's the problem. So if you're looking at dollar yen this morning at about 157, where do you see it in 6 months from now, without the BOJ and without Japan addressing the fundamentals?
You know, look, I give them credit. Their intervention was very deft. So I think the market is going to be cautious about going in with both hands again. But I think the sort of dribble up that we're seeing is you know, could end up being part of the story here. And the truth is that, you know, the trade deficit with Japan is not the U.S.'s trade problem, you know, even in the most mercantilist sense. It's about where it was 15 years ago. You know, Japan hasn't become an export monster because the yen, you know, is at, you know, 160 or...
Yeah.
You know, it's purely an issue of, do you like the financial market implications of the yen being that weak? You know, and I think it's going to be hard to get where you want unless Japan, on the one side, does, you know, fundamental structural reforms, and on the other side does the, you know, makes the policy changes that are needed.
You'd have to imagine they just hate the idea of the Treasury market spillover. That's the only conclusion that I can draw at this point. The fact that the US did coordinate with Japan without Japan helping themselves and addressing the fundamentals, because that would have to be an ask from the US. Not sure they can follow through even if they did make that ask, but obviously the fact that the Treasury acted even without the BOJ hiking tells you how much the Treasury is concerned about the Treasury market. I don't think that's a stretch this morning, or based on the past few days.
Not in the slightest, given the fact that Japan holds about $1.1 trillion worth of U.S. Treasuries and potentially would be unwinding it, $1.1 trillion, excuse me, of U.S. Treasuries.
Dollar yen still around 160 if you're still thinking of that once-in-a-lifetime trip to Japan.
Oh,
right.
100%.
I think so many people in this market have got it circled on the calendar somewhere.
They've already gone.
Right.
I mean, cheap sushi. What else could you want?
Steve, it's good to see you. Thank you, buddy. Steve Englander.
Thank you.
Of Standard Chartered. Up next, we'll catch up with David Levitz of JP Morgan Asset Management, Stephen Shock of the Short Group, Paul Golding of Macquarie, Vishal Kanduja of Morgan Stanley.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said,
Succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The silence of Warsh was really quite deafening.
He's indicating he understands, and we should all understand, this is a transitional moment.
He's sitting here, and I think he's evaluating where he wants to be.
Hope and wait is not a strategy.
It's not about being spoon-fed the next meeting or two. This is about trying to have a chair that makes sense when he talks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures adding some weight to a three-day rally on the S&P, within striking distance of all-time highs on the S&P 500, within around 0.1% away. On the Nasdaq this morning, higher by 0.8. Fantastic numbers from Palantir driving that stock at a pre-market. They crushed it. Staggering sales growth. What was it? Otherworldly growth coming from that company, according to Karp.
Alex Karp saying that U.S. commercial sales in the second quarter were otherworldly. They rose 149% from a year earlier to $764 million. The average analyst estimate was $716 million. That sounds like a lot, but honestly, Caterpillar blew it out of the water even more as a percentage basis. Nonetheless, Palantir has been under the water, so definitely people are looking for any kind of guide as to potentially a deal there.
Now let's turn to Caterpillar in the pre-market, higher by 8%. Year-to-date before today, higher by close to 45%. These numbers, to your point, Bramo, talk about blowing it out of the water. 8.17 for adjusted EPS for the second quarter. The estimate is 6.17. The backlog rising aggressively. Great news for them. The outlook, a whole lot better.
Yeah, looking at full year 2026 with sales in the mid to high teens versus low double digits earlier. So there are a couple of questions here, and this really underscores the question around the very strong manufacturing print that we got yesterday. Is this an AI trade? How much of this is a data center trade, and how much is this a broad-based buildup of the industrial base in the United States? Their earnings call might be the greatest tell on that right now than any other company, given that they are on the forefront of that build effort.
So Palantir, fantastic. Caterpillar, great. You'll hear from SpaceX and AMD a little bit later on today. Check out McDonald's this morning and look at these numbers. And I think you're going to start to engage in the obvious debate narrative throughout this morning. Posting slowing growth for a second consecutive quarter over at McDonald's.
Yeah, and this really does go to a question of the K-shaped economy, given the fact that they're talking about a bit of pushback by consumers in the face of elevated gas and food prices. We've already seen them flag the potential for lower income consumers to be choosier, more choiceful, whatever word you want to use, with respect to what they do. At the same time, they talk about how they're growing outside of the U.S. So, I mean, in international markets, it was kind of a bright spot. Looking at this, you have to wonder, is this just a K-shaped economy and a K-shaped fast food restaurant type of performance, or is this something deeper that highlights there is pain under the surface? And based on what we saw from some of the other fast food retailers, maybe it's more of a McDonald's and customer mix kind of thing.
This captures the disparity beneath the surface, to your point. The bond market catches the headline story, and the headline story is growth is still resilient, and we can basically take these yields, 2s, 10s and 30s, 10s still around 470, yields higher by a few basis points. Do you see that as a problem or a reflection of a stronger outlook for this economy?
Well, on one hand, some people will say that this does reflect that the economy is growing at a rapid rate, and we are seeing incredible earnings growth and incredible consumer spending power. On the other hand, the fact that the U.S. intervened in the Japanese yen potentially as a way to cap some of the increase that we've seen at the longer end of the yield curve sort of presents the question about whether this is also a problem. We do get some refunding announcements for the U.S. Treasury in terms of how much debt they're going to have to sell, and that's going to be an issue as you see some of these levels rise higher.
It's going to make it very, very difficult to term out that debt. This Treasury Secretary criticised the previous Treasury Secretary for the way she'd handled the average maturity coming out of the Treasury. I don't see it changing anytime soon based on the fact that we've got 5.20 on 30s and pushing 5% on 10s.
If you believe there are two camps coming out of the Kevin Warsh Federal Reserve press conference, some people say he didn't give us any sense of exactly how he was going to get to 2%, so we don't believe you, and that's the reason why you see the bond market selling off. Other people are saying what Kevin Warsh is doing is allowing the market to do the work for him, the long end of the yield curve. If you believe that is the case, then it is healthy, it's fine, and it can keep going. If the Treasury wants to term out the debt, however, it makes it impossible. So if you want to do the work with the long end of the yield curve, it pits the Fed against the Treasury at a pretty awkward moment.
Yields high this morning by 2 basis points. Coming up this hour, we'll catch up with David Levitz of JP Morgan with earnings fueling Wall Street's record run. Stephen Shook of the Short Group with President Trump calling out oil giants for making too much money. And Paul Golding of Macquarie remaining bullish on SpaceX ahead of its first ever earnings report. We begin this hour with stocks trading all-time highs as tech concerns continue to ease. David Levitz of JP Morgan Asset Management writing hyperscaler earnings results reinforce our positive outlook for corporate profits. We maintain a pro-risk view in portfolios. David joins us now for more. David, good morning.
Good morning.
Since we got those earnings, those hyperscalers have been off to the races. I'm talking about gains of 10 to 25% over the last 3 or 4 days for a handful of some of the biggest companies on the planet. What was in the data, the earnings, that has started this move?
Well, so I think what's really interesting is we've seen this over the past couple of quarters where coming into the earnings announcements, you see this skepticism begin to rise. You know, maybe profit growth won't be as good as it has been. Maybe margins will finally start to come back in. And then they impress. And for the most part, you know, the numbers are good. They may or they may not beat. But I think the market is focused on the fact that even if you exclude the equity investment gains from the overall earnings season number, you're still looking at earnings growth of 30%. And so these are just unequivocally good numbers. I think a lot of it ties back to the point you were just making. You're seeing this AI trade broaden out. You're seeing it show up in the manufacturing economy, the industrial economy, the real economy at the end of the day. And that's what's giving this story legs, right? That's what's making it a more durable trade. It's not just this flash in the pan, we're going to spend a bunch of money and then move on to the next project. This is really something that's transforming the growth rate and the growth trajectory of the U.S. economy.
For much of the year, it was hyperscalers or chips, one or the other, not both. It was chips or software, one or the other, not both.
Yep.
Is that still the story, or have things changed?
So I think things are changing, and I think last time I was on with you guys, we were talking a little bit about how markets are becoming increasingly discerning between the different players. And so, you know, what I think you're going to see going forward is within software, who are the winners and who are the losers? Within chips, who are the winners, who are the losers? You, to an extent, saw it in the hyperscalers throughout this earnings season. Who are the winners and who are the losers? What is the market looking for? They're looking for that ROI. They're looking for that inclination that there is going to be a profit benefit down the road. And I think that you're starting to see that come through in a more durable way.
How much are you seeing discernment and how much are you seeing relief that maybe some of the leverage has been pushed out of the system, either with situational awareness or with the situation over in Korea?
So it's funny, I remember being an analyst and like if the market moved 2% in one day, it was a really, really big deal. And now we have these 2% moves and people kind of like shrug their shoulders and
you
okay,
get 20% moves on the cost.
we'll do it again tomorrow. I mean, look, clearly there was a technical element of what was going on here in terms of the selling, in terms of the leverage in some of these ETF products. But that's the market that we're in today. And I think kind of thinking about the volatility angle and going back to some of the comments that you guys were making about Kevin Warsh and how the market's digesting everything there, yes, on the one hand, you could say the market is doing the work for him. My question is, how long are markets going to be content doing the work for the chairman of the Federal Reserve? I think at some point you get market exhaustion, and that's when they want a little bit of guidance as to what to expect. And so, the Fed's walking a very fine line here, and I think that the earnings are really what's bailing them out at the end of the day. The fundamental story is just very good.
What's notable to me is that when we talk to people about at what point the long end of the yield curve will constrain some of the ambitions within the S&P 500, they say we're not there yet, but it's because earnings are so strong. It's because we can look past this. When does that change?
So I think that you're starting to see debt markets begin to push back on a lot of this financing. And it's not problematic. When you go from a negative leverage ratio to a leverage ratio of 1, I mean, you're still going to be able to bring paper to market at fairly attractive spreads. But we have seen spreads for the hyperscalers begin to move wider. You look at high yield, the picks and shovels trade. Some of those issues are getting a little bit more wobbly, one time subscribed instead of multiple times oversubscribed. And so that's what I think you want to watch there is when do these AI players recognize that they can't just do it with debt, they can't just do it with equity, they can't just do it with cash flow. They need to figure out a mix of all three, because if this is really going to extend over the next couple of years, you can't be a one-trick pony when it comes to financing this investment.
Are we close to exhausting what's available to them to issue debt, to issue equity?
I think that there's more room to run. I think you look at some of the hyperscalers this year, and part of what happened was you had so much debt coming to market in such a short period of time and not really giving investors the heads up that it was coming. And so, if we begin to see a little bit more of a steady drip instead of a fire hose, I think that will help markets digest. But, clearly the fact that markets are requiring a greater spread in the IG space, in the high yield space to take down this paper tells you something about the sheer volume we've seen so far year to date.
Back in the day, if you saw a move like that and spreads are still super tight, but if you started to see them widen out, you'd worry about equities. Is it the same story?
So I think what's interesting to me is that up until this point, the equity market and the credit markets were kind of two different things, right? You didn't have a huge hyperscaler presence in the IG space. You didn't have a huge data center presence in the high yield space. You had a bunch of software sitting in private credit and direct lending, but hey, that only marks 4 times a year, so you only need to pay attention to it 4 times a year. Now you're seeing that the tech trade and the AI trade is infiltrating both the debt and the equity side of the equation. So I think that there's more signal coming from what's happening with spreads than there was previously. But at the end of the day, you look at where spreads are, I mean, they're still pretty tight by historic standards. And you look at what's going on in high yield, 270 over. I mean, I struggle to get overly concerned about the trajectory of the economy when that's what we're seeing from a financing cost perspective.
Does 60-40 have any relevance whatsoever anymore in the backdrop that you're just explaining?
So I think it does. And I think one of the misconceptions that investors have is that when you say 60-40, you mean a public 60-40, right? Private equity and public equity are still equity at the end of the day. Private credit and public credit are still credit at the end of the day. And so one of the things we're encouraging investors is, hey, 60-40 might make sense, 70-30 might make sense, but beneath the surface, what does your credit allocation look like? What does your equity allocation look like? And do you need to think about other alternatives, things like real assets, to help play defense against higher inflation volatility going forward?
At the end of last year, a lot of debt investors, credit investors, were saying there was more of an opportunity in equities than there was in credit, just simply because the upside looked so much better and the potential downside was potentially worse for bond investors. Has that pendulum shifted as yields have gone materially higher?
So I think that it has become more balanced. I'm hesitant to say that it's completely shifted because the earnings story still is so strong. And so if you believe in the idea that over time stock prices will follow profits and profit growth is still going to be there, then maybe there's more juice to get squeezed out of that orange. But 7.25, 7.5 on high yield, which we know is a higher quality asset than it once was with a fairly low duration, to me feels pretty interesting in an economy, in an economic environment where growth is clearly above trend. If I think about the skew to risk-free rates, it's very much to the upside. So if I can pick up some spread on top of that and maintain a below benchmark duration, that's going to be interesting from an overall portfolio.
Lisa, as you've indicated also, maybe the bigger concerns this time around are in IG and and not in high yield.
You've got a duration concern and you've got a much more concentrated AI concern. So at a certain point, tight spreads, more duration, more AI exposure that potentially is fraught with disruption. Suddenly you're starting to look at IG that has potentially more risk than a lower duration, high yield portfolio. I mean, it's just sort of an interesting kind of turning upside down of risk.
Things have changed. David, it's good to see you.
Thanks,
Appreciate it. Thank you. David Levitz there of JP Morgan Asset Management. Equity futures on the S&P just about positive, very close to all-time highs with an update on news worldwide. With your Bloomberg brief, Vonnie has more. Hey, Vonnie.
Hey, John, thank you. We'll start with McDonald's. Shares rising in the pre-market. The fast food giant posting sales growth that slowed for the second straight quarter as consumers face elevated prices. Same-store sales in U.S. locations did rise slightly under estimates. McDonald's seeing better growth, though, in international markets. The U.S. weapons stockpile is nearly depleted. Reuters reporting the army has used virtually all of its long-range precision missiles in its 5-month war with Iran. The report raising questions about the U.S.'s ability to deter its adversaries, including Russia and China. Incoming Apple CEO John Ternus is putting together his leadership team. Sources telling us here at Bloomberg, Ternus is bringing back retired Vice President of Hardware Engineering, Laurent Legros. Legros will act as a Vice President, working with different parts of the company. Ternus takes over as Apple's CEO, Tim Cook, next month. That's your Bloomberg brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time, later this hour. Up next on the program, pumping the brakes on big oil.
They're making too much money. Chevron, too much money. ExxonMobil, too much money. When you look at one company where they made 12 times what they made the year before, they're going to give some of that back to the public.
Up next, we'll catch up with Stephen Schork of the Schork Group, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Three days of gains on the S&P, another one on the cards. We're up by 0.2% so far this morning on the S&P. On the Nasdaq, up by 0.9 this morning. Rather like the year so far, a tale of two economies. Let's talk about the first one, the one that's doing really well, Caterpillar in the pre-market. Cat absolutely flying so far year to date, up 9% in pre-market trading. The earnings phenomenal this morning. Adjusted EPS 8.17, the estimate 6.17, and the outlook better than expected. That's one economy. Here's a different one. McDonald's this morning, sales growth slowing for a second consecutive quarter. They have some very different customers with some very different wallets and some very, very different price tolerance.
Yeah, typically McDonald's caters to the low to middle income consumer in the United States in particular. Internationally, the footprint is slightly different, but what you saw was a decline in visits, but ticket prices going up. So people were spending a bit more, but the number of visits they were making to a McDonald's went down. A real question here about how they both toggle between their base customer, which is someone who is cost conscious with some of these meals that are value and cheaper, and how they also attract the higher income customer that has the ability to spend, and it highlights this divergence under the surface that has been persistent and a feature of the entire cycle.
The cross-asset moves speak to it too. Just look at rates and look at energy. 2s, 10s and 30s, yields elevated at or near the highs of the year so far, 10s around 470. Turn to crude. Crude still elevated, very, very volatile. Clearly the president's sensitive about the price of energy, the price of gasoline going into the midterms. Brent around 84 this morning. The McDonald's customer is getting absolutely crushed. The everyday customer is very sensitive to what's happening in energy with interest rates. If you're part of the AI ecosystem, don't think this move in rates, this move in energy has hit you at all in any way, shape or form at the moment.
Frankly, for the McDonald's customer, they're getting hit on all sides. They're getting hit because their wages aren't keeping pace with inflation. They're dealing with higher bills when they fill up their cars. And if they want to borrow money, if they want to take out a loan, if they want to use their credit cards, if they want to buy a car on debt, they're facing higher bills. So at what point, which is the worst of the ills? And this is what the Fed is toggling with. Is it worse to have inflation at this level because people hate inflation? Or is it worse to have rates at a punitive level at the front end of the yield curve? I mean, this is an incredibly difficult dance, and you could see a lot of division on the Federal Reserve.
You can make the case with ease that the AI boom, the race for capital that underpins it, is contributing to higher rates, contributing to higher energy prices as well, which just puts the squeeze on even more.
Yeah, and at this point, that's one of the reasons why it's become such a political issue, because of some of the pushback to the AI build-out that people are not yet seeing in their lives. At the same time, what you are seeing from companies like McDonald's is increased use of automation and AI and discussion of how they're going to become more efficient so they can potentially increase margins without increasing prices. So this is some of the push-pull that you're seeing under the surface.
Let's talk about energy. Under surveillance this morning, pumping the brakes on big oil.
They're making too much money. Based on a shortage, they're making too much money. I don't like it. Chevron, too much money. ExxonMobil, too much money. When you look at one company where they made 12 times what they made the year before, they're going to give some of that back to the public. And they better cut the retail price, the consumer price.
So here's the latest this morning. The president slamming Exxon and Chevron as higher prices from the war in Iran weigh on consumers and fuel profits for the oil giants. The companies raking in a combined $29 billion in the second quarter, more than triple the same time last year. Stephen Schork of the Schork Group joins us now for more. Stephen, let's talk about where the profits are coming from, how the money's being made. What happened at Exxon? What happened at Chevron that's upsetting the president so much?
Oh, well, it's understandable here. I mean, we finally found an issue that Trump and a Democratic socialist can agree upon. He's chastising an industry that has made money in a quarter on a war that he started and has no apparent plan on ending. And now he's going full Bernie Sanders on the market, telling us now Exxon has to turn that money over. Chevron has to turn that money over. He said it himself. They're making money from a shortage and making money relative to a year ago, but it's a shortage that he created, and he has, again, no plan, as from the market's perspective, of alleviating. So yes, companies are going to make money when you start and you artificially inflate the price due to your own actions. So he is flailing right now, reaching out and slamming everyone because it's not going the way he had expected clearly when this all started going on 6 months ago.
Stephen, clearly refining is a major feature of what's happening here. What kind of utilization rates are you seeing across the industry? Where is the capacity to bring more refining online and to help get the gasoline price lower, not just stateside, but around the world?
No, virtually none. I mean, because we were looking at a market where crude oil is going up and down every time the president changes his rhetoric. Last Thursday, he went full Dr. Strangelove. I'm going to blow Iran up, to 24 hours later, I'm John Lennon, let's give peace a chance. And oil prices are reacting to everything the president says. What doesn't react is the reality, refining margins, the product markets. The market is telling us through the forward curve, both in the diesel market and the gasoline market, that we are short of product. And hence now the margins, the difference between diesel and gasoline and crude oil are massive. Therefore, the refiners are doing everything they possibly can to capture those margins. And therefore, they are running in the Midwest. They are running at virtually 100% of capacity. In the refinery epicenter in the Gulf Coast, they're running at 97% of capacity. So the refining industry is already pushed to its max at this point. So there's a very little more margin that the industry can do to get more gasoline to the market. They just can't wave a wand and throw some pixie dust on the market and all of a sudden bring retail prices lower. No, retail prices are higher because there is a shortage of product, and the ability refiners to bring more product to the market is already stretched to the max.
Stephen, can the president do anything along the lines of what he's suggesting? I mean, if you channel Mike Wirth and you try to get into his head, is he just sort of rolling his eyes and saying, what a bunch of hooey, and it's never going to come to pass?
No, absolutely. Everyone, I mean, I don't know Mike Wirth personally, I haven't spoken to him, but everyone I do speak in the industry, yes, they are rolling their eyes at a situation where you go on and you can take such a populist view that stems from a war that you created when the industry is responding the way you would expect it responding. The old adage is that high prices are the cure for high prices. We have those high prices, and why are they a cure? Because you're going to bring product to the market to exploit those high prices. But we're already there. What we can address now is the shortage of product, because once again, there's very little that the industry is doing essentially everything it can. It's responding to high prices.
Right.
What it cannot do is respond to the uncertainty. Look, I could price a $95 war. I could price a $75 piece. What I cannot do, and what the market cannot do, is price a $95 war and a $75 piece when it alternates, it ping-pongs within every single news cycle. So there's a price to be paid for that uncertainty, and the market is paying that price right now.
Do you like the oil majors as a group in terms of the share price, given the volatility that we've seen in oil prices, the shortages that are ongoing, and the fact that high prices haven't gotten high enough to spur demand destruction in a real way, at least not in the United States?
Yeah, absolutely, and that's the fear that we have, because there's two ways to impact the elasticity of demand of any commodity: bring more supply to the market or kill demand. Well, our ability to supply the market, as we've said, is already pushed to the margin. So therefore, the only other issue to bring prices down is demand destruction, and of course, that's economic contraction, and that is the fear in the market. As the longer we go, and as we have the uncertainty of how long this war, how long this disruption to the flow of oil around the world through the Strait of Hormuz or through the Bab el-Mandeb into Red Sea, how long does that remain disturbed? And right now, we don't have an answer to that. Therefore, we have extreme uncertainty, volatility in the market. And when the market is uncertain, when the market is volatile, prices are going to be high. You're going to have to pay for that uncertainty.
Stephen, it's good to see you. Appreciate the rant. I really do. Stephen Short there of the Short Group on the latest crude. 2 Fridays ago, triple digits on Brent. Brent this morning, 83 handle.
Yeah, we've seen a huge decline, even with ongoing rhetoric and a conflict that is still on the precipice of potential escalation, of course. We did get reports earlier this morning, both about the U.S. stockpiles, but also about Qatar, saying that there might be a framework for some sort of peace negotiation.
Don't get people excited, Bramo. You've got to take it all away.
I mean, that's the reason why I've seen some of the, whatever.
People are so fed up. Whatever is the right word. Up next, Paul Golding of Macquarie remaining bullish on SpaceX ahead of its first ever earnings report. Live from New York City, you're watching Bloomberg TV.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Three days of gains on the S&P 500, looking like we might make it day 4, up 0.25% on the S&P over the previous 3 days, up by close to 4%. On the Nasdaq this morning, higher by 1 percentage point. The hyperscaler's been flying over the past few days. Software, IGV, has been up for 7 consecutive sessions, and the chips are doing okay as well. Something's changed in the world of tech. We'll get into that in just a moment. In the bond market, 2s, 10s and 30s, yields shaping up as follows. Around 470 this morning, up a single basis point. Impressive ISM manufacturing data earlier on in the week. In the last 24 hours, we've had a really, really nice read on manufacturing in America. The read on the labor market starts to pick up through the week. Tons of data between now and Friday when we get payrolls.
Yeah, and later this morning we get JOLTS data, the job openings data that typically is lagging. A lot of people say it's messy, noisy, etc. But if you get a 1-2 punch with ISM manufacturing coming in at the fastest pace since 2022, with the employment component moving into expansionary territory for the first time, going back to 2023, and then you get the punch with respect to the JOLTS of potentially wages going up, suddenly you have to imagine the market might be doing a lot of the work for the Federal Reserve, and they can maybe take solace in that.
Can we just stay on fixed income? Just bring up that board again and look at 2s, 10s and 30s. For a long, long time, people will consider it hawkish if a Federal Reserve hiked interest rates and bearish for the equity market. Last week was weird. It was almost like everyone in risk assets was complaining the Fed hadn't hiked. Isn't that strange? Isn't that weird?
There is a fear right now in markets that the Fed's going to lose control of the long end. And what some rhetoric from the Fed is saying, or around the Fed, or Fed adjacent, or Kevin Warsh adjacent are saying, is that this is a feature, not a bug, and that essentially the Fed never had control, and to the degree that they did, they shouldn't have. Let's let it go free like a bird, that long end of the yield curve.
There are a lot of forces driving yields higher at the long end of the curve. And that one, if it gets away from you, you got some problems very quickly. Very, very quickly.
Well, and you can see the anxiety on the other side of the coin here with the potential yen intervention and the coordination with the U.S. potentially helping to support valuations at the long end of the yield curve and maybe cap some of that yield move. So trying to put this all together is an enigma wrapped in a puzzle, which is wrapped in a conundrum.
I heard a guest on Bloomberg TV earlier on this morning. I think it was Chris Watling in London. Made a fantastic point. He said, you never have allies who are friends, just shared interest, right? That's kind of what's happening right now in Japan. Why is the US so involved? Shared interest.
Yeah.
The treasury market.
Yeah, $1.1 trillion of treasuries held by Japan. That is a shared interest.
Let's turn to crude. This is a shared interest for us all right now. The volatility here in Brent, 2 Fridays ago, triple digits. We've had a move of 16 to 17% lower since then. Just this morning, another bounce, a rally, and then a sell-off. We're down 1/10% this morning, 83.65. I'll save you, Brahma. You don't have to talk about it.
Qatar did say that language has been drafted on a possible U.S.-Iran peace deal, at least temporarily, but it's not confirmed, and maybe we'll be talking about it again later on, and we'll talk more.
Worth 5 to 10% 2-3 months ago, wasn't it?
It was.
These days, you just don't know what to believe and what to put weight on.
Which is the reason why this sort of feels like what did you say, random number generator, as we're going to be doing on Friday?
Yeah, looking forward to that. WTI back in the 70s, 2 hours away from the cash open with your morning move with some single names. Yahara has more. Hey, Yahara.
Hi, John. We are seeing Caterpillar shares soaring nearly 10% in the pre-market after it beat enormously. Yes, AI data center demand is continuing to fuel its power business, but it goes beyond that. Management saying that it saw a growing backlog across all three of its major businesses. That includes power, construction, and mining, which, as you all have been talking about, it lines up with yesterday's stronger than expected ISM reports. And we also heard from onsemi. It said something similar, that it is seeing a broadening beyond AI to other areas, including automotive and industrial. Turning to McDonald's, those shares are up 1.5% in the pre-market after a profit beat gave investors enough to look past a slight sales miss, especially with shares down 13% year to date. As for what the fast food giant is telling us about the consumer, they're still spending when they go to McDonald's, but they are frequenting the restaurant less as higher fuel prices and food costs continue to pressure their budgets. And after a more than 25% pullback this year, we are seeing Palantir shares surging 15% in the pre-market after a blockbuster quarter that saw its U.S. commercial sales soar 149%, prompting the company to lift its full-year outlook yet again. John?
Yahara, thank you. Stock is up by 15% in the pre-market. On our radar this morning, new concerns about the ammunition in the war with Iran. Reuters reporting the U.S. has used virtually all of its long-range precision missiles during the war, raising questions about supplies for current and future fighting. Elsewhere, Chinese officials expressing concerns about the cyber capabilities of Anthropic's AI models. Bloomberg reporting they see the potential for similar models to be used as offensive weapons, the concern adding to tension ahead of the Trump-Xi summit next month. And finally, the Trump administration set to host several AI companies at the White House today. Sources telling us here at Bloomberg, representatives from OpenAI, Anthropic, and Google will be in attendance to discuss safety tests for new advanced models.
And this follows what we saw last week with a couple of rogue models coming from both OpenAI and Anthropic that broke out because the restraints weren't great enough and hacked into a couple of different companies, including Hugging Face. Question here about how much the discussion is going to be about controls and how much of the discussion is going to be about open source versus closed source, and what type of regulatory moats they should put around some of these frontier models versus opening the doors more broadly in a competitive space with China. It is coming with China pushing back, saying we're a little bit worried about Mythos and some of these other things that you could potentially attack us with. So this is increasingly geopolitical as much as it is potentially domestic and safety concerns here.
I've got one question, and it's a question that's absent given their visit to the White House. What happened to the conversation about shared equity? Where are we with that? And does that come up at this meeting?
Good question. No idea. And I don't know if that's on the table now or if it's really an issue of trying
quickly, didn't it?
Yeah, I don't know exactly why. Maybe just I think that a lot of people thought it was kind of unclear what the goal was, whether it was a bailout or whether it was actually shared prosperity.
I wouldn't be surprised to see that come up again in the next 24 hours. Let's talk about SpaceX gearing up for a big week. The company reporting its first ever public earnings after today's closing bell. The data coming before a lockup period for insiders expires on Thursday. Paul Golding of Macquarie remaining bullish on the stock, writing near-term volatility on the upcoming lockup expiry could continue for a bit, but fundamental advantages continue to drive the story. Paul joins us now for more. Paul, good morning. Good to see you.
Great to be with you both.
Thank you very much for being here. Can we just start with the post-IPO weakness? What do you think has been driving that over the last month or so?
Well, I think to some extent there's still the market working to understand how much of this technology is truly net new or how much of it is a use of existing technology or an adaptation of technology that SpaceX has really refined. We're talking about connectivity satellites, for example, with the Starlink business. We're talking about the ability to send mass into orbit at a fair sort of economic cost and driving the economic equation there. And so when we think about those components, I think some of this still seems like it's fairly far out there, well into the future. But as we've been hearing from the company and seeing around the AI satellite design, incremental news flow there and detail, we see that even to the company's own point, some of this is actually simpler than the technology they've already used for connectivity satellites. And so really, I think it comes down to refining the reusability of Starship and the cost per kilogram to put mass into orbit, and essentially being able to secure the compute, whether that's through Terafab or other sources, but the compute to develop this orbital compute thesis.
Where's the money being made right now? Starlink, then I think about the rental agreements with Google and Anthropic. How much of that are we going to see later on this afternoon?
Well, as we said in our latest report, we actually think that Q2 actuals won't really be the focus because the timing of some of these rental agreements for cloud capacity really won't come on until Q3 in earnest in terms of seeing it in the financial impact. And so what we see as being core to this result is really management outlook, commentary around strategy, any incremental deals that might be announced with clients. But where's the money being made? It's being made in Starlink and connectivity. And we did hear in this sort of interim period about a deal for approximately 1,000 aircraft being done to deliver Starlink broadband to commercial airplanes.
Who's their bigger competitor right now, Verizon and AT&T, or the likes of Amazon?
Well, that's what we see as being sort of the most interesting and compelling part of the story is that there is a moat because of this support that the business has from the incumbency in launch. And that allows it to play as a scale player potentially in all of these spaces, in various spaces at the same time.
Do you think that the first, second, or third question will be, when are you acquiring Tesla?
We can't speculate on
not offering odds on that.
No, but seriously, like, how important is the purchase or acquisition of Tesla to SpaceX's ambitions?
I think what we would reference is Terafab as being key to this orbital compute thesis, and Terafab is a partnership, at least as it's been proposed, right, with Tesla, and that is core in our view to securing the amount of compute necessary to deploy, tens and tens of gigawatts into orbit and be able to deliver that compute at this, with this economic power to drive EBITDA in the way that we model.
Paul, there's a great business there, a great fundamental business within SpaceX. I just have no idea how to value it. And this is certainly not aimed at you, but I think a lot of financial institutions on Wall Street were hired a record IPO. And I certainly didn't know what to believe when I started to see these massive numbers of total addressable market. I mean, you could just sort of make this up about what it's going to be because the business doesn't exist yet. There is no market, so you can put any number on things. How do you value this company? And what do you value it on? Lisa asked a great point. Is it a telecommunications company? Is it a neocloud firm? How do you value this company?
Well, the good thing about the verticals that it's in is that there are terrestrial equivalents in sort of distinct subgroups. But we use a sum of the parts. And even within a sum of the parts, if you look at the AI business, there's AI infrastructure and there's AI software, essentially, frontier models, X, and the advertising potential that comes with that. When we look at that, you can look at launch and the space segment. It has existing incumbents, primes, and others, although I would argue that given the success of the Falcon program, the reusability, how far ahead SpaceX is relative to the rest of the landscape, it stands in a league of its own in that category. And the same goes for Starlink with, at the time of the IPO, approximately 9,600 satellites, but we would expect well in excess of that. That's a enormous constellation able to deliver this capacity.
This seems to be, and it has been, a feature of Elon Musk, not a bug, that you can never define or put your finger on what exactly his company is. We were talking about this with Tesla. Is it a car company? Is it an AI company? Now we're talking about that with SpaceX. And it always worked because people believed in Elon Musk. The Elon Musk premium was so significant that the definition wasn't important. Is he losing that premium?
This thesis, as it relates to SpaceX maturing into these segments in this TAM, I think is really going back to the first question and what we talked about with respect to what's the market missing. I think it really comes down to the technology and visualizing it. And we hear a lot, we've heard a lot in the marketplace about, you know, data centers in space. And we're not really talking about data centers in space. We're talking about satellites that have GPUs in them, that have laser communication to create a mesh. That laser mesh is already being used across the Starlink constellation. These are not as sort of science fiction as one may think.
Paul, well framed. It's good to see you. We appreciate your time, sir. Thank you. Paul Golding there of Macquarie. That stock is up at the pre-market by 2%. Those earnings coming a little bit later on today. Let's give you an update on news elsewhere this morning with your Bloomberg Brief. Back with us, here's Vonnie. Hey, Vonnie.
Hey, John, thank you. U.S. states are pushing back against President Trump's new global tariffs. 25 states filing a lawsuit over the administration's use of Section 301 of the 1974 Trade Act. The states alleging the new tariffs use the statute improperly. Attorney General nominee Todd Blanche's confirmation may be moving forward in the Senate. Two holdout Republicans are backing a deal with Blanche to formally rescind an order for a so-called anti-weaponization fund. The Senate Judiciary Committee has scheduled a vote on Blanche's confirmation today. The FAA approving Boeing 737 MAX 7, ending years of delays tied to 2 deadly crashes. The Washington Post reporting the move clears Boeing to produce the smallest MAX, with Southwest Airlines expecting deliveries soon. And that is your Bloomberg Brief. John.
Bonnie, thank you. Up next, you can't fool the bond.
You can't fool the bond. You can't do it. The bond will see through it. If this continues, the bond will continue to reflect a greater inflation risk premium and more uncertainty.
I got to say, we've had some fantastic rants already this week, and that was right up there, right? Mark Cabana, Bank of America.
You can't fool the bond.
He was like looking down the barrel of that camera. He wasn't even talking to us.
He was talking to somebody else. He was talking to someone whose name rhymes with Levin Marsh.
Yeah. Up next, we'll catch up with Vishal Kanduja of Morgan Stanley from New York. You're watching Bloomberg Surveillance.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Near session highs right now on the Nasdaq, high by 1%. What a run we've seen on the Nasdaq 100. What a run we've seen for big tech just over the past few days. Microsoft and Amazon up some 25% in 3 sessions. Alphabet up 12% in 2 days. Meta up by something like 10. Those earnings misses for some of those names long forgotten in a few days in this market. Not just the hyperscalers, software and the chips doing okay as well. Equity futures at the index level on the S&P up by 1/3 in the bond market, 2s, 10s and 30s. Just holding on to recent highs around 470 on 10s this morning, down a single basis point. Likewise on 2s, but settling around this new level in the 460s on 10s, the 420s on 2s. Just can't get away from 470 and 430 respectively with any degree of comfort, just with the prospect of a lot of things lining up to push yields even higher.
Yeah, and really the key question, I think, for a lot of people in markets this week is how will traders respond to the data that comes in, right? At what point do you see that much more volatility around data points like non-farm payrolls on Friday, or even JOLTS data coming out at 10 a.m. Eastern today? If you do get a hotter than expected number of job openings, but also wages, or even the quits rate going up disproportionately, that could potentially also trigger a further move up in yields.
Well, look out above, never mind look out below. This came from JP Morgan, forecasting 485 on 10s, previous forecast 470, forecasting 540 on 30s, previous forecast 520, 540 and 485. It's a different bond market.
If you go around Wall Street and you ask different desks who are in the fixed income market whether they're willing to go long duration, very few of them say yes. They all are focused on short duration bonds. What Scott Bessent was talking about earlier this morning was that the end of forward guidance is detox. And if this is a detox exercise, what we're seeing right now is people going through some serious withdrawals.
Can you tolerate the pain? And maybe that detox, that pain hasn't even started. Under surveillance this morning, you can't fool the bond.
You can't fool the bond. You can't do it. The bond will see through it. If this continues, the bond will continue to reflect a greater inflation risk premia and more uncertainty. We are looking for a plan, and we don't see one right now, and that is what the long end of the rate curve is telling you.
So here's the latest this morning. Treasury yields holding steady as investors await a slew of employment data due out this week. Lingering inflation concerns weighing on markets following last week's hawkish hold from the Fed. Vishal Kandudra of Morgan Stanley writing, we still find fundamental conviction in disinflation showing up in more meaningful and broad-based fashion, which will allow the Fed to be on a long hold. Vishal joins us now for more. Vishal, welcome. If you've got a hold at the front end, where does that leave the long end of the curve?
Mark Cabana put it fantastically, actually, that gets the long end untethered. I think the best thing that could have happened to the long end of the yield curve actually was the hawkish rhetoric that you started off with the new Fed chair in his first meeting. I think that was the best day for Scott Bessent on the other side. If you have a chair who's going to be fundamentally focused on inflation, you're going to try to suppress the term premium that the nominal yield curve will give you. And that's in fact what Mark Cabana was pointing out in your previous session as well. And that's why we think that, 42 days later, when he actually did not deliver on that 8 basis points of hikes being priced in, and then reduce the hikes that were priced in for September, that's where you started to see the untethering of the long end, and that's why now you're seeing expectations moving higher for that term premium and the 30-year touching 520, and then expectations for it to go higher.
Vishal, just to put that into one line, and I know you understand this and I do too, but this is the story right now in fixed income, that being too dovish of the Fed is actually bearish for the long end of the curve. Do you think the Fed sees it that way, and is that an objective? Do they understand what's happening?
I think that is very clearly understood and was sort of like touched upon during the first meeting in the Q&A. the fundamental focus on that long end 10-year, because most of the refinancing mortgage rates, etc., are not based on your SOFR rate, are based on the 10-year rate. And that's why the rhetoric on we've reached this sort of target for 6-7 years, we've not been close to that 2%. And almost to statements like that we are going to focus on inflation at the sort of expense of the labor market not meeting their full potential. So there were very clear hints in that first part of the meeting on the Q&A, in the Q&A, even though there was lack of forward guidance, dots, etc. We can go on. But very, very clearly, I think the Fed understands, the new chair understands it. And then Scott Bessent on the other side very clearly understands that aspect as well. So we don't have sort of a doubt that is misunderstood, that the importance of SOFR versus what the importance of that 10-year is onto the economy.
So Vishal, just to put a bow on it, have you increased your forecast for yields at the end of the year, particularly at the long end of the curve following the press conference last week?
We've definitely increased our 30-year forecast, and that's why we are in steepeners. So we have increased duration, but our duration is focused on that sort of 5 to 7 year part. Also, I think, Lisa, what is important here, that the move in nominal rates has been only focused on the real yields, not inflation expectations. So that 5-year inflation expectations are still stubbornly around that 225. But your real yields on the 5 and 10-year part are mainly explaining that nominal yield curve move. So that's why we find these levels fundamentally from a valuation perspective, roll down carry perspective, your basic bond math, extremely attractive. Well, but you need to pick out that 5 to 7 year part and stay away from that 30-year.
Okay, why do you want to stay away from the 30-year? What would it take to entice you back in?
I think the term premium, the 5s, 30s is hovering around 80, 82 basis points at the moment. The lowest it was about 62. Last year, if you rewind the clock back probably 18 months, it was negative 100, meaning the economy was telling you that the growth is not there. But now you're pricing in good growth. We need to curb down the inflation expectations or that long and untethering. So I think 530 going back into that sort of 100, 125 range, I think will become attractive for that long end for us at that point.
We're doing our best to sell bonds at the long end, Vishal. No one's buying. I mean, that seems to be the takeaway, Bramo.
Pretty much.
30s, can't get people to touch it.
When you talk to people, they say, maybe we'll dip our toe in 5 to 7 year, but 30-year, what are we buying? And ultimately, you saw earlier last week, you saw the real yield on 30-year treasuries going up to close to 3%. So it really hit some of the highest levels it's been in years.
Vishal Kanduja of Morgan Stanley. Vishal, always good to catch up, buddy. As always, thank you. I give credit to BNP and the likes of Morgan Stanley too. They've been talking about the same issue. But BNP came out a number of months ago and said, don't think of 5 as a ceiling for this yield curve. Think of it as the start of maybe something more, and you're seeing it take on a life of its own at the long end.
So really, ultimately, is this healthy? Is this sustainable? Is this something that is going to restrain inflation in a positive direction? I mean, these are the questions that economists are going to be thinking about.
There are elements that are healthy and elements that aren't. Is that fair? It's a reflection of decent growth on the one hand. On the other hand, it's a reflection of deficits and a lot of financing. Let's put it that way.
And some sales coming from the entire world.
Up next, Deepak Puri of Deutsche Bank, the third hour of Bloomberg Surveillance, just around the corner.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
You have to feel pretty good about what earnings season has done.
The equity trade continues to have momentum. You've got the AI theme that's just absorbing so much capital.
We see adoption, we see revenue accelerating.
I think that there is a lot more movement than the headline indices would suggest.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now in your price action. The scores look like this. We're positive 1/3% on the S&P, up 1% and change on the NASDAQ. The rally in tech continues. Thank you, Palantir. In the pre-market, that stock doing better than good, up nicely, up by 15%. We'll hear from SpaceX and AMD a little bit later on this afternoon. We've heard from Caterpillar already. That stock is up nicely in the pre-market, also higher by 11%. Absolutely crushing estimates earlier this morning.
Yeah, you take a look at second quarter backlogs rising to $72 billion. You also see the full year 2026 sales expected now to be in the mid to high teens from the low double digits. When you take a look inside the earnings, you see a whole lot of AI. And again, this goes to the underlying question of how do you decipher what is an artificial intelligence trade and what isn't? And the question and the answer really is, well, it's kind of everything. It's permeating out because one of their fastest growing units were the ones that competed with GE or Vernova, the engine and the power types of generators. So again, it sort of speaks to this question of how important AI is to the overall economic trajectory and to earnings that go well beyond just the tech names.
It's the story of the economy so far this morning, two speeds. We've talked about it a lot in the last hour alone. Fantastic numbers from Palantir, from Caterpillar, all speaking to the same thing in some ways. And then you've got McDonald's. Sales growth weaker. 2 consecutive quarters of weaker sales growth over at McDonald's. Now, the stock's doing okay in the pre-market, but it speaks to the story elsewhere in the economy. It speaks to the squeeze that the president is increasingly sensitive to.
The K-shaped economy on the lower end of the income sphere, feeling the higher prices with respect to gasoline and other distillates, also seeing higher prices more generally. The inflationary pressures clearly weighing on consumer sentiment. You're seeing this with respect to some people not going to McDonald's or some other fast food restaurants as much, although you are seeing some fast food restaurants that cater to a higher end consumer do better, and you're seeing the total ticket prices at McDonald's do better. So Here's the question. Are people at the lower end of the spectrum getting squeezed more than they are being helped by artificial intelligence? The idea that AI and the build-out is expensive, it's pushing up prices. When do you get the efficiencies that can offset that? And ultimately, you can feel that tension in McDonald's when they come out and they say, we're going to use some of this technology to make ourselves more efficient, at the same time that all of this is also causing prices to go up.
That stock is up by 1%. Let's talk about the bond market too. 2s, 10s and 30s. Yields down about a basis point this morning. Call it 2 on 10s. Lisa's talked about a great ISM manufacturing, I think at a 4-year high in yesterday's session. Fantastic. Still around 470. You know the news of the last week or so around the Federal Reserve, keeping rates unchanged, but dissent from Kashkari of Minneapolis, dissent from Logan of Dallas, dissent from Hammock of Cleveland. We've just heard from Paulson of Philadelphia. Mike McKee has more. Good morning, Mike.
Good morning, John. Well, you want a reaction function? We are getting it, not necessarily from Kevin Warsh, the chairman, but Anna Paulson, the president of the Philadelphia Fed, is out with an essay this morning explaining what she thinks of the economy. She's still in the hold camp, but she is growing more concerned, citing subdued wage growth, elevated mortgage rates, and muted housing markets. All of this information, she says, points to current policy being mildly restrictive. The other possibility, however, is that current policy is not restricted enough to deliver our target rate of 2% inflation. The most compelling evidence for this view, straightforward: inflation has been above the target for more than 5 years. Persistently elevated inflation suggests more restrictive policy may be needed. She says, stripping out tariffs and energy, Paulson sees underlying inflation somewhere between 2.4 and 2.8%, and that is the metric that she is using. If you want the reaction function, she wants to see months, plural, of improving inflation data and signs that pressures from tariffs, energy, and AI are contained. If instead underlying inflation remains stubbornly elevated, the passage of time without progress would itself signal that more restrictive policy is needed. She wants to see months of declining inflation, and we will get 2 inflation reports before the next Fed meeting, so she could be lined up, if we don't see declines, to vote yes for a rate increase. Interestingly enough, just a moment ago, we heard from Scott Bessent on CNBC saying that he thinks that Kevin Warsh is going to do the right thing, that he wants to maintain his options, and the end of Fed forward guidance is detox for the markets. And also, Lisa, you were mentioning McDonald's and the K-shaped economy. There's a headline from Scott Bessent saying, I am sick of hearing about the K-shaped economy.
Mike McKee with the latest. Michael, thank you. Thank you very much. Anna Paulson of Philadelphia, a voting member on this year's Federal Reserve. Of all the quotes Mike read, this one jumped out. If instead underlying inflation remains stubbornly elevated, the passage of time without progress would itself signal that more restrictive policy is needed. Haven't we satisfied that test already over the last few years?
You mean that we have not hit our 2% target for more than 5 years? How much does passage of time need to be to count as maybe leading to this question?
Based on the feedback we've had from Fed officials so far, I'm not sure the other Fed officials want to go through that detox process. Deepak Puri of Deutsche Bank is with us around the table. Deepak, good morning.
Good morning.
Let's get to reflections on the Federal Reserve and your outlook for policy. Have things changed in the last week for you?
I think things changed in the first meeting itself when Kevin Warsh, the new Fed chair, said that he's going to let the markets dictate some of the Fed moves, and the forward guidance is going to be somewhat of a question mark, especially with regards to what he feels, right? So that dot plot was missing. I do believe there's a credibility gap with regards to how strong-worded he is with regards to combating inflation and bringing it down to 2%. But then, on the other hand, there's not much of a policy action. So I think the markets are struggling to figure out where this Fed is going to be when it comes, especially once the task forces are delivered their findings by end of this year. You know, is it going to be everything up to the markets, or is the Fed going to take some preemptive analysis? And this goes back, Jonathan, for the last 15 years. You think of cost of capital, right? You have a market cost of capital, and what the Fed has done over the last 15 years, which has been much lower than what the normal cost of capital should be. That has triggered the so-called carry trade over the last 15 years, where almost every asset class has gone through bouts of inflationary spikes, right? And this Fed is saying, that we want to mitigate that gap. We want to bring the Fed funds rate closer to the market cost of capital. Now, if this is going to be an abrupt U-turn, I think there's going to be massive revolt from the markets. And if it's managed accordingly in a sort of a, with more time in between, I think the markets may actually like a little bit of this in the years to come.
As it stands, he's letting the markets do the work. Yields have drifted higher at the long end, in some cases more than drift. The Treasury Secretary is calling it a detox. I'll just make this very simple. Based on what you've heard, do you believe that is bullish or bearish for the stock market?
And that's the big question. I think part of it is definitely bullish because one could argue that the rates are going up because of better economic growth that the bond markets is expecting going forward. And you only have to look at some of the data that's been coming in. But on the other side, one could easily say, and some of your previous speakers have said that it could be the term premium or it could be the inflation expectations. And then I look at the recent GDP data, right? The real GDP data quarter over quarter, seasonally adjusted, was 1.5%. When you look at the nominal number, it was at 7.9. So the GDP deflator is more than 6%. That's a very big number, unheard of. So that tells me that part of this narrative here is definitely inflation expectations. And you need to be, from a portfolio positioning perspective, not only be sensitive to, capturing this AI narrative, but also start drifting towards making sure that your portfolios are protected to any unexpected inflation spikes.
Is that the same story? I mean, to me, increasingly the AI build-out is spurring a bunch of the inflation that we're seeing, whether it's the prices in components or the prices in materials, or even some of the building that we're seeing trickling into some of the earnings from Caterpillar and others. I mean, how do you decipher these two concepts?
It's difficult, and there is another circularity, right? There's this closed loop where one is feeding the other. And I think we are in the middle of an exceptionally good earnings season. This might be the peak of earnings. So for me, the big test for these markets is going to be how severe is the drop going forward? Are we going from a 45% EPS growth rate year over year to a much more, still very positive 20+ number? Or are we going to a mid-single digit number, which has historically been the norm at this stage of the expansion? And I think that's where you want to be a little bit more cautious in the next few months, especially ahead of the midterm, to make sure you don't really, extrapolate this earnings season, which has a lot of underlying anomalies associated with it, to make portfolio decisions.
So are you getting more cautious right now when it comes to risk exposure, or are you going in saying actually some of the volatility has been hammered out, whether it's situational awareness or the Korean stock market, and now is a good time to buy?
I think a mid-year reset is always a good time. From a client's perspective, there are things you control, things you don't. So the first thing I ask our clients is to really look at what you own. What you measure. First, you need to measure your risk profile in the portfolio itself. And maybe given the fact how the markets have behaved over the last year to date, maybe there are certain positions you need to trim. And those could be more on the momentum growth side, given my previous comments. Having said that, when there's that yield curve clock, which I think might make sense to revisit at this point, which says 10s, 2s, are, there's a bear steepening and 10s are increasing. So maybe you need to have a little bit of a value tilt, a bit of a small cap tilt, maybe outside of the US as well, which is something we've been talking about for some time to come. So I think those things need to be looked into.
When the 10s are screaming buy in the bond market, when does that get interesting to you? Lisa asked a question about 30s. Just can't find anyone who wants to touch them, even at 525.
Right.
When does it get interesting to you?
See, I think 470, 475, where we are currently, let's say it's around 465, that's fine. Anything over 5% sustainably, it starts to getting downward pressure on risky assets. So we think the yield curve is going to be lower, going into 2027. And that's primarily driven by some softness that we see emerging in labor markets, softness in the economic growth.
So you think it might be a good time to extend duration now then, based on those comments?
maybe wait a bit, because there's still 6 months from now till the start of the 2027, right? And the bulk of the action is going to come, I think, in the September and October Fed meetings. So I think you could still see, given what the underlying dynamics are, that the markets might test. The 10-year might go to 5%. Concern really is, would it be sustainably over 5%, knowing the kind of debt and deficits we are carrying, and the interest payment on the debt is really going to be an important factor for the incoming,
That's what I worry about with the long end of the curve. If you start to outsource monetary policy to the long end of the yield curve, that it can take on a life of its own.
Indeed.
And high yields beget high yields. You start to get to 10 to 5%. You see this dynamic take place over in Europe, and things can get away from you without control.
Yeah, no one wants a Liz Truss moment here in the United States, and that is the fear. And ultimately, when they come out with the refinancing agreements, with the refunding agreements from the Treasury, how much will be coming in 30-year yields? I wonder how big that issuance will be.
Not much.
Yeah, I'm guessing probably pretty small.
Deepak, thank you. Appreciate it, sir. Thank you. Still at 8,200 for next year?
Indeed.
8,200, okay. About 12 months out. Deepak Puri there of Deutsche Bank Private Bank. Equity futures this morning positive by about 1/3% on the S&P 500. Some risk events on the horizon for people in this bond market. And unwillingness, Lisa, to step in just yet, even with 10s around 470 and 30s around 520.
And this is a reason why we've seen such a significant move last week in the wake of the Fed, because if the Fed wasn't going to give confidence that they were going to move at the front end, well, you can't fool the bond, and that's what we've heard over the past couple of days.
Epic from Mark Cabana.
I love it. Mark Cabana came fired up.
Not to talk to us.
No, he wasn't talking to us.
Just to have his moment.
We just helped facilitate it.
He had his moment.
I'm here for it.
Let's get you an update on news worldwide. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Philadelphia Fed President Anna Paulson raising new concerns about inflation. Paulson writing in an essay this morning that she is keeping an open mind on the path for interest rates. Paulson voting for a hold in the July meeting, but writing higher inflation without progress would signal more restrictive policy is needed. New concerns about the U.S. weapons stockpile. Reuters is reporting the Army has used virtually all of its long-range precision missiles in its 5-month war with Iran. The report raising questions about the U.S.'s ability to deter its adversaries, including Russia and perhaps China. Anthropic striking a deal for compute capacity from an NVIDIA-backed cloud startup. The $10 billion deal with Volta provides Anthropic with resources from a data center in Norway. The move marks the cloud maker's latest effort to keep pace with demand for its products. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you very much. Up next, the Morning Calls plus Paul Miggs of Freedom Capital Markets with AMD earnings just around the corner. Live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action. bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
If we're looking all across, the semi ecosystem, where you get to points on the margin side of things where it gets a little bit too lofty, too good, you're going to see growth rates start to decelerate for the semi ecosystem over the next couple of quarters and years. The market needs to digest that and find kind of a proper multiple for the industry.
That was Angelo Zeno of CFRA on the chip sector. The chip sector finding some stability following a 20% plus decline for the month of July. The biggest monthly decline we're seeing going back to October 2008. If you're just tuning into the program, welcome. It's quite a run, a tech-driven rally over the previous 3 sessions, and we add some weight to that rally, up by 1% and change on the Nasdaq 100 this morning, up a third on the S&P. In the bond market, 2s, 10s and 30s, yields down just a little bit. We're lower by a single basis point at 466 on 10s, on 2s at 422. The data in the last 24 hours really quite powerful. ISM manufacturing 4-year high. The employment component really decent too, positive. Haven't seen that for a long time. That's encouraging going into payroll, so watch this space on that front. And then later on, we'll get some data, some labor market data, and that labor market data builds through today and into Friday.
They'll speak to the tightness or not of the labor market when we get the job openings, and the quits data, which a lot of people look to as potentially the more accurate read on exactly what this labor market looks like. And it's a great predecessor to what we get on Friday, the non-farm payrolls. If we get an upside surprise, does that put potentially the Fed in play, even without Fed Chair Kevin Warsh necessarily endorsing, or we don't know, with respect to a rate hike?
So we've had dissent from Logan, Hammack, Kashkari, 3 of what I would call the 4 rotating Fed presidencies, because New York always gets a vote. The other one is Paulson of Philadelphia, voting member this year on the committee. How close are we to getting some dissent from someone like Paulson of Philadelphia? When you go through the quotes, the work she's put out this morning, I think we've already satisfied some of her thresholds for hiking interest rates, even though she says herself, we're not there yet.
It feels like the bar is actually higher to not hike, which is true progress on inflation over the next couple of months before September, saying that she is increasingly concerned and expressing the impatience we've heard from other Fed officials. It has taken so long, and so the bar is that much higher to show that we actually are going to make progress to that 2% goal.
This is the runway to the September decision, and that runway is lined with a lot of data. Payrolls on Friday, 1 more data point after that on the payrolls front, and then you've got 2 CPI prints going into the Fed meeting, the middle to the end of September, and you've got a Jackson Hole speech too, which right now is a blank page of paper. That's a lot of work to be done between now and then to see if any other officials begin to vote with the dissenters.
Yeah, and that's the reason why we're probably going to get quite a bit of volatility when it comes to some of the data reads, whether it's CPI, whether it's the JOLTS data, or whether it's non-farm payrolls.
JOLTS later, payrolls Friday. Let's get you some morning calls. First up, Oppenheimer, downgrading Walmart to market perform, seeing a, quote, less compelling outperformance case. His second call from Citi, raising its price target on Palantir to a street high, citing its second quarter earnings beat for the hike. And finally, Stifel, initiating coverage on SK Hynix with a buy rating, noting it's well positioned to benefit from the AI build-out. That stock is up this morning by more than 4%. AMD results due after the closing bell. Analysts expecting a solid quarter from the chip maker on strong AI demand. Paul Meeks of Freedom Capital Markets writing, I'm interested in their CPU and GPU deals with hyperscalers and neoclouds. Paul joins us now for more. Paul, welcome to the program. It's good to see you, sir. Let's spend some time on the gap, just the gap between NVIDIA and AMD. What has AMD done that's encouraging to help close that rather large gap?
I think they've set themselves up nicely to be a strong number 2 with their GPU business. And of course, they have a legacy CPU business that NVIDIA is only entering now. But I think that the gap, Jonathan, is unjustified. You have AMD trading at not just a slightly higher multiple, a much higher multiple, even though NVIDIA is 7 times the size. And believe it or not, even though maybe the rest of the street thinks differently, I would not be surprised that despite its relative size, that NVIDIA does not grow its top line even faster than AMD. So I like them both. I support them both. I publish on the AI infrastructure name, so this is all part of my ecosystem. But I'm a buyer of NVIDIA. I would not buy AMD at this level.
you wouldn't buy AMD at this level?
I would not, particularly because we have news coming. But Jonathan, we probably shouldn't see many surprises because only a week ago, AMD had their AI day for analysts like me. And of course, the key thing with this story is almost not even what they produce as far as numbers financially, but do they perpetuate the narrative that AI spending will continue, not into 27, but into 28 or beyond? And at the end of the day, what we're all waiting for, will we monetize all this spend? I think we will, but I don't think we'll see much evidence of it for a while.
Paul, just to sort of counter that, doesn't the whole sector have to counter that particular argument? Why is it just AMD?
Oh, no, it's much more than that. I think Dr. Lisa Su, the CEO, she's a rock star, well respected. We need her to spend maybe 20% of her time talking about the outlook for AMD and 80% of her time perpetuating the narrative. So, Jonathan, yes, I agree. It has to be supported by the entire ecosystem, not just in their near-term financial results or their guided to next quarter results, but what they're saying about CapEx spending, not just the rest of 26, but 27 and 28.
What are you looking for specifically, Paul, when it comes to agreements with hyperscalers that have already been inked and potentially those still to come?
So what I need to see is each of these data centers are typically financed through a special purpose vehicle. And because the customers are most often investment grade hyperscalers, the companies like a CoreWeave or an IREN or a Nebius that I all published on, they will be able to lever their customers' investment grade rating to get lower cost debt because they're going to have to add a lot of debt. And so this is what I'm probably most concerned about. You have to have or continue to have a very receptive debt market for these particular GPU financed bonds.
In other words, you're saying that AMD has to be the backstop for a lot of the build out, regardless of whether they are the sole beneficiaries, even if they potentially are helping their competitors as well, but they need to be the backstop in order to keep the spending going. Is that right?
That's right. And they've done some deals even recently, like with Cerebras, for example, in which, yes, their heft, their balance sheet, their reputation allow some of their neo-cloud vendors to finance at much lower rates because those companies on their own typically have subprime balance sheets.
Paul, it's good to see you. Interesting thoughts at the end there. Paul Meeks there of Freedom Capital Markets. We saw something similar, not the same, but similar from the likes of Broadcom as well in the last few months. We're at this creative stage of finance where it becomes, I think, more about capital markets than just technology, more about capital markets than just solely technology. The story's changing.
We're starting to see a little bit of pushback, also the amount of capital they actually have to raise. Again, it shows how much the liabilities might not be represented fully transparently on some of the balance sheets here.
Up next on the programme, Yelena Shulateva there of the Conference Board expecting a steady slowdown in the labour market. We'll get her outlook for the labour market with a week packed full of jobs data.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Equity futures here firmer by 1/3 of 1% on the S&P 500. The opening bell about 60 minutes away, up 1% on the Nasdaq. Three-day run into this. That three-day rally taking us to around 1/10 of 1% away from record highs on the S&P. A record high that we haven't been able to beat in the last 2 months or so. Index level churn beneath the index. Pretty violent rotation we've talked lots about. Let's get you some economic data. That data crossing just now. Mike McKee has the numbers. Hey, Mike.
Well, John, we're getting at the heart of why GDP was weak in the second quarter, basically because of imports into the United States. The trade balance comes in at negative 73.3 billion, which is a little worse, not too much worse than the trade balance was forecast to be. But imports were down 1.8%, exports down 0.9%. Now, what we've added in here is services. In the preliminary report on trade, it was $101 billion negative because we had a big rise in imports based on AI. People bringing in goods to satisfy the demand for AI construction, and also some, they said, getting ahead of the tariffs that the president has just reimposed. So what we're looking at here is AI-induced weakness in the second quarter. The question is it going to reverse in this current quarter?
Mike, as you know, attention turns to the jobs market through the week. Lisa talked about the jobs data due at 10 a.m. Eastern time. After jobs, tomorrow we get ADP, ISM services in the mix as well. Later in the week, we'll get claims. Then the big one on Friday, Mike, payrolls. Where's the labour market now? How are things stacking up? And can we just move on? Is it doing okay that we can focus almost solely on inflation?
Every indicator that we have seen suggests it is doing okay. The ISM Manufacturing Employment Index was up over 50 for the first time in a couple of months. And then we expect the same from the services industry data that's out tomorrow. And of course, we'll get, as you mentioned, ADP. But when you look at the jobless claims numbers, they don't suggest there's any great loss of jobs. So probably at this point, the risk is to the upside in the jobs numbers. And as you heard from Anna Paulson earlier today, labor market is stable and they can look beyond that, and the focus is squarely on inflation.
Mike McKee, thank you, sir. Mike McKee with the latest. That's basically what you heard from Beth Hannock of the Cleveland Fed going into the meeting, into the quiet period in that LinkedIn statement. There is no conflict in the dual mandate. The labor market's fine. I wouldn't say it's fantastic, but fine. We should be focusing on above target inflation and working to do something about it.
Yeah, and the nail that would really be driving this point home would be the potential for any kind of wage gains to fuel wage-driven inflation. And that, I think, is why people are looking at that quits rate and, of course, of the wage component of the jobs report.
Let's talk about the jobs report. Yelena Shulatseva of the Conference Board looking ahead to this week's triple dose of labour market data, writing, we expect the labour market to continue to cool in an orderly fashion while labour cost inflation pressures remain contained. Yelena joins us now for more. Yelena, good morning.
Good morning.
Let's just start with the outlook. Lots of data through the week, concludes with Friday. And on Friday, we'll get the payrolls report. The estimate in our survey around 80K, unemployment in the low fours. Do you consider that a tight labour market, one that's loosening? What is that? How would you characterise things at the moment?
It depends on what you look at. And if you just look at payrolls numbers, it's probably above that break-even level. So from that perspective, it could be a little tighter. But I would also throw one more indicator in the mix that is coming this week, unit labor costs. So that has been hovering around 2% on a year-over-year basis, like trend-wise. I think this is consistent with inflation, core inflation, actually stabilizing at a lower rate. So, you know, we don't see any wage pressures in the economy. And for that reason, I will be watching average hourly earnings on Friday.
Are wage pressures a lagging indicator? And I ask this because the inflation is coming from other places, but it's a tight labor market where potentially workers could ask for higher wages, which is something that John asks for a lot. And some people will argue that in this cycle, with consecutive supply-side shocks and the secular drive to build out AI, the wage inflation could follow some of the other inflation, not the other way.
So yeah, wage inflation is the lagging indicator in some sense. But, you know, I look at consumer a lot. And what I see is not just, you know, growth driven by AI, but also growth in the consumer sector that is telling me that it's slowing, actually, and it's probably going to slow even more, given what personal income statistics are telling us. So, and personal income is related to wages. So there's some of like, you know, chicken and egg kind of thing as well. You could say it's a lagging indicator, but I would just caution of taking it just too directly.
How difficult is it to look at averages right now? Because the upper end of the income sphere has been supporting a lot of the consumer spending and seems to be supported not just by income gains, but also by the wealth effect that the stock market has performed so well. How do you parse out the average versus the majority of all spending, which is in that upper income cohort?
Well, you look at sensitivities of consumer confidence to movements in the markets, for example. So, like, what I'm referring to is think about the consumer who actually reacted very positively and very quickly in the latest consumer confidence report to the decline in oil prices. You know, travel plans, services spending actually increased right away. So that tells me consumer is very sensitive on average to movements in the market, which also means that if we get an exogenous shock, if we get something, you know, a risky event in the markets, that wealth effect could be a little bit vulnerable.
How volatile has spending been? Consumer confidence is clearly very volatile and linked to what's happening with the energy story, but how volatile has the spending been, the output been this year?
It's been strong recently, but if what contributed to that, we'll know soccer did, right? So 23% increase in spectator spots.
Right.
The highest increase since Atlanta, Olympic Games in '96, I believe, if you exclude September 11th effect. And I think it will reverse. So there will be some volatility. In the second half of the year, I expect that to weaken.
And that's alongside the calling of the labour market you're anticipating too.
Mm-hmm.
Do you think the door's going to open for the Fed officials to keep things on hold?
I think so. I think so. You know, in the recent speech, Governor Waller, which was obviously a very hawkish speech, you know, I was paying attention to his assessment of the labor market, and two things he said. One is that at the point on the beverage curve, that now that we're at an inflection point, you know, further declines in job openings could lead to increases in the unemployment rate. That is a difference from the 21-22 episode. And another thing is, again, going back to the wages argument, I think wage growth at 3.5% average hourly earnings is consistent with 2% inflation.
If that's the case, then why is an ambiguous Fed or potentially a Fed on hold a reason to sell the long end of the yield curve, right? I mean, if I were going to quote Mark Cabana, you can't fool the bond. Well, the bond is sending a message right now, and it actually is reflecting strong growth and a potential inflation risk.
It's because of the lack of, you know, explanation in the reaction function. And we are so grateful for those, to those Fed speakers who are willing to explain their reaction function.
Do you think that the long end of the yield curve going higher is more punitive to the economy or a bit more messy than using the front end of the yield curve to control?
Housing market, right? That is already in a very dire place. That is definitely hurting that part of the economy, at least. I would say that consumer affordability overall definitely is linked to the long end of the yield curve, and it's already in a very questionable spot.
Yelena, it's good to see you. Appreciate
My
it.
pleasure.
Yelena Schultz over there of the conference board on why we might be able to avoid a hike later this year.
Yeah, we could potentially get that deceleration. And this is the argument, and it's a legitimate argument. I think the issue is it wasn't expressed. And he was given, Fed Chair Warsh was given an opportunity to come out and say, this is the reason why we're on hold, is because we're not seeing these incredible pressures. We'll see what we get. But he didn't offer that. So there wasn't a sense of what exactly caused them to remain on hold, even with those 3 dissents.
For all the talk that the Fed hasn't articulated or communicated a reaction function, the Fed chair hasn't. Plenty on the committee, to Yelena's point, are willing to do completely the opposite. And still this morning, we've got evidence of that.
Yeah, I love the idea that Jim Bianco said, which is the dissents of the new forward guidance.
Right.
And
one way of looking at things.
And essentially, that's what we're seeing right now. They're a lot louder.
Payrolls on Friday. The estimate in our survey, 80K. The range, pretty wide. It's always wide. The high is 157. The low is 40K. Unemployment, the one to watch here. Can that drift down towards, say, 4%, get closer to that kind of threshold? Because I imagine that would start to get some officials on the committee nervous that maybe we are closer to that point where this labour market could be a source of inflation. Hasn't been a big source of inflation over the last year or so. Wages have held in, but haven't been fantastic. Maybe that changes if things continue at this rate.
And that's why people are saying there could potentially be quite a big reaction, not just to the overall jobs number, but also under the hood. When you take a look at wages, when you take a look at the JOLTS data today and the quits rate, that's going to matter.
JOLTS, ADP, claims, payrolls, tons of labour market data through the week. Let's get you an update on news elsewhere this morning. With your Bloomberg brief, Vonnie has more. Hey, Vonnie.
Hey, John, thank you. The Trump administration is drafting a ban on U.S. imports of data center components from China. Reuters reporting the proposed ban aims to prevent China firms from installing malware or stealing data critical from centers critical to the AI boom. President Donald Trump slamming ExxonMobil and Chevron for their soaring profits as oil prices surged during the war in Iran. Trump said the biggest U.S. oil companies are, quote, making too much money, and urging them to give some of that back to the public and cut retail gasoline prices. New York City Mayor Zoran Mamdani revamping the Mayor's Fund to advance New York City. Mamdani dismissing long-standing business and civic leaders who advise on the non-profit philanthropic fund. The administration will reveal the new board later this year. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. Up next, we'll set you up for the day and the week ahead, and we'll catch up with Eric Cantor of Moelis and company on the volatile year for markets ahead of midterm elections later this fall.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap, but it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We don't want to talk about oil, but it's there. We've had a policy shock because we've had to pricing going from a dovish Fed now to a hawkish Fed to now to an uncertain Fed that might be losing control of the long end of the yield curve. And yet we're still in an environment where you have earnings growth continuing to rise.
That was Cam Dawson of New Edge Wealth weighing in on this equity market, a tech-driven rally taking us to around 0.1% away from all-time highs on the S&P. Equity futures this morning up another third on the Nasdaq 100, up by 1 full percentage point. Talked tons about the jobs market in the last 10 minutes or so. This economy, the data in the last 24 hours, ISM manufacturing, quite fantastic just yesterday, helping drive yields higher. Check out 2s, 10s and 30s this morning. Yields on 10s still around 470. On 30s, yields still higher too by around 521. Up to 521 on 30s. We're down about a basis point on the session, but still up there, near the highs of the year.
Yeah, ultimately, how much is this an issue of Fed and inflation credibility, as we were hearing yesterday from Mark Cabana? How much is this just the incredible momentum, at least that we're seeing in the earnings? 86% of companies in the S&P 500 so far this earnings season have beaten expectations. That's the highest level in 5 years, with earnings growth of some 30%. I mean, you see these numbers. That is also why people point to some of the higher yields that we're seeing.
Backdrop's been pretty resilient so far in this economy. Let's get you some single names, some morning movers. Yahira Hatsmore. Hey, Yahira.
Hi, John. And that is being underscored by the three movers we have this morning, including Palantir, up more than 15% in the pre-market after a blockbuster quarter that saw its U.S. commercial sales soar 149%, prompting the company to lift its full-year outlook yet again. Another earnings story is Caterpillar. Those shares up nearly 12% in the pre-market after it delivered an enormous beat. Yes, AI data center demand is helping to fuel its power business, but it goes beyond that, with management saying that it has a growing backlog across all three of its major businesses. That includes power, construction, and mining, lining up perfectly with what we heard yesterday in that ISM report that came in stronger than expected. And Wayfair shares also soaring up 18% after the company delivered its strongest U.S. sales growth since 2021. The online retailer now has physical stores, and it says that along with its high-end brand are attracting new customers. So that could suggest people who are used to going to a Restoration Hardware, maybe trading down to Wayfair, or just leans more into this idea that the high-end consumer is very strong, while everyone else just has to be selective. John?
Wayfair up by close to 20%. Yahira, thank you, appreciate it. As we count you down to the cash open, about 43 minutes away, your trading diary looks like this. 10 a.m. Eastern time, JOLTS data, look out for that. After the close, more earnings, SpaceX and AMD, some Fed speak in the mix as well. On to tomorrow, ADP data, more Fed speak. Thursday, we'll get even more Fed speak and jobless claims. Then on Friday, once you know what the rest of the Fed thinks about everything, you'll get some data. The July payrolls report just around the corner.
I love it. The reaction function is all the Fed speak we're getting this week, so it actually has a greater clout than otherwise would have.
Complain last Wednesday and then complain when you get it from everywhere else,
I welcome
right?
it. I mean, honestly, we're getting the reaction function. It's just in dribs and drabs.
He didn't speak. He didn't say anything. They're talking too much. Right? Let's talk about this bond market. 2s this morning around 420, 10s this morning around 470, and 30s around 521. We got some new forecasts from JP Morgan in the last 24 hours, and they're looking for yields to go even higher. They're looking for 540 on 30s, 485 on 10s, and Barclays say there's room for long-term rates to move even higher. What does it mean for this competition for capital, this race to raise money? Joining us now, Moelis & Company Vice Chair and former House Majority Leader, Eric Cantor. Eric, good morning. It's good to see you.
Great to be here.
We've got a major competition for capital. Haven't seen anything like this for a long, long time. What do you see in your business?
Look, some people say that we are in the biggest investment cycle since the late 1800s. I mean, it is amazing to see sort of the pivot into this incredible digital infrastructure surge around data centers and really the standing up of new industries almost. I mean, this is, I think, where every conversation that we're having at Moelis is somehow downstream from this incredible cycle we're seeing. And, you know, listen, the markets are still constructive for the M&A deal environment. As you said just now, the resiliency is pretty stunning on the consumer end, although people will say it's a K-shaped consumer market. But for now, again, I think you've got Washington poised such that it wants to see this growth continue given everything else that's going on in the world.
We were speaking to Cisco, to Jitu Patel in the last week or so, and I've been somewhat concerned about where the technology might be heading for several different reasons. And he asked me if I was still skeptical or concerned, and I said I was becoming more concerned about where financial markets were going, the amount of debt that's being issued, the amount of debt that will be issued over the next year and perhaps even beyond. Have we entered the more creative stage on Wall Street that might be of concern?
Look, there's no question. Number one, there's a super cycle for the mega caps. I mean, there's no question, and we've seen this with the hyperscalers. We're seeing this with everyone, you know, on the board level, at the senior management level, who come into their jobs every day and say, hey, how are we going to position given this technological revolution that we're facing? And given where the constructive nature of the regulatory environment, I think that there is a willingness and a desire to want to transact. You know, on the private equity side, you know, there's a lot of dialogue that continues. And I know that we at Moelis are continuing in all kinds of discussions with our sponsor clients as well. And there's just availability of capital for good companies. You know, as we know, there's been a thematic in the sponsor world about trying to return more capital to LPs. And if there isn't a traditional exit strategy, there are all kinds of creative solutions to help these investors access capital so they can return to LPs and start a new fund. So it is pretty remarkable, the resiliency of what we're seeing.
How active do you expect deals to be in the second half? I mean, is it going to be accelerating, actually, even from the first half because of the smaller corporate action from LPs, from these exits that are getting creative?
Well, I just think in general, the markets are still looking fairly healthy. As you noted, our earnings season has been pretty stunning on the part of those that have reported, and I think that is indicative of where the mindset is, that we are continuing an upward trend just in the macro level of the market. So, you know, you have midterms looming out there, and people always like to say, will that or won't that impact transaction activity? And we'll have to see.
Do you think that good corporates are competing for capital with the U.S. government?
Look, I don't think there's any question. I mean, if you look at the spreads between, you know, the 10-year corporate investment grade instrument versus the 10-year, I think if historically it's 150 basis point spread, I think we're under 100 now, which could tell you one or two things. Either corporates are getting a lot more healthy or the government's getting a little less healthy. So I do think there is a race for capital. And as we said before, we're in the super cycle of investment. The preferred choice of financing currently has been this issuance of debt on the private side. And yet we have this increasing populism around the world that is forcing governments to have to take a look at how much and how they're going to figure out to finance the needs of their government and their population.
The increasing and growing majority of that all-in yield is the Treasury, and I think that tells you about where the concern might be. more recently.
Well, and that's really the ultimate question. Are we getting to that Liz Truss moment in the United States? Do you see us as getting closer to it?
I don't. I mean, I have a lot of faith in America, and, you know, look at...
Eric, I got tons of faith in America. I love this country. Do I have faith in your Washington? I have far less faith in your Washington.
Look, I've always said that this country, more so than anywhere else in the world, relies on the growth and the innovation in the private sector. And we've always found a way to try and rise to the occasion, and the private sector puts the pressure on Washington.
Right, there's the issue.
And
the private sector's done its job.
The private sector, but again...
Global economy, this economy, the US economy has grown tons. Fantastically well. I just want to finish the thought, it's important. It's done fantastically well, and we're still running deficits around 6%.
100%, and that's why I think that all this discussion around Kevin Warsh, and, you know, I happen to be a big fan of his, and I happen to think he's been unequivocal on his desire to beat inflation. He said where we are is not success. And the markets and the, let's just say, the observers are throwing a tantrum that he's not being more like Jay Powell, but he's not being like Alan Greenspan. Like, which way are we going to go? And I think there is a space in the middle for him to go. And he said he doesn't like the mission creep of the Federal Reserve. He wants to get back to basics. He wants to make sure that there is some discipline about the of inaction will become more than acting. And that's, I think, when it does work, and it will in this country.
Just based on what you're seeing in the companies that you do business with, do you think it's appropriate for the Fed to hike rates to try to restrain some of what we're seeing with respect to inflation?
No, again, I just think, you know, from a firm like ours at Moelis, you know, we are looking at where management teams, boards take a view of their own company, and they are receivers of what the policymakers are doing in Washington. And so I think that the Federal Reserve and others are looking at it from a much more macro level, and that is, where are we going to be long term? What does this mean? And when you're in an election year, what does this mean? Not just for the businesses that we advise, but it's really about the people who are waking up this morning and looking at those gas prices. And what does that mean? And how does that figure into inflation? You know, we got a real shortage of refined product. You know, and there's been a lot of controversy about the earnings of the super majors in the oil and gas sector. But again, it's really about the market. It is, people have been saying for months now that this conflict in the Middle East is going to result in a shortage of supply. I mean, we know that that was coming, and I think we're here now.
Eric, appreciate your time. Really important stuff in that conversation. Thank you, sir. Eric Cantor there of Moelis & Company. That point on the Treasury market and action down in Washington, D.C., this is why I worry it has to get slightly worse, or maybe much worse. You have to make the cost of inaction so great that they're willing to do something about it. It's got to be pretty bad before we get to that point.
Well, interest expense already is exceeding our Defense Department budget, so that should wake some people up.
Hopefully. Hopefully. Tomorrow we'll catch up with Monica DeCento of JP Morgan Private Bank, Ashok Bhatia of Neuberger, Andrew Hollenhorst of Citi, Alicia Levine of BNY. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We actually just expanded the set of customers that have access to Mythos. I think it's about an additional 150 organizations around the world in 15 different countries. And really our approach to Mythos has always been, there's a time component to it. So we released it initially to cyber defenders. So some nonprofit groups, some governments, some organizations that are critical infrastructure for protecting against potential cyber attacks. And just like in any kind of security vulnerability situation, you have to give the defenders a head start. The technology, AI models are going to keep advancing. If it's not us, one day releasing a Mythos level model, another AI company will. But it actually matters who you give access to first and how long they have to patch some of the vulnerabilities that Mythos was capable of revealing. And so we're taking this very cautious, very tiered approach, which I know in some ways is frustrating because people really want access to the model. But I think, again, as a company that's founded on these principles of being ethical, being responsible, we felt it was important to give access to the organizations that were capable of really helping us defend against some of these risks, and then slowly widening that circle to more and more critical infrastructure until eventually we feel it's safe to release it more widely.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Just inches away from all-time highs. 30 minutes until the start of your cash equity trade. I'm Danny Berger.
And I'm Michael McKee. Bloomberg Open Interest starts right now.
Coming up, another record in sight for the S&P 500 as a packed earnings slate tests the rally. Speaking of which, SpaceX steps into the earnings spotlight while otherworldly demand powers Palantir. And oil gives up its gains as hopes rise for a diplomatic breakthrough between the U.S. and Iran. Some of the stocks that we're watching this morning, it is about earnings and the AI trade. It's front and center after Palantir reported their earnings. Just such strong results from them. It's their enterprise sales that really picked up and showed, yes, AI spending is translating into meaningful revenue. Meanwhile, today, we're going to hear from SpaceX that will deliver its first earnings report. Shares, though, are down 15% since its IPO. Wall Street is going to start to shift its focus from growth to margins and cash flow. Let's discuss that with Bloomberg Tech host Ed Ludlow. And Ed, this is a company that's had a fall for grace since it IPO'd. What are the stakes today?
On SpaceX, you know, everyone's seeing this as the event of the summer. There is some doubt about the set of consensus estimates for the numbers that have been put together. But essentially, you know, the story's highly analogous with what we've seen in the tech earnings season so far, that people will look at what SpaceX plans to spend from a capital expenditure standpoint. The expectation is they'll say it will be north of $45 billion for the year. And in this kind of interim period where the launch business is still important, Starlink is the cash cow, and the AI business is very distant, they'll start to look at what the sort of cash burn is on that AI business. What I mean by that is, since SpaceX acquired xAI and has merged and integrated it in as SpaceX AI, you know, what kind of a financial burden is that on the balance sheet? That's probably where there'll be a lot of focus in the short term.
What about tomorrow, or Thursday, rather? I guess I'm getting ahead of myself here. When the stock market sort of, when the stock is unlocked.
Yeah, I mean, the lockup period's really important. So August 6th, 911 million shares come online. Compare that to the post-November earnings period, more than 1 billion shares come online. And I think the streets had a really hard time because it's an unusual lockup period. A lockup period, a restriction where insiders, those high up the cap table prior to it going public, can't sell shares. The stock's under pressure, right? $1 trillion of value has been wiped from the post-IPO peak. But remember the commentary in the days around the IPO, all of these great venture capital firms and mutual funds saying, yeah, we won't sell our shares, we'll hold on to them forever, or redistribute the shares to the LPs and they'll hold on to them forever. So it is difficult to say for certain, Mike, what will happen.
Well, this isn't Polymarket, but go ahead and give me a bet here on which moves the stock more, the earnings report or the lockup.
For me, and I wrote about this in Tech in Depth on Monday, I think it's whether the question on a Tesla merger gets posed somehow. Because if you remember what happened in Tesla's last earnings, a very brave sell-side analyst asked Elon Musk the question, are you going to merge Tesla with SpaceX? Maybe that happens again tonight. There's also a mechanism for retail shareholders to ask questions to SpaceX just as there is with Tesla. But the lockup period going forward, it is going to be a big factor. And again, you know, the reason that there's such doubt on the consensus numbers for tonight is because everything that SpaceX presented around the IPO is based many years into the future, right? And it's hard to model for that.
I mean, same with Tesla, right? Same problem with them both looking at things that will only pay off in the future. Ed, thank you so much. Looking forward to Bloomberg Tech, 11 a.m. That's Bloomberg Tech host Ed Ludlow. Elsewhere in earnings, pharma giants Merck and Pfizer both reporting earnings before the bell. Newer drugs help lift Merck's forecast, while strong demand for older drugs prompted Pfizer to raise its guidance. Joining us now is Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. Sam, is it a problem for Pfizer? What really is winning out for them is their older pipeline, not newer things like we saw from Merck?
Yeah, sure. So, Danny, if you think about it, these are two pretty similar companies in terms of their trajectory of revenues. They're both facing patent expiries. We can discuss the nuances of is it easier for generics to compete, which of course it is, with a small molecule like Eliquis for Pfizer or like Ibrance for Pfizer versus a biologic for Keytruda for Merck. We can discuss all that. Our patent team have got different views on this, but at the end of the day, once we've got in the helicopter and gone up and had a look down, they look very similar. Patent expiry is coming, so therefore what's important is how you're going to manage that with your pipeline. And clearly, Merck, given its share price performance, not just today, look at the past few weeks and few months, etc., have managed to convince people that they have what it takes to deal with this patent pressure, which is huge. Look at the size of Keytruda, over $8 billion of sales this quarter, versus what Pfizer has been doing.
Well, what is Pfizer saying about how they're going to deal with that problem?
Well, so they're doing what, I mean, obviously they've done some acquisitions, so has Merck. One of the biggest one they did recently, and that's Pfizer, is where they got this very powerful drug, Padcev, for a variety of diseases, but specifically very successful in bladder cancer in the acquisition of Seattle Genetics, or Seagen. And that was a pretty big acquisition. The thing is that you need more than just one drug added to the pipeline to do that. And what Pfizer is doing is the normal reaction to this upcoming pressure, and that's cost cutting. They've added another $2.5 billion to the number they had before, taking us up to $9.7 billion of cost savings. And that's a big number, right? By 2029, 2030 timeframe.
But at the same time, they are losing their CFO to Nike, David Denton. He has been viewed as a calming force, a financial steward. Sam, is it a blow to Pfizer to lose Denton?
It's always a blow when you lose somebody who's been at the helm of a company that's gone through very difficult times and very great times. Imagine these guys were doing 50, 70, 80 billion dollars of revenue from COVID vaccine for a while, managing that cash flow, et cetera, and then manufacturing. So, and going through this cost saving, of course, they have a new CFO and that would be something that is, to a degree, textbook for a pharma company that's dealing with a major patent expiry.
Sam, really great to get your thoughts this morning. That's Bloomberg Intelligence's Sam Fazeli. Now, wrapping up this morning's earnings, McDonald's named Sky Anderson as president of its U.S. business after posting its slowest growth in over a year. Joining us now is Bloomberg consumer reporter Red Brown. Red, are these two things related? Is this a McDonald's that needs to do something to revamp its U.S. business?
Yeah, I mean, I guess it's tough not to say they're related, just given the timing of the results as they were. You know, the weakest in over a year for the U.S. business, which is so critical to McDonald's, and then the timing with the replacement. So, you know, I don't have any kind of inside knowledge into what's led to that decision, but it's tough not to draw the line between these two events. What's interesting to me in the U.S. and maybe what's kind of going on with this change is, you know, we saw that the sales growth that they did have, which was very low, was driven by higher ticket price rather than foot traffic, where a lot of the strategy has been to drive traffic, right? The lower menu price items were to get people in the stores, and now we're seeing that sort of shift. So I'm wondering too if kind of what's going on with that strategy, if that's sort of maybe underlying maybe a rethink of what's going on in the U.S.
Well, of course, McDonald's is the poster child for the K-shaped economy, and it does suggest then that they're seeing problems with the lower income customers, and yet at the same time, price pressures for their ingredients.
Yeah, absolutely, and it's interesting. It just came across the wire. The company saying that their under $3 menu is underwhelming their expectations. So that is interesting that lower kind of prong of the K-shaped economy is maybe where some of that weakness is starting to develop. It's also kind of interesting that they've been pushing into sort of higher quality menu items as well. So maybe an attempt to sort of address the upper end of the economy as well. Can we make this more of a family restaurant again? They're remodeling some stores, trying to get this into a regular sort of occasion for people to come spend time there. So they obviously are still doing things, probably picking up a lot of the things that we're talking about as well and seeing what they can do.
Interesting that whole idea of lowering your prices isn't necessarily the thing that's working for them. Red, thank you so much for joining. That's Bloomberg's Red Brown. Now, let's get a check on markets this morning because we are looking at all-time highs, at least in the future session. We need to get to 79.06. 76.09 rather, my dyslexia this morning, in order for the S&P to get at another all-time high. Futures already there, we're up 1/3%. The NASDAQ outperforms this morning as the Mag 7 posts its largest daily gain yesterday since the end of March. 10-year yields come down, aided by the price of Brent crude. That's down 2.6%. We'll have your Iran update with Jeff Mason in just a few moments. First, though, let's get a look at your movers. And what's moving the market this morning with that is Nora Melinda. Hey, Nora.
Hey, Danny. 3 stocks in focus this morning. Looking at shares of Caterpillar, jumping double digits in the pre-market trade. Now, that's after the company beat on profit and revenue. But here's what's standing out here. We are seeing demand tied to AI data centers, helping make up for weaker spending elsewhere. So yet another sign that the AI build-out is still going strong. Now from here over to streaming, I'm looking at shares of Spotify, under pressure, down 6% in the pre-market. This is after its outlook disappointed investors. The company now has more than 300 million paying subscribers. I am one of them. But Wall Street wants to see its AI features and its ticketing business actually translate into more growth. And finally, over to Nike, we're seeing shares sinking, down about 3.4%. This is after a downgrade from JP Morgan. JP Morgan saying that Nike's Win Now strategy may help the brand eventually, but it's going to come at a cost in the meantime. Those are your morning movers. Danny?
Nora, thank you very much. Nike also posting a tough stretch in their latest earnings. Coming up on the show, the prospect of a deal between the U.S. and Iran appears to be gaining traction. We'll get you the latest. That's after this break.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse, that doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's get you some high-interest stories. A look at what's making headlines around the world. Anthropic is locking in more AI horsepower. The Claude maker signed a $10 billion six-year computing deal with NVIDIA-backed startup Volta. It'll give them capacity at a Norway data center that's packed with NVIDIA's latest chips. The move underscores the soaring demand and the soaring costs of the AI race. The U.S. joined Japan in buying yen for the first time in decades. Analysts say that Washington's support may come with strings attached, including faster Japanese investment in America, trade concessions, higher defense spending, and pressure on the Bank of Japan to raise rates. And the U.S. and Iran may be nearing a deal to reopen the Strait of Hormuz. Treasury Secretary Scott Bessent says that an agreement could come soon, while Qatar confirms a draft proposal is circulating. President Trump is calling it Iran's last chance for a deal and says an agreement could come as soon as today.
This is the last chance for them to sign a good document. I think we're going to maybe get something, but I want to give them every last chance before decapitation. It's very tough to do what we have planned, still planned. We'll see what happens.
Let's get the latest from Bloomberg White House correspondent Jeff Mason. Feel like we've heard that before, maybe not the decapitation line, but this is your last chance line. The negotiations that are going on with the Qataris, or what's been drafted, just how short-term would this agreement be versus something that actually provides an off-ramp to peace?
Good question. I mean, number one, it looks like, and I think it's Oman that's maybe both Oman and Qatar are involved, but certainly Oman was one of the interlocutors. And I think it was the foreign minister or a spokesperson yesterday who said they're working on a short-term deal just to get back towards opening of the Strait of Hormuz and just bringing the two parties back into a mediation scenario. And there are questions about that because President Trump is saying that they're talking. Iran has said that they're not talking. The Omanis are saying that they're sort of in the middle.
Is there any chance that this president will agree to let Iran and or Oman charge tankers for going through the strait?
Well, he has said he won't, and yet that's exactly what those two countries apparently are working on, so that it's diametrically opposed to what President Trump has said. I mean, he even said yesterday, if anyone's going to charge a fee, it's going to be the United States. There's no real mechanism for the United States to do that unless the U.S. leaves forces in the region. And if he did that, then that would indicate a much, much longer conflict than I think the president had in mind.
What is the military position that the U.S. finds itself in right now? Because there had been reports of exhausting basically all munitions. How important is that fact in the background as all these negotiations are ongoing?
It's absolutely one of the factors. I mean, the president dismissed reports that was a big deal, but he, in the same breath, said, I wish we had more. And that's, again, for the President Trump, I've covered President Trump a long time. And sometimes he'll say the quiet part out loud, which is his way of confirming something, even if he doesn't think it's a narrative that's in his interest. And I think in that case, that was the example of how he did that.
Another issue that's coming up at the White House today is there's a meeting with AI executives, maybe not CEO level, but below that, talking about China chips. What's the what are they trying to accomplish?
So context here, this meeting is happening just a few weeks really now, or we're a month and a half or so before President Xi of China is coming to the White House, and that is absolutely a big issue between those two countries, which I don't need to tell you or our audience. They will be talking about security. The president had an executive order about AI not too long ago, which involved some voluntary agreements with regard to security, and that's an issue that they'll be discussing.
It does feel like this is, first of all, the CEOs of some of these companies can't agree whether they want open source, they want China involvement, they don't. But the direction that this White House is moving in, there was a Reuters report that they were looking at banning certain optic components in data centers that are made in China. Where does it seem like this White House is bouncing? Does it seem like some of their hawkishness on China trade will translate into them looking at banning various Chinese models or components?
It's hard to say. I mean, the president wants a really good relationship with President Xi, but he also wants to win in the AI battle, just like he wants to win in Iran and he wants to win in other areas. That's kind of his guiding light as a politician and as a businessman. So it's there are competing interests for him there as they make those decisions.
Where does he go from here in terms of issues? He's got the Iran war continuing to go on, no resolution on the AI stuff. That's going to go on.
Midterm primaries ongoing.
Well, the midterm's coming up, and that's kind of where I'm going. The Senate is going to leave town.
Yep.
With maybe a CR that the House will or will not approve. So when everybody comes back at the end of August, what are they going to be talking about? What's the president's going to do, if anything, to try to help Republicans through the midterm?
Yeah, well, he is traveling today, and tomorrow he's going to California and to Nevada, and he'll be talking about the economy and doing some fundraising. So I think that's a sign that he's moving, at least slowly, into midterm mode, keeping in mind that he was supposed to, initially, according to the White House, spend the entire spring touring the country and talking about the economy. That got jettisoned, those plans, because of the Iran war, but it's still on the agenda, certainly for the fall, because of those critical midterms. So I expect that we'll be hearing more from him about the economy, making that case, and yet the Iran war hangs over all of it, certainly because of the impact on oil prices and just the downward pressure that's putting on his approval ratings, which really matter when voters go to the polls.
Jeff, thank you so much for joining us again. Great to have you in studio. That's Bloomberg's Jeff Mason. Coming up on the show, Nimra Kang joins us to explain why the AI conversation is shifting from CapEx to monetization. You're watching Bloomberg Open Interest.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The stock market is hovering near record highs as earnings and AI optimism keep investors buying despite lingering macro uncertainty. Now investors are looking for proof that fundamentals can continue to justify those gains. Let's bring in North Star Asset Management Chief Investment Officer Nimrit Kang. And Nimrit, you described this as a rotation, not a rollover, but I wonder, a rotation into what? Because as we hit all-time highs, or we look like we're about to today, it's Mag 7 that yet again is picking up the pieces and rallying.
Yeah, but we are seeing the equal weight index go all-time highs, you know? And the other thing is this earnings season, almost 26% growth year on year in earnings. You separate out the non-AI companies, non-AI companies are growing their earnings by 17%. That's an acceleration from 14% in the last quarter. So this is becoming a broad-based theme in the market, Danny.
Well, broad-based is interesting because we saw Caterpillar today, huge results. And they're giving the credit to AI power generation sales. So how much broader can this get?
Well, for this, for the healthy market, it has to get broad-based. That's been the premise all along. A narrow group of companies can't continue to lead this market higher because, the rest of the corporate America that's spending on AI has to start to see those benefits come through in revenue growth, in margins. And we are seeing that. One of the things that we have seen, we monitor a lot of the industrial companies that sit outside the AI trade. Look at the rail companies. You are seeing a big rebound in growth year over year. So all of those things point to where there's a trickle-down effect happening from just AI-centered expenditures into broad-based in other industries and sectors as well.
I'm so happy that Mike brought up Caterpillar, Nimrit, and your comments there, because it does feel indicative of a trend that we've been seeing, and you're pointing it out, more companies getting this trickle down from AI. I wonder, though, if there's just a risk within that. Let's take Caterpillar as an example. It was down 23% last month, its worst since January of 2009, because it was caught up in the AI sell-off trade. I wonder if there's a risk that it's a double-sided coin, that yes, it does well because of AI, but when AI sells off, all of a sudden way more things are correlated than you would usually think.
Absolutely. And we saw that in July. You were easily able to spot all the companies that had gone up because of the AI trade because they wrote it down on the other side too. And that's really where you figure out July was a great data point in helping us understand the benefits of diversification. It's almost like a seesaw we see happening in the market all the time. The companies that are very levered to AI, when they go up, they all go up. From Caterpillar to direct semiconductors to construction companies, all of them. And the other side is the companies that are not a direct derivative of the AI play. In July, we saw a bit of a rebound, capital flowing into some of those, what we would call the companies that have been left out of being directly supported by the AI build-out.
Very quickly, before we have to take a break here, can you put a timetable on how long this can last in terms of when stuff is built, then all these ancillary companies aren't going to have the incoming revenue?
Yeah, that's hard. I mean, if you think about it, started in 2022. It's now almost 4 years later that we're starting to see it get broad-based into the economy. That's a tough one, but we are just continuing to follow the earnings, and so far the hyperscalers are willing to invest.
Hey, Nimrit, stay with us. We have to pay our own bills and get through. The opening bell, Nimrit Kang is sticking around. Let's get a quick check on markets ahead of that opening bell. And we are all set for a record high. The S&P future session is already there. The NASDAQ outperforms, up 1.2%, aided by Palantir's strong earnings and by 10-year yields, which are rallying. Yields come down 3.5 basis points. That, in turn, is because of oil. We have seen this correlation come back over the past week. Lower oil means higher markets. Brent crude currently at $80 a barrel after earlier this morning trading as high as 86. On the other side of this break, it's your opening bell.
is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the king of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Seconds away from your opening bell, you're watching Bloomberg Open Interest. I'm Danny Berger alongside Mike McKee. Matt Miller still off on paternity leave. The S&P futures session reaches an all-time high. We closed just 0.1% away from an all-time high, so we only need a slight gain for the cash session to get there. The NASDAQ, that outperforms after Mag 7 posting its best day since March of this year. Dow Jones, that, if you care, also closed at a record high yesterday for your friends who still watch the Dow Jones. I'm ringing the opening bells. We have ADI. We have Rob Arness, the CEO, who joined our program just a few weeks ago. They've spun off from Residio. They're now their own independent company listed on the New York Stock Exchange. They do a lot of security, various devices and electronics. Freenome ringing the bell at the NASDAQ. They are an early cancer detection company. They are down this year by about 5% over the past 5 years, only up 10%. So they're happy, and they should be, but their stock has been underperforming. So that's a bummer for them. Outperformance this morning, though, from earnings. Palantir, look at these shares up 17%. It's something we keep seeing. These mega cap stocks report good earnings, and they swing like meme stocks. For Palantir, it was just a stellar set of results. That included strong enterprise sales that show AI spending is translating into meaningful revenue. We're going to want to see that from SpaceX, too. They're going to be delivering their first earnings report since they IPO'd. Shares are down 15% from that. The question will be not just growth, but what their margins and what their cash flow look like. Back with us is North Star Chief Investment Officer Nimrit Kang. And Nimrit, a lot of the SpaceX question is as much about their earnings as it is supply. We're going to get a lockup where investors are able to sell more shares. How are you thinking about equity market supply with the various IPOs and events like SpaceX?
SpaceX is a unique asset, right? I mean, it's a tale of three different businesses. There's space business, there's Starlink business, and of course the AI, which is where the big question mark is for the market and for us. And then, of course, you're hitting a wall of these lockup expirations that are going to happen over the whole year. So SpaceX will be interesting. I think it's too early. It's going to take several quarters to get a sense of where this business is headed and what's Musk's vision for the eventual final business. And of course, you have the technicals to navigate. So for us, we rather wait through the lockup expirations before thinking about a position there.
I just want to mention that I asked you before the break about how long some of this can go on in terms of the ancillary countries about companies in AI. Caterpillar's saying their backlog for diesel power equipment extends to 2028. So I guess we've got a couple of years to go there. But back to SpaceX for a second. Are they going to trade like an AI company? Or are they going to trade like a space company? Really, the revenue comes from Starlink, right?
Right. it's true the revenue comes from Starlink. That's really the key marquee asset, which is very, very attractive given their positioning. But how the company is going to spend their cash flows and where they're going to need majority of the funds, that's the real question, right? XAI and what's the AI strategy? That's the real $100 million question for SpaceX, because that's driving how the stock's going to trade.
Nimrit, one of the tail risks that you flagged is what this bond market is doing today. Yields are backing off as the price of oil starts to fall, but the 10-year yield at one point was at 4.73, currently at 4.63. Concern about inflation, what the Fed is going to do. It hasn't impacted stocks for now, maybe saved by earnings season, but as we work our way through earnings season, are you concerned that higher yields could eat away into some of the gains of this equity market?
Absolutely. Higher yields along with the slowing growth momentum is that toxic combination that we're on watch for. So far, as you said, earnings have kind of bailed out any kind of pullback and rise in the yields that we have seen, but that's something that we would be watching for. Every big bull market has been brought down by the rise in yields. But I think, Danny, it's also important to remember that this bond market and what we're seeing with the interest rates, it's this constant yo-yo situation we see based on the data points that are coming in. Just coming into this year, that was just 6 months ago. It feels like forever, but that's just, 7 months ago. We were looking for 2026 December Fed funds rate around 3%. So almost a cut, a cutting cycle from where we were. And now we're looking at 4%, so a hiking cycle. So things are changing very quickly as data is coming in and the bond market's evolving and responding to that as well. We also have new leadership at the Fed, and that's going to take a little bit of time. So we don't think it's actually, a flashing red sign at this moment, but it's something that we're definitely keeping our eyes out for.
It's an interesting point that you make, because this market's supposed to be a forward discounting operation, looking at revenues down the road, and yet every day it seems like we're up or down based on what the latest headline is. Have we decoupled from that long run and people are just sort of trying to ride this out right now?
The volatility has been really stupendous at this point. The single stock volatility is at all-time highs, magnified by leverage that we see, right? And leverage both on, and it works both on the upside and the downside. In some ways, we've seen pretty high retail participation, all-time highs on retail participation. And that's great, because that does lead to democratization of investing, makes investing accessible for everyone, and it does lead to the wealth effect and the consumer spending that we're seeing. But the other side of that is we are seeing this heightened level of volatility that we didn't used to see 10 years ago, for example.
Nimrit, do you think some of the leverage has washed out of the system from situational awareness, that selling event that gets sold to Ken Griffin's Citadel, and data that suggests that some of the ETFs have turned to selling the more leveraged, risky ones that retail investors have been participating in?
It's hard to know. It's hard to know. The reason being, because if you come into the first 6 months of the year, semiconductor index up 76%. I mean, the fundamentals are great, but they weren't getting better on the every daily, And on the downside, we've seen a drawdown. And yes, it's helped remove some of the leverage, or at least send warning signs to people who have a lot of leverage. But we think there's leverage in so many different places that it's going to be hard to just wash out in a single drawdown like that.
Nimrit, that's all we have time for, but great to get your thoughts this morning. Thank you for joining us. That's North Star's Nimrit Kang. Let's get a check on your equity market right now, which is trading at an all-time high. If we can hang above here, just needed to get to 76.09. You can see that we are well above that. By the way, Bespoke points out that yesterday was the first time that we gained more than 1% for the first trading day of the month after this really long stretch of not being able to gain more than 1%. In fact, it was the longest stretch of seeing not more than 1% gains since 1996. Before this was a market that couldn't stop hitting all-time highs. Now we're only just getting back there. It's tech that's helping us this morning. Look at that chunky gain from Palantir, up 20%. That adds about 7 points to the S&P. NVIDIA's having a good day, adding 12 points to the S&P. It's up for a total of 42 points at this moment. Caterpillar, Mike was talking about this, really strong earnings from them. Some of the banks doing well too. On the downside, you have Amazon, Exxon. There's going to be a lot of energy names in here just because the price of oil is moving lower. Apple Apple slightly lower after trading at a new high watermark for its market cap. Some of the healthcare names not doing well too, so maybe that's more of a risk on trade. After we got some earnings from both Pfizer and Merck. Looking at the sector breakdown, again, it's energy that's going to be at the bottom, if not near the bottom. We'll see that in just a moment. There you go. It is at the bottom, down nearly 3%. Again, it's just because the price of oil is falling with optimism on an off-ramp to peace, or at least the Strait of Hormuz reopening. Real estate, utilities, staples. So again, it's the more safety stocks if you look at all the ones that are selling today. So it's kind of a very classic risk-on kind of day with infotech, materials, industrials, all of those doing well. Caterpillar is going to be sitting somewhere up in there for a gain of about 0.5% for an all-time high on a closing basis for your S&P. Coming up on the show, we're going to dive back into SpaceX earnings. Will it be enough to turn around the stock ahead of a flood of new share issues this week? We're going to discuss with Mandeep Singh. It's coming up next.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Let's check in with the sell side and get some top calls. Here with that is Nora Melinda. Hey, Nora.
Hey, Danny. First up, looking at shares of Nike down after being cut to sell at JP Morgan. The firm's message is pretty simple. Nike's comeback is taking longer than expected, and it's going to weigh on sales and profits for a while. You're seeing shares of Nike down about 2.7%. Now over to retail. Walmart getting a downgraded Oppenheimer. The firm says the stock has had a great run, and there's just not as much upside from here. Analysts also point to some pressure in Walmart's pharmacy business. Shares of Walmart down about 1.7% this morning. And finally, we've been talking about it all morning. Palantir soaring for double digits, up about 21% and heading for its best day in more than a year. That's after another round of bullish calls from Wall Street following its earnings report. Analysts are saying that demand for its AI software keeps getting stronger, and they don't think the competition is catching up anytime soon. Those are your top calls. Danny?
Nora, thank you very much. We'll catch up with you in the next hour. Let's get more into the AI earnings. Bloomberg Intelligence Head of Global Tech Research, Mandeep Singh, joins us. We can talk about what we're expecting from SpaceX in a moment, but just picking up of where Nora ended on Palantir. I mean, revenue, U.S. commercial revenue climbing nearly 150%. It is so strong. Does it show that CEO Alex Karp has kind of convinced companies that should be our foray into AI, like set aside the large language models, use our products, we're more safe? Is that message working for them?
I think so. When it comes to the government contracts and, that particular customer base around defense use cases, they clearly have nailed it. This was their 13th consecutive quarter of accelerating top-line growth, so very impressive. But when a company is that sort of niche-y, you would expect growth rates to normalize. We haven't seen that with Palantir just because they have executed so well. But at the end of the day, it's a very high ASP product. They've got 1,000 customers with which now they're doing close to $8 billion in revenue. And that, to me, is the big risk, is once, your customers are maxed out, and they talk about open source, open weight models. If customers are using open weight models, why would they pay up so much for your product? And that's where the numbers look great right now, but my fear is they will normalize, and it's just a matter of when.
Well, are they right that they have no real competition right now?
So they were one of the earliest ones to come up with this FDE concept, forward deployed engineers, and really customize the government work to get these products to execute to what the government contracts were looking for. And now they have expanded to every adjacent industry where the contracts are similar to what the governments do. But when it comes to LLMs, they didn't have any LLM play right from the get-go. They actually transitioned to, and they don't even train their own LLMs. They use OpenWeight or OpenAI and Anthropic. So that's where I feel like they're not a true LLM play, but obviously they have pivoted well and they are able to execute on that. And for me, the real question is, can they expand the customer base? And that they didn't answer last night.
So that's Palantir. We'll get SpaceX today. For this company, I just wonder if we're anything close to true price discovery. It's something we all talked about yesterday too, the fact you're going to have this lockup too. But does their earnings release, does that get us closer to understanding what this company should actually be trading at?
I mean, the multiples, when they are so rich, it IPO'd at 80 times, it still is probably the most expensive stock when you think about the overall tech complex. Yes, I expect them to post good news. The AI numbers would look good with the compute deals. But in the end, they have to lay out the 2-3 year out vision. And that's where the CapEx numbers are very important. More than the top line growth, I'm looking at what they're going to do in terms of their CapEx, because we know, all the hyperscalers are close to $200 billion for next year, probably higher. What is SpaceX going to do? Because right now the consensus is more around $13 billion for AI. Are they going to raise that significantly to get closer to $100 billion? And that would be a confident sign that, okay, they actually believe the compute deals will translate into higher revenue and hopefully better margins. And that could be positive for this stock.
Well, do we get a real view yet on what this company is? You're talking about the capital spend on the AI side.
Yeah.
But they're a rocket company, they're a satellite company, they're a car company. How long till we figure out where it's all going to come together?
Yeah, so you're right. The sum of the parts framework is probably the best way to look at this company. And this, the satellite business, the Starlink business should do very well. That's the cash cow. The space business, to me, it's too far out. Like, yes, we can talk about space data centers, but there's nothing imminent where I can model any revenues anytime soon. So if they want to show accelerating top-line growth for the next few quarters, then AI is your driver. And within AI, it's really the compute piece of it. Their own large language model, Grok model, isn't what is going to drive that AI revenue growth. It has to be that compute line. And we saw all the hyperscalers did really well this quarter, Microsoft, AWS. So to me, they are similar in that regard.
how much of it is something that other companies might emulate, like a Meta, wanting to basically fund all the spending they're doing through selling compute? Obviously, they don't have like a Starlink and a rocket business, but is there something to that business model? Should investors reward it today that perhaps, again, someone like a Meta could emulate?
I think so. I mean, Meta probably is headed that route where we would, I anticipate some announcement from them over the course of this year where they would get into compute rental business, because right now, every company needs more compute, especially the large language model providers like OpenAI and Anthropic. They're after a live compute, and that's what I think SpaceX did well during the time of IPO, so I expect
Is there a trade-off, though, that you rent out your own compute? That means you're using less, so Grok isn't advancing maybe as much as the others. Is that a calculus they have to make?
I think there is a tacit acknowledgement already that our model is not being used. We hope, same for Meta as well. Meta and Grok, I think their models are not being used. They hope to continue to improve it, but for now they want to generate revenue out of all that compute that's sitting idle.
All right, Mandeep, thank you so much for joining us. I'm sure we'll catch up tomorrow after these earnings. Mandeep Singh from Bloomberg Intelligence. Coming up, another side of this trade, the data center boom. It's been fueling profit growth at Caterpillar. We'll break down their earnings next as the shares rally 9% in this morning's trade.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
You're watching Bloomberg Open Interest, 20 minutes into your trading day, and we trade at all-time highs, and we'll end there if we can close at this level. We just need to get above 4609, well above there on the S&P. NASDAQ, that rallies 2%. The Dow Jones itself already trading at a record, another 1% if you care at all. Brent crude down 4.6%, so that's aiding this overall session as yields come in. A dollar little change. Maybe the yen is more interesting this morning. That was getting weaker as Treasury Secretary Scott Bessent was speaking. NVIDIA, a good day for them. Palantir, an even better day after their earnings. McDonald's now flipping into gains after their U.S. sales disappointed. Spotify also reported earnings. Those shares just marginally down after that. And you can see their Caterpillar up 9.4% after reporting earnings that maybe reestablished that, yes, the AI infrastructure trade is alive and well. For more, we're joined by Bloomberg's Matthew Griffin on Caterpillar. I feel like it used to be this kind of like joking thing people would say at the beginning when Caterpillar was starting to enter sort of the AI power business, saying, oh, great, I guess Caterpillar is an AI company now. After this earnings season, can we definitively say, yes, Caterpillar is an AI company now?
Well, this will help clarify that narrative in investors' minds for sure. There had actually been some questions, of course, across Wall Street about the AI rally, AI infrastructure spending. Now you have this company reporting a record backlog, $72 billion at the end of the second quarter. They said on the earnings call they're getting orders for power equipment to power data centers out to 2030. I've been talking to investors this morning. They said that is calming a lot of the fear on Wall Street. Of course, they're also cautioning that a lot of this is driven by the macro, so nothing is certain about the AI trade. But right now, I mean, if you just look at this stock, it is clawing back a lot of those recent declines.
I was looking through the earnings report. It's not just the power generation. Construction's up big, and there seems to be an AI thread that runs through most of their divisions.
Yes, so the construction business sales there grew 35% year over year. That business, unlike power, had been in a bit of a downturn. Investors were waiting for it to pick up. And data centers are part of that story. You need construction equipment to build a data center. You also use a lot of copper. That flows to their mining equipment business. And it also helps, of course, it's also linked to the AI boom, so maybe some risk there. But the stronger that unit is, the stronger the ground this stock is on, because the more drivers it has if ever demand does falter for the power equipment.
I was just thinking, you know, heading into Caterpillar, we got ISMs yesterday, and some of the commentary, specifically around materials, has been really stark. Someone said no normalcy in sight in the world of metals. It makes me yearn for the coronavirus pandemic chaos, which was more manageable than whatever this is that we are in now. And I just wonder, some of that angst over metals and materials, how that factors into Caterpillar's business right now.
It is helping them directly. They actually just said on the call that demand for metals like copper is helping the mining equipment business. Sales there were up 20% in the quarter. That one investors have kind of seen as the laggard, the last one to pick up. And the tighter the metal market remains, yes, a big problem for other companies, but it's a direct benefit to Caterpillar.
Department of Footnotes. Some of the profit update came from tariff refunds, which is obviously something that is not going to continue. And now we're going to have new tariffs. How do they portray that within their outlook?
Yes, so Caterpillar tweaked its outlook for tariff costs a little bit down. They saw 2.2 to 2.4 billion in expenses this year. Now 2.2 billion. That is, of course, a big number. Some of that being refunded now, 392 million in the most recent quarter. So again, big number, but investors think the company is managing it very well, and they're starting to lap some of the tariff headwinds. So they're the same as they were a year ago, and that helps these growth numbers look good now that the company's kind of figured that out.
Anything to be upset with here? It sounds pretty good and straightforward across the board.
The tariff thing was called out as sort of a low quality element of the beat, but it didn't contribute, you know, everything to that beat. That's less than $1 of benefit, and they beat on adjusted earnings per share by $2 full. Another thing an analyst said is backlog was really strong. Some investors might have had even higher expectations, but from the way the stock is reacting, it seems like most of them were met.
Up 7.5% there, or about, trading at its biggest gain since April. Matthew, thank you so much for joining. Bloomberg's Matthew Griffin. Coming up in hour 2 of Open Interest, Indrani Day of FTSE Russell on her macro outlook, plus Goldman's chief credit strategist Amanda Lynham, and we're going to talk to an early SpaceX executive, Jim Cantrell, ahead of SpaceX earnings, and Bob Sloan, S3 Partners, talks tech shorts. All of that to come. This is Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
In the Senate Judiciary Committee, back and forth over the confirmation of Todd Blanche to be the next Attorney General. The vote upheld after outgoing GOP Senators Tom Tillis and John Cornyn demanded that Blanche put in writing that the president's $1.8 billion anti-weaponization fund was being rescinded. This is Republican Committee Chair Chuck Grassley.
It's just common sense what Tillis and Cornyn are asking out of the executive branch of government. And I don't think it should have taken as long as it did to get it resolved.
And this is Democratic Ranking Member Dick Durbin.
The political escapade of the last week has made it clearer than ever that Todd Blanche has no business serving as our nation's chief law enforcement officer.
The president's fund, which Blanche helped create, would have paid those who feel they've been wronged by the government, including those who stormed the Capitol on January 6th. President Trump says this is a last chance for Iran to reach a peace deal. Oil prices falling amid rumors that an agreement may be reached soon. Sources say the president is thinking about firing U.S. Attorney Jeanine Pirro over the reflecting pool debacle. ABC's Mary Bruce is at the White House.
Pirro saying had the Interior Department been forthcoming with the information clearly in its possession, the government would not have sought a grand jury indictment. The filing directly contradicting Trump's claims of vandalism. Pirro claiming her prosecutors were misled by the Interior Department, which awarded no-bid contracts worth nearly $15 million, despite having virtually no federal experience doing federal contracts. All four prosecutions claiming vandalism have now been dropped.
Michigan will offer the country its clearest gauge yet on the direction of the Democratic Party as primary voters there choose between a progressive and a moderate today. Man from Spokane, Washington has been charged with arson in the devastating fires burning through the region. This hour, the Dow is up 573 points. You're listening to ABC News. deaths, both in Michigan, now reported connected to the cyclosporidium outbreak.
Officials say both had significant underlying health conditions that may have been worsened by cyclosporiasis and dehydration. Nationwide, more than 18,000 people have gotten sick in 45 states. The FDA has linked the outbreak in Michigan and 8 other states to iceberg lettuce, sourced by Taylor Farms in central Mexico and served at some Taco Bell restaurants.
That's ABC's Lana Louise. It's part of the largest class action settlement in U.S. history. Tens of thousands of student borrowers who said their schools misled them when they took out federal student loans could soon have those loans forgiven.
I trained in computer-aided drafting at ITT Technical Institute.
For half a century, its commercials filled the late-night airwaves until 2016, when ITT closed its 130 campuses, leaving students like Robert Hall wondering,
how do we get the money that we put into the program?
A decade later, he might finally have an answer. A federal appeals court has ordered the U.S. Department of Education to forgive the loans of 170,000 students of more than 150 for-profit schools accused of misleading the public about their graduates' job prospects. Jim Ryan, ABC News.
As many Americans grow more cautious about spending, McDonald's profits are rising. The fast food giant posting strong second quarter earnings. McDonald's did warn in May that high gas prices and anxiety over the war could limit sales.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live at Bloomberg.com as well. Stocks on the move higher. Scarlett Fu, Paul Sweeney, this is the Bloomberg Intelligence Program. Coming up, we're going to check in with Dan Williams, reporter for Bloomberg News. He's based in Jerusalem, get the latest of the Middle East. We're also going to check in with Kim Forrest, founder and CIO of Boca Capital Partners, get her thoughts on these markets. Mandeep Singh, global head of tech research, he's going to join us too. I'm going to talk about Palantir, stock moving higher, talking about, quote, otherworldly demand for their products, services and products. Just extraordinary. Michael Halen, Bloomberg Intelligence restaurant analyst. McDonald's is out with some numbers there. And Aaron Brown, Bloomberg opinion columnist, on his column about situation awareness's 439% return was the warning. So we'll talk about what's going on with that hedge fund, which is a big disaster as well. So a lot going on here today. Now, Bloomberg.com subscribers can shape the conversation on Bloomberg Radio. Submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/AskRadio to join the conversation. Right now, let's go to Alexis Christophers, get a Bloomberg Business Flash.
All right, thanks a lot, Paul. This Bloomberg Business Flash is brought to you by IBKR. Trade election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. We have a good old-fashioned rally on our hands this morning with both the S&P 500 and Dow Jones Industrial Average in record territory. The S&P up about 68 points. Dow Jones Industrial Average up 610 or 1.25%. NASDAQ 100 up 620 points or more than 2% as tech stocks help to fuel this latest rally. We have got oil plunging after Treasury Secretary Scott Bessent said that a deal between the U.S. and Iran to reopen the Strait of Hormuz could come as early as today. Brent crude down more than 4.5%, just below $80 a barrel, while West Texas Intermediate crude is plunging 5% at $76.20 the barrel. As for some stocks on the move today, we have got plenty of them. Caterpillar is up 6.5% as the data center boom helps to drive profit growth at the heavy equipment maker. Shares of McDonald's, meantime, up about 1%. Sales growth slowed in the U.S., but it did name a new head of its U.S. operations as it continues a multi-year turnaround. We've also got shares of Spotify. They are now up just fractionally. Its third quarter monthly active users and operating income forecast missed the average analyst estimate. Also Also keeping our eye on SpaceX. This stock is rallying 3% ahead of its earnings report that happens after the closing bell, the first earnings report for SpaceX as a publicly traded company. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Alexis was just reporting, big move higher in stocks today. Let's take a look at some of the individual stocks on the move today. We can do that with Judy LeGroux from Bloomberg News. She joins us here in studio. Judy, what are you looking at?
Good morning, Paul. I heard that you have never heard of Wayfair.
I have never heard of
You
Wayfair.
were listening to surveillance. I like
never
that.
heard of Wayfair.
I was
I had to Google it, dude.
You did it to yourself, Paul.
Now I knew.
Yes.
Now I know. Now I know.
Well, the first story we're tracking, or first company rather, is Wayfair, ticker W. Shares are soaring as much as 28%, and shares are on track for their biggest increase since April 2025. This is coming after better than expected third quarter sales outlook from the company. They beat expectations for revenue, EPS, and repeat customer orders. And the company also mentioned that sales are growing in the U.S. at their fastest clip in 5 years. And the CFO on the earnings call this morning said that U.S. revenue growth is really being driven by larger volumes, specifically with strength from high-income consumers. And the CFO called out their luxury segment called Paragold, which grew second quarter sales by over a third. So Bloomberg Intelligence analysts also wrote that the company's results reflect improving execution despite sort of a challenged housing backdrop. So definitely a good day for Wayfair today.
And Paul now knows about Wayfair as
now
well.
you know.
All right, next up on your list.
Sure. Palantir is next on our list. The data analysis software company, ticker PLTR, is rallying as much as 21%, and it is on track for its biggest increase since February 2025. So certainly it's out in the news that the company boosted its revenue guidance for the full year that beat Wall Street estimates. We also are seeing certainly sales expected to top $8 billion for the year, and the revenue beat as well at $1.94 billion versus estimates of $1.8 billion. But I want to call attention to the CEO's words. So we're talking about the term otherworldly that was used, but I want to put it in context very quickly. So the entire quote is as follows. This quarter was otherworldly. Such an achievement would be cause for astonishment in any business. But for one of our size, scale, and consequence, it is simply staggering. So not only is it sort of otherworldly generally, but also for the company, the results were really blowing away, certainly management on the call. And I'd also like to note, too, there is certainly a fear among bears for the sort of AI bear case. So just the worry that AI would really replace the business. But analysts are really sort of understanding that this is really not a big issue. So Morgan Stanley analysts specifically writing, quote, the bear case on AI native competition is overstated. And CARP also saying that the risks of letting models loose within their homes for AI companies is also something that Palantir has an edge over. So interesting space to watch.
All right, one more. What do we got? Spotify?
Yes, Spotify, the world's largest music streaming service, ticker SPOT. So shares are now flat. They had fallen as much as 5% earlier in trading today, and they were on track for their worst day in nearly 3 months. What we're looking at too is certainly the earnings results from the company, the third quarter monthly active users, and operating income forecasts really missed estimates. Monthly active users came in at 788 million this quarter, down from the 793.5 million that analysts expected. And so while Spotify is traditionally focused on growing subscribers, it looks like they're trying to increase prices and hoping that their more ardent users will really pay more for the service. Bloomberg Intelligence analysts specifically wrote that softer than expected operating income might signal higher AI spending by the company, which was cause for investor concern and may have explained the stock movement earlier today in trading.
It always comes back to CapEx, and that's why so many people call it CapEx season rather than earnings season. All right, Judy, really appreciate it. Judy LeGroux, Bloomberg News reporter, and for more conversations like this, subscribe to our Stock Movers reports. These are 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. One reason why stocks are getting a boost today and yields are coming down is because oil prices continue to decline. WTI and Brent now both down by more than 5%. They're trading in the 70 handle, albeit close to $80 for Brent and mid-70s for WTI. And a lot of this has to do with progress, supposedly, on any kind of U.S.-Iran peace deal. Let's go now to Dan Williams. He is our reporter based in Jerusalem on the latest out of the Middle East. So, Dan, we've been here before. Peace talks close to some kind of deal, and then a few days later it gets unwound.
Specific deal, a peace deal, it would be an accommodation over the Strait of Hormuz, apparently something that could be announced anytime soon in the coming hours. Those are the reports that we're hearing now from the Gulf, and indeed the U.S. Secretary of Treasury Bessent predicted an announcement today or tomorrow. So everything sounds fairly consonant. Judging by reports that have emerged, this would involve effectively a property share of that waterway with a degree of Iranian control over incoming traffic, a degree of freedom for outgoing traffic. Potentially the Iranians would still be able to exact costs payment, albeit payment potentially reinvented or repurposed as a service fee rather than a toll. Again, this is all based on provisional reporting we've seen so far. It would appear that the U.S. president's latest railing, his latest threats, which culminated at the weekend with what he described as a World War II style or scale attack on Iran by the United States and by Israel that was canceled at the last minute to allow for last minute diplomacy. And then again, he upped the ante today with more impatience, with more demands for a breakthrough on Hormuz in the near future. It appears that may have borne fruit, but those fruit would not be a full some kind of temporary accommodation over Hormuz, which may actually be enough for the president's needs at this point in the war.
Dan, is the assumption that no matter what gets agreed to, that Israel will go along?
Yes, absolutely. We had the Israeli Prime Minister in Washington last week in really, and I say this with respect, a display of open fealty to the U.S. president. This was their second meeting, their first meeting since the war was launched on the 28th of February. They met very shortly before that in retrospect to plan the launch of that war. Obviously, for reasons of operations, for running the war, the conduct of the war, they were each kept in their own cities. However, it was clear to anyone watching that in recent weeks and months, there was a degree of division between them over the course of the war. I don't think either of them wanted it to see it reach the 5-month mark. We're now well into the 6th month of this war. And I think the purpose of the Israeli Prime Minister, and he stated this both in background briefings and on record on American television, was to show that Israel will go along with whatever Trump wants. That was the position then. And indeed, Trump said that over the weekend, the Israelis were about to launch an attack along with the United States on Iran. That would have been a resumption of their joint campaign, keeping in mind that the Israelis did not take part in the recent flare-up of fighting between Iran and the United States. We didn't actually get confirmation of that from Israel, but in general, the Israelis say they're poised to strike Iran if requested to by the United States, or if Iran should attack Israel directly. It has not done so far.
Okay, so I mean, the markets are taking comfort from the fact that Scott Bessent, the Treasury Secretary, has indicated that there's progress being made. But who is kind of leading the negotiations on the U.S. side? And just very quickly here.
The negotiations on the U.S. side will be, I imagine, as before, by Kushner and by Witkoff, who are effectively the global envoys for the U.S. president. There has been a degree of mediation. We know about Oman, we know about Pakistan, we know about Turkey. It's all very murky. And keep in mind that every time Trump talks about a development in these talks, a breakthrough imminent, the Iranians are very quick to deny that that is the case. So really results of what talk here.
For Bloomberg News, he is based in Jerusalem. getting the latest there. Again, the markets are reacting very clearly that some peace offering to some degree may be in the offing. Again, I look to oil first and foremost. It's off 5.2% to $76 for WTI crude oil. It's pretty pronounced here, so we'll keep an eye on that.
Still not back to the lows we saw in late June.
headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. I'm Alexis Christophers. From the Bloomberg Interactive Brokers studio, stocks are in record territory. Dow Jones Industrial Average up 671 points, or 1 1/3%. S&P 500 up about 1%, or 70 points. NASDAQ 100 up 602 points, or more than 2%. We've got the NASDAQ up about 380 points, or 1.5%, on the hopes that the Strait of Hormuz may reopen this week. Treasury Secretary Scott Bessent saying the U.S. and Iran Chevron are closing in on a deal. This is pushing oil prices lower. Brent crude is down nearly 5% at $79.76 a barrel. WTI crude down 5 1/3% at $76 a barrel. We've also got lots of stocks on the move today. Palantir Technologies jumping 24% after the company boosted full-year revenue and income forecasts and described commercial demand for its data analytics tools as, quote, otherworldly. Shares of Wayfair also on the rise, up 26% after the furniture retailer gave a blowout earnings report and served up better than expected third quarter guidance. After the closing bell, AMD and SpaceX on deck with their earnings reports. It's going to be the first ever earnings report for SpaceX as a publicly traded company. We've got shares of ExxonMobil and Chevron under pressure after President Trump slammed the oil giant, saying they're making too much money, urging them to give some of it back to the public in the form of lower retail gas prices. ExxonMobil and Chevron earned $29 billion combined in the second quarter. That's about $318 million a day, more than 3 times the same period a year ago. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. All right, folks, sitting at your terminal, SPX index, space EA. Pop that into your terminal. What you're going to see is you got about 70% of the S&P 500 companies reported earnings so far. Average sales growth, about 15%. Average earnings growth, about 55%. Weekends. So a lot of that is some of the energy stuff. But anyways, there's some big numbers out there, that's for sure.
We haven't hit the consumer companies yet.
Exactly. Kim Forrest, founder and chief investment officer, Boca Capital Partners. She's out there in Pittsburgh. Kim, what do you make so far of kind of this earnings season? It's still, as Scarlett just mentioned earlier, I hadn't heard it before, but it's not so much earnings season, but CapEx season here. What do you make of it so far?
I love that. I'm going to totally steal that. Yeah. Love CapEx season. Yeah. And I think it's good if you're like us and have, a handful of semiconductor stocks. The second quarter was very, very good to our clients. And I think that's largely because of, what we're finding out now in CapEx season.
Okay, so that now that we're in CapEx season, it feels like the market, the sentiment kind of lurches from, oh my gosh, we got to get in on this. Is it too late to, we've passed the peak. Maybe AI is not cracking up to all that it's promised to be. Why do you think there is such a swing between these extremes?
Well, I think there's some real facts that are underlying those fears, right? Well, the first fear is AI a real thing? This is the fear I have. Okay, is AI a real thing, and will it ever earn back all the money that has been spent on it? I think some of the money is misspent, and if you're an investor maybe in those private companies, you may not get the return on it. But if you are a general investor, I strongly believe in what AI can do, knowing it, having been a software engineer, making AI custom solutions back in the 90s. I understand the promise there. And today we're seeing it in Palantir's results, right? That companies are spending there. They wouldn't be spending unless they thought they were going to get a return. But there's an awful lot of uncertainty in all the areas where spending is, right? Look at Blue Owl. People are thinking maybe Blue Owl doesn't get their money back. And we have to wait and see for a couple of years and see what the winners and losers are, don't we?
We also had Caterpillar, and now Caterpillar's kind of become a little bit of a bellwether for AI in terms of building these data centers, empowering these data centers, and that's part of what Caterpillar does. They had some positive numbers today as well.
Absolutely, and guess what? This is where the virtual world meets the real world, right? We need data centers. We need fabs, fabrication plants, and we need for semiconductors, and we need power plants. So all three of those things are about moving dirt, and Caterpillar wins in that.
Caterpillar wins in that, and you see that reflected in the performance of the stock over time. SpaceX will be reporting earnings after the close. Is there anything that investors are looking for the company to say to kind of reverse the slide that it's been on, shortly after the IPO? It's trading well below that $135 price.
Sure. Well, I think it's like, how do they make money, and when are they going to make money? Like most of the the money that's coming in on real products has to do with, I'm blanking, the satellite stuff.
Starlink.
Or
Starlink,
SpaceX.
thank you. Yeah, it's Tuesday here. Sorry.
No, I'm with you.
Yeah, and it's a busy week. But yeah, Starlink is really making money. Some of the payloads going up into, or orbit, that's making money. But living on Mars, probably not going to make money. So that's what we have to ask is it a real company or is it just a fun sci-fi sort of investment? It's a tough call.
This is Elon Musk we're talking about. We know what he's going to say. He's going to paint this grand picture and perhaps be kind of lighter on details. Or if he does give details, it's kind of, they're moving goalposts to all of this.
He has a beautiful reality distortion field, right? Where when he talks, you believe him. Steve Jobs, same thing. Like these are powerful leaders that have made really great products, have delivered on those products, maybe not at the time or scale or scope of the original idea, but they do deliver. And it's tough to bet against Elon, but he is a divisive figure for many people. And I think he is a hero for many people. Maybe that's what you're buying when you buy SpaceX, is you're buying the vision Elon Musk has. Yep. I'm a little bit more short-term, like 3 to 5 years sort of short-term minded, not 10 to 15.
Right.
All right, Kim, thanks so much. Really appreciate getting a few minutes of your time. As always, Kim Farr, she's the founder and chief investment officer at Boca Capital Partners. Again, I'm just looking, I don't really know Palantir Technologies that well, but the shares jumped by the most in almost 16 months after the company boosted full-year revenue and income forecast as described commercial demand for its data analytics tools as, quote, otherworldly. I don't know. So I know Mandeep Singh knows. He covers all this tech stuff for Bloomberg Intelligence. Mandeep, can you just briefly describe what Palantir is and what you took away from their earnings last night?
I mean, this is a company pre-AI, before LLMs came to the scene, and they have done a lot of customized work for government entities, large defense companies, where it helps make sense of big data. Okay. Basically, it goes back to that big data days where if you're dealing with large amounts of data, they can help you create a pretty dashboard that can, give you the insights from unstructured data. Now, with all the LLMs coming to the scene, they clearly have made a pivot towards incorporating LLMs as part of the solution. And what we have seen is accelerating growth over the last 13 quarters. So this is the 13th consecutive quarter of top-line acceleration. And 93% growth is very impressive for a software company. But when I look at, the customer base, we're talking about 1,000 customers. So it's very high ASPs, very high monetization at their customer base, which, like I said, half of this is coming from the government. And so from that perspective, a typical enterprise company like Microsoft has got over 100,000 customers. Even a Snowflake or Databricks has got 20,000 plus customers. Palantir is just catering to 1,000 customers. And that's the real risk for me when I look at the, the growth trajectory next couple of years.
So you're saying that's a source of fragility rather than a source of strength for Palantir.
Yeah.
What could disrupt that? I mean, does that make Palantir more vulnerable to a competitor coming in?
Yeah, I mean, the fact that the CEO has been so vocal about Anthropic and OpenAI and how suddenly, out of all the companies, Palantir is supporting open source. I mean, this is a company that has benefited greatly from selling a proprietary solution, and now it's coming out and being so vocal about open source support. So that, I think, gives you an indication that they do see the competition coming from the likes of OpenAI and Anthropic, as well as the hyperscalers. I mean, what Palantir did really well was they had this concept called FDE, forward deployed engineers, that were part of their employee base. So when you're installing a solution, the FDEs actually help you get there faster. And now all of these companies, whether it's Microsoft, Amazon, they have this FDE team that they are using to deploy their own LLMs. So I think competition-wise, I feel there will be more competition from Palantir, and they can see that, which is why they are being so vocal with open weight support. And I mean, the growth trajectory, they guided to increase top line growth. So it was a beat and raise quarter. But to my mind, the growth rates will normalize, and that's where the higher valuation kind of creates a risk.
All right, you mentioned Anthropic,
Yeah.
because we're looking for a potential IPO maybe later this year. Bloomberg News has got a story that Anthropic has struck a $10 billion deal for computing capacity from a months-old infrastructure startup, okay? Making the Claude maker's latest effort to keep pace with demand for its products. What is that all about?
I mean, right now, Anthropic is just getting compute from wherever they can, whether it's SpaceX or Meta or, you know, these, in this case, this small company, Bitcoin mining company that has compute to sell.
Hold on. A Bitcoin mining company is now providing compute for an AI play.
Yeah, because at the end, it's a data center.
That's the dream for these Bitcoin mining companies once they make the transition.
I mean, compute is agnostic of where, you know, that data center is set up, what purpose it was used for in the past. It doesn't matter. Compute is, you need processing capability with live power connected to a grid. That's all you care
And just to
about.
be clear, we never used the term compute before, did we?
Not in that way. We used it as a verb.
Yes, we never said as a noun.
Yeah, well,
right? See, I just
yeah.
wanted to make sure. I'm calling these tech people out on some of this stuff. You know,
Well, they make up a lot of words.
they do.
You know.
But, I need more compute. Is that what you?
That's
do I
what
need?
all these LLMs need. If you listen to any conference they are on, they'll tell you the world needs 10 times, 50 times more compute than currently available.
So my little PC in front of me here is not going to get it done?
No.
No, okay.
Different compute.
Different compute, okay. Mandeep Singh, thank you so much. Mandeep Singh, I don't know, I guess he knows what he's talking about, but he's the most knowledgeable guy we know, that's for sure.
So everything we know is based on what he tells us.
Exactly. All right, Mandeep Singh, he's global tech head of the research business for Bloomberg Intelligence. And boy, I guess the market's taken Mr. Besson's comments at
face value.
Yeah, and then some. You know, so we're keeping an eye on, you know, oil's trading down by 4 or 5% here today. That's
Good
pushing.
news for the inflation story. Good
And
news
good
for
news for
bonds.
inflation. Yeah, exactly right. So you're seeing in the bond yields come in here 3-4 basis points. Stocks are up by 1.5% here. That's kind of the story until it's not, and then we kind of reverse it and say never mind. So, but we'll see how it plays out here today. But the market's certainly moving here, and we'll keep an eye on it. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Brokers Studio. We have got a powerful rally underway for stocks this morning. S&P 500 up 77 points or 1%. Dow Jones Industrial Average up 1 1/3% or about 680 points. So record territory there. NASDAQ 100 up 630 points. We've got the NASDAQ up 405 points. This as oil plunges. Brent crude down more than 4% at $80.41 a barrel. WTI crude down 4.5% at $76.70 a barrel on the hopes that the U.S. and Iran are moving closer to a deal this week that could reopen the Strait of Hormuz. As for stock news, we have got shares of DuPont lower after its beat and raise quarter just wasn't enough for Wall Street, and the consumer products giant Kimberly-Clark lowered its growth expectations for the year. That's due to a warehouse fire in Southern California and what the company calls false allegations about the quality of its diapers in China. Meantime, we have got shares of SpaceX now up about 2%, no, up about 3.5% ahead of its earnings report due out after the closing bell. It's first as a publicly traded company. And shares of Palantir up 27% after boosting full-year revenue and income forecasts, describing commercial demand for its data analytics tools as, quote, otherworldly. And it looks like the post-pandemic travel boom is hitting a little turbulence. High fuel prices and ongoing flight frustrations are causing more Americans to rethink those international trips this summer. The number of U.S. travelers flying internationally this June fell by 3.2% from the prior year. That is the first drop for the month of June in 5 years. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, Alexis, for that Bloomberg Business Flash. We are seeing a rally in U.S. equities here, building on yesterday's advance. It is, of course, the thick of earnings season. And this morning, we got indication from McDonald's that U.S. sales perhaps not living up to what was promised or what was expected. Comparable sales in the U.S. Coming in a little bit later than anticipated. Michael Halen is our senior restaurant and food service analyst and joins us in studio. So, Michael, I thought McDonald's was one of the companies that would benefit from consumers seeking value, seeking perhaps lower cost and more convenient food options. And it certainly looked that way in quarters past. What happened this last quarter?
Yeah, so last year they did a good job of reestablishing themselves as the value leader. They were also lapping really weak comps due to E. coli. And so as a result, they had very strong results last year. This year, we thought it was, we didn't think it was a great idea to just try to lap these really strong comps with just value, A. B, they kind of screwed up the whole value thing. They pulled BOGOs, buy one, get one offers. They took away a lot of discounts on the app, which their lower income consumers use all the time. And they pushed a 10 items for $3 menu that kind of fell flat. And so all of those changes that happened actually created an increase of prices for their consumers. So, you know, that paired with a tough year-over-year comparison, you know, showed up in their results today.
The company is embarking on a multi-year plan to become more than just a fast, cheap meal, with the aim of being the first choice for family outings and other occasions. How are they going to do that?
You know, listen, we'll probably see more tie-ins. You know, last year was the Minecraft meal that was absolutely a monster for them globally, right? So they're going to have to use some more tie-ins. You know, it's going to be tough. You know, I think what we're seeing is McDonald's kind of taking some of these family occasions away from McDonald's this year. You know, Burger King has remodeled their restaurants, improved the quality of the food, and really done a nice job of building back sales over the last few quarters. And I think McDonald's is feeling it, and that's why they're kind of talking about that segment, because it seems like they may be losing some share there. I think what the real drivers of this will be are, you know, beverages. I think beverages is a very good opportunity for them to grow sales in the afternoon day part. You know, I think they can take sales away from Sonic, who is a big competitor in the beverage space that does a nice job in that 2 to 4 p.m. Lull where the restaurants are staffed, and so they're primed to do more business. It's very incremental sales in that day part. They're going to do some more training, some retraining in the fourth quarter to help boost their operations. I think they're not going to do what they did this quarter, which was just throw too many different marketing initiatives against the wall, right? You have to be more disciplined in today's market because, these windows, everyone's marketing and everyone's putting out LTOs and new food items and discounts out there all the time because the low-income consumer is struggling. And so what we're seeing now is that promotions are only giving you these chains a lift for 1 or 2 weeks.
And then it fades.
And so, if you're constantly marketing something new every couple of weeks,
people just tune you out.
It gets confusing for the consumer. It gets confusing for the employees. It just kind of makes a mess of things, which happened this quarter.
Yeah, it just becomes noise in the background. A lot of analysts are saying that the results are kind of the secondary story. The bigger story here is a change in McDonald's USA leadership. Joe Erlinger is out, and Sky Anderson, who was the COO, comes in. Do you see this changing things dramatically for McDonald's?
I don't think so. I mean, Erlinger did a great job. That may be viewed as a loss by some, but Sky Anderson has been there for a long time. She's worked very closely with Joe and the U.S. team in charge of operations. So, she has a strong track record at McDonald's. So I don't expect too much of a change there.
What is it again?
Cyclospora.
Yeah, what is that?
The lettuce.
It's a parasite that causes very, very bad diarrhea.
And so this is something that's impacting the lettuce?
Yes, this is impacting lettuce. There was a pretty big recall of Taylor Farms is a big supplier.
And Taco Bell getting caught up in it.
And Taco Bell got caught up. There was some news today that wasn't a good look for them, right? So somebody got a hold of some emails that showed they knew about this outbreak maybe a couple weeks before they let their consumers know. And so, not a good look for them. Also, there was a couple of deaths. I think there were people that had health issues prior to Cyclospora, but that's uncommon for Cyclospora deaths, right? That's more of like an E. coli thing. So not great for Yum Brands, but at the same time, they just divested Pizza Hut. People are going to forget about the Cyclospora outbreak, and this company is set up for much, much stronger top and bottom line growth over the next 12 months because of, they got rid of that yoke on its neck, which
so
was
they just
Pizza
have to
Hut.
get through this period, in other words, with all the bad news and figuring out a solution to this. I want to go back to something you said earlier, Michael, about how McDonald's is trying to get more people into its stores in the afternoon hours, like with drinks. I think about Starbucks and how it's trying to get more people into its stores through food items. So everyone's just trying to get a way to get consumers to come in around 2 to 4 p.m. That's the lull, and that's like the time of day they've targeted. And if you sell food, then you want to provide drinks. If you sell drinks, then you want to provide food. What did people do? What did companies do with that time slot before this focused attention? They just kind of gave up on it and...
No, I mean, it makes a lot of sense because your stores are staffed, right? You have people in the stores, but you don't have a lot of customers coming in. So any of those sales that you can bring in those types of time periods, extra. They call them the shoulder periods, are very high margin, right? It's basically all incremental.
Well,
right?
Samantha writes in and says they need to offer happy hours. That's a concept that works in the bar business. Why not in like a McDonald's or a Starbucks?
Yeah.
Happy hour. That gets me in all the time.
I'd go.
Yeah.
There's one right there, McDonald's on 3rd Avenue.
Sure, there's one. Yeah, you're pointing in the wrong direction. But
yes. Okay, that's all right.
All right, Mike, thanks so much for joining us. Mike in New York leads me to believe that somebody's buying him a meal today, either a lunch or dinner.
Well, we're going to go to McDonald's for happy hour later on today.
Very good. Mike Hanlon, he's a senior restaurant and food service analyst, Bloomberg Intelligence, joining us here in studio. Looking at the markets here, holding on to those gains and then some. We are at intraday highs. The S&P 82 points higher, that's 1%. The NASDAQ up 420 points, that's 1.6% higher here. The Tom Keene VIX below 16, Brent crude down 4% to $80. WTI $76 for oil. That's got to be good for the restaurant business. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good morning. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. And one of the stories that has gotten a lot of attention, created a lot of headlines, is the blow-up of situational awareness. It's an AI-focused hedge fund, which in the first half of this year had a tremendous return, 439% net return, but then has since blown up. Aaron Brown is a Bloomberg opinion contributor, and he's written about this, saying that the fund's 439% return was the warning sign. Let's bring him in right now. Aaron, it is good to speak with you. Thank you for joining us. And of course, as someone who worked in risk management, who has an AKR Capital, you know about how firms manage their risks. And when you look at situational awareness and that tremendous return for the first half of the year, that is a huge red flag to you. What did the firm not do? What did this hedge fund fail to do completely?
Well, I'd push back a little bit on blow up. I think if you walk away from it, it's not quite a blow up. It's the next thing to it. What they did, again, we're judging from public reports. I mean, from news reports and leaked letters and things like that. So there's some guesswork involved here. But basically, it appears they held just way too much leverage for the volatility of the underlying assets. And the 439% was almost bound to be followed by a massive downswing, which they weren't prepared to handle, and therefore they had to offload pieces at a steep discount to Citadel, who I believe is looking at something like a 30% gain on at least big parts of the portfolio they got. Same assets, a couple of days later, but just in strong hands rather than in weak hands.
Do we know what the holdings were from situational awareness? Were they publicly traded stocks and securities, or were they investments in private companies? Do we know what was in there?
Yeah, well, we have their 13F, and the big problem with the 13F is it doesn't show the short position, so we have to guess a little bit. But there's a lot of market intelligence. We pretty much do know. They had a very specific bet on AI, so they're long some AI, but they're also short a lot of software companies, and they're long some of the companies, the chip makers that make hardware for AI, but they're also short some others. So they've got a very specific book there. And they also have some private. They have a $5 billion position in SpaceX. I'm sorry, not in SpaceX, in Anthropic, which could be, which could save their investors because they couldn't borrow against it, so they still own it.
Right, that's the part that they kept. You write in your column that the lesson here was that structuring a trade, the sizing, the carry, the time horizon, the leverage, that is what makes fortunes, and in this case, lasting fortunes, not being right. So while the firm, the fund, had a lot of bets that worked out, they perhaps didn't have the infrastructure at the firm to kind of make sure that they were kind of protected on all sides. Talk a little bit about that idea, the structuring the trade that, a young firm might not be as up to speed on.
Well, it's so situational awareness. Their entire reason for being is they're aware of the current situation. They know what the future is going to be, and they can take advantage of that, and that's great. And they're probably right, by the way. I tend to agree with them. I'm a big AI bull, but you have to think about the path between here and there. If you get if you get the right trade but the wrong path, you blow up and you don't survive to collect your winnings. And we saw that, in the big short trades back in 2007, 2008. We saw how some of those people who got the trade right, they knew subprime was going to blow up, but they almost got forced out of their positions before they could collect on it. I don't know if it's so much young or old. It's, there are financial traders who are experienced, who know how to risk manage, and it looks to me as if this fund didn't. One thing is, we know from their filings, it's been reported they had 4 financial professionals. Another report said 7, but that's just not enough for a fund of this size and complexity. I don't know if they had a risk manager at all.
So how unique or how common is it for a firm like Citadel to come in and kind of do a distressed buy here, if you will?
Well, this is Ken Griffin's, part of his reason he's so wealthy is, he can come in and he can scoop up and take advantage of the mistakes from other people. Other people can get the trades right. He gets his path right. Citadel is one of the best risk managed companies there is. And that means he has the money to buy when other people are forced to sell.
Yeah, I like what you wrote. Showing up as the buyer, and here we're talking about Citadel, when someone else must sell is not luck. It is a compounded return on 2 decades of boring discipline. That's what Citadel practiced, and that's what allowed it to come in and be a buyer at a very, very opportune moment. How does situational awareness, the fund, move forward from here? What's the number one lesson it can take away that you would recommend to the firm?
Well, they tried. They sent out an investor letter, and this is the classic thing. They said, well, this is a buying opportunity. The fact that we've lost all this money means everything's really cheap. And apparently, at least from reports, they didn't get any new capital. So I think they've got to hunker down and either, there are 2 choices here. One is you say, we're just a long-term fund. We're not going to use a lot of leverage. We're just going to buy the good stuff and hold it, right. And then we're safe. Or we can, go and say, okay, let's hire some risk managers. Let's get professional about how we're going to do this.
All right, Aaron, thank you so much. Appreciate it. As always, Aaron Brown, he is a Bloomberg Opinion columnist. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with stocks moving higher, 88 points higher on the S&P 500. That's 1.15%. Nice move.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning. Normally on a Tuesday, or oftentimes you see a turnaround, but none of that happening with stocks extending yesterday's rally and oil prices extending yesterday's decline. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are also streaming live on YouTube as well. Coming up in this second hour of the program, we're going to check in with our senior U.S. machinery analyst, Christopher Cialino, to recap Caterpillar earnings. AI was a big theme there. We have Sam Fazeli. He is our drug boss. He's the director of research covering healthcare, defense, industrials, and autos, talking to us about Pfizer and Merck's latest results. And Lauren Cassidy, she is with Founder ETFs. She is the CIO there. She's going to help us preview SpaceX earnings. That's coming out after the close today. And Geetha Ranganathan, our U.S. media analyst, will talk to us about Spotify's results as well as the latest with Paramount. First, let's go to, actually, you know what? Before we get there, because we've got all these earnings coming up, just a reminder that Bloomberg.com subscribers can shape the conversation on Bloomberg Radio by submitting questions for the experts and guests on our show. You can visit Bloomberg.com/Ask Radio. This is an exclusive feature for Bloomberg.com subscribers and terminal clients. Once again, visit Bloomberg.com/Ask Radio to join the conversation. All right, let's go now to Charlie Pellet with our Bloomberg Business Flash.
Hi, thank you very much indeed. SpaceX, AMD, both higher ahead of earnings after the bell. Yes, complete coverage right here on Bloomberg. SpaceX right now up by 4.2%. AMD, part of a broader chip advance. AMD up now by 6.9%. Bottom line here, stocks ripping higher again today. Oil is tumbling right to the numbers. We got the S&P at a record 76.89, up now by 1.2%. Dow Industrials at a record, up almost another 800 points, up 797 right now, up by 1.5%. There we go, up 801 points on the Dow. NASDAQ up 431. The composite index up 1.7%. The NASDAQ 100 index, full of those big tech names, surging 2.3%. Right now we have got the VIX below 16 with a 2-year at 4.20%, the 10-year 4.63%, the 30-year 5.19%. The SOX, by the way, surging 5.3%. Gold up $28 the ounce, $4,082. That is a gain of 0.7%. WTI 77.01 a barrel, down now by 4.1%. Barrel of Brent crude trading lower by 3.7%. 80.69 a barrel. Again, Palantir bears repeating, surging after earnings. Right now we got Palantir up by 25%. Kim Forrest is founder and chief investment officer of Boca Capital Partners. She was a guest this morning right here on Bloomberg Intelligence, and she says investors are right in asking questions about the long-term promise of AI.
Is AI a real thing, and will it ever earn back all the money that has been spent on it? I think some of the money is misspent, and if you're an investor maybe in those private companies, you may not get the return on it.
Kim Forrest of Boca Capital Partners interviewed right here on Bloomberg Intelligence. I mentioned oil lower. WTI bears repeating, down 4.1%, 77.03 a barrel. Among those oil majors taking heat from President Trump, ExxonMobil down by 1%. Chevron lower now by 1%. ConocoPhillips down by 0.8%. Palantir again surging 25%. After the bell, SpaceX and AMD. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and Bloomberg.com, as well as Charlie was just reporting major move higher in equities today. Let's take a look at some of the stocks on the move. We can do that with Bloomberg's Christine Aquino. She's a managing editor for Markets Live. She joins us live here in studio. Christine, what are you looking at today?
All right, Paul, let's take a look at some of the leading green stocks on the screen. Let's start with Zebra Tech, so ticker ZBRA. Those stocks roaring higher today, up 20%. And it is very much a positive earnings story. We've got their second quarter results, net sales, EPS beating analyst expectations. The company also boosting its full year forecast. So they now expect full year adjusted earnings to hit a record $21 a share at the midpoint versus a forecast of $18.30 to $18.70 previously. So this is very much driven by the continued demand for automation tools, right? This company makes printers, barcode scanners, RFIDs. They're getting us consumers to do it ourselves. And this is one of the companies that is benefiting. And we have KeyBank analyst Ken Newman saying that it was also being helped by the fact that they were able to recover some of the tariffs and also a favorable currency exchange. So lots of good things going for Zebra Tech.
This is a company, Lincolnshire, Illinois. I've never heard of it before.
Me neither.
$17 billion market cap. Never heard of it.
They're behind all of those RFID
10,000 employees
that we have to deal with.
Very cool. Okay, good name there.
All right, next up. All right, we got to talk about Palantir as well, Scarlett, because those shares also very much in the green today. They're now up 25%, more than 25% actually. So ticker PLTR, check that out on the terminal. Again, a positive earnings story. The company boosting its full year revenue and income forecast and described commercial demand for its data analytics tool as, quote, otherworldly. So Palantir CEO Alex Karp saying that U.S. commercial sales in the second quarter were also, quote, staggering and have risen 149% from a year earlier to $764 million. Now, Bloomberg Intelligence analyst Mandeep Singh weighing in on this and saying that their support for open weight models and their strategic alliance with NVIDIA is very much helping them broaden their commercial customer base. I do say, though, that even though we are getting these gains today, they're still down 11% year to date. But maybe by the end of today, very much kind of clawing back a lot of those year to date losses.
All right, your next name, another company I've never heard of, Coherent. They have 30,000 employees, $64 billion in market cap. Another company I've never heard of. What does Coherent do, and why is their stock moving?
Well, Coherent is an optical equipment maker, so very much involved in the data center build-out, and that's precisely what we are getting a bit of a boost for their stock today. So ticker COHR, they're now extending those gains of 13% at the moment. So this is very much news-driven because we got a Reuters report earlier saying that the Trump administration is drafting a ban on imports of new models of Chinese data center components. And so the expectation among investors is that, if Chinese data center companies or equipment makers aren't going to be allowed to supply the massive data center build that we're seeing, then the beneficiaries are going to be American companies such as Coherent. So the idea is, the Federal Communications Commission potentially working on plans to ban these imports from Chinese companies, and Bloomberg Intelligence saying that these restrictions are just going to be benefiting the stateside companies that are involved in this process.
All right, so companies that benefit from protectionist policies.
Saxonburg, Pennsylvania.
Oh,
there you
okay.
go.
How many employees do we know?
30,000. I mean,
there you go.
I mean, where have I been on these days?
All right.
In Pennsylvania.
Christine Aquino, thank you so much. Christine Aquino is our managing editor for Markets Live coverage. And for more conversations like this, subscribe to our Stock Movers reports, 5-minute audio reports on the biggest winners and losers in the stock market.
You know what? Just to interrupt, Saxonburg, right outside of Pittsburgh. And what's in Pittsburgh but Carnegie Mellon?
Yes.
Carnegie Mellon
talent
kicks out
pipeline.
a bunch of tech companies. It's not a Stanford or a Cal or something like that, but they do a ton of work, pound for pound. The people at Carnegie Mellon do a lot of stuff, and
there's a
lot
pipeline.
of these companies set up right around Pittsburgh because of that. Very cool.
That's why all these different cities want their own tech school, like New York has Cornell Tech on Roosevelt Island.
Very cool. All right, now it makes a little more sense to me. I got it.
All right, we also have earnings out from Caterpillar, which normally, it's a maker of earth-moving machines, bulldozers, the like, but now it's become an AI play, not just in a construction and mining equipment company. It's so much more. Christopher Cialino is our senior U.S. machinery analyst here at Bloomberg Intelligence, and he joins us now with more on these results, which some people have called blowout results, especially the upside to Wall Street estimates for second quarter profit. Chris, give us the quick read here on Caterpillar's latest results.
Yeah, it's hard to refute those comments. It was really a monster quarter. You had, against pretty lofty expectations heading into the print. You had a really convincing beat and raise, better than expected sales and margins across all three businesses. So it's not just the AI power gen business. And actually, I would say one of the more encouraging takeaways from this print was the performance in their construction business, which really suggests that this recovery is broadening out, where you have a lot of the cyclical tailwinds starting to kick in and kind of enhance what we're seeing on the secular side with the data center build out. Orders, again, very strong in the quarter, pushed backlog to another record level. We're north of $72 billion on the backlog. They're already starting to take some orders out to 2030, so above average production visibility. There's really a lot to like in this report. Question now becomes, is this as good as it gets? So we shall see from here.
So, Chris, as I understand your coverage of machinery and, the Deeres of the world, the Cats of the world, I mean, I think of that as classic cyclical stuff. But these stocks are trading 35 times earnings. I mean, you're like a growth stock industry now. What's going on with your industry? Is it still cyclical?
It's hard to wrap your head around some of the valuations in the space. Even so we had Caterpillar, if you look over the last year, it's really traded in line with a lot of the AI and hyperscaler names in terms of just the moves in the trajectory. It's been one of the top performers in the industrials world because of that data center exposure in their power generation business. At the end of the day, I still believe this is still a cyclical company. They had just been, fortunately positioned to capitalize on some of this build out with their large engines and reciprocating in natural gas engines, which initially were used more for backup power on the data centers, but are becoming increasingly used in prime power applications. But this is more than just a data center play. You're just beginning to see, I think, the fruits of that in terms of the construction and mining recovery, which we think have some legs into 27 and 28.
If Caterpillar has more demand than it knows what to do with, and that power and energy unit has grown to be the largest for Caterpillar by sales, for the stuff that it can't take on, who benefits? What other companies are kind of, getting some of the business that Caterpillar can't take on?
Right, so it's a race to add capacity at this point. Caterpillar is increasing their large engine capacity by 3x through the end of the decade. Turbines by 2.5 times through the end of the decade. Cummins, another one of their competitors, they're also significantly increasing their capacity. Really, it's just a matter of who has product availability as to who's getting some of these contracts right now. The industry really can't add capacity fast enough. That is one of the overarching concerns now. Are we adding too much capacity? But right now, I mean, from all indications from this report, it doesn't seem like there's any signs of that slowing down. And in fact, some of their lead times have actually extended this quarter. Like I mentioned, some of their customers are already taken orders out to 2030, which, highly unusual for them at this point.
All right, Chris, thank you so much. Chris Giolino is our senior U.S. machinery analyst with the latest from Caterpillar, and that stock obviously is higher in trading today.
I know my Hart retired, a longtime machinery analyst. Because she made a career over 30, 40 years recommending Caterpillar and John Deere with like a target multiple of 15. Now they're trading at 35. She doesn't know what to do. So she said, Chris, you take this stuff over.
It's bananas, right? Yep. All right, let's go to the healthcare sector. I'm not sure that those stocks are trading those kinds of multiples. Let's bring in Sam Fazeli, who knows a thing or two about the healthcare sector. He is our director of research covering healthcare, defense, industrials, and autos, and he joins us right now from London. So Sam, Pfizer and Merck both coming out with the results. What is the narrative here for these two big pharma companies?
Yeah, Scarlett, so the story here really is that you've got two companies both heading and facing some significant patent expiries, which means some of their big drugs are going to go generic, and therefore they're going to, but things like Eliquis that Pfizer sells are going to fall off a cliff, literally. And they do call it a patent cliff too. Mm-hmm. So within 6 months, 80%, 90% of the volume can be eroded depending on the way the generics come in. If there's any ones that have 6 months exclusivity, then they don't drop the price that much. But in the end, pretty much the business goes away, which is great because that's what pharma companies should do. They get their phenomenal dollars behind the R&D, make a new drug, make a lot of profit for 10 years, 11 years, 8 years, whatever the length of time is. Then everybody gets access to it at a much lower price. And Merck is the same because they've got Keytruda coming up. So both of these companies are looking ahead to this issue. Both are therefore stories about pipeline. What have I got to replace this lost sales? Merck's hole is potentially bigger, at least just basing that on the volume of sales today or value of sales today. But yet, when you look at, I've just done the chart here, I was looking at it and playing with it now. You look at Merck, it's up 60% in 12 months. 60%. That's pretty much not far from where the S&P 500 is. Pfizer is up 7%, so massive underperformance. Why? Because one has been able to convince that they've got the pipeline, the other one hasn't.
So, Sam, is the number of drugs and the amount of sales associated with those drugs potentially, at risk or scheduled to come off patent? Is it more today than it's been in the past? It just seems like we hear about it more and more from these big companies.
Well, yes and no, because, we've had these big patent, the biggest patent cliff was around the 2010 timeframe where Pfizer themselves went and bought Schering-Plough, if I'm not mistaken. It's a long time ago. One is allowed a little bit of memory loss. I think it was Schering-Plough and Merck bought another company. Anyway, they did these mega mergers. Remember the one we were talking about yesterday with what Astra's doing, which is why I'm incredulous, because they don't have a patent expiry issue to deal with. Anyway, remember the drugs are bigger now. The sales are bigger now. Yeah. So when you have a Keytruda that I don't think anyone, you go back and use our MODL function and have a look and see what people thought Keytruda would be selling, which is a cancer drug by Merck, back in 2016, 17, maybe 10 billion. The thing is heading for $40 billion of sales because it turned into a pipeline and a product. That is a big number to play. Imagine our GLP-1s for Lilly one day. When Mounjaro goes off patent or whatever, how do you deal with a $30-40 billion sales implosion? That is tougher, which is why they're talking about it more, and investors are, if you want, more focused on it.
Right, makes a lot of sense. Before we let you go, just a quick question on BioNTech. This is, of course, a German drug maker, and it's still talking about a COVID-19 vaccine, demand shrinking for that. What does demand for a COVID-19 vaccine look like right now? I mean, certainly in the U.S., it kind of has dropped off the conversation completely.
Yeah, I mean, so people still taking it. I mean, what's happening with COVID, which is very interesting, is that we've had 4 years since the pandemic, we've had 2 waves. This year, the summer wave seems to have disappeared, which seems to be heading, if this sticks, to a winter wave, which is what other coronaviruses and most cold viruses seem to have. So this would mean that if there was any demand for the summer period, that's fallen by the wayside. And they just downgraded their guidance by about 10% for the full year. But Moderna has been sticking with its guidance. So some competition going on there, I think.
All right, Sam, thanks so much for joining us. Always appreciate it. Sam Fazeli, he is the senior pharmaceutical biotech analyst for Bloomberg Intelligence based there in London, getting some reported earnings from Pfizer and Merck.
Remember when we used to keep the cards that had your vaccine dates and everything? I threw that out.
Yeah, and the apps are gone off the phone. Good riddance. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are ripping higher. We have got the S&P 500 index trading at the best level of the day. Oil is selling off. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. goldencrestmetals.com/guide. Hopes for a deal to revive the Strait of Hormuz, lifting stocks toward records. In fact, right now, both the S&P and the Dow are trading at records. Oil is selling off with West Texas Intermediate crude, $76.63 a barrel, down now by 4.7%. Barrel of Brent, $80.32, down 4.1%. S&P up 98, trading at 76.98. That is a gain of 1.3%. And with an exclamation point or an underscore, best level of the day right now. Dow Industrials up 777, up by 1.5%. NASDAQ 100 up 2.6%. NASDAQ Composite up by 1.8%. The Bloomberg Mag 7 Index up 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is up 5.8%. AMD, by the way, it is also ripping higher. Reports after the close of trading today. AMD right now up by 7.5%. The VIX just above 16, the 2-year 4.20%, the 10-year 4.63%, your 30-year 5.19%. Spot gold, $4,077 the ounce, up by about 0.6%. We were just talking about Caterpillar after earnings up 5.8%. Also after earnings, DuPont up, down by 2.3%, and Palantir after earnings, it is surging now by 26.5%. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube, streaming live on Bloomberg.com. Okay, I think over the next, 10, 15 years, being in the U.S. nat gas business is probably a good place to be. U.S. feed gas demand for liquefied natural gas exports is projected to double by 2035. Even I could make money with that kind of demand. Enrique Gonzalez joins us, head of U.S. gas research for Bloomberg. Enrique, talk to us about the nat gas market out there. Where are we in terms of supply and demand out there?
Yes, as you were saying, we're expecting quite an increase in terms of demand. So a big part of that, about 50% of the growth we're projecting between from 2025 levels to 2035, coming from LNG feed gas demand.
What is feed gas demand?
Yeah, so that's the gas that LNG export terminals consume and liquefy to then export with tankers out to the world. And that also includes some of the gas they consume themselves, right, to liquefy the gas. And then the other main factor that we're seeing as a driver as well is power sector gas consumption, and actually mainly driven by data center demand. And some of the analysis we were doing was looking at if we connect all the data centers we're forecasting to come online to the grid, it drives about 7 billion cubic feet of additional demand for natural gas versus not having data centers.
How quickly could that happen?
So this is our estimate out to 2035. But then something we're focusing a lot on as well is looking at how much is connecting behind the meter. And if you think about the fuel mix, right, for those behind the meter data centers, you could see even more.
Behind the meter, you got to be jargon free here. Behind the meter data center means they're getting their own independent source of energy?
Yeah, exactly. Their own power plant, and they're not necessarily connected to the grid.
Got it.
So if they're running only on gas, we could see even higher demand than what we were forecasting in our 2035 outlook.
But the nat gas, the energy, the U.S. energy, we can't do that. I mean, we don't have enough of that. So, I mean, nat gas isn't going to do all data centers, are they? Because my understanding is we need nat gas, we need maybe nuclear, we need maybe even coal. I don't know. How are we going to power all these data centers?
Yeah, I would agree. One of the key takeaways as well when we're doing this analysis is we need all the energy that we can take, all the generation, that we can build.
So going forward, what does this mean for companies that produce nat gas? How much of this is, I don't want to say priced in, but investors already believe is a part of their thesis?
Yeah, I think there is some level of consensus that we're going to see a lot more demand. You can already see that as well if you're looking at midstream companies, especially in Texas, in Louisiana.
The pipelines and whatnot.
Exactly. They're building an enormous amount of pipeline capacity to move gas to the Gulf. Then when we're listening at the earning calls from producers, I would say first thing they're thinking about more in the short term is liquefied natural gas exports. And then, the second driver they're thinking about is those data centers. And then the other question when we're thinking about production is, can we bring all this natural gas, right, to the market at the same, I would say, relatively cheap prices the U.S. has been enjoying for so long?
Do we have the export facilities, the LNG facilities like in Louisiana, wherever they are? Do we have enough built of those to export what we need? Are there enough those LNG refineries to process all this new nat gas for export?
Yes, and like we were saying, we're going to pretty much double capacity by 2035. So definitely need to see a big increase in drilling activity, bringing more wells online, and bringing that gas to those facilities.
All right. Enrique, thank you so much. Enrique Gonzalez is BNEF's head of U.S. gas analysis and research, giving us their outlook on the gas market out to 2035. This is Bloomberg.
Now on Bloomberg Intelligence, private markets in focus.
This Private Markets in Focus segment is brought to you by Franklin Templeton. Looking to give your portfolio an edge? Then look to Franklin Templeton's private markets platform. You can learn more at ftprivatemarkets.com. In this week's Private Markets in Focus, we want to welcome John Stewart, founder and managing partner at Middle Ground on the PE market. And John, whenever I think of the PE market, I think first and foremost about how there haven't been as many IPOs from sponsor companies, from private equity, and how that part of the market has kind of struggled. We're not seeing a lot of M&A from PE companies as well. What changes that? Is that a macro market, something that's holding back PE and the industry right now? Is that purely based on where rates are and the economy?
Well, yeah, I think it goes back. I think you have to go back and look, back, prior to COVID to what was going on in private markets, and the private market, redemption rate, DPI over NAV was averaging 29 to 30%. And since 2021, we've been in the, 11, 12, 13% range. And so the markets have had the private markets have had a lot of headwinds with, interest rates going up and different factors. And this has definitely impacted the exit environments for all of private equity, not just for IPOs, but especially IPOs, because of the difficulty with raising the capital in these markets.
I know, John, your firm is focused on the middle market for industrial and specialty distribution businesses. The Make America Great reshoring, friendshoring, what's that mean for your business? I would think there'd be a lot of demand for the type of industrial deals you like to look at.
Yeah, look, I'm not a political person at all, but there definitely has been an impact. And look, I think making an industrial manufacturing great, goes back to prior to COVID. And we start to see the benefits of a lot of those programs. Most of our companies, we own over 220 factories all over the world, 147 of them in the United States. And I would say by and large, demand is up at every one of them. Of course, we're faced with headwinds like labor shortages. And, that's where companies are investing in automation and technology, which we're seeing. And that's supported by, the recent Big Beautiful Bill, which restored, interest expense deductibility, which, directly helps cash flow private equity owned companies, as well as bonus depreciation, which is encouraging, investment in these North American businesses.
John, your background is that you started on the factory floor at Toyota, and you worked your way up through manufacturing leadership before you moved to private equity in 2007. So you have a special interest in our manufacturing economy. Where do you see that right now? We got ISM manufacturing numbers yesterday that showed that manufacturing is back to growing again, expansion, which is great news. But on the other hand, it's not a big driver in terms of employment, even GDP in this country.
Look, I think we've had a lot of headwinds. We just in March of this year, broke over, the 50% point in the PMI, which is that expansion that you're talking about. Prior to that, we saw the largest contraction that we had ever seen peak to trough since the Korean War. So, literally, we had not seen a market in the industrial space in our lifetimes. And I'm dating myself there, but, I wasn't alive during the Korean War. And so, this is, uncharted territory, that we're in right now. And, I think there's a lot of opportunity, though, in industrials where we see that, like I said, demand is up. There's investment now. A lot of these, there's over 85,000, businesses that are less than $250 million of revenue that make up a large part of our industrial economy. Public markets, industrial companies don't really get rewarded for being industrial companies, in the public markets today. And so I think you see, a lot of the companies going to the private sector, especially on the industrial side. And we've actually done, a number of the opposite of going IPO. We've done a number of public to privates. Our most recent one in the U.S. was taking LS Starrett, test and measurement business, off the New York Stock Exchange, taking it private in 2024.
John, how has the rise of private credit impacted your private equity business?
Well, look, a couple of weeks ago, maybe 3 or 4 weeks ago, I was having a lunch with some other private equity owners and Scott Bessett. And, he was talking about how, they're going to be putting their foot on the gas for the economy for the rest of the administration's term. And, hopefully we'll see some of the interest rates, reduce at the base rate. But the competitive factor about 18 months ago, a lot of the non-traditional lenders like BDCs and other types of groups that, are financing these types of deals, it started to get very competitive. And so they started dropping their spreads. And so overall, we didn't see a huge decline in the base rate, but we did see, due to competition, people cutting their spreads. And so, for a while there, it was hard to get 3.5 times leverage, to do a transaction when people were, using 5 and 6 times, and paying 5 or 6%, and then it was up to 11 or 12%, and now it's down to 7, 8%. So I do see that fueling, transactions, and I forecast that, over the next 12 or 18 months, we're going to see record M&A activity on the private market side.
All right, John, thanks so much. Appreciate it. John Stewart, founding and managing partner of Middle Ground. That's private equity in the middle markets, alive and well. This is Boomer Point.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headline right now off of the Bloomberg Professional Service. Iran is said to be weighing allowing Europe to clear mines in the Strait of Hormuz. Hopes for a deal to revive the strait are lifting stocks towards all-time highs. Bonds rose. Oil is sinking right to the equity numbers. Just about the best level of the day right now on the S&P, up 102. That is a gain of 1.3%. Dow Industrials up 807 on the Dow, a gain of 1.5%. NASDAQ up 1.9%. The NASDAQ 100 index surging now by just about 2.6%. We've got the VIX right around 16. The SOX, by the way, a story in and of itself. Semiconductors ripping higher right now, up 5.9% on the SOX. Shares of advanced micro devices also higher. AMD up 7.3%. It reports after the close of trading. Your 2-year 4.19%, with the 10-year 4.63%. The 30-year 5.19%. Gold up $31 the ounce to $4,086 on the precious metal. A gain right now of 0.8%. Crude, big story today. 75.58 on WTI, down by 5.9%. Barrel of Brent 78.95. It is down by 5.7%. Coming up after the close of trading, two very closely watched earnings reports, AMD and SpaceX. Cam Dawson is Chief Investment Officer at New Edge Wealth, and on surveillance this morning, she explained why SpaceX will be so closely watched following last month's IPO.
I mean, SpaceX has been a story about the perils of high valuation, right? Yeah. So when they IPO'd at 85 times current price to sales, 60 times forward price to sales, even if those sales deliver, you are going to see, you have to grow into that multiple.
Cam Dawson of New Edge Wealth. SpaceX, you recall, IPO'd last month at $135, right now trading at $119 and change. Have you seen the new movie Spider-Man?
Hi, my name is Peter Parker. I have something to tell you that's gonna sound crazy, but it's the truth.
You're the Spider-Man. Can't tell anybody about this. Gotta keep it a secret.
Well, no secret. We are just getting word that Spider-Man has passed $1 billion. Yeah, that's a wow. $1 billion in ticket sales in just 6 days. I'm Charlie Pellet. Scarlett and Paul, have you seen it? That's a Bloomberg Business Flash.
I have not seen it, but I'm thinking about it. And I haven't seen a Spider-Man
I have not seen it, and I generally don't like these superhero movies, but I mean, sounds intriguing, maybe.
And what it tells me is the theater business is not dead.
Every time we think it's dead, it comes on back, and here's a proposal. You will have Tom Keene join us. We'll come up with a review tomorrow.
Oh, Tom Keene and a review of Spider-Man. That'll be good. Just a headline here that crossed the Bloomberg terminal. Iran is weighing or considering allowing Europe to clear mines in the Strait of Hormuz, and that is sending oil prices to their lows of the session. You have WTI now off by almost 6%, 75.60 a barrel. Brent down at $79 even.
All right, another big data point for this marketplace is after the close today. SpaceX going to report its first earnings as a public company. And quite frankly, I'm going to be listening. I'm going to dial into this at 4:30 today. My toes are going to be in the sand on the Jersey Shore, but I will dial in for this because I don't know what to think here. But I just read something that probably encapsulates it as best as it can. A good reaction will depend on whether founder Elon Musk convinces investors that he is building a coordinated, vertically integrated platform rather than a collection of capital-intensive businesses. I think that nails it on the head. And I think Lauren Cassidy wrote that. She's Chief Investment Officer of Founders ETF, joining us via Zoom from the Big D. Lauren, what are you going to be listening for here today? Because, you know, this stock has not performed well since the IPO.
Yes. So thinking about what constitutes a great call, SpaceX has 3 segments. So within connectivity, you have Starlink, which is the most profitable business today, and it's helping fund everything else. We're listening for Starlink subs above 10 million and growing quickly. We do expect ARPU, or the price per customer, to fall slightly as they expand globally. And we're looking for stable operating margins around 36% and any direct-to-device carrier agreements, such as with T-Mobile. Within SpaceX itself, we're looking for improving economics within Falcon, including high launch frequency as well as reuse rates. progress on Starship, and then an update on the backlog with NASA, defense, and commercial contracts. And finally, within the third segment, AI infrastructure, we are listening for long-term compute contracts. A big deal with an LLM can really move the needle on free cash flow and bring it forward quite a bit, where Elon will no longer have to access the debt and equity markets. So we'll be paying attention to that as well.
Lauren, how similar or different is the investor base for SpaceX versus Tesla? And I ask that because, Tesla will report a bunch of things, Elon will say a bunch of things, and the fanboys at Tesla will bid it higher because Elon said a bunch of things. Is that going to be the same for SpaceX?
Yes, so there is significant overlap in the shareholder base, but they are very different. For example, my fund Founders 100 ETF owns SpaceX, but does not own Tesla because of valuation. So if it became cheaper in the future, of course, we would love to buy it. Elon Musk is the ultimate founder, and we are big fans and believe in a lot of his vision and trust him with capital. And, he has a very elite team across all of his businesses, so we believe they can execute.
So, Lauren, one of the unique aspects of this IPO was just the lockup period, and the first tranche of insider SpaceX shares unlocks this Thursday, August 6th. Then the more traditional 180-day lockup for other shares ends on December 8th. And I guess also very importantly, Elon Musk shares remain locked until June of 2027. How does that factor into kind of how you look at this stock and their performance?
When I talk to people who work at SpaceX, they're huge believers. I think it's much ado about nothing as far as a lot of people won't be sellers. The employees aren't looking to give up their mission. This team is going to take us to Mars. So there's a lot of people who have high conviction in what they're doing. And we'll see some selling. I think the November release, we could have a little bit more pressure on the stock then. But overall, I think they've come up with a very measured plan to release shares onto the market, and I'm not overly concerned about it long term.
Okay, so you don't see it as necessarily an overhang here, although a lot of people have said that that could be something that kind of holds back the stock. Will Elon Musk talk about Mars? And is Mars something that could, more concrete details, get the stock past its back to 135 and beyond?
Yes, I think other things nearer term will move the stock with greater force, especially any LLM contracts that he signs to sell compute. That could be a huge business for him. He's in talks with Google on putting data centers in space. We can get an update there. He can collaborate with Tesla so that their very top engineers are working across SpaceX and Tesla over time on key projects. We're going to get an update on TerraFab in Texas so that Elon no longer has to wait on chips or be at the mercy of what chip pricing is if he's making his own. He can plan that out. So I think that there is a long list of things that he could talk about today. Mars is definitely their North Star and where SpaceX is headed long term. But I think there's a lot of things that can move earnings and cash flows in the next 1 and 3 and 5 years to get excited about.
So, Lauren, you mentioned that he's going to take us to Mars with some conviction. You said that. Do you have to have that level of conviction to own this stock, do you think?
Yes, I think that, my firm invests in founder-led companies exclusively. Yep. And so I get to step back and study the common qualities of founders. They're often misunderstood. And they tend to have the vision, conviction, and grit to get things done that have never been done before. And with that comes some misunderstanding in the market as well as doubt that actually gives these companies a perpetual opportunity. In hindsight, it always looks obvious that we have achieved everything we have as humanity, but that doubt fuels the stock.
Very good. Lauren, great conversation. Thank you for giving us a couple of minutes of your time. Lauren Cassidy, Chief Investment Officer at Founder ETFs. As Lauren was saying, they invest companies with strong founders. And certainly Elon Musk fits that mold, doesn't he? More coming up. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Charlie, you know, after nearly 40 years as a banker and an analyst, I've listened to a million conference calls, a million earnings calls. And they're all kind of the same. I can kind of script them out. But I'll tell you what, I'm looking forward to today's SpaceX call. I don't know what Elon Musk says here.
You weren't kidding. You had mentioned in passing in the studio that, quote, I'll be listening to SpaceX on the beach today.
Yeah,
is that correct?
Exactly. I mean, it takes, so that's how much the waves are going to have to wait, because I really want to see what he has to say about the company in the future and kind of what he sees, because the stock is traded down. There's a lot of concern out there, or just uncertainty.
Right.
And, you know, what does he say? And oftentimes Elon has got a way to really put it into perspective.
Exactly. Let me begin with the numbers here, because we got SpaceX higher yesterday, up by 4.5%, 119.66 where we stand right now. We had that big IPO. I mean, that was the big event when it happened last month. Out the gate at 135, rocketed higher. Excuse the pun, but I believe it got up to roughly $200 right now, $119.70, so it's well below the IPO price. And also, too, I mean, you think SpaceX, we've covered launches here on Bloomberg, you think SpaceX, it's all about rockets, but no, this is also about satellites, it's also about ultimately, possibly, cell phones.
Yep.
I mean, that's the ultimate goal here.
So
and to your point about listening to this thing on the beach, if Elon Musk is on this call today, and I'm not so sure that he will be on the call, but if he is on the call, it's going to be fascinating listening.
It is. All right, Charlie Paul, thank you so much. Appreciate that. One other company reporting after the close today is Paramount Skydance. They're scheduled to report after the quarter. But they're dealing with this antitrust lawsuit challenging its planned merger with Warner Brothers Discovery. That's where I want to go. So Geetha Ranganathan joins us. She's a media analyst for Bloomberg Intelligence. Geetha, can you just summarize where Paramount Skydance and Warner Brothers Discover, this, you know, gajillion-dollar merger that's on but kind of off? Where are we now?
Yeah, no idea, Paul. I mean, this has been a real head-scratcher, and this drama is now just dragging on and on. We were supposed to have the deal closing by September 30th. Remember, Paramount had said that they would offer almost a $650 million per quarter ticking fee if the merger gets delayed. And then just a few weeks ago, they go ahead and they have this agreement with the state AGs, basically agreeing to delay the merger till June 1st. So now you have, you know, a lot of litigation risk here, tremendous delays, and really a lot of uncertainty about the synergies. You know, they had outlined about $6 billion in synergies, but a lot of uncertainty about whether those can be achieved.
So in the meantime, in the next 12 months, do these two companies just operate separately? Do they make investments? Do they fund new movies? What do they do here?
Yeah, that's kind of the real problem here. So for Paramount, I mean, this was all about getting the deal done quickly. They needed to scale quickly, and the longer and longer this gets delayed, you have your competitors who are getting, you know, all the more stronger, and you're not investing in your core business, and that's really the big worry for Paramount. For Warner, I think they continue to do what they're doing, but again, we've seen some recent underperformance in their movies as well. I mean, you think of Supergirl, you know, some other movies. Again, yeah, you know, everybody's in limbo here. This is really not a good situation for either company, Paul.
I mean, I guess it's occurred before where you put this thing on, quote unquote, on hold. I've never seen it, certainly not. So I'm just not sure how this plays out. And why don't the companies just say, you know what, it's not going to happen regulatory wise, you know, let's just go our separate ways? Why don't they just walk away?
I don't think Paramount can afford to do that, Paul. I mean, you just look at their numbers, whether, you know, it's the linear TV network business, you have EBITDA there that is just in free fall. And then their streaming platform is okay. I mean, yeah, you have about 85 million subscribers, but that really just doesn't cut it when it comes to size and scope and scale when you're comping against, you know, the Netflixes of the world. So they absolutely need to do something. I mean, they need some kind of a transformative deal to you know, get the business going. So this is really a do or die for them. I don't think they can just afford to walk away from the deal, not at this point.
Plus, there's a monster fee for doing that. So, hey, you know, Geetha, Charlie Pello was just reporting that this Spider-Man movie, which I have not seen, just went over $1 billion in, like, well, you know, just in, like, in less than a week here. Does this signal that the theater business is back from the dead here?
Yeah, I think a little bit, Paul, but it might be too soon to generalize. I mean, we've seen really strong numbers from Spider-Man. We saw some really strong numbers from the Odyssey. But really what you're seeing here is, some very, very popular franchises. You have a very popular director in Christopher Nolan. Yes, it's the biggest movie, but it's also going to be a little bit hard to generalize. I think, though, what the success of these two movies does is that for the first time now in 7 years after the pandemic, we're going to be able to get to that magical $10 billion in domestic box office. And these two movies obviously would have, and Spider-Man definitely has a big, big role to play in that. But we do know that mid-budget movies, rom-coms, a lot of the other movies, the niche type of movies have really kind of completely disappeared from the theatrical kind of landscape and gone straight to streaming.
Yep, interesting. Changing times. Okay, Geetha, thanks so much for joining us. Really appreciate it. Geetha Ranganathan. She is the media analyst for Bloomberg Intelligence. She's based in Princeton. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. The stocks at their intraday highs. The S&P is up 108 points. That's 1.4%. The Dow up 870 points, 1.6%. And the NASDAQ up 520 points. That's 2%. WTI crude oil down almost 6%. $75.69. More coming up. This is Bloomberg. Good morning.
From ABC News, I'm Chuck Severson. One more hurdle. Acting Attorney General Todd Blanche was confirmed about an hour ago by the Senate Judiciary Committee along party lines. His Attorney General nomination next faces debate and a vote in the full Senate. ABC's Catherine Falders in Washington.
He can only afford to lose 2 Republicans, especially with Mitch McConnell out, for example, and not voting. And there are still Republicans who at least appear to be on the fence or haven't said how they're voting. Now, who am I thinking of there? Senator Susan Collins, Lisa Murkowski, Bill Cassidy, for example, who has remained a little quiet on this.
President Trump says Iran has a last chance to make a deal reopening the Strait of Hormuz. ABC's Matt Rivers and Amon Jordan.
Key to any deal will be the reopening of the Strait of Hormuz, but even this deal being discussed would not take it back to the free passage through the strait that was in place before the war began. For now, Iran, though, saying that they are only talking with Oman and not the U.S. about a deal to reopen that strait.
Oil prices are higher amid the uncertainty. ABC News chief business correspondent Rebecca Jarvis.
The price of gasoline now $4.07 across the country. That is the nationwide average this morning, up 2 cents overnight and more than 30 cents from a month ago. The key for prices to head really much lower here is a signal that is sustained that the Strait of Hormuz and the flow of oil has resumed and best case scenario resumed back to pre-war levels.
A man is accused of starting the largest of the 3 wildfires in Spokane, Washington. ABC's Alex Stone is there.
More than 10,000 acres have burned in the Spokane area. Fire trucks surrounded by huge blazes as crews rush to contain the flames. The sheriff saying 14 people are unaccounted for, but incredibly, nobody has been killed or even seriously injured, despite the flames moving so quickly.
Wall Street's higher. You're listening to ABC News. 2 of testimony underway in the trial of Lindsay Clancy, who says a dangerous psychiatric condition caused her to kill her 3 children. ABC's Sophie Flay.
Prosecutors argue Clancy planned and carried out the murders. They say she then tried to take her own life by jumping from the second-story window of the family's home, leaving her paralyzed. Clancy admitted to the killings, but pleaded not guilty. Her lawyers argue she was suffering from postpartum psychosis, a severe mental health condition they say left her legally insane.
Jurors heard about entries in her journal in which she described being overwhelmed, which prosecutors argue shows she wanted to escape her current life. Her defense says her writings show a mother struggling with severe postpartum psychiatric illness. The state with the second highest number of data centers is hitting the pause button.
No data center, no data centers.
The protests have only gotten louder, and Texas Governor Greg Abbott has heard them, demanding last week that data centers be self-sufficient.
They must provide their own power, not taking power off the power grid.
Now he's gone a step beyond, announcing a moratorium on new data centers without approval from the state's regulatory agencies. He's offered no deadline on the completion of those audits. Jim Ryan, ABC News in Dallas-Fort Worth.
There was no big winner in last night's $753 million drawing in Powerball. That means tomorrow night's big prize is up to $786 million, making it among the top 10 all-time jackpots. Chuck Sievertson, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Will 13 be the charm for President Trump? Welcome to the Tuesday edition as the president tries to walk up to step-down play for a 13th time here since the start of the war with Iran. Calling this one the last chance to sign a deal. We're going to get the latest from the White House when we talk with Bloomberg's Skylar Woodhouse, with the president heading to the West Coast later on today to raise money. Todd Blanche is now one step closer to being confirmed as the nation's attorney general, despite worries that just won't die over the president's anti-weaponization fund. Is it still alive? We'll discuss with our political panel. And stocks are surging today. More powerful earnings and hopes for a deal with Iran coming together in a profitable way. We'll talk about it this hour with Bloomberg's Eric Weiner, but let's get an update right now with Charlie Pellet. He's at World Headquarters in New York, seeing new records today.
Indeed, absolutely right about that, Joe, for the Dow, for the S&P 500 index, and we are seeing stocks rip higher. Oil is selling off. That's part of the catalyst today. Earnings, of course, also anticipation for earnings from both AMD and SpaceX after the close of trading. And Palantir, by the way, last night, Palantir right now surging by 26.6%. But right now, West Texas Intermediate crude just above 76 a barrel. It is down another 5.3%. Brent crude 79.45, falling below 80. Brent down by 5.2%. Equities, though, ripping higher right now. Looking at the S&P, up 111 points, up 1.5%. Not just higher, best level of the day right now. Dow Industrials up 892 points. That is a gain of 1.7%. NASDAQ 100 up almost 2.8%. NASDAQ Composite Index up by 2%. The Bloomberg Mag 7 Index up 0.4%. The VIX just above 16. The 2-year at 4.19%. The 10-year 4.62%. The 30-year 5.19%. Gold up 0.8%, 4,085 the ounce. And again, crude bears repeating. WTI down 5.5%, 75.95 a barrel. So oil slipping below $80 on Brent crude, slipping below 80 on growing hopes that the U.S. and Iran can reach a deal. As for the broader energy outlook, Eric Cantor is former House Majority Leader, now Vice Chair at Moelis & Company, and he was interviewed this morning on surveillance.
You know, we got a real shortage of refined products. You know, there's been a lot of controversy about the earnings of the super majors in the oil and gas sector. But again, it's really about the market. It is, people have been saying for months now that this conflict in the Middle East is going to result in a shortage of supply. I mean, we know that that was coming, and I think we're here now.
Eric Cantor of Moelis, and among the oil majors right now, ExxonMobil down 1.3%, Chevron down 1.2%, ConocoPhillips down 1.2%. You heard about it here on Balance of Power yesterday. President Trump scolding ExxonMobil and Chevron for their soaring profits. After the bell, earnings from AMD and SpaceX. Sports, the MLB Owners Management Council has approved the sale of the San Diego Padres to Clear Lake Capital Group co-founder Jose Feliciano and his wife Kwanzaa Jones for an MLB record of $3.9 billion. That, according to sources. One entertainment note, Spider-Man hits $1 billion in global ticket sales. And that, Joe Matthew, is a Bloomberg Business Flash.
I guess I'm going to have to go see it.
You got to see it.
Charlie, thank you so much. Well, yeah, did you see it already?
I haven't seen it yet. My wife saw it on Rotten Tomatoes. I think this thing got something like a 98% rating, which is absolutely incredible.
Yeah,
but,
well,
you know, I'm thinking me, you, and Tom Keene will do it after our shows tonight.
I want to know where TK goes to the theater. He probably does those big recliners where they serve you the drinks. I'm in. Just let me know when you want to go.
Fair enough,
Charlie. We'll see. We got plans already. Thank you, my friend. It's a Spidey movie. I'm not going to miss it. Thanks for being here on the Tuesday edition. Can you believe it's only Tuesday? Come on. Is Tuesday Little Monday? Kind of feels like that around here. But a beautiful day in Washington, and thank you for coming along here on Bloomberg Radio. Satellite radio, channel 121. Do you have the Sirius XM? Make sure we're on the presets there. And if you want to see us on YouTube, search Bloomberg Business News Live. You'll catch our live stream. You can pause it, back it up. It's the coolest thing that we have got going here. With our eyes on the White House, we're going to bring you there shortly with some expectation for good news when it comes to Iran. You heard Charlie mention the scolding the president gave big oil yesterday, and I see Exxon down another $2. But actually, some oil stocks are higher. You've got the XLE struggling a little bit. Williams Company is having a pretty good run after earnings. The pipeline maker, it's up 2.5%. We're going to talk about that change in rhetoric from the president 1 hour from now when Mike Summers joins us from the American Petroleum Institute. Kind of interesting for the president to suggest they are making too much money because crude today has a 7 handle. And that in itself is news. We don't even have a new MOU. Never mind a ceasefire or a peace deal. And now you're looking at WTI at $75 a barrel. Brent crude, 79. They're both down over 5%. Markets love this. Helps to pull interest rates lower. Stocks are surging, and you even got some better than expected earnings to hang your hat on. But we have to acknowledge the fact that nothing actually has changed other than the fact that we're not actively bombing Iran. And the story in the New York Post this morning is something. Somebody finally sat down, went through all the transcripts and the Truth Socials and counted them up. And it's an even dozen. The number of times the president has walked up to the line, promised to obliterate, decapitate, and so forth before pulling it back at the request of neighbors or a hope for some sort of peace to come. This is number 13 now. Indeed, the president has given Iran at least a dozen chances since the war began. On February 28th, reports the New York Post, threatening strikes or imposing deadlines for major actions by Tehran, only to reverse course or extend time limits. Some poor reporter in the newsroom got assigned the job to go count how many times he's done this. Taco, you might say. For example, he delayed attacks twice in the spring, halted planning bombing in April to keep talks alive, backed off further strikes in May after Gulf allies pushed for restraint, held fire again in June as U.S. and Iranian negotiators work toward a framework deal, and now we have what he says will be a breakthrough today or tomorrow. This is it. The president in the Oval yesterday. Listen.
This is the last chance. This is the last chance for them to sign a good document. I don't know. I think we're going to maybe get something, but I want to give them every last chance before decapitation. Very tough to do what we have planned, still planned. We'll see what happens.
Okay, every last chance or the last chance? That, I guess, is the question. Could there be a 14? Wall Street will do this all day, right? It's indefinite. The markets will indefinitely trade on this, it appears, because guess what? Every time we do this, somebody's making money. The volatility trade is helping people retire. If you're a spot trader, this is the golden age, right? You walk it up to the line. You start buying certain stocks, right? Buy McDonald's. Then when he lets it go, AI stocks are flying, oil's lower. It's getting to be kind of predictable. But maybe we have a breakthrough today. The last chance for them to sign a good document. Skylar Woodhouse covers the White House for a living and has to do this dance on a regular basis. White House correspondent Skylar Woodhouse on the North Lawn right now. Looks nice out there, Skylar. Is this a day for peace? Are we going to hear some news from the president?
Yeah, Joe, it is a really nice day today, but I think, as you mentioned, look, this is the big question is, will this be another Trump taco moment? The president has continued to make these threats, and throughout the course of this war, he has really leaned into the sort of same rhetoric, saying this is Iran's last chance, that talks are going well, that a deal will be coming soon. But time has continued to prove that those negotiations, that these conversations are very fragile. So I think, we'll have to see what comes forward from the president today, and if he can provide any sort of update. But he is known to sort of make these really harsh threats, and not just with the war in Iran. We've seen this through his tariff trade negotiations. I mean, he's sort of just following the way he, I guess, goes about being president, which is making those threats, and then oftentimes he'll walk it back. So we'll have to see if today or tomorrow is the day where he follows through.
We do have an opportunity to hear from him, right? Or maybe we will. Skylar, you'll have to tell me. I'm just looking at the schedule. He had the Nittany Lions in there, I see a little while ago, the NCAA wrestling national champions. I guess they've come and gone. It was an earlier appointment, closed to press. But there's a swearing-in ceremony for Jay Clayton at the end of this hour, 1 p.m. Eastern Time. Are you hopeful they open this to reporters? Could we get a little Q&A?
Who knows? Oftentimes those things come together. If it says closed press, they come together very last minute. But, the president does like to be in front of the cameras, and given a lot of the hoopla and sort of controversy surrounding that appointment with Bill Pulte in it before, we'll have to see if the president takes questions. And but if we don't hear from him, then he is traveling out west, and I'm sure we'll have some opportunities there.
Yeah, so what's on the agenda here? He's going to L.A., it looks like, and then we'll swing through Vegas. Are these fundraisers? Skylar, what's he going out west for?
Yeah, so he's doing his West Coast swing, which is pretty rare. He doesn't really tend to go out west super often. Today, he'll be flying to California, doing a fundraiser in Los Angeles, an RNC fundraiser, where he's expected to, tout his wins, his administration's policies, and he'll be in Gavin Newsom's territory. So, obviously, probably we'll hear some jabs on Gavin Newsom there. And then tomorrow he's heading to Vegas to really talk about the economy and what his administration has done around trying to bring prices down as the November midterms approach.
If you get over to the other side of the mansion at some point today, Skylar, take a look at this helipad project for us. We want to know what's going on. I realize you can't just walk out there, but apparently he's not happy with the helipad. He's stopping work. They're going to regrade the south lawn or something. I'd say we just go for it, put the pool in. I don't know about you, but...
Yeah, no, when I was coming out here to do my hit... Oh, yeah, no worries. Thanks for having me.
Well, no, tell me, what were you going to say?
Oh, I was just going to say, I noticed a tent that was up. Now, I don't know what that tent actually is for, but given the helipad news, I was, trying to see if there was any, updates that I might be able to spot before coming out here.
All right.
We'll
Take
see.
a picture for us if you see something good. Skylar Woodhouse, thank you so much, as always, live from the White House. As the Washington Post reports, the president's directing contractors to redo what's already been done on the helipad. They've been 24/7, round-the-clock work to get this thing done because he can't land the helicopter there, and that UFC fight burned all the grass. They're redoing the whole thing, and the president wants a helipad so they can land the new choppers without burning the grass. Ordering work begun in June to be completed by a state visit in September. That's President Xi, right? The helipad is on the part of the lawn that slants downward. The president wants one that sits level, so they're going to have to regrade, it seems, the south lawn. We got to get some loom in here, guys. There will be a 100-foot-wide granite presidential seal that was beginning to take shape on the pad. He's having them remove that now and start from scratch. I'm Joe Matthew in Washington. We're just getting started here on Balance of Power. Thanks to Skylar. We're going to turn back to the markets next. Get an update from Charlie. We'll look under the hood with Eric Weiner because you might actually like what you see. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing. S&P, the Dow, both trading at records right now. We have got oil tumbling. Stocks are ripping higher. Let's begin with hydrocarbons. WTI, 76.01 a barrel, down now by 5.4%. Barrel of Brent back below 80, 79.49. Brent crude down 5.1%. Stocks push higher. S&P 500 index above 7,700, 77.14 right now, up by about 115 points. That is a gain of 1.5%. A record on the Dow above 54,000. 54,104 on the Dow, up by 1.7%. NASDAQ up 548, up 2.1%. The NASDAQ 100 index, a number you don't hear that often, up 818 points. It is advancing now by 2.8%. Yes, the Russell 2000 index also taking part in the rally, up now by 1.6%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 6.4%. AMD, which reports after the bell, up by 8.2%. 4.1%. The VIX just above 16, the 2-year 4.18%, the 10-year 4.62%, and the 30-year right now at 5.18%. Spot gold up $31 the ounce, $4,085. That is a gain of 0.8%. Again, crude bears repeating. WTI $75.99 a barrel now, down by 5.5%. Our Eric Weiner will have a whole lot more on the markets for you coming up in just a moment. Palantir after earnings, it is up by 28.1%. AMD, SpaceX after the bell. SpaceX right now up by 6.4%. Briefly after earnings in the drug maker group, we've got Merck up by 1.1%, Pfizer up by 1.9%. That, Joe Matthew, is a Bloomberg Business Flash.
Wow, Charlie, this is quite a day. A ripper, indeed, as Charlie Pellet puts it, and that's a technical term. He'll be back in about 20 minutes with more on the markets as we follow the indexes higher. Look at this. We're in the world at 7,700 on the S&P, 54,000 for the Dow. Interest rates are lower. Oil prices are lower. What else do you want? I guess better earnings. And we're going to have certainly an opportunity to put them up over the course of this week and next. SpaceX, as Charlie mentions, next big stop on the road here. The building's going to shake after 4 p.m. The question is, who's going to shake when that lockup ends 2 days later? 900 million shares, I think, additional shares of SpaceX dumping on the market, and that's not the only one. We'll have another even larger lockup expiration later on in the year. I was mentioning the helipad at the White House here. They're going back to square one as the Washington Post scoops the president ordering workers to redo weeks of work on the White House helipad. This is on the South Lawn, right? This usually you see in the old days, well, I guess till now, Marine One, the helicopter, would take off and land on the grass. You'd have to walk through the grass and maybe get your shoes wet on the way if there's a little dew or something like that. But that's just the way, something very iconic, almost romantic about the commander-in-chief, the first family striding across the lawn to board Marine One. Think of Nixon out there with the peace signs on his way out of town. Imagine a helipad. Imagine a walkway going out to a helipad. That's what they're building now because the new helicopter burns the grass. President doesn't like the slope, so he's having them take the whole thing up. They've been working around the clock for a couple of weeks now, raising bigger questions about the cost of this thing, which I'm sure we'll be hearing about. And I mentioned this, the reason why we got to this point and they had an opportunity to build the helipad is because of the claw. Remember the UFC fight? They ruined all the grass on the South Lawn to have this wacky fight that coincided with the president's birthday. And now we understand that it was a roaring success to the tune of a $30 million loss for the company TKO Group. They told us this in advance. It was going to be we'll call it a loss leader. UFC Freedom 250, $30 million down the drain. The Ultimate Fighting Championship called the event a roaring success when they talked to analysts on a call yesterday, saying it would pay off in the long term in terms of building the fan base and business relationships. They claim, you talk about a $30 million loss, they generated $1 billion in earned media. $1 billion. They got 34 million viewers, Paramount Skydance, because they streamed the thing, right? Paramount Plus. Reporting second quarter sales and profit that beat analyst estimates. That's the way to lose $30 million. Of course, President Trump is the king of earned media, which is why some say he hasn't put any of his own money into the Republican effort in the midterm cycle. Back to Wall Street, just keep pushing higher, and we have no news from Iran. So the disconnect is interesting here. Markets are ever optimistic about what the president is doing when he says, we're not going to bomb because we're talking. Oil prices immediately go down and stocks go up. Even when Iran says, no, we're not, no one's talking, and there are no headlines. So you start wondering if we're getting a little far over our skis, especially as we're constantly encouraged with stronger than expected earnings. Or is that enough? This is an earnings-driven market. Maybe traders shouldn't be trading on the war. That's why we wanted to spend some time with Eric Weiner. Now it's the lunch hour here, 12:30 on the East Coast. I thought nothing better today. It's a beautiful day outside, the 4th of August. The sun is out here in Washington, to pour a little iced tea and sit on the porch with Eric Weiner. Just going to talk, just the two of us. If you want to hang out here, that's great. We get to do this kind of thing before the TV cameras show up at 1 o'clock. And Eric, it's great to see you. I hope you're doing all right. Our senior editor for Equities. You got a nice tea up there in New York?
It's very nice outside. I haven't had an iced tea, just water, but it's
Somebody
beautiful
will get
day.
you. I think maybe an Arnold Palmer would work.
Yes,
so here we're on the rocking chairs.
Yes.
On the rocking chairs, looking at the terminal, Eric. Are you getting nervous that this is getting toppy, or did we just find with these recent earnings reports a whole new reason to push it higher?
It's in part that. It really is. If you look at, if you look back to June 2nd when the S&P had its last high, the groups that are driving this are financials, insurance, credit cards, you've got healthcare, basically pharma. These are this is a sign of the rally broadening out. And that's what you want to see. We were very, very heavily, focused on tech. And if you look at who was underperforming during the last run up, it's chips and it's technology hardware. So in that sense, it's a good sign. You alluded to the concern, which is not knowing exactly what's going on in Iran with the war and its effect on everything. What seems to be happening is that when Trump actually doesn't speak, the market does better. And when the threats start coming, they get a little bit wobbly. And so if he would kind of keep it low key and let diplomacy play out, I think the market would really, really appreciate that, and we would start getting back to some normal pricing.
It's like a national relaxing of the nerves when he's not posting or talking. I'll tell you what, though, Eric, it was a week ago tomorrow that the Dow fell 1,100 points. Remember, 30-year Treasury hit 5.2%. The market's head exploded. And it was the excuse, hey, we've been waiting for a correction. This is clearly it. It's time to start selling. It hasn't even been a week, and we're at new all-time highs.
That is earnings. That is the results of the companies coming in that are stronger than expected, and the economy doing better, the market, not necessarily the economy, because the economy is a couple of different things, but the market in that sense doing better and responding to just fundamental concerns. When you looked at what was getting punished, you had a lot of selling of the winners before. And what you looked at what was getting punished, it was companies that weren't doing what the market wanted them to do. And it was kind of results oriented, but it was also, to use the term, vibes. And now we are really looking at the groups that are moving because the results are warranting a move up in the stocks. And we're kind of waiting to see what comes next. If oil continues to fall, if rates and yields can come down, then this is very warranted. If not, and we go back into risk, a risk situation with the war in particular, then we're going to see another sell-off. And it's not necessarily, like, these behaviors aren't necessarily healthy or not. When you start seeing a broadening out, that's healthy. And when you see selling and value coming down and pricing accurately, that's healthy too.
Yeah. We've got Palantir up 28% on earnings today. And I'm noticing that a lot of software is higher. Even Salesforce has been looking good recently. Eric, what do you make of this whole situational awareness blow up, this hedge fund that may have this 25-year-old or whatever boy wonder from Germany who was running this fund, his first foray into investing, it blew a hole in the market. How much were these margin calls to blame for what we went through a couple of weeks ago?
It sounds like a lot. It's really hard to that we'll get that in the autopsy, which will come in a couple of months. But it really does look like that was what was going on. And this is the kind of thing that concerns traders, because that's bubble behavior. When you have like a guy who's been in the market for 2 years and he's a hero, that's when people start saying, oh my God, what are we doing?
Well, that's right. And I guess, short software go long hardware only lasts for so long. When things start to turn around, your broker starts calling because you owe money. So we've got SpaceX after the bell. You pointed out earnings have been great. I mean, Microsoft and Amazon alone just changed. Talk about the vibes, the entire mood of this market. How important is Elon Musk's call going to be after the bell today?
The call is the whole thing. So you pointed out Amazon and Microsoft are just soaring right now. And it's because what they are showing is returns on their AI investments. Meta less so, Google getting hit because it's negative free cash flow. But when these companies show results and show tangible returns, then investors really want to buy in. SpaceX is not there. So you're not going to get a lot of details in terms of what, how do you price this thing? What are their earnings? What are their revenues like? Everything's very small and it's all very future oriented. So what you want to hear is how confident they are in the growth, how much their spending is turning into tangible returns. But really, this is much more down the road concerns. And SpaceX has really gotten hit hard. So for it just to get back to its IPO price will be a victory for Musk.
I know you're not covering the company specifically. We're kind of talking in broad strokes here, but that lockup expiration later in the week, you wonder if the earnings report even matters tonight. You've got 900 million shares about to drop on the market.
Technically, it doesn't. I mean, that's what matters. And as you alluded to, there's like billions of shares more coming. That's why it's going to be really difficult to price this thing accurately for about a year because we don't know exactly what they're doing. There aren't numbers to back it up in a big way. And there's a flood of stock that is hitting the market that was not included in the original valuation. That makes it tough.
Always love hanging out with Eric Weiner. I appreciate it, Eric. Thanks for spending some time with me on the porch here. Let's do lunch next time. We'll spend a little extra time together with his views on the markets and what could be another doozy of an after-hours period. Eric Weiner, Senior Editor for Equities. Our political panel's up next, only here on Bloomberg Radio.
It's 1240 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all surging right now, looking at a record on the S&P 500 index. Yeah, we're above 7,700 right now. 77.19 where we stand. That is a gain of 1.6%. Dow Industrial's up 950 points. That's a gain of 1.8%. NASDAQ up 2.1%. The NASDAQ 100 index doing even better, surging now by 2.8%. Hopes for a deal to revive the Strait of Hormuz, lifting stocks toward records, bonds higher, oil is sinking. Got to begin there with crude, with WTI now at 76.17 a barrel. WTI down 5.2%. Barrel of Brent 79.67. Brent crude down by 4.9%. Bottom line here, stocks higher. The Bloomberg Mag 7 index, though, little changed, up 0.3%. The SOX up 6.3%. That's the Philadelphia Stock Exchange Semiconductor Index, and the VIX holding just above 16. Your 2-year 4.19%, with the 10-year 4.62%, the 30-year 5.19%. Gold, $4,085 the ounce, up 0.8%. WTI, again, down 5.2%, $76.20 for a barrel of West Texas Intermediate crude. Coming up on Friday, we've got the jobs report. Yeah, going to be closely watched by economists, traders, and Fed watchers. Bob Dahl is president and CEO of Crossmark Global Investments, and he was a guest this morning on Bloomberg Surveillance.
Look, if they want inflation at 2%, they'll have no choice, in my view, but to raise rates. We're nowhere near 2%, and the other side of what they have to worry about, employment, is in pretty good shape. So why they're not moving faster on inflation, I guess they're hopeful that we're going to get some good economic numbers between here and the next Fed meeting.
Crossmark's Bob Dahl interviewed on Surveillance. So yeah, falling oil certainly giving stocks a lift, but also optimism about earnings. Case in point, Palantir surging after last night's report, up now by almost 29%. AMD, SpaceX, they both report after the close of trading. AMD up by about 8%, SpaceX up by 5.8%. Lots going on. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie. Listen to Charlie, baby, with the rally. Is that the rally music, Charlie? Don't get me excited like that. I've got to talk about Todd Blanche, for crying out loud. We have special rally music. When you hear that music, you're making money. Charlie, thank you so much.
You know, I love days like this because people get excited when they see the bull running. But listen, markets go up, markets go down. Bottom line, Joe Matthew, we got you covered either way.
I thought you were going to say, but someone's always making money. Thank you, Charlie. He'll be back at the top of the hour, 1 p.m. Eastern Time. He's the best, high atop the tower in Midtown Manhattan. It is a heck of a looking market here, and, well, we'll find out what the next leg is going to be when SpaceX reports after the bell. We're going to have extensive reporting on that. Ed Ludlow will join us on the late edition of Balance of Power, which, of course, starts at 5 p.m. Eastern, and we'll have a pretty good sense of where the company stands, although, as we discussed with Eric Weiner, the big lockup expiration on Thursday might really just render this evening's quarterly report useless. Micron's jumping, though. It's up about 8%. It is kind of a buy everything. When Micron and GE are both up on the same day, you know you've got an interesting market on your hands here. So we turn back to Capitol Hill. I mentioned Todd Blanche. We've got two big ones today, actually. Committee confirmation vote for Todd Blanche swearing in at the White House about, well, we'll say 15 minutes from now. For Jay Clayton, the new DNI. Looks like the president's getting both of his guys here, knowing that Blanche did not come without a fight. It was at this time yesterday, I was showing you the letter from the Attorney General that Robert McWhirter described not as Swiss cheese, but as no cheese at all. But it did the trick. A promise to never put up the anti-weaponization fund in writing, signed by Todd Blanche. And it was for an audience of two. As we told you, Senators John Cornyn, Tom Tillis. President crossed them, they're crossing him back. But even if there's no cheese here, it does seem that they've both been won over. At least enough to vote yes. Here's Tom Tillis in the committee a short time ago.
The bottom line is nobody is clean here. And until we start recognizing this behavior as bad, we're just going to one-up it. Maybe it's a little bit more intense in this administration than the last one. and that a little bit more intense than the prior administration, and so on and so forth. But folks, we've got to end this stuff. We do. I'm going to support Mr. Blanche's nomination, but what I hope I see out of him is a bending of the curve of this absurdity.
Tom Tillis drinking a Celsius. You got, yeah, producer James. It's a tiring experience up there, but they got him out of committee. It was a party line vote, and I guess nobody should be surprised by this. Not a single Democrat voted for Blanche's nomination as he won over the two who counted. Democrats call him uniquely dangerous. Remembering this letter that went out yesterday addresses the Anti-Weaponization Fund, which some believe the president could revive in some other form whenever he wants, but it preserves the president's immunity, the IRS immunity deal. So let's see how the panel's feeling about this, because it's going to be a pretty great day for Blanche and for Clayton. Again, he's going to be sworn in as DNI. I'm guessing Bill Pulte will be in the room coming up next hour. The question for Blanche now is, when will they vote? Do they do this before recess? It's looking like, yeah, they will, if John Thune keeps everybody around for at least some of the weekend. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us, keeping it real with our best panel. Rick is our Republican strategist and partner at Stone Court Capital, and Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, I'll start with you here, because not a single Democrat voted for Todd Blanche. And I'm sure that they feel like they're on the right side of history. He will be confirmed, though, right?
We know yet. I think if you look at history, speaking of history, not one of Donald Trump's nominees who has gotten to the floor has lost. So there's that. You've also got some of those who have expressed reservations about Blanche, saying they would rely on somebody like John Cornyn. So you have that. But you also have people who are running who have lost because of Donald Trump. And these are not just Cornyn or Tillis. You could look at some of the other folks like Bill Cassidy. So there's about 5 senators that we need to watch. That would be Collins, Husted, Sullivan, Curtis, and Cassidy. Yeah. Do they, do all of them vote against him? There is a 2 that they need, that they can lose, but the rest they cannot lose. And for somebody like Susan Collins, if she votes to confirm, they are voting for this slush fund. They are voting for the immunity deal. They are voting for the maltreatment of the Epstein victims. They are voting not to release the Epstein files. They are voting for the politicization of the Attorney General of DOJ. So this is what they are voting for and are going to have to face voters on in November. And that's a tough pill for them to swallow, at least those that are on the ballot.
Well, Jeannie lays out the rationale nicely here, Rick. What do you think about the vote count with some of the names she mentioned? We're looking at Bill Cassidy, among others. When this goes to a floor vote, does Blanche need to worry?
I think they've got to keep the heat on. Each of these folks who would be in play, as Jeannie says, have said the same thing, which is we're going to talk to Cassidy, or we're going to talk to Cornyn and Tillis and just see how the negotiations went. Was he being honest and truthful? Did he represent himself well? It's more about, whether or not they can work with this man in the future than the deal itself, which is, you can take it or leave it. I mean, obviously Democrats don't like it and Republicans are going to hide behind it. So at the end of the day, I think ultimately the power holds in the White House. Trump keeps the heat on. Everybody sort of marches to the GOP tune and says yes to this guy. But I would say, Jeannie picks up an important point. Susan Collins is probably looking right now for some opportunities to distance herself, from Donald Trump. And you can't get anybody who's closer to Donald Trump than the Attorney General, Todd Blanche. And so this would be a bombshell in Maine. She's still got a race to go. Just because Democrats have kind of fumbled the ball doesn't mean they're out of the game. And so at the end of the day, how big an explosion does she want? And would she do it alone? Or is this the kind of thing where if you're going to do it, you better hope you got, 2 others with you to make sure that the nomination goes down? So it's really interesting to watch the next, couple days to see how this plays out on the floor.
Boy, absolutely. And if I'll tell you what, if Rick Davis isn't sure, that says a lot right now. Jeannie, we're going to get a look. Well, actually, I'm still waiting to find out if they're going to open this to press. The swearing in of Jay Clayton. It's set for the next hour here before the president heads out west. And sometimes we don't know until it starts. We find out they're assembling the pool, whether there'll be a posthumous photo release or otherwise. Do you think Bill Pulte's in the room? And what will be next for him? He's not just going back to the housing market, is he?
Oh, he is absolutely not, Joe. Every time, somebody talks about a cabinet member, an official in the White House who Donald Trump may have to remove. I mean, at this point, who knows? He may be asked to fill in for somebody like Jeanine Pirro. Obviously, he's not an attorney, so he really can't. But, his name keeps getting floated because, of course, he is incredibly close to Donald Trump. He doesn't have the expertise. He doesn't have the background to do any of these jobs to many of these jobs that he's doing, particularly acting DNA, but he does something more important, which is he does the bidding of Donald Trump. So I wouldn't be surprised if he's in the room, and I wouldn't be surprised if we see him and his name floated for other potential cabinet posts as they come up, because he's made it clear he wants one and he is beloved by the president, and that's who would be nominating him.
So you mentioned Judge Jeanine. This is just becoming like the HR segment at the White House every day. We talk about who's fired and who's hired. So let's do this. There are multiple reports, multiple newspapers fronting these stories today. Wall Street Journal, President Trump discussed ousting Jeanine Pirro, according to people familiar with the matter, after Pirro's office contradicted the president's contention that the reflecting pool was damaged by vandals. Hold on. The New York Times, same story. Pirro arrived at the White House on Monday afternoon and was taken to meet with Trump in the Oval Office, according to two people with knowledge. She was not fired, nor did she offer her resignation. But Doug Burgum was in there. Rick, how awkward is this? Is the Interior Secretary who went on TV to continue this narrative that vandals destroyed the reflecting pool, only to be rebuffed by Judge Jeanine. President's not really going to fire her, right?
Yeah, it's hard to imagine that this is going to cause her a job loss. And my guess is, we all saw her sort of going in and coming out of the White House with this like massive documents on a trailer that she's hauling around. And that would have been a fun woodshed session to actually attend, because it's pretty clear that she's claiming she got her information on the damage that the contractor made from the Interior Department. So Burnham's there to say, whoa, wait a minute. Just because someone said that in a report doesn't make it true. We still believe in the vandal scenario. I mean, that would have been just so much fun to see Trump bouncing off the walls going, who am I going to fire today? Is it because Burnham slipped the knot on this, but as I understand it, it's, an analysis his agency did, his department did on the pool. Bottom line is, I don't think anybody loses their job over the Watergate. Get it? But at the end of the day, it's kind of an embarrassing day for Trump. And look, we're all talking about this stuff as if it matters to voters. Every single day, Trump's talking about stuff like this, helipads, ballrooms, or the war in Iran. He is losing votes for Republicans on the ballot in November. And so, it's another good day for Democrats when you have a day like yesterday.
Wow. Well, Jeannie, I can see you smiling from here. Judge Jeanine's office pointed to documents from the Interior Department that, quote, significantly undermine, unquote, the evidence that was the basis for charging a former Olympian. I think he ought to be able to get a lifetime of canoeing in the reflecting pool after all of this. You've talked about it the way Rick just did, though, Jeannie. The fact that I'm talking about it is the problem, right? If you're walking up on an election, this is the biggest distraction there is, and it's coming from the White House.
It is coming from the White House. I mean, it is coming for the president. That's why we are talking about it, and you must talk about it, because we have a president who, as you know, the economy is slowing down. People are saying words like stagflation. We are in war. He has an election in a few months. He is obsessing about the aesthetics of Washington, D.C., and threatening to fire prosecutors who are telling the truth to federal judges. That's Donald Trump.
The article suggests that maybe a pool liner isn't exactly what the reflecting pool needs. Rick and Jeannie will be back in our second hour. Great to have both of you with us. We'll have more on Watergate, Rick, when we learn more. Hour 2 of Balance of Power straight ahead.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Markets rally on the president's words, but nothing has actually changed in Iran yet. Welcome to the Tuesday edition as President Trump gives Iran what he calls one more chance before decapitation. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, it's something. The problem is that he's turned back on threats, just like this time. now 13 times, according to a count in the New York Post.
Yeah.
How many more do you get?
Been a dozen last chances for Iran, which raises the question why Iran would believe this current chance is really the last one. All that said, there are signals from multiple parties that there could potentially be a deal, at least on the Strait of Hormuz in the offing. The Treasury Secretary, Scott Bessent, suggested as much in an interview earlier. And Qatar is also sending some similar signals. That's as Bloomberg is reporting that Iran is actually considering letting Europe play a role in demining the strait.
How about that? Which is something that the president has floated before as well. So the markets are taking the president at his word. As I mentioned, you've got crude oil with a 7 handle today. Stocks are surging. In fact, we could be talking about record numbers by the close.
Yeah, the S&P closed within an inch of a fresh record yesterday, and it could very well ink a new high today. All of that, as Joe pointed out, as we're seeing Brent crude below $80 a barrel, mostly on the geopolitical narrative. We have to talk about domestic politics today as well, though, because there's primaries happening in a number of states, and perhaps most crucially in Michigan, where the Democratic Senate primary is going to be a big indicator of what party or what direction the party is heading in, not just in this year, 2026, but beyond.
Yeah, being framed as a referendum for the party itself. I don't know if that's overdoing it a little bit when you've got one race, but we start connecting the dots around the country when we've seen progressive Democrats or even Democratic socialists win these races. This is going to be the real hot one, and Democrats need to win Michigan if they're going to take the Senate. So we'll explore this a little bit later on this hour, too.
Yep, we'll be getting into that with our political panel. But first, we get into these markets, as we always do. We turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Chomping at the bit here. I got a lot of news, a lot of excitement. Here's what's going on with the Dow Industrials. They are now up by 1,000 points. Best level of the day on the Dow. Ripping higher there. Technical term up by 2% on the industrials. Yes, a record. Yes, above 54,000. 54,187 right now on the Dow Jones Industrial Average. Big day for the Dow. The S&P 7731. Yeah, that's a gain of 130 points. Right now up by 1.7%. Record on the S&P. NASDAQ still has a way to go. The NASDAQ Composite Index up 2.3%. The NASDAQ 100 Index, again, best level of the day, up right now by 3%. The Bloomberg Mag 7 Index up 0.6%. The SOX, big story there, up 6.6%. AMD after the close of trading today, along with SpaceX. Shares of Advanced Micro Devices, they are up by 8.2%. Rally in semis. SpaceX, by the way, ahead of earnings, up by 6.2%. 121 where we stand on SpaceX. The IPO price, of course, 135 last month. Right now, we have got the 2-year yielding 4.19%, the 10-year 4.62%, the 30-year 5.18%. Gold at $4,097 the ounce, up by 1.1%. West Texas Intermediate crude just above 67 a barrel. Right now, we've got WTI down 5.3%. Barrel of Brent 79.55, drop there of 5%. So oil slipping as optimism grows that the U.S. and Iran are moving closer to a deal to reopen the vital Strait of Hormuz checkpoint. Right now, we've got oil majors, the super majors. They are trading lower. This after President Trump blasted ExxonMobil and Chevron for high gasoline prices. ExxonMobil down 0.4%. Chevron down 1%. ConocoPhillips also lower, along with the price of crude. ConocoPhillips down by 0.7%. But again, Dow Industrials now up 993 points, a record there, up 1.9%. S&P up by 1.7%. I'm Charlie Pellet, Joe and Kaylee. Lots going on. And that is a Bloomberg Business Flash.
Lots going on indeed, and a great snapshot of it from Charlie Pellet. Tech stocks ripping, as Charlie mentioned, and interesting to see energy stocks once again under pressure today as we see oil prices going lower. Perhaps that's going to mean fewer profits for these energy companies. This is something we know President Trump cares a lot about as he accused these companies essentially of profiteering once again in the Oval Office yesterday. And we'll be talking about that in a moment with the president of the American Petroleum Institute, Mike Summers. But first, we have to talk about what else the president said in the Oval Office as he explained his once again calling off of more intense strikes on Iran, describing the current chance as being the last one for Tehran.
This is the last chance. This is the last chance for them to sign a good document. I don't know. I think we're going to maybe get something, but I want to give them every last chance before decapitation. It's very tough to do what we have planned, still planned. We'll see what happens.
We'll see what happens again. Not the first time we've heard about a last chance, as the New York Post actually went through transcripts and Truth Social posts to learn there is in fact a number on this. He's done it now 13 times, giving Iran one last chance. In this case, he says, before decapitation. We've seen this walk up only to step back moment, and there's a big question about whether this will in fact be the last one. As Kaylee mentioned, there are some good signs as Qatar signals progress on a deal, and it's something that we want to discuss with Jordan Fabian, who is our White House and politics team leader here in Washington, D.C., having covered the administration for many years. Jordan, it's great to see you. Are we any closer to a deal, and how many times does the president get to do this?
Well, it appears as many times as he'd like, but another good question is, what is a deal? If it's simply to restore traffic in the Strait of Hormuz, maybe we're back to where we were pre-war, but that leaves all the other war objectives that the president had by the wayside as far as preventing Iran from acquiring a nuclear weapon. Yes, they've degraded their military capabilities, but they've shown they still have the strength to hit targets throughout the region and threaten their neighbors. And so you might ask at the end of this, if it's just a deal to get traffic going in Hormuz, what was all this for? Not to mention the fact that Iran has learned that it has a very powerful lever in control of the strait, and I have some real questions about whether they're actually going to restore true freedom of navigation, given all we just went through.
Yeah, well, of course, the original memorandum of understanding was just about immediately reopening the Strait of Hormuz and punting talks on more difficult issues like Iran's nuclear ambitions to a later date. Would we expect, Jordan, if there is to be a deal, that it would be in MOU form once again, or have they effectively decided that that didn't work the first go-around?
I don't know if we have that level of detail, and it's not even clear which parties are talking right now. We know that Iran and Oman are talking. We don't know to the extent to which the U.S. is involved beyond Jared Kushner and Steve Witkoff just texting or on the phone with intermediaries. So, again, a deal might just be the prelude to more talks. But again, the MOU approach, as you pointed out, Kaylee, was not effective. It left the strait too ambiguous, which let Iran come back and hit shipping. It didn't address the key questions for Trump. And so, Trump says they're duplicitous negotiators. Like, how can you make a deal with people who are duplicitous negotiators?
We're seeing oil prices pull back today on hopes for something to happen here, and it's not the first time we've seen that, although it's been a while since we've been in the 70s for crude oil. Gas prices are still hovering above $4 a gallon, though, and that kind of remains its own story in its own market. You were covering the Biden administration. I remember distinctly talking to you when prices topped $5 a gallon. How different is the rhetoric that we're hearing from this administration to the way Biden messaged around what's a real problem for voters with a few months to the election?
It's actually strikingly similar, Joe, for as many rips as Trump likes to take at Biden. What they're saying as far as the gasoline prices is quite similar. A lot of jawboning against the super majors in the oil industry, launching of investigations or probes into supposed price gouging in the retail gasoline market. I remember Biden said something along the lines in 2022 of, the big oil companies are making more money than God. And you had Trump say something pretty similar yesterday in the Oval Office, saying that they're making way too much profit and they need to give money back to shareholders. The irony for Trump is that, with Biden, that was Russia's invasion of Ukraine that triggered the price spike. This was Trump's own actions that triggered the most recent price spike. And so there's the difference for you.
All right, Jordan Fabian, leading our White House and politics team here at Bloomberg. Thank you so much. It's like Jordan knew exactly where we were planning to go next.
Well,
as he talks about what we heard from the president in the Oval Office yesterday, calling out specific oil majors for their profits. Listen.
They're making too much money based on a shortage. They're making too much money. I don't like it. Chevron, too much money. ExxonMobil, too much money. When you look at one company where they made 12 times what they made the year before, they're going to give some of that back to the public. And they better cut the retail price, the consumer price.
So to Jordan's point, sounds like something we've heard from prior administrations as well.
Well, yeah, that's true. And it's kind of amazing since we hear so much about the president's relationship with the oil industry. Well, we may not be seeing a lot of additional drilling. It's kind of a vibes thing that there's just more positive energy in the energy space when it comes to this administration. But stopping down to call them out, what are we looking at for a gallon of gas today, Kaylee? $4 according to AAA and 8 cents nationally. And we wanted to talk this out with Mike Summers. I'm guessing he was listening to this as well. Mike, of course, runs the American Petroleum Institute, where he's president and CEO, speaking for the industry. It's great to see you, Mike.
Great to be
and
with
welcome back to Bloomberg. Is this an argument within the family? How would you describe the relationship between this administration and your industry? And what's he looking for here?
Well, first of all, I give the president a lot of credit. His energy dominance agenda has really made the difference. We've opened up the Gulf of America again for production. We have more production on federal lands and, of course, in federal waters. Their regulatory agenda has been very positive for the American oil and gas industry. There's no question. This president has been focused on more production here in the United States. And that has provided a buffer during this time when the Strait of Hormuz has been effectively closed. So I give him a lot of credit for his energy dominance agenda. At the same time, we know that this industry is a price taker, not a price maker. And because the Strait of Hormuz has been shut down for basically 5 months, we're of course going to be dealing with higher prices at the pump.
So, in other words, is higher profit not a choice? Or could they make a different choice?
Well, of course. This is an industry, as I said, we are price takers, not price makers. And as a consequence of the Strait of Hormuz, which has been 20 million barrels of oil a day, not making it through the Strait, you're going to have to deal with higher prices. I'll remind you, though, in 2020, I was actually in a meeting with the president in the cabinet room where this industry was actually dealing with low prices, in fact, negative $32 prices. And that was a time when this industry was making virtually zero earnings. So this is a commodity business. Prices go up, prices go down. We have to deal with the price swings. And on average, this industry actually makes fewer earnings than other large industries like tech, like finance. So this is an industry that we do have to deal with those highs and lows. And high prices now mean investments for future production. One example of that is during the 2008-2012 period when we were dealing with significant earnings at that point too. That was allowed us to finance what eventually became the shale revolution, the fracking revolution, which allowed us today now produce about 14 million barrels of oil every single day.
Surely the president understands everything we're talking about here, right? I mean, he knows that there's a refining bottleneck in this country, that there's a disconnect. We talk about crack spreads between the price of crude and what we pay at the pump, that distilled products are their own story. Is he just sounding the populist alarm in an election season? I feel your pain.
Well, I do think that everyone is concerned about high prices at the pump for American consumers and high electricity prices.
Calling you guys out by name, though, ExxonMobil and Chevron.
Absolutely. But we understand that, we're in an election year and we're going to have to deal with that kind of incoming. But at the same time, American consumers have to understand that during this time of high earnings, this is the time when we invest for future production going forward.
Well, as Joe's talking about the political considerations here, that arguably is why we've seen the president float things like a gas tax holiday, for example. Do you fear that he could even go so far if we see prices permanently above $4 a gallon, for example, to suggest that maybe there should be export bans put in place in this country? What would that do?
Well, we would also be very concerned about any kind of an export ban. I will say that there are a lot of policies that they put in place that have provided some kind of a buffer. For example, the Jones Act waiver that they put into place. There are other things they could do. There are changes that they could make to the renewable fuels standard right now that are providing a higher price at the pump that we don't need to sustain right now, given the kind of challenges that we have. But we would be concerned about an export ban, primarily because there is a mismatch between the kind of production that we have in the United States. This WTI that we produce here in the United States isn't necessarily refined here in the United States. So we import a lot of product from overseas, and then we export a lot of product from the United States to be refined elsewhere. That's actually to the benefit of American consumers, because we buy that lower quality crude from other countries like Canada and then sell it to American consumers at a discount. So any kind of an export ban, I think, would be a great concern to this industry.
We've talked about the refining bottlenecks in this country and the need to maintain these refineries. At some point, you need to take them down and fix the hardware in a country that hasn't built a refinery, I believe, since the 1970s. Is this the part that needs to be fixed?
Well, it's one of the reasons why we're so focused on getting legislative permitting reform done, because it is very hard to build anything in this country, particularly a new oil refinery. You're exactly right. We haven't built a refinery in this country since 1976. And if you think about the market that we were in 1976 compared to the one that we're in today, it's a completely different story. We were importing oil at that point. Now we're exporting oil. It doesn't make any sense. We should be building more refineries in this country because that's the real bottleneck right now. Even when you're dealing with lower prices from a crude perspective, you don't have the refining capacity that you need to turn it into the products that we use on a daily basis, like gasoline and diesel.
What are you hearing about permitting reform on Capitol Hill right now? Or I guess maybe a better question is, are you hearing about it? Because we often don't.
This should be such a layup for the United States Congress right now. I believe it should be a political imperative for them. You see prices going up, particularly on the electricity side, because of more demand on the electrical grid, because of data centers and the advent of artificial intelligence. Unfortunately, lawmakers just aren't focused on it because we're in an election year. I think that this should have been the first thing on the agenda this Congress. Republicans and Democrats should be able to agree because all sides benefit, whether it's alternative energies like wind and solar, or pipelines that would benefit oil and natural gas. But unfortunately, I think they're a little bit too focused on what's coming in November, and everybody wants to wait until they figure out who's going to win to decide who's going to benefit from permitting reform.
There's great hope in the markets today. We see crude oil in the 70s for the first time in some time is encouraging. How long would we need to stay at these levels or move lower to see a significant change in gas prices?
Here's the bottom line. Unfortunately, we're still not getting enough product through the Strait of Hormuz. Even at the highest ends, they're saying that we're getting only about 7 million barrels of oil through the Strait of Hormuz at this point. Because of new pipeline capacity, you only need to get that level up to about 11 million barrels a day through the Strait because of a lot of that product now flowing through pipelines. That is a great news story for the Middle East, and I think over time, we need to continue to build that infrastructure so that we can avoid the Strait over time. But right now, we need to get that up to about 11 million barrels a day on a sustained basis if we're going to get back to where we need to be, back to where we were prior to this conflict beginning.
Well, so should this administration also tap the rest of the SPR drawdown that they said they would complete? I believe there's 39 million barrels left in that program.
So there are about 39 million barrels left in that program. We still have product in the Strategic Petroleum Reserve. That was something that they negotiated at the beginning of this. That expires at the end of August. They need to think about where they are and start considering whether they're going to do another release or another exchange, which is how this program is developed. I don't know the answer to that yet. I don't think we're going to know until we know the results of whether this potential deal in the Middle East comes through. We've seen this before, of course. I do think that has provided an important relief valve for American consumers, those targeted SPR releases, not just in the United States, but throughout the world. So there are a lot of these policies. Again, we're going to have to extend the Jones Act waivers as well. That has provided an important relief valve for American consumers also.
All right. Mike Summers, the CEO and president of the American Petroleum Institute, here with us in our Washington, D.C. studio. We still have more ahead here on Balance of Power. We'll assemble our political panel next on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks continuing to push higher with both the Dow Jones Industrial Average and the S&P 500 Index trading at a record right now, looking at a 1,000-point jump on the Dow. Right now, we're at 54,175. That is a gain of 1.9%. The S&P 500 Index also at a record up 134, trading above 7,700. Will we close above that number? Right now, up by 1.8%. NASDAQ and the NASDAQ 100 Index both ripping higher. No record, but we've got the NASDAQ 100 Index up now by 3.1%. The NASDAQ Composite Index up by 2.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, no strangers to big swings, both to the upside and the downside. Right now, the SOX is up by 6.5%. Among the names moving higher there, Advanced Micro Devices up 8.3%. AMD reports after the close of trading. The VIX right around 16 with a 2-year currently yielding 4.19%, the 10-year 4.62%, and the 30-year 5.19%. Gold at $4,099 the ounce. Spot gold up 1.1%. Crude, major story, it is selling off. That's giving a lift to stocks. Right now, WTI $75.90 a barrel, down 5.5%. Barrel of Brent $79.36, down 5.2%. Key because Brent crude back below $80 a barrel. Earnings news, Merck has boosted its 2026 sales outlook after strong demand for newer drugs. Shares of Merck, they are advancing by 0.7%. Also out with earnings, another drug maker, Pfizer, up now by 1.6%. Chipotle Mexican Grill shares, they are plunging now by 7.2%. Chipotle removed jalapenos from multiple stores in Minnesota after learning the peppers may be linked to a salmonella outbreak in the state. Again, in the state, Chipotle Mexican Grill down now by 7.1%. After the close of trading, we'll be hearing from both AMD and SpaceX. SpaceX ahead of earnings, up now by 7.1%. Recapping a 988-point jump right now for the Dow, up 1.9%. S&P also at a record, up by 1.8%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, I guess if it's not the lettuce, it's the jalapenos. Charlie will be back with more on the markets. About 20 minutes time. Powerful rally underway today, and we'll be following it straight through the close with much more to discuss. As Charlie mentioned, SpaceX, AMD on the late edition of Balance of Power. We'll unpack it all with Bloomberg's Ed Ludlow. That starts BOP, the late edition, at 5 p.m. Eastern Time. Happy primary day. This is something we haven't had a chance to get to with so much news coming out of the White House and the Congress. It is at last time to decide in states including Michigan, which is one of the most closely watched and most expensive Senate primaries in the country. $56 million spent to help Congresswoman Haley Stevens, the Democrat from Michigan, close the gap with Abdul El-Sayed, who in recent polls is outrunning the establishment choice for this primary by double digits. My old friend Ed O'Keefe, now with CBS News, went to Michigan to talk with both of them and asked them if they win, who should be in and who should be out of the Democratic Party.
Anybody who wants to take on fascism, anybody who wants to get money out of politics, anybody who wants to fight for union rights, anybody who wants to make sure that people can live free with clean air and drink clean water, anybody who wants to guarantee health care, come on in, the water is fine.
I am very eager to say that this is about the future of my state, and anyone who's on board with the future of Michigan and our manufacturing economy and stopping members of Congress and presidents and vice presidents from trading stocks while in office, of ushering in kind of a new generation of prosperity for folks.
So let's get into this now with our political panel. As Bloomberg Politics contributors Rick Davis and Jeannie Shanzano join us. Rick, of course, Republican strategist and Stonecart Capital partner. Jeannie, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, as the Democrat, I'll come to you first because there's kind of a near-term and long-term way of looking at what's at stake in this race. In the near term, obviously, it's about who wins and who's going to take on Mike Rogers in November, how likely that person is to win and what that means for the balance of the Senate. Then there's the longer-term view as to what this signals in terms of a trajectory shift for the Democratic Party. So as a Democrat right now, how are you feeling about the near and long term?
Yeah, and I think that's a great way to frame it because, of course, in the short term, if al-Sayed does do what the polling suggests and wins this thing, he's got an uphill battle in the general election. Long term, this is a huge wake-up call in my mind, Kaylee, for the Democratic Party. You know, the Emerson poll that we've been talking about, which showed al-Sayed up, I think, by like 15 points, also showed something that I think was even more important: an enormous generational divide in support for these two candidates. Now, they're both in their early 40s. You know, they are around the same age. So it's not about the candidates, but people under the age of 50, by and large, support al-Sayed by double-digit numbers, and people over 60 more narrowly, but still double-digit, support Stevens. And I think what the Democratic Party has to reckon with going forward, the brand is in a tank. They have an insurgency coming from their left that they've been unable to control. This has been going on since well before 2016, and they've got to grapple with that. And if they're just going to offer the same old, and for many people, Stevens is offering, I'll win in the general, but not much else, then their candidates are going to lose. So they've got to take seriously what they're offering, and that this has more to do with just winning and getting the better of Donald Trump. It's got to do with a lot more about the party that goes back many, many years.
Rick, do you buy the narrative in the media, as somebody who's been around political campaigns for a long time, that this is a fight for the soul of the Democratic Party? And if you're Mike Rogers, are you actually hoping that al-Sayed wins?
Yeah, I think this is actually more important story than all the previous sort of liberal Democratic congressional districts fighting over, you know, whether or not a socialist is going to beat a mainstream Democrat. Those things really don't matter to the Democratic Party. Michigan's a big deal. Michigan's a swing state. You got to win Michigan. They've been losing Michigan lately, the Democrats, and so they got to take this incredibly seriously. I don't know about the soul. I don't know what the soul of the Democratic Party is. But, you know, Abdul al-Sayed is like blue MAGA. I mean, like, he's the real deal. You can actually find a lot of parallels with him and the MAGA contingent in Michigan. It's why Donald Trump has done so well. Some of these same issues apply to the MAGA base that have applied to al-Sayed's base. And so, yeah, Democrats have to sort of get right with this. And as Jeannie says, if polls are correct, he swings into election as the Democratic nominee. And look, I love Mike Rogers. I want Mike Rogers to be a senator, and I think he'd be a really good one. His strength is foreign policy, national security. Not something you want to talk about in Michigan right now. I mean, the war is incredibly unpopular. And he lost to Alyssa Slotkin by a couple points in a good election year for Republicans. You imagine it's +5 minimum right now for Democrats, and he's running the same campaign he ran last time. So I don't know. I mean, I don't know what the electability is of an Abdul al-Sayed, but he's got a lot of energy. He's going to roll over the establishment if all the polling is correct. I would say Michigan polling is notoriously bad, so we can't get too excited about that. But look, this is worth thinking about. Michigan is a key state for 28, and Democrats, regardless of what happens, have got to start paying attention to it.
Well, and as we talk about it being potentially a loss for the establishment if he would win, Jeannie, he also frames it as about not being just the establishment, but about the idea of money in politics. He has frequently brought up the contributions that Haley Stevens' campaign has received from AIPAC and the lobby for Israeli interests, and as well as other kind of corporate aspects, including a utility in Michigan. But for AIPAC specifically, I wonder what signal this sends about their potential waning power or the reverse influence it has if they spend more money on a candidate that it actually could backfire.
Yeah, and this is where I think when Rick talks about how al-Sayed is to a certain extent, you know, the left's definition or reflection of MAGA, you see that. Not only is he weightlifting Kaylee in his basement, and we are seeing things like that, and speaking truth to power, but he is also saying, I don't need corrupt, as he calls it, and I'm not saying AIPAC's money is corrupt, but I don't need outside corrupt money to win. Look at the millions that AIPAC and outsiders have dumped into her campaign. Earned media is not going to win these things anymore. I can do this by talking to left-wing podcasters like Piker and others. So he is sort of pulling a Donald Trump, if you will. I can spend a lot less, I cannot be beholden to these big interests, and I can win. If that proves to be the case, and I agree with Rick, these, particularly Michigan, but primary polling is really tough to do. But if it proves to be the case that he wins, I think you're going to have a reckoning in the Democratic Party, even more so than we've seen already, about how they connect with and how they utilize AIPAC going forward. We already saw that vote on Israel not that long ago in the House, with a number of Democrats voting against Israel. I think they may be looking at this and saying all of that money did nothing. And in fact, not only didn't it just even the field, it hurt her, and that may cause them to reconsider this money. So a lot on sort of at stake, not just for AIPAC, and not just for the establishment rather, but AIPAC as well, and this earned media money flowing in.
We should note just a headline crossing the terminal. Jay Clayton has been sworn in as the nation's new director of national intelligence. They did not open the swearing in to reporters, though I'm sure we'll be seeing an image shortly. Bill Pulte no longer DNI. I want to ask you both about this Reuters Ipsos poll today. Rick, you talked about the headwinds facing Mike Rogers and why this might not be the friendliest cycle for him. And we find that Americans are choosing Democrats over Republicans as better stewards of the economy for the first time in almost a decade. It's been since 2017. In this poll, 37% of registered voters said the Democratic Party has a better approach to the economy compared with 36 who picked the Republican Party. It's only a point and within a margin. But the fact is, it's the first time we've seen it in so many years. 27% said they were not sure. How does that play nationally? Do you pay attention to a number that close?
Yeah, I try not to pay too much attention to national politics when you've got, an election cycle that's really dictated by state politics. But Michigan, since we're talking about it, is a really good example. Economic drivers there are huge, and they're very grumpy and upset with this administration. I mean, Donald Trump's approval rating in the state of Michigan is in the low 30s. I mean, it's 5 points below most polls nationally. And so it does get worse when you start looking into a microcosm of some of these important states like Michigan. It should wake everybody up that the first time we're seeing a national poll that indicates that Democrats will manage the economy better. But when you look at the rhetoric from the White House, and I think a lot of its communications we never talk about how the economy that we have today is impacting the lives of voters. And we like to talk about the markets, but that's not the same.
It's not the same, Rick. You're right. And we'll have a lot more with our panel on the results of this contest tomorrow. Rick Davis and Jeannie Shanzano, thank you both for great analysis as always. We're going to turn back to the war with Iran. Our conversation with Suzanne Maloney coming up next from Brookings, only on Bloomberg.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. You don't see days like this that often. We are looking at a major move higher for the U.S. equity market right now. This on peace hopes. Oil is falling. Stocks are surging. We're looking at records on the Dow, records on the S&P 500 index, right to the numbers here. We got fast-moving markets to the upside. S&P right now at 77.43, up 142 points, up 1.9%. Dow Industrials up 1,037 points, now up by 2%. Dow Industrials, as I mentioned, up by 1.9% now. 54,214. The big question, we're going to close above 54K today. NASDAQ up 676 points, up 2.6%. The NASDAQ 100 index is up 950 points for that index, an advance of 3.3%. The Bloomberg Mag 7 index now up by almost 1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 6.8%. AMD shares surging 8.8%. Advanced Micro Devices after the bell today. SpaceX will also be reporting after the close of trading. SpaceX up 8.2%. The VIX below 17 now. We've got the 2-year yielding 4.19%. The 10-year 4.62%. The 30-year 5.19%. Gold, $4,094 the ounce, up by 1%. WTI crude, $75.67 a barrel, down 5.8%. Brent crude, $79.20, down 5.4%, falling back below $80 a barrel. Earnings news, shares of Palantir up 29.5% after last night's report. This morning we heard from Caterpillar. Caterpillar absolutely crushing Wall Street expectations. Shares of the heavy equipment maker up by 6.8%. DuPont, the chemical maker, raising its full-year outlook for the second time this year. Shares of DuPont, however, down by 0.6%. And again, bears repeating after the close of trading. Advanced Micro Devices, SpaceX, we're going to be all over those numbers as they break. Joe and Kaylee, that is a Bloomberg Business Flash.
We will indeed. Charlie Pellet, thank you very much. As Charlie noted, we are seeing SpaceX rallying ahead of its earnings today, up 8%. That brings it to about $124 a share. So sure, that's better than yesterday's close, but we have to keep in mind that the IPO price was $135 a share. After trading started, it went as high as $225. So 124 on a relative basis is obviously significantly lower. And we've seen about $1 trillion worth of market value erased since this company went public. I guess it raises the question, Joe, of whether that means a lower bar for the earnings results or potentially a high bar to try and get the rally going again.
Well, there's also something that's going to happen 2 days later, and that's the expiration of the first major lockup here that will dump something like 900 million shares on the market, if my numbers are correct. Ed will let me know. That makes one wonder if this earnings report is useful at all. Ed Ludlow covers this for a living as the host of Bloomberg Tech. He joins us right now, live from San Francisco, ahead of another busy night. Ed, I know we'll be talking a little bit later after the close, but what's your thought on this? Does this report matter, knowing what's coming Thursday?
You know, it's the big event of the summer for financial markets is how it's being framed. You know, it's the first earnings, right? Just in really simple terms, it's the first earnings report, the first call since SpaceX's IPO. And the problem with all of the information that SpaceX gave in the documents just before it went public was it was either completely backward looking. So they told us how much money they'd spent, for example, last year, the year before, the first 3 months of this year, but gave us no indication of the future. So this is the first chance for people to ask about it. You know, how much money are they going to have to spend this year and next year to reach these sort of out of this world ambitions? How are their different businesses doing in the here and now? And take into account that everything that this IPO was based on were businesses that don't exist yet or are going to come far into the future.
Well, and therein lies what a lot of people had questions about at the onset when they saw that prospectus and how much seemed to be reliant on hopes and dreams. And it's a little bit more tangible for AMD, which is also reporting after the bell. What are we expecting there?
Yeah, look, AMD is a really simple story. They are a distant number 2 player in the market for GPUs or chips that either train AI models or run AI models. But they would tell you they have a technology advantage, that at the server level, their chips in the form of a server in aggregate really perform, particularly on running AI models, what we call inference. And so each quarter that goes by, you measure the growth in AMD's sales and the deployment of its technology around the world and try and calculate if they're bridging the gap to NVIDIA, which, as we've said for a long time, has a near technical monopoly on the market for that compute in AI.
Okay, so Dummy in Washington asking a question here, Ed.
No.
Do CPUs matter more than GPUs at this point? And if you're looking at the market here in an NVIDIA versus an AMD versus an Intel, who's got the better story?
Yeah, so a CPU can just basically run a single process. And for a really long time, we've focused on GPUs because they are the brain that runs multiple computations at once to either train an AI model or run it. But there are lots of processes involved in using AI that require CPUs, and AMD has a very good CPU product. Intel also has a very good CPU product. And basically the market's caught up with it themselves. They're like, okay, if you're going to build lots of data centers that have lots of rows of servers, aren't you also just going to need a proportionate number of CPUs? The answer is yes. Yes, you do. And AMD will have a story around that for sure. It's a point of differentiation, or has been, with NVIDIA. The problem is NVIDIA are like, hey, shouldn't we do CPUs too? And now they do. And so they've continued to try and pull ahead in that respect as well.
All right. The host of Bloomberg Tech, Ed Ludlow, will be checking back in with Ed, as Joe said, later this afternoon to break down these results. Ed, thank you very much. And of course, the results from AMD and SpaceX could very well send a signal to the wider market and determine the direction of travel in the trading day tomorrow. In the trading day today, obviously, that direction by and large is up, as we see stocks rallying in part because bond yields and oil prices are moving lower. It does seem like this is a market putting a lot of faith into the notion that there could be a deal in the offing between the U.S. and Iran, as of course President Trump in the Oval Office yesterday suggested he wanted to give Iran one last chance to negotiate before decapitation. So how real is this, and are the markets thinking about this the right way? That's what we pose now to Suzanne Maloney, Vice President and Director for Foreign Policy at the Brookings Institution, who's joining us now on Bloomberg TV and radio. Suzanne, great to have you on the program. Do you believe that this is really Iran's last chance? Should they?
I think the Iranians want a deal because it will be good for their own economy, because they're suffering under the weight of U.S. strikes over the course of the past 5 months, and as well as the embargo that the United States has imposed through its blockade of the Persian Gulf. So they want an end to this, but they're not prepared to relinquish what they believe is the major strategic leverage they gained from this war, and that is control of the Strait of Hormuz. We are, I think, at this point close to an agreement that would echo some of the language in the MOU that was signed last month, but perhaps with a bit more specificity, and would perhaps provide a little bit more longevity to some kind of an end to the war.
Shocking report, Suzanne, by Reuters this morning. The U.S. Army has used up, quote, virtually all, unquote, of its long-range missiles during the conflict with Iran. Are we at the point now where our munitions levels are dictating strategic decisions?
Yes, I believe that we are, and I actually think we've been at that point for quite some time. I think that it was the concern about both interceptors and precision strike missiles and ATACMS that was one of the major factors in driving the Trump administration to agree to the memorandum of understanding with Iran last month. And it is a major, I think, point of hesitation for the administration, particularly from the Department of War, whose leaders have articulated a real concern about returning to full-scale war with Iran simply because of the readiness implications that it leaves for the United States military, not just with respect to the Middle East, but with respect to other theaters as well.
Well, so if Iran understands this, if this is reported in media and they hear about it and assume that it is true, why would they be negotiating with the U.S. right now? Does it not signal that actually they could wait us out?
I think they could wait us out, but it would come at a high cost to their own economy. The blockade is having its impact. The Iranians would like to get back to trying to rebuild what was damaged, and there was considerable damage to Iran's civilian infrastructure as well as its military infrastructure during the war. They, have to consolidate a regime which already lost a significant number of players, and they know that their own people were seriously dissatisfied before the war began with the state of the economy. So there are some real pressures, but I think the Iranians are more resilient than we gave them credit for, and they are prepared to kind of deploy that resilience as leverage in the negotiations. It sounds as though they're getting most of what they wanted out of the terms that we're hearing about in the media at this point.
How many times will the president be taken seriously in his threats if he continues to pull them back, either by request of Iran's neighbors or in hopes of a deal? The New York Post this morning writing that it is now 13 times. This is the 13th final ultimatum that he has delivered. What do the Iranians think of that?
Well, Joe, it is a bit like a theatrical performance at this point. I think the Iranians have taken the measure of President Trump. They've assessed both the vulnerability of the U.S. economy and the wider global economy to a long-term closure of the Strait of Hormuz, as well as the political consequences for the president if there were to be a disruption that impacted oil prices and the wider economy in advance of the midterm elections this fall. So, they appreciate that his bluster is just that, but I think there's always the chance that he does deliver. And they've now experienced two wars, the June 12-day war in 2025 and this longer war and more ambitious war where the Iranians appear to have survived, but they've got a lot of work to do if they want to hang on to power.
Suzanne, I wonder what you make of Bloomberg's reporting today that Iran is actively considering allowing European nations to come in and help with the demining effort in the Strait of Hormuz. Is that surprising to you, or is it in keeping with what you're suggesting, where Iran does want to see this a deal happen in some way because of the pressure that they are experiencing?
Well, it is a shift in the position that the Iranians have articulated over the course of recent weeks and months. They have suggested that only they should be permitted to do the demining because only they know where the mines might be. I think, the Iranians are probably looking toward the future and developing some kind of an opening with the Europeans is to their advantage. We'll see if they actually make good on this and whether they actually do let the European companies and countries to come in and participate in this demining, because the mines are just one of the many forms of control that Iran has been asserting over the strait. And once the entire strait is free, it's more likely that the rest of the world will seek alternative routes that are outside of Iran's control.
Suzanne, do you believe either side's version when it comes to the status of negotiations?
I think it's very hard to take seriously what we've been hearing because the president has his own incentives to sort of inflate what he's hearing from the Iranians. He is either very, very negative or he's overwhelmingly positive, and neither one of those extremes sounds entirely persuasive to me. But the reporting at this point does seem to suggest, some of the public statements by Qatari mediators and others, that they feel that they're getting close to some kind of an arrangement. I think it's inevitable that we'll be back in this position once again, that there will be some breakdown in terms of the understanding or the implementation of any agreement between the United States and Iran. I think it's we're likely to see, instability and occasional flare-ups of violence in the Gulf more widely, and especially around the Strait of Hormuz for the weeks and months to come. This is not a one-and-done solution to anything.
So potentially still status quo, or at least volatility come midterm election day in November.
I think that's absolutely to be expected. This volatility is just going to be a function of the Persian Gulf economy for the foreseeable future. It will continue to drive investments in alternative routes that would avoid the Strait of Hormuz and other types of arrangements that enable greater resilience on the part of the Gulf states. They have, experienced a tremendous disruption over the course of the past 5+ months. And they're in a position, I think, to ensure that they don't see that happen again.
She's the Vice President Director for Foreign Policy at Brookings Institution, Suzanne Maloney. It's great to have you back, Suzanne. Thank you for joining us on Bloomberg TV and radio. It's remarkable, Kaylee, every time we have asked someone that question, will this still be underway on November 3rd? We've got the same answer.
That's yes.
Yes, which doesn't necessarily spell good news for the incumbents in power in Washington and the Republican Party specifically, although Republicans may be hoping they get a little bit more good news in Michigan tonight in the form of getting their preferred candidate to go up against Mike Rogers. Abdul El-Sayed, of course, favored over Haley Stevens, and we'll be discussing more on that on the late edition.
We shall, although Rick Davis pointing to the energy out there.
Yeah.
We'll see who's a more successful general election candidate. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, the day has come. SpaceX, yes, finally reporting after the close. I mean, it only went public in June, right? It's not such a long time ago. And
but
yet,
it's fallen a lot.
It has fallen a lot. I think about 40% from its IPO price. Remember, it was just those first couple of days where we really saw it move higher, and then it's pulled back, but it's rallying today.
It's rallying today ahead of those numbers. We expect those
results. We can't call it earnings yet.
No, because
results. Expect the numbers.
Good
to
clarification.
Cross. Look at that, down 22% from its IPO.
Up 9% today.
Down 40% from the all-time highs earlier this year.
We are just full of numbers because when it comes to SpaceX, you got to look at all the numbers, right? And that's exactly what investors are going to be looking for on this quarterly update. It's first as a public company. So lots of questions. We're going to dig into this when it comes to SpaceX earnings and its businesses, what to watch out for. This is happening on a day when we got the S&P 500 intraday at a new record.
1.8% to the upside right now for the S&P 500. The NASDAQ Composite up 2.6%. The Dow up almost 1,000 points, Carol.
I know.
1.9%. We're going to have more from Charlie in just a minute.
Risk on trade in a big way. And as we said, SpaceX, we're going to be all over that. Everything from Starlink and XAI to rockets and more in just a moment. Also ahead this hour, speaking of rockets, have you seen shares of Wayfair?
Yeah, you pointed me in that direction. They are surging higher. This after the company gave a better than expected third quarter outlook. Kate Gulliver is going to join us in just a few minutes. She's the CFO over at Wayfair.
Stock is up more than 30% today, folks. Hey, plus we're going to get into the tax strategy for the rich that built the world's largest hedge fund. This is our most read story on the Bloomberg. It's also the Bloomberg Big Take.
Also on markets and the macro, Eric Friedman joining us, Chief Investment Officer over at Northern Trust Wealth Management. $534 billion in AUM. He's just stopping by in just a minute.
Needless to say, folks, we're going to be all over SpaceX today. So, reminder, we love when you guys send in questions. It's a new thing we've been doing here at Bloomberg Business Week Daily and throughout, really, our audio space and radio space. Submit questions to us. We'd love to hear from you. Just ask us when it comes to SpaceX earnings. Again, we're going to be really on it throughout the next 3 hours. And, of course, big time after the company reports after the closing bell.
Yeah, just to give you an idea of who we'll be talking to, then Max Chafkin is going to be joining us. We'll get Mandeep Singh on the program, Ed Ludlow, George Ferguson from our Bloomberg Intelligence team, Bailey Lipschultz, just a handful of the names who are joining us to talk SpaceX.
So to send us a question, just do it. Go to Bloomberg.com/Ask Radio, exclusively for Bloomberg.com subscribers and also for terminal clients. And then just listen to us, be part of our conversation. Again, just go to Bloomberg.com/Ask Radio and bring in all your questions. Love to hear. Also, Wayfair. We've got Kate Gulliver coming up in just a few minutes.
Well, the man who has all the answers is Charlie Pellet. He's standing by in the Bloomberg studio. He's got an update on today's trade. Hey, Charlie.
Well, hello there. Indeed, Wayfair shares right now, they are higher by 31.7%. That kind of a day. We got to get right to the numbers. Fast-moving markets to the upside. Stocks taking off like a rocket. S&P right now up 140, 77.41 where we stand. That is a gain of 1.8%. Dow Industrials up 994. That is a gain of 1.9%. Have been up more than 1,000. Both the Dow and the S&P on track for record closes. Got to keep it locked into Bloomberg to see how things shake out at 4 p.m. Wall Street time. NASDAQ up 2.6%. The NASDAQ 100 index doing a little bit better, up now by 3.3%. The SOX, the Philadelphia Stock Exchange, up now by 6.7%. Micron, a member of that index. And right now we also have AMD up by 8.5%. Advanced Micro Devices reporting after the close of trading. The Bloomberg Mag 7 index up 0.8%. And again, the SOX surging by 6.6%. Year 2-year, 4.19%. The 10-year, 4.62%. And spot gold up $33 the ounce, 4,087 now, up by about 0.8%. Yes, earnings, a key catalyst for today's move higher. Case in point, Palantir up by 30.1%, but also a move lower for crude. That's helping lift the stocks. WTI down 5.5%, 75.88 a barrel. Brent 79.38 barrel of Brent crude down by 5.2%. Coming up after the close of trading, as I mentioned, AMD up 8.6%. The countdown also underway for SpaceX earnings. Liftoff after the bell. SpaceX right now up by 8.6%. Lots going on. Carol and Tim, that is a Bloomberg Business Flash.
Well done, as always. Charlie Pellet. Hey, it does have the excitement of a rocket launch. I got to say, we've certainly been counting down since its IPO in June. SpaceX's first earnings, as we've been reporting, that release, as you say, a release, because we don't really expect any kind of earnings or profits there. Following its record initial public offering is one of the most anticipated reports of the summer for traders on Wall Street and beyond. Whether it'll give investors a reason to buy, though, this sinking stock is another matter, because it's down below the IPO price, I believe.
Yeah, down 40% from all-time highs reached just a few weeks ago. Reporting out on the SpaceX story in the company when it was private, and now that it's public, Bloomberg's Lauren Grush joins us. She's Bloomberg News global space reporter. She joins us from Austin, Texas. So, Lauren, what are the key segments or key metrics you're looking at in today's report?
Well, for me personally, I think I'm going to be keeping a big eye out on all of the things that they have, promised the IPO on, right? Launching their new Starlink satellites, those upgraded ones, and then eventually getting to those AI data center satellites, right? And all of that really hinges on Starship. I know I sound like a broken record whenever I come on these shows, but Starship, as they laid out in their prospectus, is key to their entire future. So updates on Starship, where they think they are going to be at the end of the year. Are there any technical setbacks that they think are going to hold them back from reaching all of those things that they want to achieve with Starship, such as full reusability? When can they start launching satellites on it in earnest? When can they start, doing all of that other research and development that they need to do in order to make it a deep space vehicle? That's what I will be keeping tabs on, at least for me personally.
Well, what's interesting too is we've been counting down, and I've got to say, even in the newsroom, we're all kind of excited about it. It's interesting. It's an interesting company. It's Elon Musk. Is Elon going to be on the call? Do we know?
I'm a novice just like everybody else here. This is my first earnings call as well. As you mentioned, I've only covered SpaceX as a private company, and a very notoriously private company at that. So I think we can assume that Elon will be on the call. He's usually on the call for the Tesla earnings. But it will be interesting to see who all is talking during this event today. But yeah, it's uncharted territory for me as well, and I'm actually looking forward to it because this is a really new moment for me.
Yeah, I agree with you. I think we all are looking. I think our Paul Sweeney actually came off air, and he said of our Bloomberg Intelligence and Bloomberg Surveillance team, and he just said, you guys are going to have an interesting and exciting afternoon, Tim.
I'm looking forward to it. I'm glad Lauren can give us a little preview. Gwen Shotwell, she for many years has been at the helm of this company as the president and COO of SpaceX. Certainly Elon Musk gets a lot of attention, but there are a fair number of folks say Gwen is the one who really makes things work at the company. Do we think we're going to hear from her?
I would imagine we would hear from her. As you mentioned, she's often referred to as the adult in the room sometimes, at least when I've heard people talk about her. So I wouldn't be surprised to hear her voice as well. And then probably also, from their investor relations team too, Brett Johnson. So, I would expect it. But again, like I said, I'm flying in blind like everybody else.
Yeah, it's kind of wild too, Lauren. The most bullish and bearish calls, $800 for Raymond James on SpaceX's stock price, $62 for Morningstar are wide, to say the least, as is the gap between Morgan Stanley's 300 and HSBC's 115. This is the point that even those that are bullish on this company, like the gap in terms of where the stock should be, there is such a long list. Is there one question, like if you had to whittle it down to one question, is it about the Starship rocket that has to be asked and answered on the call in some form or another?
Well, from my understanding, I think the slump that we've seen in the share price might not even really be coupled with, how the company is performing at all at the moment. I think most of the speculation has been that it's tied to this really weird and complicated lockup schedule that SpaceX had laid out for its employees. And I believe the first of those lockup expirations do occur after this earnings call. So I do wonder if it's mostly tied to that. I think also it might be tied to the uncertainty around the AI business. SpaceX is a relatively new AI company. I've never really even known it as an AI company. So, that I think is also causing some uncertainty for the stock price. So I can't even tell you if, all amazing results on Starship will actually have an impact, because because, they did have a relatively successful test flight back in July, and, look at it, the stock has still seemed to drop. So right now, I'm not sure it's actually coupled with the performance of the company, but again, maybe we'll see some kind of bump. We're already seeing a bump today. That might just be anticipation ahead of the earnings call. But again, it will be interesting to see, what kind of technical details they release, and if that does have a meaningful impact on the share price.
Lauren, you say Starship, relatively successful launch recently. What are we still waiting for? What benchmarks is SpaceX still waiting for to prove Starship's reliability?
Well, I think something that most people don't realize at the moment is that Starship has actually yet to achieve orbit. So on these test flights, they've all been suborbital. They have reached kind of near orbital speeds, but the Starship itself has actually not gone to orbit. Now, that is anticipated to happen on the next test flight. Additionally, because the vehicle performed so well on the last test, Elon has indicated that they are hoping to catch a Starship rocket after this next test flight. That has never been done before. So there's some big milestones coming up that could, really put the company ahead in terms of its goals. But again, this has been described as probably the most complicated vehicle ever created in terms of space flight. So there's probably quite a few challenges ahead in terms of unlocking all of that, all of those goals that they have for the vehicle.
Yep, space hard. Yep. Got it. Hey, listen, what about in terms of, just to kind of wrap it up here, XAI? Do we need to hear some stuff about this and their recent purchase and kind of what they're doing here and maybe how it all ties into CapEx, which is something we continue to watch with these companies?
Yeah, absolutely. I think one thing that caught a lot of people's attention during the IPO process was the just sheer amount of capital expenditure that SpaceX, is spending each year. Again, a lot of that was tied to the AI business, which was newly acquired. So it was kind of, retrofitted into the business itself. But it just goes to show just how much money AI requires, even compared to rockets, which, I naively thought would be the more expensive business, but it's just a capital intensive. The infrastructure involved with AI is proving to be extremely capital intensive. So I imagine the amount of cash burn will definitely be a focus, and how that compares to the amount of revenue that business is bringing in.
AI expensive, that's for sure. Hey, Lauren, we're going to be watching you and the team really closely and everything that you guys put out following the release. Thank you so much. Great setup. Lauren Grush, global space reporter at Bloomberg News. As we mentioned, shares of SpaceX, which are still trading near below their IPO price of $135 a share. Tim, they're still up about 9% in today's session.
Okay, certainly on the minds of investors, we know that. Let's see if our next guest is as focused on it as we are. Eric Friedman joins us, Chief Investment Officer over at Northern Trust Wealth Management. The firm has more than $500 billion in assets under management. He joins us from Chicago. SpaceX, I know you can't talk individual names, but your wealth management clients, do they care about this company's report?
Tim, they do, and thanks for having me on. I think the biggest factor that investors are focused on is just what are the layers of AI that still have some opportunities to perform, and we kind of stack rank them as really compute as number one, and probably memory would be second for us. So we don't think it's as easy as saying, hey, look, are you spending on artificial intelligence? We think it's more about, are you monetizing within this ecosystem? So what we hear from SpaceX, obviously what we heard last week from Meta, what we heard from Microsoft and others, that aggregates into what we think is still a glass half full bullish picture. But again, micro discussions on SpaceX and individual companies certainly aggregate to those larger conversations about what's still working and what is still, again, an opportunity to add value for client portfolios.
Eric, one thing I do wonder, do they have exposure to SpaceX? Do they want exposure to SpaceX?
Yeah, Carol, one of the great things, and this is meant to be an advertisement for Northern Trust, but we've been involved in the private markets. We're involved in public markets with companies like SpaceX and others. So again, we think the strategy for us is to be involved early when a lot of these companies are still in private form, and then obviously to participate selectively when they go public. So yeah, so clients certainly have levels of exposure. To your earlier point, the fact that we have so much index participation in all parts of AI certainly another lever that we're paying attention to. But it is certainly an area of focus for us as investors.
So beyond SpaceX, I'm always curious, Eric, you are investing for your clients, you're thinking about long-term wealth, but what is it that is so important? Has it been things like earnings, Fed policy, geopolitics, the U.S. war in Iran, the upcoming midterms? Is it about how to reduce taxes on your clients' investment gains? What is it that really kind of, you think about most?
Yeah, Carol, it's great framing. And again, you all do such a nice job of going through those variables, because it's been an eat your pasta sort of year, given the extent of things we're focused on for clients. So certainly tax and inflation, those are things that clients are very focused on. Again, thinking about strategies that can add value, again, not just to defer taxes, but again, to be thoughtful about tax loss harvesting. That's certainly not an opportunity of focus. We also think, again, the notion of inflation, we're 18 years, Carol and Tim, in an environment where we've had the 10-year Treasury below 5% in yield terms. That's a very long time. So clients are very focused on things like, hey, is there an issue here in terms of credit? And will there be some concerns if we do see that low interest rate environment go away? That does provide opportunities. One thing we're talking a lot to clients about right now is moving away from cash and into things like municipals. If you're in the tri-state area, like the two of you are, if you're in a higher tax state like California or Illinois, there are opportunities to pick up, in some cases, 275 to 300 basis points of incremental yield pickup once you factor in tax equivalent yields federally as well as in a state-specific basis. So with higher interest rates and also levels of focus for us in terms of saving clients, but also providing some carry, things like municipals offer, we think, an interesting opportunity to get involved here.
So muni is an opportunity for your clients. You mentioned that there is this low interest rate environment that we've been in for almost 20 years at this point. With concerns that rates could go higher, do you have a lot of cash on the sidelines in client portfolios right now?
Not much, Tim. In fact, one of the things that we've been talking a lot about is, our position within real estate has actually been slightly underweight. We're actually overweight infrastructure, which has really helped. But, all things are an AI trade right now. And so real estate has been an area where we've been a little underweight, which, again, we think is probably appropriate given what's going on in commercial. But that being said, there are some values that pop up. Where we would have more concern, Tim, would actually probably drive us to raise some cash is if we were to see, again, a 5 to 5.25 type of 10-year Treasury yield with a couple of challenging auctions. Again, bond auctions are pretty boring to watch. Your colleague Lisa Bromwitz loves them. We love them as well. But if we were to see some stepping away from the plumbing of again, the Treasury market, that for us would be a concern. Probably the first place that shows up is what happens in commercial real estate. Not a topic a lot of people are focused on, but something we're certainly paying attention to as we think about forward allocations.
All right, great stuff as always. Come back soon. Eric Friedman, thank you. Chief Investment Officer over at Northern Trust Wealth Management. As we mentioned, they've got $534 billion in assets under management, and he was joining us, of course, from Chicago. All right, folks, as we head to a break, you might say shares of Wayfair flying off the shelf.
Just like furniture.
Just like furniture.
Maybe. The stock's soaring more than 30% following its latest earnings report. The CFO, Kate Gulliver, is joining us on the other side on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks ripping higher, oil lower, Dow Jones Industrial Average, S&P 500 Index, both at records right now. A 1,000-point jump on the Dow, up now by 1.9%. The S&P 500 Index holding very close to session highs, trading above 7,700. S&P now at 7,745, up 145 points on the S&P 500 Index. That is a gain of 1.9%. NASDAQ up 2.7%. The NASDAQ 100 Index up 3.4%. Small caps taking part in the rally, with the Russell 2000 Index up now by 1.9%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up 6.8%. Advanced Micro Devices, of course, a member of that index. It reports after the close of trading today. AMD up now by 9%. The 2-year yield, 4.19%. The 10-year, 4.62%. And the 30-year, 5.19%. Spot gold, 4,086 the ounce. Spot gold up 0.8%. I mentioned the retreat for crude, 75.68 a barrel. Crude down 5.8% right now. Brent, the global benchmark, holding below $80 a barrel. Brent, 79.27 barrel of Brent, down now by 5.4%. All of this on hopes for a deal to revive the Strait of Hormuz. Pharmaceutical companies reporting earnings today. Case in point, Merck shares. Merck after earnings right now. We do have Merck shares trading up by 0.7%. Pfizer after earnings up by 1.6%. Also reporting earnings after the close of trading, SpaceX. Ahead of that report, SpaceX up by 8.1%. Palantir reported last night up 29.6%. Wayfair after earnings up 31%. I'm Charlie Pellet. Carol and Tim. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. All right, we want to get to Wayfair. Investors, man, are pushing this stock up big time today. Shares surging 31% as we speak after the home furnishings retailer said sales at the U.S. grew at their fastest clip since 2021, helped by a growing number of brick and mortar stores, which has been a new initiative for them over the last few years and growing. And also sales growing, helped out by demand for some of its higher end brands.
Yeah, the stock up 17% year to day. Earlier today, as much as 32% intraday highs, the most going back to April of 2020. Some perspective, the stock's still down, Carol, 66% from that peak. That was back in March of 2021. But today, soaring higher.
Yeah, big time. So we're delighted to have back with us, joining us once again, Kate Gulliver. She's the Chief Financial Officer and Chief Administrative Officer. We like to remind everybody that Kate oversees finance, legal, talent, real estate, corporate affairs at Wayfair. She has a full plate. So delighted once again to find some time for us. She's in Boston, where the company's based. Kate, good to have you here. Congratulations. Killer quarter.
Thank you.
Talk to us about the momentum.
Well, I mean, I think you just said it, right? It's nice momentum over many quarters now. And so I think what you're seeing is really the sort of multitude of initiatives that we've laid out, the consistency of that playthrough, and, you know, building momentum there. And that reaction is a result of those factors. So, you know, that U.S. revenue growth of nearly 9%, the highest in the post-COVID period, the flow through to really solid contribution margin, high EBITDA margin, and then, you know, best free cash flow that we've had since Q2 of 2020. And so all of the things that we have been working on to drive and improve that customer experience continue to come together, help us gain share, and we're flowing that through quite nicely.
Who are the customers who are buying right now? Because when you hear a superlative like, you know, most since post-pandemic days, you think to yourself,
Yeah.
okay, well, who are the customers who have the money right now to be buying this stuff?
It's a great question, and we actually went on the call. We went into a little bit of detail around Paragold, which is our luxury brand. You know, it's of our sort of family of brands that plays at the highest end of the market, and we do see really nice momentum there. We said that was growing north of 30%, right? So you do see nice momentum in the higher end segment, the top part of that K-shape, if you will, in the K-shaped economy. That said, Paragold is only, you know, a little over $400 million. So when you think about the overall Wayfair business, the Wayfair.com brand, that mass market brand, has to also be performing well to get to that 9% comp. And so what we're seeing there is ongoing share gain. And we think that's from programs like our Wayfair Rewards program, programs like the stores, which, Carol, you had the opportunity to see, programs like our Wayfair Verified. The combination of those things is helping us both attract and retain these customers and have them engage more and more.
Tell us about the stores. My understanding is that more than 50% of store customers are new, but tell us about, that's a big investment, Kate. We've talked about it. I did go there. I was kind of blown away by the size and the scope of it. You guys continue to add stores, but tell us about, we kind of marveled over how everybody had pushed back on brick and mortar for years. And so interesting, that you're finding success with it. But tell us how this is really moving the needle for you.
Yeah, it's a great call out. I think we're seeing that folks really do desire that multi-channel experience. And, the stores are supported by e-com and e-com supported by the stores. Now, obviously, it's very early days on the stores. So they're a very small piece of this overall momentum. We've had the Chicago store open now for a little over 2 years. Atlanta, where we were able to meet, has been open since early spring. And then we opened Columbus about a month ago. We've also announced Denver opening later this year, and then 5 more stores into 2027. So the momentum, to use the word of the day, is building with these stores, but it is early days. But what we're seeing is customers, are new to file. So they're new customers coming to the store. It's been a great acquisition channel. Customers are also getting exposed to the breadth of what we offer. So engagement in more sort of frequency categories, decorative accents, seasonal decor, being able to touch and feel the product is a win for them. And with that combination of the breadth of selection that we offer online, that's very compelling.
You mentioned Paragold, this higher end brand, and it's actually it lives distinctly from Wayfair. I'm wondering about the momentum that you're seeing there, but also the momentum that you're seeing more broadly, and how you're confident that it's sustainable.
Yeah, it's a great question. I think it goes back to the fact that most of this momentum is coming from self-help measures, right? So these are our own initiatives that are driven by it. We think the category itself is, overall roughly flattish. And, the category's been in a complicated place over the last few years. So flattish place is a nice place to operate from. But the, close to 9% comp in the US, that's driven by us gaining share. And so what we can see is the building blocks of these pieces getting into place, and then we see how they compound on each other. So the Wayfair Rewards program, for example, is supported by Wayfair Verified, which is also supported by improvements and changes to the storefront experience. And then to your point around Paragold, it does have absolutely its own, separate go-to-market facing site, but it leverages the entire back-end infrastructure. So the logistics infrastructure across, Wayfair Inc., the tech stack, the ad tech stack across Wayfair Inc., how the storefront evolves. And so we're able to test things on Wayfair and then push them out to, Paragold or the specialty retail brands. For example, Wayfair Rewards started on Wayfair, and that'll be launching at some point over the next year in the Paragold system as well.
But you have to concede, Kate, we talked about this, existing home sales still, not on fire, like the housing market. Yeah. But to see these results amid that backdrop, if that stays, let's say existing home sales is depressed for another 12 to 24 months, you guys have talked about kind of growing, I think it was roughly 20% growth through company-specific initiatives. I think you said it earlier this year. If we kind of still remain somewhat depressed, do you still feel like you can achieve those goals? Or does it require a housing recovery? Because it is pretty remarkable in this market to see these results.
Yeah, so I think you're referring to Neeraj and Steve, our co-founder shareholder letter earlier in the year, and they talked about these initiatives that could get us back to that, double digit, and then, from there to that 20% growth. And we do have a high degree of conviction in that. We feel very good about these initiatives and the building effects of these initiatives. Obviously, again, that close to 9% comp on the US this quarter, that high single digits guide. So we're building there, but the momentum is sustaining.
You mentioned the way that you're doing this internally and the way that you're gaining share from a market that is relatively flat. Wayfair Rewards, how does that play into that and the metrics that you're seeing there? What changes are you seeing when it comes to frequency, retention, customer lifetime value, payback relative to folks who are not members?
It's a great question. So what we, wanted to try to do with Wayfair Rewards was exactly to drive up that frequency. The average Wayfair customer shops, with us or buys with us just under 2 times a year, whereas a Wayfair Rewards customer is, 3 times a year, right? So you're seeing an incremental purchase from them, which at an AOV of $300 is pretty meaningful. And so the Wayfair Rewards program is really designed around frequency and ongoing engagement for the consumer. And we are seeing that from those rewards customers. We're also seeing them shop categories that are not, we are very well known for furniture. The rewards customers, though, are shopping decorative accents. They're shopping kitchen and accessories. In some of these categories, they get preferential pricing or they get early access to sales. And so those things sort of reinforce the quality of the experience for them in that rewards program. And then on the P&L, we've talked a little bit about how obviously rewards has an impact on gross margin because of the cash back element of it. But it's helpful on what we really look at, which is contribution margin, because the rewards program, costs less obviously on an ongoing basis to get that incremental sale. So a lower ad cost as a % of net revenue, meaning it would be accretive to the contribution margin that we really look at and ultimately to EBITDA margin, EBITDA dollars.
Hey, Kate, one of the coolest things is you guys really are a technology backbone, and you go back to the origin of your company, which is really interesting if you think about, kind of what's going on right now. You've partnered with different platforms, whether it's OpenAI, Perplexity, when it comes to agentic commerce. So what key performance metrics are you guys seeing when it comes to AI-driven shopping specifically? Is it a meaningful contributor when it comes to traffic or to sales? Are you seeing that?
Yeah, it's a great question. So we work across many of the LLMs. You mentioned a few. We also work with Gemini. We've said that we're an early partner on Universal Commerce Protocol through them. We do see traffic today is small from these sites, but it's growing meaningfully, right? So it's small but rapid growth. We think it's really important to be where our customer is at. And so if our customer desires to shop through these channels, we want to show up well there, whether that's, through actual shopping like Universal Commerce Protocol or, through ads like on OpenAI, or if that's through, better search performance and how you show up in LLM-based search, right? So all of that, those are all things that we look at and that we work with a variety of these partners on. I think this is a place where our scale benefits us. We have nearly 25 years of history and data here. And we know both, one, how to work with these partners. As you said, we're technology first, and two, we bring to it, some important data in terms of how we're able to show up there. And I think that helps the customer ultimately, because if our customer, wants to be using the platforms and shopping there, we'll be there. If she wants to come to us through the app, we're there. If she wants to, go into a store and shop with us, we're there as well.
All right, we got to leave it there. Kate, so great to get some time with you. As always, the stock, as we mentioned, it's up 30% as we speak. So investors certainly liking what they heard. Kate, be well. Thank you.
Thank you.
Kate Gulliver, she's Chief Financial Officer over at Wayfair. She's also Chief Administrative Officer, joining us from Boston.
Hey, coming up next, it is today's big take. It's one of the most read stories on the Bloomberg terminal. AQR showing the richest 1% how to slash their taxes to zero.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index holding close to our record. Yes, off session highs, but still looking at a gain of 1.9%. The S&P at a record 7742. It is up 142 points, trading above 7,700. Dow Industrials above 54,000. The Dow up 974. Have been up more than 1,000 points a few minutes ago, up by 1.8% right now. NASDAQ 100 index up 3.3%. NASDAQ Composite index up now by 2.6%. The SOX, the Philadelphia Stock Exchange's semiconductor index, is rallying by 6.7%. The VIX right around 16 right now. And by the way, member of the SOX is Advanced Micro Devices. AMD reports after the close of trading today. AMD up now by 8.5%. 2-year 4.19%. The 10-year 4.62%. And a 30-year 5.19%. Gold at $4,079 the ounce, up 0.6%. Much of the rally today sparked by the decline in crude. West Texas Intermediate down 5.5%, 75.90. Barrel of Brent below 80, 79.54. Brent crude right now down by 5%. Earnings news. Caterpillar reported this morning. The industrial giant up by 6.5%. McDonald's, meanwhile, naming a new U.S. president. McDonald's shares, they are just about flat on the day. Little changed, actually, up now by about 0.1%. Jefferies Financial Group shares down 0.5%. Now, Jefferies has been told that some of the invoices underpinning its financing of an iron ore trader called Sapphire Metals Corp are not genuine. That's according to people familiar with the matter. Jefferies again down 0.5%. Whole lot more on this topic coming up in just a moment with Bloomberg's Sri Natarajan. Recapping, S&P at a record up 142 points, up by 2%. We've got SpaceX after the close of trading. SpaceX up by 8.7%. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. We're going to pick up where Charlie wrapped up there and talking about Jefferies Financial. The group has been told that some of the invoices underpinning its financing to an iron ore trader called Sapphire Min Metals, are not genuine. This is according to people familiar with the matter. This has been a story that Bloomberg's been reporting out over the last week or so. With more is Bloomberg News Chief Wall Street Correspondent Sri Natarajan covering the financial space. He's here in studio. For those who maybe haven't been following, there's been a lot going on. What do we need to know?
Look, this is the latest in a series of incidents which is shining more light on the risk around receivables finance. So typically, ordinarily, this should be safe. You are lending against invoices. It's secured by invoices. You expect your client to be ultimately paid and you expect to be paid back. When it goes right, it is good money for the lenders. But there are occasions when it can go wrong, and it can go horribly wrong. And that's we saw it last year with First Brands and the collapse around First Brands and all the allegations around fraud and scam that came out. Now, over the last week, we've seen these instances first with Radiant World that Bloomberg reported last year. And now another company, Sapphire Min Metal, which seems to be somewhat tied to Radiant World, at least at some point. Radiant World and its owners were majority owners of Sapphire Min Metal. But the interesting bit for us is the connection of Point Bonita. Point Bonita is a trade finance focused fund at the asset management division of Jefferies. So it's just another black eye for Jefferies at a time you really don't want your investors to be asking you more questions about your investing missteps.
Is this you mentioned some other examples of this, including last year. Is this part of a pattern of events, or is this just the latest one-off?
To quote Jamie Dimon, it certainly feels like another cockroach out there. Now, your question is it an infestation? Not necessarily. Is it going to have material financial impact on Jefferies? Not necessarily. It has a 5.9% stake in Point Bonita. But does it leave a bit of a sour impression for their investors and for analysts and for people wondering about banks and other investors and their tie-ups with other trade finance
and oversight,
firms? Yes.
Right? Like oversight, like what is it? Like, assessing assessing risks and so on and so forth.
And to some part, you have to assume like some of the allegations that we're talking about is falsifying invoices. And again, to be clear, Radiant World denied those allegations last week. Sapphire Metal in our story today is denying those allegations again. But when you're talking, if it is what the allegations are, that is outright fraud, you also have to wonder how easy is it for some of these firms to be doing all the diligence that's required? How do you completely ensure that you snuff that out? And that might not necessarily be possible, but your investors will expect higher standards and much better diligence going forward, and that will focus people to reassess their processes to be able to sniff out risk and to be able to avoid some of these landmines.
Goes to reputation, right, ultimately. And again, we should say there's still more to be known here, so we're
a lot more to be known.
We're going to continue following it. We got to get to the
I want to get to the
big take.
Yeah, this is one of the most read stories on the Bloomberg terminal. It's a tax strategy for the rich, built the world's largest hedge fund. You and the team behind it, behind one of the most read stories. This is about tax loss harvesting on steroids.
All right, there's part of me that's like, oh my God, but it's actually pretty cool.
It is cool. What has AQR figured out, and what is AQR doing?
And again, well, on the one hand, Carol, I am slightly offended that this wants to make you snore. But
I hear taxes, but I know this stuff is really interesting.
But that's correct. Like we're used to these ideas of tax loss harvesting and finding ways in investments where, with the growth of the technological tools available to us, with the sort of ETFs and commission-free trading, you can do a lot more of these things. But what is happening when you pit a lot of mathematicians and PhDs in a room together and come up with strategies? You suddenly do what Tim rightly described as taking these strategies and applying steroids on them, that they become so much more potent. The advertising from firms like AQR is like, if you put money in with us, not only will we make sure that your money grows over time, but the interim, we will also keep generating losses that you can use to write off your capital gains elsewhere.
I don't get it. How can you put $100 million into an account? It then triples over the next few years, but then you also have hundreds of millions of dollars in losses to use against other gains.
Aha. And with that, we shall explain what tax alpha is and exactly how this process works. So we're very specifically talking about these tax-aware long-short strategies. Assume you have $100 million. You were an early NVIDIA employee. Your stock has gone up quite a bit. You suddenly have $100 million. But if you wanted to realize those gains, you also have a hefty tax bill coming against that. So you go to an AQR, maybe you set up a separate fund with them where you put in that $100 million. Against that $100 million, AQR can go and borrow some money. Say they borrow $80 million against it. They can put $40 million of long bets. They can put $40 million of short bets, broadly tracking some of the biggest companies out there and some of the biggest name in the indexes, but with the hope that your longs always go up and your shorts are always going down so that your fund is performing well. But that's not always guaranteed. On a day-by-day basis, that's not going to happen. Some days your bets will go wrong, even if over the long term you were right. But on the days it goes wrong, say if the market goes down, you can sell some of the longs because you've now realized losses against them, replace them with a surrogate. On the days that the market's in this bull mode, your shorts are not performing well. You close out those positions and replace them with a surrogate. So what you're doing is in the interim, you're harvesting these little losses that start to pile up. And in the long term, you make money. So eventually, what does the money look like? AQR says, and an example for one of their flex products is you put $100 million with them. Over 10 years, they say your money can triple. Very good returns. At the same time, they will also generate $587 million in capital losses over that 10-year period. That is a lot of money to be able to write off capital gains in other parts of your portfolio. You can see the allure for the richer. You can see the allure for so many people wanting to go into a strategy like this.
Yeah.
Legal, for the most part, seems to be. No one's really said it's illegal. We have had noises from the Trump Treasury, from the Trump administration saying some of these trade and some of these more aggressive tactics seem to be potentially abusive, but nothing that anyone has really offered out there that closes these loopholes or has outright banned them. But at the same time, they are quite effective. And as our own Matt Levine once said, it's very hard to beat the market. Much easier to beat the IRS. With that pitch, you can attract a lot of money, and that in part has propelled AQR to become the world's largest hedge fund because in the last few years, these strategies have soaked up a lot of investments.
not easy for everyone to beat the IRS.
No, and I will say,
another part of the story.
A great part of the story, too, is just Cliff Asness's view about taxes and what he said about them. It's just fascinating, a profile of him as well.
Check it out. It is the most read story on the Bloomberg. Sri, I'm not bored anymore. No snoring, I promise. He is our chief Wall Street correspondent.